So, hi guys, welcome to the class. So today is our first session where we're going to revise for your CA final audit paper number 3 group 1. I hope you guys are charged up for the next attempt and you will be excelling with flying colors. So first 5 minutes, let's discuss about what exactly the issue with audit is. It's all about retention. The more you retain, the more you revise, the more you write, the more marks you get. The problem pan India in CA final audit is only one: retention. Okay, now, so guys, hi, I'm Abhishek Bansal. I'm teaching CA final audit from past 15 years. A lot of chartered accountants have become through me. A lot of people have become rankers. Twice we have got AR1. That's one is Siddhant Bhandari and another one is Nandini Agarwal, the youngest chartered accountant. So she was both my student at inter and final. So guys, the only difference between a ranker student, a person who gets around 70 marks or 50 marks, and a student who gets 25 marks, it's all about retention. The more you revise, the more you retain, the more you write, the more marks you get. Everything is connected. Okay. Now, let's quickly talk about syllabus. There are 19 chapters. So 1 to 19, there are total 19 chapters are there. A few are very important, which are very repetitive. Okay. At any point of time in the class, if you are not understanding any point, please drop a message in the chat. Okay, sir, I have not understood. So I'll repeat that point again. Plus, there are 19 chapters. I'll try to finish off maximum as I can. We'll be having a class for every day around 2.5 hours, depending upon the mood of the teacher and the student, whichever is earlier. So I'm not here just for the sake of teaching. I'm here for you guys to make you clear. But for that, we require support from both ends. I am walking one step, you walk with me one step. Okay. So if you have studied through me, okay, you will be having my main book. I'll be teaching you from the handwritten notes. In case you have studied through me, you must be having your own handwritten notes. Open that notes. In case if you do not have those handwritten notes, I'll be asking the team to send you by today so that you revise along with me. Okay. Now, so the total there are 19 chapters. If I show you some analysis, what exactly the paper is coming up to. So these are our total 19 chapters. I have analyzed what chapter, what question, from which chapter it came, in which attempt it came. Now, if you see, the most important chapter is always your favorite, professional ethics and liabilities of audit. So liability is just a word. More important is professional ethics. If you see May 24, I'm just comparing the new syllabus content. May 24 it came for 17 marks. November 24 it came for 18 marks. May 25 it came for again 18 marks, and September 25 May again it came for 18 marks. The latest attempt 18 marks. So average it is coming to 17-18 plus 4 mark ka MCQ. So on a 116 mark paper including options, this chapter comes for around 20-22 marks. So this has to be a forte, this has to be a strong part. Liabilities of audit. Okay, that is number 1. Then if you see ESG chapter 4 mark, 4 mark, 5 mark, 5 mark. Every attempt is coming. Every attempt is coming for minimum 4 mark, 1 or 2 mark ka MCQ. So 6 marks. So if you see ESG and chapter number 19 ethics, code of ethics, professional ethics, you say both are very important. Then the next block of the chapter will be these chapters. Chapter number 8, 9, 10, 11, 12. Those are new chapters. I say will be definitely asking you. Specialized areas 4 mark, November 25 4 mark, in May did not came, September 5 mark ka. Then again 5 mark, 5 mark, 4 mark, no questions. Then 5 mark, 4 mark, 4 mark, 9 marks. Because related service did not came, it came September 25, my review came for 9 marks. Then prospective, no questions, 5 mark, 4 mark, no questions. So in the next chapter probably it will be there. Digital audit 5, 4, 4, 5. So again my next block is 8 to 12 chapters. So 8 to 12 wala chapter, then 18, 19 chapter. Then next chapter is chapter number 7. Very important reporting chapter. Reporting may see 700 series is there, plus Caro is there. Every attempt mein Caro is there. Every attempt mein there is one question on Caro. So this attempt mein it came for 10 mark, that means 2 questions. Here it came for 4 mark because it was there for 6 mark in MCQ. So reporting ka weightage is always 10 marks, you consider. So for you 7, 8, 9, 10, 11, 12 and 18, 19. Very important chapters. Okay. So let's start with one by one. Whoever teacher you have studied, please open their respective notes. I'll be teaching you from my handwritten notes. We'll understand the concept and then we'll jump on to the model ka MCQ, model ka questions. So parallelly we'll be solving model ka question. You have to tell me which answer will come. Let's be interactive. I'm not here to read news for you. Reading, you can do it on your own. You have your material. I'm here to make you understand the concept and the way of writing the answers. So whenever a question comes, how to present the answer, everything we'll be discussing in the class itself. Cool, good to go, guys. Write in the chat. Okay. Stay confident. You can do it. If you have any doubt, any point of time, if you're not understanding a concept, okay, if you can't message in the chat, okay, it's okay, it's absolutely okay, but I want you to be interactive because it's your exam, guys. Okay, so you can connect with me over the Telegram. So you can just drop me a message on the Telegram later on that, okay, so this is a query, can you just help me out, or you can connect with me over Instagram also. So I want you guys to clear in the next time whenever you guys are appearing, whether it's a Jan or a May or September, because the content gonna be same throughout. Okay, so appear, clear, but make sure you clear with very good marks. Okay, so first chapter what we're starting is standards on related services. So open your notes. So I have a target of every day 2 chapters ka 1 hour approximately. So we'll be making a combination of one big, one small chapter. So we cover maximum content. So every day your class, almost every day your class will be like for 2 hours, Monday to Friday. So tentatively we'll sit for around 23-24 hours. So wherein we complete the content. Okay. Now, quickly, standards on related service. So I'll be sharing this handwritten notes with you. Today the team will forward it to you, so that you are also updated with the same par with me. If you have studied through me, you must be having these notes. You must have made on your own notes. Now, standards on related services. So SRS. See, it did not come in September. So there are chances it may come in Jan and May also. Now there are two standards: 4400, 4410. 4400, 4410. The question is, what are related services? See, like we do standards on auditing, we have standards on related service also. Like being a chartered accountant, I can do audit, but along with audit, I can do other things also. Audit, so I can do it, it's in my nerves, right? That's my basic job to do, right? But along with audit, I can do other things also. What are the other things? Can you write in the chat? Let's be interactive, guys. Even if it's wrong, it's okay. As a chartered accountant, what other services you can give? Sukesh says non-assurance services. Like what? Non-assurance means what? So you can give accounting services, correct? No. Shivahari, opinion on financial statement. So that means you are giving audit. No, you are giving opinion. That means audit job. You can do review engagement. You can prepare books for somebody. You can give management services, including bookkeeping. Very good, correct? Now those are my related services. I can give consultancy, tax advices. Okay, GST return, how to file, GST savings, tax savings, income tax savings. So all those are my other related services. So it says, what are related service? How do related service differ from assurance engagement? How do they differ from assurance engagement? Assurance basically means like when you give opinion, I am assuring it. So it says an assurance engagement means that a practitioner, guys, practitioner basically means CA plus COP, chartered accountant holding certificate of practice, gives an opinion about a specific information due to which the users of information are able to make confident decision. So if I am saying, okay, Sukesh is a boy, it's my opinion. I am giving an assurance, like imagine like in India we have arranged marriages, okay. So Sukesh is a boy and Sukesh is a very nice boy. So I am giving an assurance to the girl's parents. That's my opinion. I have not checked him. I have not seen him only. How can I tell? But I am giving opinion. As per me, because Sukesh is very intelligent, he's a very nice boy and he's a boy. So what it is opinion. So the girl's parent will take a confident decision whether to get married or not. That is their call. So whether users of the information are able to make confident decision. That's the definition of assurance. Now, not all engagement performed by practitioners are assurance engagement. In 100% engagement, may say we do not give assurance engagement. We do not give an opinion every time. Like when I'm giving tax consultancy, I'm not giving any assurance. I'm just giving consultancy. If somebody is asking me, sir, how to save cost, so I advise him. So I'm advising him. I'm not giving assurance that, sir, this will happen or not. So following engagements are in the nature of related services. What it is? Sir, preparation of tax returns where no conclusion conveying assurances expressed. That means you are helping them to prepare tax returns. Number 2, consulting engagements such as management and tax consultancy. Okay, that is number 2. Number 3, engagements covered by standards for related services such as 4400, 4410. What is 4400? So 4400 is AUP, agreed upon procedure. 4410 is compilation of financial or other information. Compilation of financial or other information. So guys, this is the definition of related services. So in the exam, they can ask you, how do you differ related services from assurance engagement, or how do you differ related service from audit? So my first point says about definition of assurance engagement, wherein I am giving an opinion about a specific information, so that the user can take confident decisions. Then I will say not all engagement performed by the practitioners or assurance engagement. Few are in the nature of related services. 3 examples they have given: tax return preparation, consulting engagements, and engagement by the standards of related service. There are 2 standards what we are going to study. 4400, that's AUP. 4410, that's compilation engagement. 4400 AUP. AUP means agreed upon procedure. So that was my first question. Okay. Then next question says, yeah, what is AUP? Now from here your actual standard starts. Guys, writing the correct name and the correct number. Writing the correct name and the correct number of standard will fetch you 1 mark. Content ka to you will get marks for sure. But if you write the correct name and correct number, you put it in the box. Okay, I'll show you the presentation also. Then for sure you will get 1 mark extra. So we'll be recalling the standard numbers every day. Huh? SRS 4400 is basically engagements to perform AUP. Engagements to perform AUP. AUP means agreed upon procedure regarding financial information. Engagements to perform agreed upon procedure regarding financial information. Like for example, a client comes to you, like let's assume TCS, Tata Consultancy Service. They come to you, Sukesh. Okay, Sukesh sir, you are a chartered accountant. Can you do something, like can you tell me on 30th September how many datas I had? And can you do audit and tell me how many datas were there? What was their balance? So Sukesh is a chartered accountant. He is holding a certificate of practice. He is not auditing the entire company. He is just performing the procedure on one particular item, that is data. So what is he doing? He is performing agreed upon procedure. Sir, who will tell me the procedure? Management will only tell me. I have to report to whom? Management only. Because they have asked us to do it. So it is not a part of Companies Act. It is not a part of statutory requirement. It is not as per law. It is basically management wants to do it. Acha, now imagine TCS was getting merged with Infosys. Okay, TCS getting merged with Infosys. So Infosys calls you. Acha, CA Sukesh, sorry, CA Jack. You are a chartered accountant. Jack says, yes sir, I am a chartered accountant. What's your time? AB sir student. Yeah. So Jack, okay, whatever it is, but can you tell me, we are getting merged, we were amalgamating with TCS. Can you do one thing? Can you just tell me in the entire year how many related party transactions had happened? So what is Jack doing? Jack is not the statutory auditor of TCS. Jack has been told not to check everything, only one particular thing, that is what? Related party transactions. So sir, what data I have to see? Who will tell me? Management will tell me. Whom Jack will report? He will report to the management of Infosys basically, because they have only told. So that report is not applicable for everybody. It is applicable only for specific people. So it is called what? Agreed upon procedure. Engagements to perform AUP, agreed upon procedure regarding financial information. Understood the background? So that was an example. Now let's read the definition. What is AUP? So the auditor is engaged by the client to issue a report of factual findings. A report of factual findings. In your book, you will see the word factual findings, because related party transaction happened or not happened. It's a fact. It's not an opinion. Okay, there are data. The data's amount is 5 lakh rupees. It's an opinion. Sorry, it's a fact. It's not an opinion. So the auditor is engaged by the client to issue a report of factual findings based on specific procedure performed on specific subject matter or specific AIE. AIE means accounts, items, element. What procedure has to be performed on what item has to be performed will be told by the management. or whoever is appointing the auditor. Okay. Now, related services not necessarily be performed by the auditor of the entity का FS. Now, what does this line mean? Now see, TCS का auditor is CA Sukesh. TCS tells Sukesh, okay, he's a stat auditor, statutory auditor. TCS tells Sukesh, okay, chartered accountant Sukesh, you are a stat auditor. Can you do related party audit and tell me till 30th September how many related party transactions have happened? My first question is, CA Sukesh is the statutory auditor of TCS. Can he do that related party audit? Yes or no? Write in the chat. Yes or no? Yes, he can do. He can do. It's not prohibited. It does not fall in prohibited services. He can do. Agree? See, it's not affecting anyone. This is a report given to the management, not to an outside authority. Not to an outside authority. It can be done. One more example. Okay, statutory auditor is CA Sukesh. TCS calls up CA Jack. Oh, Jack, can you do related party audit? My question is, can CA Jack do the audit? Yes or no? Yes. So basically any CA plus COP can do. Any chartered accountant holding certificate of practice can do. So the line, it says related services need not necessarily be performed by the auditor of the entity का FS. Related services need not necessarily be performed by the auditor of the entity का FS. That means any CA plus COP can do. Clear? Example, you're performing procedures on accounts payable, accounts receivable, administrator, creditor, or perform for purchases from related party. Purchases from related party. This is an example. In your book also it will be given same line only. So this is the definition of AUP. Then, my first question was, what is related services? Difference between audit and related services. My next question is difference between audit and AUP. Audit and AUP. Now see, the auditor expresses an opinion and provides an assurance to the users. In audit, what we give? We give opinion. And ki sir, acha, Sukesh is a boy, sir, I'm telling you. We generally give reasonable assurance. But in AUP, what do we find? We find a factual findings of the AUP is provided. Related party transaction happened, yeah, it has happened. It is proven. It is not your opinion, it's a fact. Datas were there, this is the amount receivable, it's a fact. So in AUP, only a report of factual findings of AUP is provided. No assurance is given. Here we give assurance, here no assurance is given. Instead, the users draw their own conclusions based on the factual findings stated in the report. Instead, users draw their own conclusion based on the factual findings stated in the report. Understood the difference in audit and AUP? Audit may you give opinion and assurance. AUP may you give report on factual findings and no assurance. Instead, the users have to draw their own conclusions. Okay? Now, examples. Comparing the names of major suppliers and the amount outstanding as on the date with the names and the amounts in the trial balance. So major supply, that means creditors you are comparing it out. So creditors were there, this was the amount. Or obtaining supplier ka confirmation with regards to outstanding balance. 5 crore ka balance is there. You are taking confirmation from the creditors. That means I am doing it actually. Okay, creditors are there, suppliers are there. Third, comparison of such confirmation into the amounts in the trial balance. So after the comparison, after the confirmation, what do? You take amounts in the trial balance. You match that. So that is basically what are you doing? You are doing AUP. So it's a fact. That means actually creditors are there. I am just confirming it and matching it with the trial balance. So this is an example of AUP. Audit, you give stat audit, we give opinion, we give assurance. AUP may it's a report on factual finding and no assurance is provided. Instead, users have to draw their own conclusions. Okay, examples, 3 examples they have given. Clear? Question number 4. This came in May 24, I think, May or September 24. It says, what are the matters to be agreed and included in the engagement letter? Basically, contents of engagement letter. So, I have designed a code called as Pinel. So, what are the contents of engagement letter? So, imagine if CA Sukesh or CA Jack, company is saying, sir, do this engagement of AUP. Like real party ka transaction you have to identify and tell me. So, he will get into an engagement. So, they will prepare an engagement letter. So, once the engagement letter is prepared, what are the contents? First, you will write P. P is what? Purpose for the engagement. P is what? Purpose of the engagement. I, identification of the financial information to which the AUP will be applied, like related party, auditor or creator. Purpose of the engagement, identification of the information to which AUP will be applied. N, nature, time and extent. NT is what? Nature, time and extent of specific procedure to be applied. One more N, nature of the engagement includes the fact that it is not an audit or a review, therefore no assurance will be expressed. Nature of the engagement including the fact that it is not an audit nor a review, therefore no assurance will be expressed. L, limitation on distribution of the report of actual findings. This report is useful for only Infosys or TCS, whatever client has appointed you, not for everybody. So it is called limitation on distribution of the report of actual finding. So my code is Pinel. Purpose, identification of the financial information like data, creator, what they have asked us to audit, and NT of the procedure to be applied, what procedure will be applied. Fourth, nature of the engagement including the fact that the procedures performed will not constitute an audit nor a review and therefore no assurance will be expressed. L, limitation on distribution of the report of actual findings. Understood? PINNL, purpose, identification of the information, nature of the procedures, nature of the engagement. L, limitation on distribution of the report. Clear? Read this once from the screen because it's an exam question. Read quickly. If you have your book or your teacher ka book, read from there. Contents of engagement letter. Let me know once it is done. Done, guys? Pinel, purpose, identification of the information to which AUP will be applied, NT of the procedure to be applied, and nature of the engagement including the fact that it is not an audit nor a review and therefore no assurance will be expressed. L, say limitation on distribution of the report of factual finding. Pinel, Pinel. So in your notes, please write there Pinel. Next. What are the procedure to be applied? So it's just a reading point, not an exam question. Inquiry, recomputation, inspection, observation, confirmation. Okay, these are the procedure to be applied. This way you have done in audit also. At intermediate level, you must have start that inquiry, recomputation, inspection, observation, confirmation. Okay, that's your over ICI you must have studied in intermediate level, not an exam question. Question number 5, reporting or the contents of report for AUP engagement. So now in this answer, it's a common answer which we'll be studying with all the other standards also. What are the contents of report for AUP engagement or contents of report for SRE engagement, contents of report for any engagement. So I'm teaching you something common. First we're going to study third ups. Third ups mean what it is. See, they have never asked contents of report till now. In the past 4 attempts, they have not asked any time. So what we can assume that they may test us again. So what is the first one? T say title. T is what? Title. A is addressee. Title, addressee. Third ups mein T is title, A is addressee. Go to the bottom, you will see date, place, sign, DPS, date, place, sign, FRA new date. So TUDUPs become common. So don't write TUDUPs together. First you write title, addressee, then towards the end date, place, sign, FRA new date, date, place, sign, FRA new date, title, addressee, date, place, sign, FRA new date. Now in between what will you write? In between you will write whatever content you have studied in penal. What was penal ka P? Can somebody tell me in the chat? Penal ka P. What was penal ka P? Purpose. So see, identification of the purpose for which AUP were performed. I, identification of the financial information to which AUP will be applied. Identification of the financial information to which AUP will be applied. And nature, time and extent of procedure. Nature, time and extent of procedure to be applied. Then nature of the engagement stating that it is not an audit nor a review, therefore no assurance is expressed. L, the limitation, a statement that the report relates is restricted to those parties who have agreed to the procedures to be performed. This is limitation on distribution or use. Understood penal? So what are we doing? We are not learning anything new. We are using TUDUPs and we are using penal. And in every reporting answer, write one important line, a statement that the engagement was performed as per so and so standard. This standard is what? SRS 4400. So you write 4400. We will be doing SAE also. So a statement that the engagement is performed as per SAE so and so. If you are doing SRE, a statement that the engagement is performed as per SRE so and so. In the module in your book, there will be given lot of other contents also, but understand in the exam, either a 4 mark ka answer is there or 5 mark ka answer is there. Correct? So ideally for 5 mark answer, 4 mark answer, you have to write one side. So my one side, if I remember the content, sir, TUDUP will come, penal will come, I can close the answer easily. And one more point, statement that the engagement was performed as per so and so standard. So title, addressee, date, place, sign, 5 points. Penal ka PINNL, 10 points. One more point, a statement that the engagement is performed as per so and so standard. Answer is over. Now you are confident little? We have completed 4400. Engagement to perform agreed upon procedures relating to financial information. Engagement to perform AUP regarding financial information. Guys, are you getting confidence? Please message in the chat. Engagement to perform AUP regarding financial information. Engagement to perform AUP regarding financial information. Clear? Now, we'll be doing questions also so that you will get confidence again. Okay, but I hope you are understanding what I'm teaching you. Okay, this notes I'll be sharing with you today after the class. I'll share the entire Google Drive. Okay, when all my handwritten notes are there, I'll be teaching you from those notes only. So from tomorrow, we'll be having those notes ka PDF you can open in a mobile or a laptop and you can read with me. Okay, if you do not have right now, it's okay. You can refer your teacher ka book. Content is more or less as the same. But just understand my tricks, my shortcuts, so that it becomes easy when you're revising it out. Okay. Now, next standard is my 4410 compilation engagement. SRS 4410 compilation engagement 4410. Now, what is compilation engagement? You need to understand. In a company, you tell me who prepares the accounts, who prepares the financial statement, who is responsible to prepare financial statement? Management. Now imagine a company was there, a company ko AS was applicable. Now because of that phase manner of AS, okay, Ind AS, now this year say Ind AS is applicable. So now they have to prepare the account as per Ind AS. You are CA final student, you became chartered accountant and you have learned FR, correct, financial expertise. You are master of finance, correct, you know entire Ind AS, you are from the new syllabus. So management calls you, oh CA Hajit, oh CA Joy, can you prepare the FS for us? So you're not preparing for them. What are you doing? You're using your skills to assist the management. Boss, FS is always prepared by management. We are assisting them to prepare the FS. Now, as a chartered accountant, you tell me, can you give accounting services? Can you give accounting services? Yes or no? As a chartered accountant? Yes. But if I am a stat auditor of, let us assume, Reliance Industries, if I am a statutory auditor of Reliance Industries, can I help them in preparing accounts for Reliance Industries for the same company? No, that falls in probative services. So you have to use your logic here. Compilation engagement is allowed. So compilation engagement is basically you're using your financial expertise to help the management to prepare the financial information and you will give a report. But if you're giving If you're a stat auditor, for the same client, you can't prepare the account. So it will be like, I am only writing the paper, I am only checking. Correct? So there will be no mistake only. So you can give accounting services, no problem. But to some other client, where you are stat auditor, you can't give there. Okay? So what is compilation engagement? It says, it is an engagement in which the practitioner. So when I say practitioner, basically means CA plus UP. So you will say, sir, all CO plus COP, na? All CA plus COP, but except the stat auditor of a company. Even though it is not written here, but in our ethics, in section 144, it says, na, if you are a stat auditor, you can't do the accounting services for that client, for the same company or for the same family. Company, holding, associate, subsidiary of such holding. Correct? So it says it is an engagement in which practitioner applies accounting and financial reporting expertise to assist the management. We don't prepare FS. When you read this essay, people think, oh, sir, we only prepare. No, we assist the management in preparation of presentation of the financial information of an entity as per FRF and will issue a report That's the definition. It is an engagement in which the practitioner applies accounting and financial reporting expertise to assist the management in preparation and presentation of the financial information of an entity as per FRF and will issue a report. Number 2, any practitioner can take compilation engagement. Any practitioner, when I say any practitioner, any C plus COP except stat auditor. That has to be in the back of your mind, except stat auditor. Sir, it is not an assurance engagement. It is not an assurance engagement because we are not giving any assurance. We are just helping the management to prepare accounts. Acha, depreciation will come like this. Okay. Acha, contingent liability showed in the notes. Okay. Acha, sir, stock you do valuation as per AS2. So we are helping them, we are guiding them. We are not preparing. I am not giving any assurance whether it's correct or not. I don't know. I am just helping them. Acha. Then point number 4, very important. It can come as a 4-mark answer also. It does not require the practitioner to what? Verify the accuracy or completeness of the information provided by the management. It does not require the practitioner to verify the accuracy or completeness of the information provided by the management. Number 2, it does not require the practitioner to gather evidence to express opinion. It does not require the practitioner to review the conclusion on the preparation of financial information. We don't check any accuracy and completeness of the record. We do not gather any evidence for opinion. We do not do any review conclusion. It's not an audit nor a review, and we do not check the accuracy and completeness of the information. Management is responsible for that. Point number 4, important. In your book also mark as important. Question number 2. Sir, what are the purposes of compilation engagement? What it says? It says what are the purposes of compilation engagement? Repetitive question. In the module also I'll show you. A lot of times they have asked. Okay. There are 2 purposes. Now what are the 2 purposes? First one, to comply with mandatory periodic financial reporting requirements. To comply with mandatorily periodic financial reporting requirements. Mandatory requirements. Not mandatory requirements. So for mandatory purpose, non-mandatory purpose. Mandatory. So to comply with the mandatory periodic reporting requirements as per law and regulations, example quarterly FS. Can you give me an example where it is required to prepare quarterly accounts, quarterly FS? Any example? Listed company, very logical. SEBI regulation, listed company. Sukesh, interim is not applicable to everyone. It's applicable to listed company only. Na? Like if it's a private company, they will not prepare interim. So listed company. Mandatory purpose, listed company. Remember that. Mandatory purpose, listed company. So non-mandatory purpose. Private company. I want to understand how much I'm making quarter profit. Okay. Like I'm a startup, I want to see my growth. So I will ask the team, prepare the accounts. Team says, we do not know people to prepare the accounts. They call CS Sukesh. Arey Sukesh, come na beta. We prepare the accounts for us now. So he will help the management to prepare the accounts. So internal use by the management and TCWG, that's first reason, internal use. Number 2 is transactional purpose for like mergers and amalgamation, transactional purpose. So internal use, transactional purpose like mergers and amalgamations or mergers and acquisitions you can say. Then periodic financial reporting as required by external parties under a contract. Periodic financial reporting as required by the external parties under a contract. Example, banks. If you have taken a OD ka limit or working capital ka limit, quarterly statements you have to file. So this is periodic financial reporting as required by external parties under a contract. So mandatory purpose, non-mandatory purpose. Mandatory purpose में as per law and regulation, that is SEBI listed company. Okay, non-mandatory में 3 reasons they have given. First one, internal use by the management TWG. Number 2, periodic financial reporting as required by third party under a contract. Third, transactional purpose for like mergers and amalgamations. Clear? Now, does a practitioner needs to comply with the ethical requirements as per SRS 4410? The question is, does a practitioner needs to comply with ethical requirements as per SRS 4410? What is your call? Yes or no? No. It is not mandatory. It came in the previous attempt. It is not mandatory. See, the practitioner shall comply with relevant ethical requirements as per Code of Ethics. He should properly address and identify the threats of relevant ethical requirements. Being a non-assurance engagement, guys, what? Being a non-assurance engagement, independence requirements do not apply. Independence requirement do not apply to compilation engagement unless required by law and regulation. If the law says, that's a different thing. But as per this standard, independence requirements do not apply. This was asked in May 25. Now my simple question. Understand my question. Huh? Can I become the statutory auditor of my father ka company? Yes or no? Can I become statutory auditor of my father ka company? Write in the chat. No. It is prohibited by law. That's we are clear. Acha. Can I become statutory auditor of my father-in-law ka company? Father-in-law. Yes, no prohibition in law because father-in-law do not fall in the definition of relative. Correct? So you can become, but ethically it is not correct. Correct, Sukesh. Very good. Okay, because our independence, our ethics say sir relative, na sir relative, sir independence affecting. Correct? So ideally we should not do the audit. This much is clear. Now I am asking you a very important question. Can I help my father ka accounts team to prepare accounts? I am not the stat auditor because that's not allowed. So my question is, reading this answer, can I help my father ka accounting team to prepare the accounts? Yes or no? Yes. Because being a non-assurance engagement, independence requirement do not apply to compilation engagement. But if imagine law mein if it is prohibited, like it's a listed company, let's assume, okay? And SEBI says no relative should be associated. If that is a rule, then that's a separate story. Imagine we are doing something about income tax. Income tax it is written that a relative should not come and do this thing. Like valuation ka game. Valuation. When you do valuation for gift, it should not be done by a related party. It's written clearly in income tax ka rules. So then that rule will apply. Even though it's a non-assurance engagement valuation, you are not giving opinion there. You are finding the fact that this is the value of a gift. So if I gifted a car to my father and somebody wants to understand the value of that gift, I call a chartered accountant. I'm telling my brother only. My brother is also CA. Hey, you do na. So income tax says no. Because related party mein it is not allowed. Valuation can't be done by related party. So unless required by law and regulation. Understood? So here the simple rule is, being a non-assurance engagement, independence requirement do not apply. Clear? Then question number 4. It says, what are the contents of engagement letter as per SRS 4410 or for engagements, acceptance and continuance? Okay, what are the contents of engagement letter? So whatever penal we have studied, same things you have to use, and we have made a code as LORI or DORI, you can say. Okay, LORI makes L, limited distribution and use of compiled affairs. That's penal ka L wala point, limited distribution use. O, objective and scope of compilation engagement. R, responsibility of the practitioner including requirement to comply with ethical requirements. Then one more R, responsibility of the management. Very important, this came as a separate question. Management is responsible for what? 4 things. FS preparation, design and implementation and maintenance of internal control. We say DIM of IC. DIM. D-I-M. design, implementation, maintenance of internal control. FS preparation, dim of IC. Third, accuracy and completeness of records, documents, explanation given by the management. Whether the accounts are accurate, complete or not. It's not my duty to check. It is management ka duty. Right? J, judgment needed in the preparation presentation of FS. Judgments are basically used in estimates. Like for example, provision for bad debts, provision for income tax, provision for depreciation. I don't have to do it. Management has to do it. So they will ask you a separate question. What is the management ka responsibility? Management is responsible for FS ka preparation, dim of internal control, accuracy and completeness of the records, documents, information given by the management, judgments needed in preparation presentation of FS. That's R. I, identification of FRF, applicable FRF, financial reporting framework. E, expected form and content of practitioner ka report. Expected form and content of practitioner ka report. So my code here is LORI, contents of engagement letter, LORI. Limited distribution and use of the report. Then objective and scope of the engagement, responsibility of the practitioner including requirements to comply with ethical requirements, management ka responsibility. 4 points are there. I, identification of FRF. E, expected form and content of report. Clear? Fifth, how as a practitioner you will perform compilation engagement. So this is basically like audit procedure. So the entire question may or may not be asked, but there are 2-3 points. That's point number 6 and 7. 6 and 7, this can be a separate question. I'll give an example also for that. Okay. Now, so the student have written a code here, understand card. Understand card. So how will you do this engagement? So in all the new essays, new standards, there are 3 types of question. Before the engagement, during the engagement, after the engagement. When I say contents of engagement letter, that is before. During ka answer is this. Then reporting is after the engagement is over. So how would you do the engagement? Sir, you obtain the understanding of entity ka business operation, accounting system, records and applicable FRF. Obtain the understanding of entity ka business operation, accounting system, records and applicable FRF. Okay. C, compile the financial information using records, documents, explanations and other information provided by the management. You start compiling it. Start preparing the accounts, start passing the entries, help the management there. Then see A. A is this one. Acknowledgement from the management technology responsible for final version. See, ideally we will help them. We will pass the entries. But final version had to be prepared by the management. So they have to give an acknowledgement because this is the final copy. R. Read the compiled information before completion of the engagement. Read the compiled information before completion of the engagement. D. Discuss with the management about the significant judgments made by the management. So it is understand card, understand the system, compile the information, take the acknowledgement, read the compiled information, discuss significant judgments made by the management. Okay? This is first 5 points. This is one question. Then 6 and 7, what happens? See, I agree that I told you we don't have to look into the accuracy, we don't have to look into anything. But imagine basics. If the fundamentals are wrong, if the basics are wrong, should you proceed further? In the first point, I have told you the practitioner is not required. I taught you here, no? The practitioner is not required to verify the accuracy and completeness of the information given by the management. But like fundamentals are wrong. For example, stock. Ideally in the balance sheet, where will you see stock? Where will you find stock? Closing stock. Under the head inventory and correct? But which side? Liability, asset, which side? Asset. But management accountant, BCom student, BCom, he had put on the liability side. You are a practitioner, you are my student, I have taught you, boss, hey practitioner, you are not required to verify the accuracy, you are not required to verify the completeness. No. You tell me, should you keep your mouth shut? You can see that already stock, they have put it on the liability side. Should you keep your mouth shut and proceed further for preparing the accounts? Tell me. No, sir. See, sir, we are accountant, we are chartered accountant. Sir, we know the basics of accounts, sir. I agree, sir, you have taught us, sir, we don't have to check the accuracy, we don't have to check the completeness. But sir, if the fundamentals are wrong, how can I keep my mouth shut there? Sir, I have to tell them. So same thing is written here. if the practitioner becomes aware of incomplete information. Sir, if it is incomplete, what will you ask? Complete information. If it is inaccurate information, if it is inaccurate, you will ask accurate information. Logical, no? If there is incomplete information, you will ask the management, say, additional information. If it is inaccurate information, you will ask the correct information from the management. So he should bring to the management attention and a request for additional information, like for complete information. If it is inaccurate, you will ask correct information. So this they can test you in MCQ also. Huh? Always remember, I agree that we should not verify the accuracy and completeness of the information. But if something is inaccurate, you ask them correct information. If something is incomplete, you ask from them complete information. Clear? Then, seventh says, now this could also be a question. If a practitioner is unable to complete the engagement because management has failed to provide records, documents, explanation. Because they are not giving data only, how will you assist them? Either you withdraw from the engagement and inform the management distributor along with the reasons for withdrawing. So they will make a situation in the exam and they'll say, what should be done? What are the steps of the auditor? So what will you do? See, even though I am using the word auditor here, basically your auditor basically is practitioner, huh? CA plus UB. And he is not the stat auditor of a company, he has to be separate guy. Okay? So he will withdraw from the management and inform the management distributor about the reasons for withdrawing. So here, if the practitioner becomes aware that the compilation engagement is materially misstated, MM basically means materially misstated, which does not describe the FRF properly, or amendments are required so that the FS is not materially misstated, or it is misleading. See, they are not prepared as per FRF. They have not followed accounting standards only, sir. Sir, changes are required. Like stock they have shown on the liability side, changes are required. So it is wrong. What will you do? You can't keep your mouth shut. The practitioner should propose amendments to the management. If management denies, what we should do? You go your way, I go my way. It's not working out. Let's break up. So you will withdraw from the engagement, discussing the reasons with the management distributor. Sir, if withdrawal is not possible, determine what are the responsibilities as per law and regulation. Like listed company, you can't withdraw immediately. So you will ask them, you will check what are your law and if withdrawal is not possible, determine law and regulation ka responsibilities. Understood? So point number 7 can also come as a separate question. They will make a situation stating the compilation engagement is materially misstated, or it is misleading, or it is not prepared as per FRF. What are the steps? So the practitioner should propose amendments to the management. Number 2, if the management denies, the practitioner should withdraw from the engagement after discussing the reasons with the management distributor. Third, if withdrawal is not possible, check the determine the law and regulation responsibilities. Cool. Then question number 6 and one more question will be there. 6. This is a very simple answer. This you know. Contents of practitioner report. Today only I have taught you one code. What is the code, guys? What is the code? Contents of report. I give you a common code today. Very good, Joy. Third ups. So what I will write? Title, addressee, then bottom में date, place, sign, FRN, UDIN. Correct? Third ups is done. Now we are doing 4410. The name of the standard is compilation engagement. So I have written title, addressee, date, place, sign, FRN, UDIN. Can you give me 3 points which we should add in between? What will you write? So I am teaching you 3 points which you can add bluntly everywhere in contents of a report in terms of new standards and new standards. Sir, management ka responsibility. So what will you say? Management is responsible for preparation of the compilation engagement. So use the question. Number 2, practitioner ka responsibility. Practitioner is responsible for assisting the management in preparation and presentation of compilation engagement. Then a statement that the engagement is performed as per SRS 4410. Very good, Ajit, very good. I wrote that only. Correct? See, understand the SRE, SRS, SAE, all these new standards which have come. One question will come out of report. There are so many standards. Why to study so much? Use your common sense, make a common answer, because only one question will come now. Now if you want to add extra, you can say Acha, compilation engagement is not an audit nor a review, therefore no assurance is expressed. Acha, then the practitioner will comply with ethical requirements. So there are other contents also they have given. Acha, they are saying that you can use management ka responsibility, description of management ka responsibility, identification of FRF, and if special purpose FRF is used, practitioner ka responsibility, then statement that it is not an assurance engagement, it does not express audit opinion or review conclusion. So you can use all those content also. So rather than mugging up, it's better you to use whatever content we have studied. Understood contents of report? Then this question is pending. They have not asked. I expect in this attempt this question should come. Documentations. Sir, what are the documentation requirement as per SRS 4410? So the code I have made is safe. So if you open your book towards the end, you will see in your book, in your module also towards the documentation. So safe code is what? Significant matters arising during the compilation engagement and how those matters were addressed by the practitioner. Significant matters arising during the engagement. A record of how compiled information reconcile with the records, documents, explanations provided by the management. A record of how the compiled information reconcile. It is matching with the management records. F. Final version. Copy of the final version of the compiled FS and management has acknowledged its responsibility. E. Entity ka trial balance, summary of significant accounting records and other information. So guys, the code here is safe. Significant matters, a record of how compiled information reconcile, copy of the final version, entity ka trial balance, summary of significant accounting records. Safe. Done. 1 hour mein we have completed 2 standards, 1 chapter we have completed. Guys, are you understanding? Please write in the chat. Easy it is now. I think, see, I can't remove the entire fear of audit from your heart, but I'm trying to remove it. It's all about confidence. Now, once we do the question from the model, you will easily get the confidence. Inform your friends also that every day I'm meeting you for 2 hours. Okay. Every day we have a target to finish 2 chapters. One second. Huh? Every day we have a target to finish 2 chapters. So I will not be helping you 100%, but I'll be helping you 110%. That boss, you follow my strategy, you follow my notes, just solve past papers, you will clear in your exam. See, the difference between South students and North students is only one. See, we North, mein what happens? See, I'm from Mumbai. Okay, what we learn the expression in Hindi, correct? So I teach in Hindi, student understand in Hindi, then in the exam they have to write in English. So there's a difference, like what teacher has taught, what they have understood, what they put in the paper. The difference in South student is, in South we teach 100% English, you listen in English, you understand in English, you write in English. So the miscommunication, the gap is become very, very low. So that's a beneficial part. And I have taught at Chennai a lot of times, okay, a lot of, if you have studied inter through me, anybody studied inter through me? So, you know, handwritten notes plays a very, very, very important role, okay? And in that, the results are superb because I've seen that you guys are very good at theory. Practical mein there is some problem, agreed, but theory mein you are best. So put your best in audit. So remove that fear. So tell your friends also if they have skipped this chapter, no issues. They can join from tomorrow also. Every day I'll be teaching 2 chapters. That's my target. 1.5 to 2 chapters. Okay. Let's do question. Now, so I'll be doing this big questions. So because we have to revise everything. So that you get an idea how the question will come, what answer you have to write. Now, I'm in the module, okay, module 9.20, page number. Read the question, write in the chat that as per your knowledge, what answer should come. I'm not asking you to write the entire answer, just write the keywords and then I'll tell you which answer it is, okay. We are reading 6 questions, 6, okay. MNC has engaged CA Lalit to help the company in compilation. So this is your hint to identify. So out of so many chapters, 19 chapters, the compilation what I have studied in related service chapter, compilation of the financial information. Can somebody write in the chat which standard will come? Which standard will come? Then 4410, very good. Lalit explained his team members the scope of the work and responsibility under this engagement. The team members have done mostly audit engagement and do not have a exposure to compilation engagement. Okay. Now what is the question? So I got a clear thought process. Okay, it is 4410. So in my mind, okay, 4410, my mind will start. Okay. Discuss the key issues that CA Lalit should deliberate and guide his team members with respect to this engagement and the manner it differs from assurance engagement. So the question is basically you have to write the answer of assurance engagement versus compilation engagement. Which answer you will write? Tell me. Which answer? Anybody? The first answer of compilation engagement, that basically definition. No, not ethical requirement. This. Explain compilation engagement. First question. Definition of compilation engagement. Any practitioner can take compulsion engagement. It is not an assurance engagement. It does not go blah 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 blah. And you write the purpose also. Question 1 and 2 basically. This was the answer. Understood, Deepak? Now, they are asking one question. Give your views on the applicable SQC1 to this engagement. See, SQC1 is Godfather. SQC1 is Godfather. All standards on audit, standards on review, standards on rate service, standards on assurance engagement. All standards ka Godfather is SQC1. So just in one line we have to answer. SQC1 is applicable to this engagement being a compilation engagement. SQC1 is applicable. Clear? Now, question number 7. You have to tell me what answer you have to write. Read the question from the screen. I want the answer for A first. A. Very good, Sukesh. Trade receivables. One particular item. SRS 4400. Very good. So by explaining the nature of engagement described above, so you have to write AUP ka definition. And whether it is for proper to accept the engagement, yes, any practitioner can do the engagement. This is basically that AUP wala answer. Definition of AUP. So from the notes, if I tell you, this difference between audit and AUP. So you will say audit is this, AUP is this. Basically the definition we have to write. Okay. And then any practitioner can accept this engagement. Very good, Joy. See, when you solve a model question, you get a lot of confidence that we are doing right things. Now, B question. While reporting, which precautions should be taken by her so that the readers of the report do not misunderstand the scope? What will you write here? Limitation to use in the audit report. Limitation and distribution of the use of the report. So now, if I see the answer of 7 ka B, what do you have to write? A statement that it does not constitute an audit nor a review, no assurance is expressed. A statement that the auditor has performed additional procedure and audit or review, others might have come to light that would have been reported. A statement that the report is restricted to those parties who have agreed to the procedures performed. A statement that the reports report only to the elements, accounts, items on the non-financial information specified and it does not extend to the entity FS taken as a whole. So this is a separate question. This answer you're supposed to write. Okay. So in your book, in your any notebook, what you are having, write the question 7b of module. Okay. Now, question number 8. Tell me, what standard, what answer you are supposed to write? What standard and what answer? Shreya said 4410. Shreya 4410. Very good. Compile. This was my hint. Compile. Perfect. 4410. Compilation engagement, the name. Answer. What answer you should write? Ask for the, bring the attention to the management that asking for accurate information. If the management is not agreeing, withdraw from the engagement, asking the reasons. Same. If the practitioner becomes aware during the engagement the company information do not applicable as per FRF, okay, amendments are required, company information is misleading, if management declines or does not permit, he shall withdraw, discussing with the management and inform the management is the reason for withdrawing. If the withdrawal is not possible, he shall determine the professional legal response. I told you this time this question should come. The point number 7 of the notes. Point number 7 of the notes. This answer. This part. Done. Full module done. I am telling you, trust the notes, understand the concept, use the questions, check the answers, it will match. And now you compare with any of your friend today once the class is over, okay, you call up your friend and ask him, do you know SRS 4400? Do you know what is 4410? Can you tell me this answer? My guarantee, he will not be able to tell. Trust the notes, trust the teacher, trust the process, trust yourself, you will clear. Now have you got the confidence, guys? 5 marks secured. Everybody in the class? Superb. Deepak, can you just mute yourself? Because I have connected my phone, I mean the mic, so I can't hear. Please write in the chat. Okay. So we have completed one chapter. Let's take a small break of 5 minutes because new chapter, okay. Go to restroom, drink water, eat something. In 5 minutes, we'll start with the new chapter. It's 12:06, 12:11 I start. Okay. I'm here only. Just go relax yourself. We start with the next chapter. Don't go, come back please. CA final is there. Hi guys, welcome back. Okay. Uh, Senthil, I'll be sharing it with the team. Okay. They will be sharing you in the group. One second. I'll just put it on the email and I'll copy paste here. Let me just try sending you right now only. Plus, I will ask the team to send you in the group also. Oh, I don't know whether they have made a group or not, so that you can take it from here. Plus, I'm sending in the chat also. Wait. Okay. So we have completed our first chapter SRS. Right now, what we are doing is we are doing group audit. Please open group audit notes or group audit chapter. I've shared in the chat. So copy this and forward to all your friends also. Okay. Are you ready with the group audit chapter, guys? Okay. So I forward the team also. I forward here also. Okay. Now see group audit. So very simple chapter again. 4 mark, 5 mark ka chapter. So question number one, it says exemption from CFS. A group audit basically holding subsidiary company. At what percentage, guys, do you become subsidiary? Can somebody tell me? At what percentage do you become subsidiary? 51 is wrong. It's more than 50%. 51 is wrong. In the Barrett is more than 50. Very good. So it's more than 50 may become subsidiary. At what percentage do you become associate? At what percentage do you become associate? Wrong, Sukesh. It's minimum 20%. Hajit, you are correct. Minimum 20%. Okay. At what percentage do you become wholly owned subsidiary? 100%. Okay. So if you have a subsidiary, whether you have an associate or a wholly owned subsidiary, you have to do consolidation. That's mandatory. That's mandatory. Okay. Now exemption from CFS under Companies Act. The question will be very much clear. Write about exemption under Companies Act. It says if you are a 100% subsidiary or if you are a 50% subsidiary. That means if you are a subsidiary. So A has invested in B and B has invested in C. Now you tell me if in the picture A and B is there. If A and B is there, who has to do conso? If in picture A and B is there, who has to do conso? I mean consolidation. Who will prepare CFS? Thank you, Sukesh, but I'm just asking this question. A. Okay. If B and C is there, B. If imagine full family is there, A is there, B is there, C is there, who has to prepare ultimately the console? A. That means who has not prepared console? B has not prepared console. B has not prepared console, correct? So B has got exemption. So but that it says B will get exemption, that is intermediary subsidiary will get exemption if it follows three conditions. What are the three conditions? First, they have to take NOC from all the members or one member. When I say all members, basically means if it's a 50% subsidiary. When I say one member, that means basically if it's a 100% subsidiary, because eventually if it's a 100% subsidiary, so B ka member will be only one guy, that is A, correct? So we'll take NOC from all the members of one member, and it is not a listed company or not wanting to get listed. It's not a listed company not wanting to get listed, and ultimate holding company prepares CFS. Ultimate holding company means A. If A prepares CFS, then B quote is exempted. B quote is exempted. Number one, NOC from all the members of one member, and it is not a listed company not wanting to get listed. Number three, ultimate holding company prepare CFS. Clear? Now, exemption from CFS under Ind AS. In the exam at final level, see, if that has come once, it has come 5 times. More important is this one. So as per Ind AS 110, an investment entity is not required. An investment entity is not required to present CFS, and it should measure all of its subsidiaries at FVTPL, that's fair value through PNL, as per Ind AS 109. So you will write as per Ind AS 110, an investment entity is not required to prepare CFS, and it should measure all its investments of, all its subsidiaries at fair value through PNL as per Ind AS 109. The parent company of such investment entity shall however prepare consolidation including the investment entity and other entities which is controlled by such investment entity. That means, imagine if A limited is there, A ka business is investing, B1 is there, C1 is there, D1 is there, E2 is there, then F is there, D1 ka D2 is there, then C1 ka C2 is there, okay? And A ka business is just to do investment. So imagine this is subsidiary, this is associate, this is wholly owned subsidiary. I just taught you if you have a wholly owned subsidiary or a subsidiary or associate, you have to do consolidation, correct? But A is what? A is investment entity, correct? A is investment entity. So as per Ind AS 110, Conso applicable? No sir, Conso is not applicable. CFS is not applicable, correct? But A ka holding company is Mummy Limited. Mummy Limited. Now you tell me, A Limited is investment entity. Mummy Limited is into business of, let us assume, laptops. They deal in laptops. Their business is laptops, buying and selling laptops. My question is Mummy Limited required to do conso? Is Mummy Limited required to do consolidation, guys? Is Mummy Limited required to do consolidation? Tell me. Investment entity A do not require consolidation, correct? Is Mummy Limited required to do consolidation? Yes. Yes, Mummy is a normal business company. But if Mummy Limited wants exemption, Mummy Limited itself should be an investment entity. Mummy Limited itself should be an investment entity. Sir, the parent company of such investment entity, in my example, parent company is Mummy Limited. Of such investment company means A Limited shall however prepare consolidation including the investment entity and its other entity, that means this entire family which is controlled by such investment entity. However, such parent entity will not prepare consolidation if such parent entity is itself an investment entity. Understood? So now what you have to do is this, because this answer is very important. You read 1 and 2. I am switching off my video. I am here only. Just read once and we proceed further. Okay? Read once. I am here only. Okay. I'll be scrolling slowly. If you have your book, you can read from your book. Done? Now, question number 3 says, what is the responsibility of parent entity? What is the responsibility of parent entity? So there are two questions now back to back, responsibility of parent entity and responsibility of parent ka auditor. So always remember, parent here basically means a holding company. So holding company ka what is the responsibility? See, you are the auditor of a holding company. Because you are the auditor of holding company, your responsibility is to prepare one stat audit report for that holding company. Then also management will prepare CFS, and on that CFS you have to prepare a consolidated audit report. But the question is, who will prepare CFS? Consolidated financial statement will be prepared by whom? Can you write in the chat, guys? Consolidated financial statement will be prepared by whom? So parent entity, right? Now they have one subsidiary, they have 5 subsidiaries, they have India mein subsidiary, they have foreign mein associate. How would we come to know? It is the duty of the management. So sir, what is the duty of the management first? Sir, identify the components including financial information of the component. What will you say? Identifying the components including the financial information of the components. Identifying the financial information. Identifying components including financial information of the component. Number 2, identify reportable segment for segment reporting. Identify reportable segment for segment reporting. They are doing trading ka business, they are doing manufacturing ka business, they are doing service ka business. Third, identify related party and related party transaction. Identify related party and related party transaction. 4, obtain accurate and complete financial information from components. Obtain accurate and complete information from components. Then make appropriate consolidation adjustment. Make appropriate conso adjustment. Okay, conso adjustment I'll be teaching you later on. Then, you know, in family there are some other friends, I mean some other brother sister who goes other way and the family goes one way. It could be you or it could be your brother or sister, but in the family picture everybody sits together, right? So harmonize the accounting policy. So you will harmonize it. Now I have a one foreign brother, but when he comes to India he has to talk to me in Tamil or Hindi or English, in my language only. He goes like yeah. So what we do, we convert him. That is gap conversion wherever applicable. Gap conversion happens whenever there is a foreign entity. Whenever there is a foreign entity. So guys, these are the responsibility of parent companies. First one, identifying the components including the financial information of the components. Number 2, identify reportable segment for segment reporting. Number 3, identify RP and RPT. Fourth, whatever subsidies you have got, you will obtain accurate and complete information from the components. Make appropriate console adjustment, harmonizing the accounting policy, gap conversion wherever applicable. Gap conversion wherever applicable. This is holding company ka responsibility. What is the responsibility of auditor? Very simple answer. First, he should validate the requirement for preparation of CFS. He should check whether CFS is applicable or not. Then he should satisfy himself that the CFS has been prepared as per applicable FRF. First check CFS applicable. Acha, applicable. Whether it is prepared as per applicable financial reporting framework. Then 3 answers of intermediate audit. He should inquire into the matters as per 143(1) of Companies Act 2013. He should satisfy himself to express opinion that is giving true and fair view as per 143(2). So 143(1), 143(2) and 143(3). He should report on the matters under 143(3) of Companies Act. 143(1), 143(2), 143(3). So first check the requirement, satisfy himself that requirement is applicable. Then 143(1), 143(2), 143. 143(1) talks about inquiry of the matters. 143(2) talks about true and fair view. Sound. 143(2) true and fair view. 143(2) true and fair view. Then 143(3) of the Companies Act. He should report on the matters of 143(3) of the Companies Act. Understood? Now read 3 and 4. 3 and 4 are connected. That's holding company ka responsibility. This is holding company ka auditor ka responsibility. Read 3 and 4. I am zooming it, okay? Done? So question 3 and 4 is done. Now, question number 5, it says, what are the types of consolidation adjustment? It says, what are the types of consolidation adjustments? Okay. So guys, there are 2 types of consolidation adjustment. One is permanent consolidation adjustment. We call this as PCA. The other one is current period consolidation adjustment. We call this as CPCA. One second. Permanent consolidation adjustment and current period consolidation adjustment. See, permanent consolidation adjustment. This is like when you acquire a subsidiary, or if you are an associate, it became subsidiary, or if it was a subsidiary, it became wholly owned subsidiary. So it says these adjustments are made on the first occasion. These adjustments are made on the first occasion or on a subsequent occasion whenever there is a change in the shareholding already held. So these adjustments are made on the first occasion or on subsequent occasion whenever there is a change in the shareholding already held. What are the adjustments? The code is ECGE. The code is ECGE. Determination of equity. Equity attributable to minority or NCI. NCI basically means non-controlling interest. E. Determination of equity attributable to minority or NCI. CG. Determination of capital reserve or goodwill as per applicable AS. Determination of capital reserve or goodwill as per applicable AS. The auditor should verify that the pre-acquisition reserve has been allocated appropriately between the parent company and minority or NCI. So this much is a 4-mark answer. What do you mean by the word PCA? See, PCA are the adjustments which are made on the first occasion when you acquire a subsidiary, or when you, on a subsequent occasion whenever there is a change. So if it was associate, it became subsidiary. If it was subsidiary, it became wholly owned subsidiary. Following are the adjustment. The code is ECG. E. Determination of equity attributable to minority or NCI. CG. Determination of capital reserve or goodwill as per applicable AS. Then the auditor should verify pre-acquisition reserve has been allocated appropriately between the parent company and minority or NCI. Okay? Now, CPCA. CPCA is what? Current period consolidation adjustment. These adjustments are made every year. You must have done a lot of adjustments in your FR paper also. It says these adjustments are made in the year in which consolidation is in. That means every year. Okay? Then, following are the adjustment. I. Intra-group interest paid or received. The code here is if passive. The code is if passive. I say intra-group interest paid or received. F. In case of foreign component. See, component basically means subsidiary, associate, joint venture. If I have a foreign component, so obviously consolidation will be done as per India, as per Indian GAAP only, right? Now imagine if I have a subsidiary in UK, they will prepare the accounts as per UK GAAP, correct? But India may, when you prepare holding companies in India, so we have to prepare the CFS as per Indian GAAP. So what you have to do, you have to convert them. So you have to convert those accounts which is prepared as per UK into Indian GAAP. So we write GAAP conversion wherever applicable. P. Intragroup profits on assets acquisition. Intragroup profits on assets acquired from subsidiary. A. Adjustments relating to harmonizing accounting policy. Adjustment for harmonizing accounting policy. Can you give me an example of different accounting policy, like subsidiary following something else and associate following something else, or holding following something else? Can you give me those? Inventory valuation, very good. Depreciation is there. Mode of inventory valuation, correct. So adjustment or investment ka working. Harmonizing accounting policy. I. Intragroup indebtedness, like subsidiary selling it or holding selling it to the subsidiary. Intragroup indebtedness. Then there are 2S. Adjustments for subsequent event, that is after balance sheet date but before orders reported. Adjustment for subsequent event, that is after balance sheet date but before orders reported. Adjustment for significant transaction between date of FS of component and date of FS of parent. Like for example, in your FR you must have done some subsidiaries close at 31st December if it's a foreign subsidiary. But in India we follow April to March. You bring those 31st December accounts, you merge it, you extend it till 31st March. So that is S wala point. Adjustment for significant transaction between date of FS of component and date of FS of parent. E. Equity attributable to minority or NCI. E is what? Equity attributable to minority or NCI. So equity wala point is common. It will come in the first time also when you acquire, and every year you have to give 55% is with the holding company, 45 with somebody else. So you have to give the 45 to somebody else, and that's equity attributable to minority or NCI. So here the code is, guys, PCA. Here the code is if passive. If passive, okay? Read PCA and if passive. I'm scrolling first PCA, then I'll come to if passive. Then we do a question on this. Read. If you have your book from the book or from the screen. I'm scrolling slowly. Done? Now let me just show you a question so that you get confidence. This is actual September ka paper. Everybody concentrate and answer. This question came for 2 marks. It says which of the following is not a current period consolidation adjustment. Adjustments relating to harmonizing the different accounting policies followed by A, B and C. I have not taught you the story. Adjustments to the FS for the recognized subsequent events. Then adjustment determination of goodwill or capital reserve as per applicable AS. Determination of unrealized intergroup profits on assets acquired transfer from B Limited or C Limited. Choose your option. Choose your option. Not a current period consolidation adjustment. If you remember the code, you can easily answer. Goodwill capital reserve is falling in PCA. ECG is the code, permanent consolidation adjustment. So if you remember the code, you can easily answer. Actual paper question. See, I'm telling you, trust the notes, mug at the notes, your answer would be very much clear. Deepak, goodwill capital reserve, na, intergroup profit was there in if paisa. P, profits on assets acquired. Then harmonizing accounting policy A, if paisa ka A, it was there. Adjustment to the subsequent event S, if paisa ka S, it was also there. Boss, capital reserve goodwill you have studied where? You have studied in BCA, ECG code, CG, C capital reserve G goodwill. Understood, Deepak? Okay, now question number 6. It says examples of WR to be obtained from the management while auditing CFS. WR is basically written representation. So guys, written representation ka essay number, anybody remember essay number of written representation? 1 second. Huh? Oops. $580. Essay number is 580. So whatever we have studied in that answer, responsibility of parent company, same answer will come here. It says the auditor should obtain WR from the management. What completeness of components included in the CFS, identification of the components. Then reportable segment for segment reporting. Their point was also there. Identification of RP and RPT for reporting. This was also there. Then appropriateness and completeness of consolidation adjustment, including elimination of intra-group transaction. This was also there. So we have not studied anything new. This we have studied this answer. Responsibility of parent company. So you will take WR for all this only. You will take WR for all this. So this also can come in descriptive, also can come in MCQ also. Okay, what are the examples of WR to be obtained in case of group audits? If you are a auditor of holding company, okay, this is company, this is turnover, this full story they will give. But eventually they will ask you examples of WR. Okay. Then question number 7. It says, this is a hint you need to understand via hint. What are the specific procedures? What are the specific procedures to be followed by the auditor? What are specific procedures to be followed by the auditor in respect of completeness, of the information received from the management while auditing CFS? What are the specific procedures to be followed by the auditor in respect of completeness of the information received from the management while auditing CFS? So heading ka hint is specific procedures. So what you will say? The code here is following points should be checked. The code here is iska PJ works. So if I want to understand whether whatever information management is given, whether it's complete or not, my specific procedure is iska PJ works. Iska PJ works. I review the investment of the parent as well as of its component investment. S, review statutory records register under section 186. C, identify the changes in the shareholding. Then A, Review other arrangements. So review the investment, statutory records, changes in the shareholding, other arrangement. PJ works. P, review parent ka procedure for identification of various components. J, review joint ventures and joint arrangement. W, review working papers for the prior years for the known components. The code here is ISKA PJ works. Additionally, the auditor should make inquiry with the management to identify new components if you have acquired some other subsidiary or not. So whatever information they have given, whether the information is complete or not, what procedure will apply? My code is ISKA PJ works. So in your book, whatever book you have, to underline that specific procedure is the hint and completeness. If I have to check completeness of the information, I have to perform some procedure. This is the procedure. Read question number 7. The code is ISKA PJ works. Then this also question came in the exam. What are the disclosures in the notes to be given in separate FS but not in CFS? Like when you prepare standalone financial statement. Now understand, I am preparing for AB Limited. Okay, so I'll write 1, 2, 3, 4 notes here. I am preparing it for Baby Limited. Here 1, 2, 3. Now, when I am preparing CFS of AB and Baby, okay? The question is, should we write 4 plus 3, 7 notes or the relevant notes? The answer is relevant notes. Now, what are the disclosure which is coming only in standalone? This is SFS. But which is coming in separate FS, that means standalone FS, but which is not coming in CFS. So which will not form part of CFS. So this came twice in the actual paper. Plus they can ask us in MCQ also was identify like the question which came in the previous attempt that came on the adjustment. Similar to this they can ask in like which one will not come in CFS. So we need to remember all. Plus for a descriptive also we need to remember. So first one, the sources from which bonus shares are issued. The sources from which bonus shares are issued. You can't mention that in CFS. Number 2, unutilized money of public issue. You will not mention that in CFS. Disclosure under MSME. So this here very simple. Sources of bonus shares, unutilized money of public issue. Third, disclosure under MSME. Fourth, so value of imports calculated on CIF basis. What is CIF? Cost, insurance, freight for raw materials, components and capital goods. Raw material, components and capital goods. Then value of imports of raw material, spare parts and components consumed. So this is same. Value of imports on CIF basis, value of imports of raw material, spare parts and components consumed. Then expenditure in foreign currency, earning in foreign currency. 6 and 7 is same. Expenditure in foreign currency, earnings in foreign currency. Expenditure in foreign currency, earning in foreign currency. For what? For royalty, know-how, professional fees. Same point. Royalty, know-how, professional fees. 8th, amount remitted in foreign currency on account of dividend to the non-resident shareholder. Amount remitted in foreign currency on account of dividend remitted to non-resident shareholder. So these are the 8 pointers. First one, so sources from which bonus shares are issued, unutilized money of public issue, disclosure under MSME. Then value of imports on CIF basis, value of imports on raw materials, spare parts, components. Then expenditure in foreign currency, earnings in foreign currency. Then amounts remitted in foreign currency on account of dividend remitted to non-resident shareholder. NR shareholder means non-resident shareholder. This came in exam. Understood? So we stop here for the day. I think around 20 minutes more, 10 to 20 minutes will take more to finish all this chapter. But we have completed SRS full and this 70% this is completed. Guys, have you understood all this? So notes I have shared in the chat plus notes I have shared in the team also. In case still you are not getting, you can get that in my Telegram group. Telegram group I have shared that also. You can get that in my Telegram group or on my YouTube or on my Instagram. You'll get the notes also. So you can join my Telegram by scanning the QR. Okay. Let's do 2 questions so that you get confidence of whatever we have studied. Tomorrow also same time we'll be meeting. So tomorrow we'll be trying to complete this chapter. Plus we'll be doing NBFC. Plus we'll be doing SA 800 ka series. This NBFC and 800 ka series tomorrow. Achha, wait. Let's do the questions so that you get confidence from group audit. Question 4A from the module. Tell me, can you answer this? Tell me what it is. This is holding company ka responsibility. Number 2, permanent consolidation adjustment. Can you give me the code for permanent consolidation adjustment? What was the code I have taught you? ECG, very good. E, equity attributable to minority or NCI. CG is capitalism of goodwill as per applicable AS. Then the auditor should check whether pre-acquisition reserve has been allocated between the parent company and NCI. Done. See, it's all about confidence. I'm trying to give my best to you guys. Okay, how much you take it, that's upon you. So whatever chapters we are doing, I'll just tell you the timetable how to do. Now assuming that whenever you're appearing, whatever chapters we are doing, you have got my handwritten notes. Okay, you will be having your teacher ka question bank, or if not, model mein there are questions. So every chapter has around 10-12 questions. Okay, read the question from here, think what will be the answer from the notes. Okay, and see whether it is matching or not. If it is not matching, read the answer, see where you went wrong. If you find out some different point, note down in the notes only itself or in your book. So what will happen with this pattern, you will realize that acha, I am getting confidence. See, problem is scattered. Lot of people don't understand the things get scattered. Now we need to consolidate it. So now we are very clear. SRS mein 4400 4410. There's a penal ka answer, there's startup wala answer. We know it. Same way group audit mein parent company ka answer, parent auditor ka answer is there. PCA, CPCA ka answer is there, and 3-4 more answers are there. So you should be clear what answer ICAs are expecting us to answer. So that way you clear your mind. So if I am telling 19 chapters are there in the syllabus, 19 may say you can't become master of 19. At least we can become master of around 14 chapters, 15 chapters. Let's target that, and that we do it like very thoroughly. Content module, content module, content module. Understand, ICI will not ask you anything from outside. 5 mark ka question would be there, 10 mark ka question would be there, but out of 120 marks or 116 marks, if 20 marks is from outside, like something very weird question, the rest 80-90 marks is with me only, na. So whatever mistakes you have done in the past, don't do it here. Okay. Recommend to your friends also. Tell them I'm revising it every day. Ask them to join these sessions. Okay. Follow me and I'll make sure that you're clear. Okay. So bye bye guys. Tomorrow we meet at 11 a.m. Completing this chapter in NBFC. Do come. Okay. And get your friends also. Bye guys. Take care. Thank you. God bless you. Okay. And start studying. After my session is over, revise whatever we have done. Okay. Bye. Take care. 11 a.m. tomorrow. So good morning guys, welcome to the class. And in the previous session we have started with SRS. We have done two SRS. One was SRS 4400, other one was SRS 4410. Okay. Oops, my iPad is stuck. 1 second. Huh? Yeah. So we did SRS 4400 and with SRS 4410. 4400 was engagements, no, agreed upon procedures relating to financial engagements, relating to agreed upon procedures relating to financial informations, and 4410 was compilation engagement. Now both of this standard, can you tell me who can do? Who can perform both of this engagement? SRS 4400, 4410. Who can perform this engagement? Can you write in the chat? Very good, Sukesh. Any CA in practice. We call them as any practitioner can do this engagement. Okay. Then I have taught you something called as contents of report. I have taught you something called as contents of report. What was the common code I have taught you contents of report में? Sir, third ups. We have done title, addressee, date, place, sign. Then bottom में it is FRN, UDIN. Then three important points I have taught you. One was management का responsibility. Other one was practitioner का responsibility. And then a statement that the engagement is performed as per so and so standard. Statement that this engagement was performed as per so and so standard. Correct. Nature of the procedure performed. It is not an audit nor a review. Therefore, no assurance and no conclusion would be given. This we have studied if you remember that part. Correct. Now, the next chapter we start with group audit. Achha, group audit mein we had done exemptions. Okay, we have done exemption. So, exemption and consult from CFS was under two things. Under Companies Act was there and other one was Ind AS. Now, can you tell me Companies Act exemption was written? What was the exemption under Companies Act? Anybody? So it was given to intermediary subsidiary. So intermediary subsidiary has don't have to do consolidation. Provide three conditions are fulfilled. Number one was second I remember. Achha, the first was NOC. No objection. Certificate from all the members or one members. Then very good Anirudh. All members approved. Number two, and not a listed company and not wanting to get listed and not a listed company not wanting to get listed and its ultimate holding company. Its ultimate holding company prepares the CFS. Ultimate holding company prepares the CFS. Correct? Very good. Acha, under Ind AS. There was an Ind AS ka number what I have taught you. What was the number of Ind AS? Joy, you are not answering. Siva, you are not answering. Deepak, you are not answering. Please write in the chat. See, it raises your confidence. Only Anirudh and Sukesh are answering. Okay. Ind AS 110. Ind AS 110 says, boss, if you are an investment entity, you don't have to do consolidation, correct? But if there's a holding company of yours, Mummy Limited, that has to do consolidation, okay? Acha, investment entity, you will route through FVTPL as per Ind AS 109. But your holding company has to do consolidation. If your holding company also want exemption, if they don't want to do console, they can do it. They can get exemption. How? They can get exemption if provide they themselves is an investment entity. They themselves is an investment entity. This is written in Ind AS 110. Correct? Then we have done two kinds of console adjustments. What were the two kinds of console adjustments? Permanent consolidation adjustments and current period consolidation adjustment. Very good, very good. So permanent adjustments are placed when on the first occasion or on a subsequent occasion whenever there is a change in the shareholding. Current period is done every year. Okay? Every year. Acha. Now can you give me examples of permanent? I have given you a code for permanent. Deepak, you are not answering. Deepak P. ECG, okay, ECG. Determination of equity attributable to minorities. C is capitalization of goodwill as per applicable AS, and then the auditor should check the pre-acquisition reserve has been allocated appropriately between the parent and the minority. Correct? Acha, CPCA ka code, anybody? Very good, Deepak, superb. If paise, acha, if paise. So I'll try to recall. I was intra-group interest paid or received. PF was for in case of foreign components. Gap conversion. P is profits on assets acquired from subsidiary. A is adjusting, harmonizing different accounting policy. I intragroup indebtedness. S was subsequent events, and one more S was significant transaction between date of FSR parent and component. E equity attributable to minorities, and one more is the adjustment for deferred tax. In the model they have given one more adjustment for deferred tax. This much we had done. So you remember, correct? All good now? So this much we have done, and then we have done responsibility of parent company, responsibility of parent auditor. Okay, that question also we have done. Then we have done WR wala answer. Then we have done specific procedure wala answer. Here the code was iska PJ works. Then we have given some disclosures in the note which will come in separate SFS, but it will not come in CFS. In standard it will come, but it will not come in CFS. Correct? Till here we are done. I hope you have got the notes. You have got the notes, right? Okay. Also, very important, I hope you have got conference for 1.5 chapter. Second chapter will get over in like next 10 minutes. Then we start with the next chapter. So this is the pattern wherein I generally teach in the class also. Whatever we have studied the previous day, we revise it the next day. But tomorrow when we meet, day 3, we will revise day 1 and day 2 ka content. Obviously the content will get smaller, but yeah, I will just touch the pain points so that you recall. See, audit is not about just teaching. Audit is about retention. The more you retain, the more chances of getting clear. Okay? Now, it says, how as an auditor you will report in CFS. How as an auditor you will report in CFS. Check it, this is reporting. So, if the parent and component auditor is same, like let us assume CA Sukesh. CA Sukesh is the auditor of parent company, also it's the auditor of the subsidiary also. That's allowed in law. He will check the compliance of the applicable AS or Ind AS, whatever it is applicable, and the applicability of FRF. He will report on the true and fair view of the consolidated balance sheet, consolidated P&L and consolidated cash flow. Consolidated balance sheet, consolidated P&L, consolidated cash flow. Then, when parent auditor and component auditor is different, imagine CA Deepak is subsidiary auditor, CA Sukesh is parent auditor. So, parent auditor is father, no? Parent auditor, pa. Parent auditor. So, he will state the division of responsibility. He will state division of responsibility by giving the percentage and the amount of sales, assets and cash flow. So, you have to show sales, assets and cash flow. We call this as SAC. Sales ka bifurcation, asset ka bifurcation, cash flow ka bifurcation in terms of percentage also, in terms of amount also. Then division of responsibility, DOR means this. Division of responsibility is not constituted as a ground for qualification. See, when do you qualify a report? When there is a problem in the company. When do you qualify a report? When there is a problem in the company. If there is no problem in the company, so you will give clean report only. So, but here the auditor is saying, Acha, holding audit I have done and subsidiary audit Deepak has done. So, I am qualifying it. It is not a ground of qualification. Obviously, in law, there can be two auditors also. Acha, division of responsibility will be stated in Om para. Om para is other matter para as per SA 706. Other matter para as per SA 706. Other matter para as per SA 706. ठीक है? Then, when the accounting framework differs, so like for example, we in India we follow Indian GAAP, in US they follow US GAAP, ठीक है, और UK में UK GAAP. So it says if the component follows group accounting policy means Indian GAAP only. So the subsidiary is also following Indian GAAP only. It says the auditor should decide to rely upon the local auditor of component. Whether I should rely on the local auditor, that means UK auditor or not, that the star auditor will decide. However, if conversion entries are passed, that means if India may they are following Indian GAAP, subsidiary is following UK GAAP. Okay, obviously that UK ka subsidiary account will come to India. When they come to India, we have to convert them. When we convert them, we have to prepare them as per Indian GAAP. So the auditor has to check the conversion entry. Guys, who passes conversion entries? Like from UK GAAP to Indian GAAP? Who will pass conversion entries? The management. Management of which company? Which company? Very good. Joy, very good. Jocelyn, very good. Parent company. Parent company ka management will pass the conversion entries. Correct? Then, when the auditing framework differs, auditing framework, what will you say? You have to follow Indian GAS, generally accepted auditing standards. Only one line, generally accepted auditing standards. Very important for MCQ. When the component is not audited, see, the component is not audited and it is material. Not audited and material. Material means important, significant. The auditor has to modify the audit report as per SA 705 and consider both quantitative and qualitative factors. Consider both quantitative and qualitative factors. So it says when the component is not audited, so and it is material, the auditor should modify the audit report as per SA 705, consider both quantitative and qualitative factors. Okay? So in the exam point of view, if I say B wala point and E wala point is important, B and E is important. Okay? B and E. Next answer. I expect this answer in the upcoming exam. Reason being, it's been very long, they have not tested on materiality wala concept. So guys, materiality is basically important, significance. Okay? So it says the auditor is required to compute the materiality for the group as a whole. That means holding, subsidiary, associate, joint venture, everything you will consider and you will compute the materiality for the group as a whole. Number two, this materiality should be used to check the appropriateness of two adjustments, PCA and CPCA, permanent consolidation adjustment and current period consolidation adjustment. So you will check the appropriateness of adjustments. Then, whatever parent auditor has determined the materiality on the group level to determine whether the particular components FS are material to the group. So whatever materiality he has considered, he will use that materiality to decide whether this subsidiary is material, this associate is material, acha, this subsidiary not material. Who will take this call? Parent auditor. Then for each component, he should communicate the same to the component auditor. So parent auditor will communicate to the subsidiary auditor, acha, hey subsidiary, you are material. Hey, you associate, not material. Hey, you subsidiary, not material. You associate, you material. So he has to communicate. It's a flow. So what are you computing first? Materiality for the group as a whole. Number two, he should check PCA and CPCA. You should use that materiality to check the appropriateness of PCA and CPCA. Third, then the parent auditor can use the materiality computed on the group level to determine whether the particular component to the FS, components FS is material or not. Then if it is material, he will communicate. If it is not material, still he will communicate. That means he has to communicate the same to the component auditor. Then the parent auditor should also obtain certain confirmation from the components auditor like towards independence, code of ethics and disclosure requirements. Subsidiary auditors whether independent or not, because you have to see the entire group, component, company, holding, associate, subsidiary of such holding. Now, while considering the observation, that is modification means qualified adverse disclaimer or UM or OM of the components auditor in his report, the parent auditor should comply with the requirements of SA 600. So you give the reference of SA 600 using the work of another auditor. Now, therefore, materiality would be considered while considering the observations of component auditor. So ideally, materiality should be considered. Okay. Read question number 10. Read question number 10. This has not been asked. There are chances that they may ask this. Okay, I'm here only. I'm switching off my video. Read this. Slowly I will scroll. Done? Now, question number 11 is a very skeptical answer. Let me first explain you what exactly the answer is. Then we do the questions and then you put your conclusion there, okay? It says common answer for exemption from CFS. Now, if you remember my first question, exemption under Companies Act was given to one entity. Exemption from CFS under Companies Act was given to one entity. What was that entity? Write in the chat. What was that entity? B Limited. That's basically, no. Joy, you're wrong. Companies Act made was intermediary subsidiary. Companies Act made was intermediary subsidiary, correct? Acha, under Ind AS, who was exempted? Investment company, correct? Investment entity, very good. Now the question is, sir, but as per Companies Act, see, investment entity is exempted, as per Ind AS. It is not exempted as per Companies Act. I repeat, investment entity is exempted under Ind AS, but as per Companies Act, it is not exempted. So ideally, as a student, if there is a question in the exam, what we should do? So in the module or in the content or in the suggestion, if you see what ICA has done, they have given the pointers. So first you will write as per section 129. If a company has a subsidiary or associate or joint venture, 129 of Companies Act 2030, okay, they have to do consolidation. You write first point, section 129 ka reference. Number 2, as per Ind AS 110, if you are an investment entity, you are exempted. You just copy the theory. Okay, you will measure your subsidiaries, your investment via FATPL as per Ind AS 109. So if you have a holding company, they have to do consolidation including your subsidiaries. However, if they want exemption, they themselves should be an investment entity. You copy the number 2. Number 3, you will copy whatever is given in the question. 4th, conclusion. Yes, consolidation is mandatory as per Companies Act. Yes, consolidation is mandatory as per Companies Act. See, exemption is given to investment entity under Ind AS, not under Companies Act. Okay? So these are 4 pointers. We'll do a question so that you get an idea. First, you will write section 129 ka theory that consolidation is mandatory. Number 2, you will copy Ind AS 110. Number 3, you will copy the question. Number 4, you will put the conclusion. Yes, consolidation is required. Now, in the exam, sometimes if they are asking a question itself only on Ind AS, write about Ind AS, answer as per Ind AS. The question will specify. Then you will say investment. If it is an investment entity, then no consolidation is required. Because it's very much clear. If nothing is mentioned, you will say, boss, always, consolidation is required always. Consolidation is required always. Clear? Now, I'll show you a question from the module. Now, we are on 5th question. If under any of these 2 criteria consolidation is mandatory, there's a mistake in your question. Can you reframe your question, Sukesh? Let's read this question number 5, then I take your query. In the meantime, you put the question there. Okay? R Limited owns 51% of voting power in S Limited. So R becomes holding, S becomes subsidiary. Okay? It, however, holds and discloses all the shares as stock in trade in the stock in trade. The shares are exclusively held with a view to subsequent disposal in near future. Thought process very clear. We'll be selling it out. R represented while preparing CFS, S can be excluded from consolidation. As a start order, how would you deal? What you should do? Tell me. Should you consolidate or should you exempt the consolidation? Conso is required or conso is not required? Conso is required or conso is not required? Tell me. 5th question. CFS required. Simple. So how do you frame your answer, Nasi? So section 129, I have written this. As per section 129, where a company having a subsidiary which is not required to prepare CFS under AS, okay, it shall be sufficient if the company complies with the provision CFS as given in Schedule 3 to the Act. Okay. Number 2. As per Ind AS 110, there is no such exemption for temporary control. Okay, consolidation is mandatory. Number 3. In the above case, they have copied the question. Number 4, conclusion. Therefore, R is required to prepare CFS as per Ind AS 110 as exemption for temporary control is not available under Ind AS 110. Understood? Just give me 1 minute. There's somebody on the door. I'll just come up. Understood? So, first is your Companies Act section 129. Second is Ind AS 110. Third is copy the question. Fourth, consolidation is mandatory. Okay, let's do one more question so that you get confidence. Irrespective of the level of question, write whatever I am telling you, then your answer will be correct. Let's do this 9th. H is an investment company preparing FS as per Ind AS. Ind AS. The company obtains funds from various investors and commits its performance for fair return and capital appreciation to investors. During the year under audit, it had been observed that the company had invested 25% in S1, 50 in S2 and 60 in S3. So, associate subsidiary of the respective share capital of investee companies. While checking the investment schedule of the company, an issue cropped us as to whether there would arise any need of consolidation of any such invested company as per 129. Okay, as per section 129 of Companies Act. So, starting with they use the word Ind AS, but they're asking as per 129, which contains no such exclusion. You tell me, consolidation required, not required? Consolidation required, not required? Yes, consolidation is required, correct? So, pattern ka flow is same. You will give the reference of 129, copy, then Ind AS 110, then copy the question and conclusion. Yes, as per section 129, consolidation is mandatory, correct? Let's check the answer. 9th question. So, you are writing first 129 ka reference. If a company has one or more subsidiaries including associate joint venture in addition to its own FS, they should prepare a CFS of all the subsidiaries in the same form and manner. So, you write 129 ka reference. Then, the CFS should be done as per Schedule 3 to the Act. Then you are writing investment entity 110 wala point. Then copy the question. Then this is the question fully copied. Correct. Therefore, it can be concluded ultimate authority on consolidation Ind AS as prescribed by law, and if so, and if they give exemption, it should be for. If out of exemption some subsidiaries are not consolidated, the list should be disclosed in notes to the account. So, ideally, it's saying it shall be sufficient if a company complies with the provision CFS given in Schedule 3 of the Act. That means consolidation is mandatory. Consolidation is mandatory. Understood the flow of answer now? Irrespective of the level of question, your flow will be 129, 110, copy the question, conclusion, consolidation mandatory. CFS shall be provided as per Schedule 3 to the Act. Clear? Now, 2-3 question is there, which I'll give you from the module. Okay. One is audit case of change in status of the component. This came in the exam. And coordination between PA and A. Coordination between PA and A. That's sufficient liaison between PA and A. Now see. In the module, this question is there. Question number 10. Okay. If you have your teacher ka book, it will be there in SS 600. This is basically SS 600 ka content. Venus Limited is a company engaged in manufacture of stainless steel items. The company operates through 5 business units and 35 branches across India. Mangalam and Associates, okay, are being appointed as the principal auditor of a company. While accepting the audit assignment as principal auditor, it says what point should be considered by the PA of the company. What point should be considered by the PA of the company? What point should be considered? Now, what point should be considered? This is question number 11, 10. So, if you have a teacher ka book or if you have a module, I am giving a code here, Karam, or you can use English word mark. So, it says principal auditor should consider the following. Okay, it says M. materiality of the portion of the financial information, whether the subsidiary is material or not. So I will consider first materiality. A, performance of additional procedure. What will you say? Performance of additional procedure as set out in this essay, that means essay 600. Performance of additional procedure required as per essay 600. R, risk of material misstatement in the FS in the financial information of the or components audited by another auditor. Okay. K, principals auditor degree of knowledge regarding the business of components. So I have to consider mark. M is materiality, A is additional procedure, R is ROM, K is knowledge. You can say karam or you can say mark. In Hindi we say karam, English word is mark. Okay. Now, question 11 came in exam. What they said, now listen. R Limited is a listed company. It's an exam question. Engage in manufacture of round bars. The company is having investment following components: subsidiary, joint venture, associate, business entities under common controls, interest in assets, liabilities, revenue, expense in joint operation with one company. So it's a joint operation. Now, R Limited and all its components are required to prepare their accounts as per Ind AS. While preparing CFS, R Limited consolidated its components on a line by line basis by adding items of assets, liabilities, income, expenses, cash flow. So what they did, they added all components. That means they added subsidiaries, joint venture, associate, entities under common control and interest in joint operation also. They added everything and consolidated. Now R seeks your advice on the accounting treatment. So this is basically as per Ind AS ka content. So if you know little idea about Ind AS, it says this is the question. Theory is written in para point B in the table, in para 5 in the theory. Now what is the conclusion here? R Limited consolidates components on a line basis like items of assets, liabilities and cash flow while preparing FS, which is correct. Which is correct for whom? Only for subsidiaries. However, the treatment is not correct for other components. Why? Because if you have learned Ind AS, I'll just show you the answer exactly where it is. This one. So the FS of parent and subsidiary, this is on page number module 13.15. So subsidiaries ka you do like adding items of assets, liabilities, income, expenses. Acha, related goodwill, capital reserve and non-NCA is as per Ind AS 103. Business combination is as per 103. Then intra-group adjustments is as per Ind AS 110. Associate joint ventures are as per equity method as per Ind AS 28, correct? Then investment in associates and joint ventures, that's the name of Ind AS 28. Acha, for joint operation you use 111. Business combination achievement series you do use Ind AS 103. So for every other entity there's a separate Ind AS line on line basis only for subsidiary. This came in I think September 24 or May 25, I don't remember, but the latest exam question. Understood? Let's do one September ka question so that you get confidence. This question came in exam. Messrs. C and Associate Chartered Accountants are appointed as the auditors of the company for CFS. So this is your hint. CFS ka question is there for the financial year. Pawn, Rook and Bishop Limited and Queen Limited are the subsidiaries of King Limited. The CFS consists of FS and the financial information of the subsidiaries audited by other auditors. Such FS financial information auditors report of subsidiaries have been furnished by management of King to them. Okay, they have given Pawn, Book, Bishop, Queen ka total assets, revenue, cash flow. SAC, sales, assets, cash flow. One subsidiary Queen is located outside India whose FS have been prepared as per the accounting principle generally accepted in the respective country, foreign GAAP, and which has been audited by auditors in the respective country. So one more is a 5 subsidiary Queen, this Queen, 4 subsidiaries, okay. What are they asking? They're not asking the theory. What did they ask in the exam? You are required to draft a suitable para based on the above information. Now you tell me, I have just taught you just 10 minutes prior. If you are a holding company and there is a subsidiary, there is something about division of responsibility. I am the auditor of holding company and you are the auditor of subsidiary company. Which para you will draft? Tell me guys, which para you will draft? Deepak, wrong. Para, I want para. Where do you state this responsibility? Correct, when PNC are different, that was a theory point. But Joy, if you write, what para you draft? Superb. Other matter para as per SA 706. Other matter para as per SA 706. Correct? So they have asked you to draft other matter para. Now I'll tell you, show you this question. Where it was. La 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 la. Same question was there in the module 13.28 page number. They have used the word D&D limited. They have given some subsidy. Here also they have given revenue, assets, cash flow. What are you doing? What are they asked? Where and how should information would be included in the report? You will see it in other matter para. And draft a suitable para, that means other matter para. Exactly module question. Exactly module question. Okay? This is the answer. This bracket was your answer. We did not audit the FS and the other financial information in respect of 4 subsidiaries in the question, okay, whose FS includes total assets of whatever the data they have given, total assets, okay, as on so and so year, total revenue so and so, cash flow so and so, total you have to do it, okay. If I open the question, so 35650, oops, 900 crores ka total assets on 31st March 25. Total revenue you add it up, okay, on 31st March 25, and cash flow 20, 30, 45 crores ka cash flows, okay. So you use that data. Then this financial information, other information have been audited by other auditors, and such FS and other informations and audit reports have been furnished to us by the management of the holding company. Our opinion on the CFS is so far relates to the amounts and disclosure in respect of the subsidiary and joint venture, and our report as per 143 of the Act relates to the above subsidiaries based solely on the reports of such auditor. Our report is based on that report, on those auditor ka report, that's it. Then there was a foreign subsidiary, one subsidiary Queen Limited was located outside India, whose FS and other information have been prepared. This is from the question. We have audited this conversion adjustment made by the holding company. Our opinion insofar relates to the balances and affairs of such subsidiary is based on the reports of the other auditors. That's it. So ideally you were supposed to make this para. Nothing come from the outside. It was from module question. So anybody who has appeared September 25, you know the question was from the module. Understood, guys? So do the content thoroughly. Just stick to ICM material. You will for sure clear. So 2 chapters done. Okay? Understood now? Let's start with NBFC. So we have completed SRS, we have completed group audits, now we are doing NBFC. Please come to your chapter of NBFC. We'll complete NBFC and then we'll take a 5-minute break. Okay? No. If a company is required to prepare CFS under Ind AS, but it is exempted under Ind AS. Ind AS means there is only one exemption. Investment entity. That much is clear. Then the company is required to follow Ind AS and prepare CFS. So how do you do? As per Schedule 3 to the Act. So ideally you don't do consolidation, you write in the notes. In the exam, you just have to write that line that the company will be preparing CFS as per the provisions contained in Schedule 3 to the Act. This line. Then it shall be sufficient if the company complies with the provision CFS given in Schedule 3 to the Act. So ideally, you don't do consolidation. You give it in the notes. Then the list should be disclosed in the notes to accounts for the reason. In DS, there is only one exemption. See, for the exam, you have to write this line. Then it shall be sufficient for the company to comply with the provision CFS as given in Schedule 3 to the Act. Ideally, it means you give a disclosure in the notes. You don't do consolidation as such. Understood, Sukesh? Okay. Now, NBFC. For sure, 5 mark का answer. For sure, you will see it in exam, 5 mark का answer, NBFC. Okay? Now, this time it was a very tough question. I mean, they had asked nonsense things. Now, there's an amendment also. I'll be teaching that amendment also. So, for sure, you will find that amendment. Okay? Now, meaning and registration of NBFC. So, it says NBFC means what? It's a financial institution which is a company, a non-banking institution which is a company whose principal business is receiving deposits or lending, or any other institution. Okay? That's a definition. Now, when do you become an NBFC? Following conditions are satisfied. Your income from financial assets should be more than 50% of the total income. Income from financial assets should be more than 50% of the total income, and financial assets should be more than 50% of total assets netted off by intangible. So if you have 100 rupees ka asset, 2 rupees is your intangible, minus that 98. The 98 ka more than 50% should be a financial asset. So balance should be could be your furniture, premises, land, building, but you are more than 50%, more than 50, not more than equal to, not minimum 51, not minimum 50, it should be more than 50. So we call it a 50-50 test, 50-50 test. Okay? Then such NBFC should have a net own fund of minimum 10 crore, and they should apply for registration to RBI. So the godfather of NBFC is basically RBI. So your NOF, net own fund, should be minimum 10 CR. However, if you are a small NBFC, when I say small NBFC, it means basically P2P, peer-to-peer, AA account aggregator, no public funds, no customer interface. P2P, AA, no aggregator, no public funds, no customer interface, net own fund shall be 2 crores. So generally it is 10 crores. But for small NBFC, account aggregator, no public funds, no customer interface, P2P, it is 2 crore rupees. If you are a very big NBFC basically means NBFC, IFC, Infrastructure Finance Company, IDF, NBFC, Infrastructure Debt Finance Company, okay, debt wala. Then the net own fund will be 300 crores. So there are 3 numbers we need to remember. Normal NBFC ka limit is 10 CR. Normal NBFC ka limit is 10 CR. Acha, for P2P AA, no public funds, no customer interface, the limit is 2 CR. Okay, for IDF and IFC, it is 300 CR. 10 to 300, 10 to 300. Okay? Then, difference between bank and NBFC is very simple. NBFC cannot accept demand deposit, but some NBFC can accept term deposits. NBFCs cannot accept demand deposit, but some NBFC can accept term deposits. NBFC do not form part of, like, term deposit means FD. So you can do FD with NBFC, but you can't open like a savings account or current account with NBFC. They do not form part of payment and settlement system, so they cannot issue checks on itself. Then DICGC, Deposit Insurance Credit Guarantee Corporation. DICGC basically means Deposit Insurance Credit Guarantee Corporation is not available to the depositors of NBFC, unlike in case of bank. So if bank becomes bankrupt, so the limit is 10 lakhs. So imagine you have kept 50 lakh rupees in a bank and the bank became bankrupt. So government will give you 10 lakh rupees. If you have kept 2 lakh rupees, obviously the government will give you 2 lakh rupees. But the same benefit is not given in case of NBFC. So if NBFC becomes bankrupt, like DHFL, Diwan Housing Finance Limited, it became bankrupt. So there is no protection from the government. Then no minimum exposure to priority sector like agriculture is required by NBFC. So agriculture, education, health. So these are the priority sector. So bank has to fund every month certain percentage, which RBI keeps on changing. That limit is not applicable to NBFC. Okay? Question number 3. Prudential norms. Okay? Prudential norms of NBFC. First one is capital requirement. So right now if you see, like September 25, then May 25 and November 24. All the 3 attempts when there was a question on this concept. Okay, because there has been changes now, also there's a change, so they may definitely test you on the concept. Every NBFC shall maintain a capital adequacy ratio consisting of tier 1 and tier 2 of 15%. So tier 1 plus tier 2 both should cumulatively be 15%. However, out of that tier 1 should be 10%. Okay. However, tier 1 should be 10%. But if you are doing gold ka business, like you have more than 50% of the assets, like you have given towards gold loan, then the tier 1 should be 12%. So 3 percentages are there. Tier 1 plus tier 2, 15%. Out of which tier 1 should be minimum 10%. Achha, but if you are doing gold ka business, it should be 12%. 12%. Okay? This much is clear. Then it says tier 1 capital for NBFC. How do you compute? So accept NBFC base layer. Now see, there are 4 layers we need to remember. We call this as BMUT. So in your teacher ka book, you'll be seeing that BMUT, B-M-U-T, BMUT. Base, middle, upper, top. Base, middle, upper, top. Base, middle, upper, top. Base. So ideally, if you see in the exam, they can test you in MCQ also. You don't have to remember top layer. Top layer is empty. Top layer is empty. So top में there is nothing right now. For your exam, nothing is there. Upper layer will consist of top 10 NBFC. Yeah. Top 10 eligible NBFC as per asset size. Now they have not given the list of top 10 NBFC. So top may it is empty. Upper may top 10 NBFC will come as per asset size. What is the top 10 NBFC? It is not in the list. So ideally we have to remember base and middle. Base and middle. Now base and middle, what do you do? How do you remember? So first let's understand base. Understand. Non-deposit taking NBFC below the asset size of 1000 crore. Non-deposit means they are not taking deposits. Asset size less than 1000 crore. 1 second. What we did previously for registration was net one fund. Okay. Your non-deposit NBFC below asset size of 1000 crore. Here it is asset size of 1000 crore. Okay. Asset size of 1000 crore. Then NBFC undertaking following activity. What it is? The new ones. P2P, peer-to-peer. AA account aggregator. Non-operating financial holding company. Not availing public funds. No customer interface. No. Non-operating holding finance company. Not availing public funds. Not having customer interface. If you see no, base layer. What you have to remember ideally is only one thing. P2P AA, that can be remembered easily because that's a new thing. That will fall in base. What you have to importantly remember is this one. Non-deposit taking NBFC, guys. Non-deposit taking NBFC, asset size of less than 1000 crore. That means 9999.99. 999.99. Okay? Now somebody will ask you, sir, what about asset size of 1000 crore and above? That will come in middle layer. So non-deposit taking NBFC with asset size of 1000 crore and above. 1000 crore and above. So now non-deposit, asset size less than 1000 crore in base, 1000 above in the middle. Okay? Now all deposit taking NBFC, I say will give you confusion. All deposit taking NBFC, irrespective of their asset size, will fall in middle. Then all big names, if you see, it will fall in middle. See, upper top to anyway vacant. Now you don't have to remember. So SPD, standalone primary dealers, infrastructure debt fund, then core investment companies, housing finance company, infrastructure finance company, it will fall in middle. all this will fall in middle layer. ठीक है, I am giving you 4 minutes time, 2 minutes time, not 4 also. Read, then I'll put a question on you. ठीक है, so ideally non deposit small less than 1000 base में, 1000 and above middle, all deposits. So if they give you a question, deposit taking NBFC 800 crores middle, 1200 crores middle, deposit taking NBFC exact 1000 crore still middle. Why? Because all deposit taking NBFC will fall in middle layer. ठीक है, read Bermud from the screen. It's a model page number 14.90. In your teacher ka book also it will be there. Read this once, then we proceed further. Read this much. Done? Let's do a question so that you get confidence. Read this box, then I'll put a question to you. During the financial year 24-25, APP has accepted deposits of 900 crores. Accepted deposits, a deposit taking NBFC, while its asset size is 990 crores. ठीक है? It has also undertaken following activities: standalone primary dealers, infrastructure, debt fund, housing finance, infra companies. The auditors are about to begin the audit of APP, for which audit team has been asked to prepare audit checklist. It's a November 24 का actual exam question. ठीक है? Keeping in view of the information above, identify under which layer APP will fall. Top, upper, middle, base. Give me the option. Option I want. Sri, I want the option. Everybody see how you decided? See, firstly it was a deposit taking NBFC irrespective of asset size. See, they have given accepted deposit. It's waste data. You have to see asset size. Deposit taking NBFC. Okay? Plus they have taken what activity, all this for nonsense was written wherein it was written middle. See, because just remember base mein what it is, no, non-operating, no customer interface, no availing fund, P2P AA and non-deposit less than 1000 crore. That is in base. Rest everything is in middle. Everything is in middle. So they have given confusion purposefully for 990 because 1000 crore ka data is there. But sir, it is deposit taking NBFC irrespective of your asset size, you will fall in middle. Let's check the answer. So this was question number 8, 8 ka C, 8 ka C, 8 ka C, boss, 8 ka C, 8 ka C, 8 ka C. Are you getting confidence, guys? Are your concepts getting very much clear? Do recommend to your friends. See, evaluation is very much important. When you study, just do ICI question. Trust me, your concepts get very much clear and then you know what to write, where to write. This is all about audit. I'm putting my best so that you retain the concept. Though it's a revision session, I'm not getting into more details because it's not a regular class. It's a revision session. So I assume that 20% you have studied. But I'm not assuming that I'm doing from zero. I'm doing everything for you guys. Okay? Now, so Bamut is very much clear. Now it says, how do you calculate tier 1? So ideally my capital risk asset ratio should be tier 1 plus tier 2 should be 15%. Right? Capital adequacy ratio should be 15%, out of which T1 should be my 10%, but if it's a gold cup business, it should be 12%. Now, tier 1 capital for NBFC, except NBFC base layer, ignoring base layer. So base layer ke liye we don't do this calculation. It says it is a sum of owned fund plus PDI, perpetual debt instruments. So you have to add A, owned fund, B, PDI. How do you get PDI? Issued by non-deposit taking NBFC to the extent of maximum 15% of aggregate of tier 1 capital of such company as on 31st March of the last year. So last year ka whatever was a tier 1 capital, uska 15% you have to do and put it here. Okay? Sir, 15% if you have put it here, 85 will go where? There. In tier 2 calculation. Okay? Now, NBFC base layer are not eligible to include PDI. So if you are calculating for NBFC base layer, this amount will come to 0. This will be 0 because they are not allowed, they are not eligible to include PDI. Okay? Now, how do you get own fund? Investment, own fund, you will take whatever is given in the question, less investment in shares of other NBFC, less investment in shares, debentures, bonds and loans and advances, less higher purchase finances, less lease finances, less deposit with subsidiaries of company in the same group exceeding 10% of the own fund. They will give you the data. You have to just keep on minusing. Ideally, how much money is left with you? You have invested in shares of other NBFC, minus. Invested in some other company ka shares, minus. You have done higher purchase finances, minus. Lease finance, minus. Deposit in the subsidiaries, minus. So you get own fund plus PDI. But if the question says base layer, ignore this PDI. So it will be only A wala part. You got tier 1. Then tier 2. So tier 2 is a sum of what? You have to add everything. Preference shares other than those which are compulsory convertible into equity. Other than those which are compulsory convertible into equity. Other than those which are compulsory convertible into equity. What does this line means? Can you just simplify it? Which preference share they are referring to? Optionally convertible, no. Non-convertible, no. It says other than which are compulsorily convertible into equity, na. So basically non-convertible, na. Non-convertible. Which are convertible preference shares. So you can't take that. Convertible you can't. What is that? Non-convertible preference shares. Non-convertible preference shares. Revaluation reserves at the discount rate of 55%. Revaluation reserves at the discount rate of 55%. Then general provisions and loss reserve to the extent of 1.25% of their RWA. In the question, if they have given actual or whatever you compute, if they have given like 50 lakh rupees, you compute 1.25% of RWA. You have to take whichever is less. So actual or computed, whichever is less. Actual or computed, whichever is less. HDC, hybrid debt capital instrument, they will give in the question. Subordinated debt, they will give in the question. Then PDI issued by non-depositing NBFC, which is in excess of what qualifies for tier 1. So imagine 100 rupees was there, 15 you took there in tier 1, 85 will come here. 85 will come here. You add everything. You add everything. It has to be restricted. It has to be restricted to tier 1. To the extent the aggregate does not exceed tier 1. Imagine tier 1 ka answer is coming at, like let's assume 1025. Okay? Hypothetically. And tier 2 ka calculation says 1500. So you will not do 1025 plus 1500. You will do 1025 plus 1025. You have to restrict this tier 2 to the extent of tier 1. NBFC base layers are not eligible to include PDI in the tier 2 ka calculation. So this last point, PDI will not come in tier 2 also. For which company? NBFC base layer. Okay? Read this, then we do a question. Read this. Done? Now, so I'll tell you the question which came in the exam. This is the question. Okay? It came in November 24. Q Limited, an NBFC classified under the scale-based regulation, is required to maintain a capital ratio of 15% of its aggregate risk-weighted assets and risk-adjusted off-balance items. The company has following data: Tier 1, Tier 2. They have given own fund, investment in shares of other NBFC. They have given 150 crores. PDI is 120 crores. They have given PDI. Okay, it is not base layer, na? It is not. If it was base layer, you have to ignore this. Preference shares not compulsory convertible into equity. Correct? Non-convertible 80 crores. Reval reserve 200 crores. General provision 50 crores. HDC 90. Subordinated 140. RWA 8000 crores. Okay? What are they asking us? Considering Q Finance is neither an NBFC MFI nor engaged in lending gold jewelry. So it compute tier 1. So tier 1 should be compute tier 1 and tier 2 and capital risk ratio. This means that tier 1 has to be 10%. If it was gold jewelry, then it would be 12%. But they are saying it is not a gold jewelry wala business. It is not in the gold jewelry. So it will be basic 10% only. So you have to check whether 15% is correct or not for them. Okay? So this is the data. Start computing. I want you to calculate this. First get me tier 1 ka figure. Then I'll teach you how to get tier 1 ka figure. The theory of this is written in module. I'll just show you the page number if you have module, or if you have my book or your teacher ka book, it is there in the book. It is there on page number 14.92, 9293. Module mein 14.9293. Please compute tier 1 first. I'm here only. Done? Now see what is the answer. Tier 1 is coming as 970. Deepak, you are wrong. Shri, you are wrong. Sukesh, I don't know why you did not got the answer. How do you compute tier 1? Tier 1 is basically own fund. How much is the own fund they have given? 1000 crores. Minus investment in shares of other companies, minus 150. Plus PDI, 120. So 1000 minus 150 plus 120, 970. Now here we are not doing the breakup of PDI. If you remember PDI, how do you get PDI? PDI is basically 15% of the last year ka tier 1 capital. So whatever the answer will come if the question had given tier 1 capital of the last year, we will compute 15% of that. So 15% will take it here. Imagine 15% come up to 400 rupees. So 400 will come here. So 970 में से 400 goes here. The balance amount 570 will go in tier 2. But we are assuming what? 120. My mistake. So imagine if they have given last year tier 1 as 100 rupee. So 15 will go in this year ka tier 1. So out of 120, 15 went to tier 1. The balance 105, balance 105 will go in tier 2. So you break up like that, but that breakup will depend upon last year ka tier 1. That breakup will depend upon last year ka tier 1, but they have not given. So we assume that entire 120 qualifies for tier 1. Entire 120 qualifies for tier 1. Okay. Now tier 2. Tier 2 mein what you have to do? Add 80, 200. You will have 80. Now revaluation reserve is a discount at 55%. So 200 crores minus 55% will give you 90 crores. That is 80 plus 90. General provisions. How do you get general provisions? It is basically 50 crores, but you have to compute 1.25 of RWA, 1.25 of RWA, 1.25 of 8,000 crores. It is 100. So we said actual or computer which is F50 or 100 which is F50. So you will do 50 here. So 80 plus 90 plus 50. So we take 50 crores. HDC, hybrid debt capital, they have given 90, you add subordinate debt, you add 140, 90, 140. So you add everything, you get a limit of 450 crores. Acha, PDI, there is 0 because we have taken everything in tier 1, we get 450. Understood? Now you add tier 1 and tier 2, 970 plus 450, you will get 1420. Now you divide 1420 divided by 8,000 as RWA, you will get 17.75. In the question they said minimum capital ratio is 15, here we are using 17.75, therefore they have met the requirement. Have you understood this, guys? If you do not have this question with you, you take a screenshot of it. I am switching off my video, then you can take a screenshot easily. Just take a screenshot with the solution also. Take. Then take this solution, ka screenshot. Then take the screenshot. Okay, you want tier 2 का calculation? Okay. Tier 2 is basically additions of everything. So addition of what? First you do preference share. So you add 80. Revaluation reserves में it is basically at 55% discount. So that is it is basically at 45%. So 200 का 45 we did. General provisions always 1.25% of RWA. So guys 1.25%. So this का 1.25. This curve, sorry, 1.25% of RWA, which comes up to 100 crores. So actual is 100. So actual is in the question is 50. Computer is 100. So actual or computer, which is less, you take 50 crore rupees. Then you add 90, then you add 140. Plus you add PDI, but PDI was not there because we have considered entire PDI in T1, tier 1 ka calculation. Then you add everything. You got the answer. Understood, Ajit? Done. Now let's check the amendment. What is the amendment? Now, amendment is this. Now, first what they have added, it's given in RTP. What they have added NBFC का definition in MFI, non-banking financial institutions, MFI, micro financial institution, non-banking financial company, micro financial institution. It means what? So it's just an addition. You can just say refer Jan 26 का RTP, non-deposit taking NBFC, which has a minimum 60% of total assets netted off by intangible assets on an ongoing basis deployed towards microfinance loans as defined under RBI. Microfinance loan basically you are giving it to vegetable vendor, fish vendor, rickshaw wala, all those people, okay? That is called as NBFC MFI. Non-deposit it has to be 60% should be towards of the total assets should be towards microfinance loan as netted off by intangible assets. ठीक है, non-deposit taking NBFC 60% of the total assets on an ongoing basis towards microfinance loans as netted off by intangibles. That's the definition of NBFC MFI. Then what we just did in tier 1 ka calculation, what we did that tier 1 plus tier 2 should be 15%. My tier 1 should be 10%. Gold made should be 12%. Correct? What we did? Everything is same. What they have added, it says this NBFC. So if you are in gold jewelry ka business, this NBFC should also adhere, that means follow the provisions of directions on treatment of deferred tax asset and DTL, DTA and DTL. So they have to also follow DTA, DTL. That's the theory part. Answers may no change. Ideally in the exam they can test you on this. Non-deposit NBFC 60% towards microfinance loans. Okay, when you're doing gold jewelry calculation, you have to consider provision of DT and DTL. How it will be used, there is no theory for that. So that's a theory point. One more rule they have added. Okay, then this NBFC should also ensure compliance with instructions regarding RBI lending against gold and silver collateral direction. So they have to also comply with RBI lending against gold and silver collateral directions. Understood? So as such, there is no change in the answer except the addition of NBFC MFI. Microfinancial institution ka definition they have added. Clear? Now there is one more amendment that I'll teach you later on. Are both the amendments clear? One, MFI ka definition they have added. Number two, in when you're computing gold jewelry, you have to compute two things. Also, now DTA, DTL plus RBI lending against gold and silver collateral directions. Clear with the amendments, guys? ठीक है. Now, So there are certain provisions for income recognition and for provisioning norms. What it is, see. So when you talk about NPA, so if it is NBFC base layer, you have to see 6 months. If something is outstanding, okay, if the amount is outstanding for base layer, you will see it is 6 months. Now, if it is middle layer, NBFC middle layer, you have to see 3 months. 3 months basically means 90 days. Achha, for the standard asset, there is no risk, no risk. For substandard, in case of base layer, you will say that if the account remains NPA for less than 18 months, it will be termed as substandard asset. Achha, for doubtful, if it is in the substandard category, if it is in the substandard category of more than 18 months, then it will be falling in doubtful asset. So ideally it is standard, substandard, doubtful, loss. Can you provide another question? Capital requirements? I can't. There's no question. Refer November 24. No, May 25. May 25 exam question. Question 3B, I think. How can I provide it? There is no question in the module they have given. One second. I'll tell you which question it was for NBFC. Question 4A. May 25 paper, question 4A. May 25, 4A. Solve that. Okay, just note it down somewhere. Suggested May 25, question 4A. Okay. So only 2 questions have come on that capital requirements. Okay. Now, so it is standard, substandard, doubtful loss. So if you are NPA, you check for 6 months. Standard mein you don't, it's a no risk is there. Substandard mein if it has remained NPA for less than 18 months. Doubtful mein it has remained in substandard category for more than 18 months. So that's a cycle. For which company? NBFC base layer. If you are NBFC middle layer, see I have written deposit and non-deposit because it was in old provision. Now it is not there. It is Bamut only base middle upper top. Okay? You have to see 90 days for NPA. Standard mein no risk. Acha, if you want to see about substandard category, so the account has remained NPA for less than equal to 12 months. Acha, when you talk about doubtful asset, if it has remained in substandard category for more than 12 months, less than equal to 12 months, more than 12 months, less than equal to 12 months, more than 12 months. So you have to ideally remember this category. Okay? Provisioning. How much provisioning you will do? So for loss asset, always you do 100% provision. Okay? For doubtful asset, for doubtful mein unsecured it is 100%. Secure depends upon the year. 0 to 1, 1 to 3, more than 3. 0 to 1, 1 to 3, more than 3. 20, 30, 50. What it is? 20, 30, 50. Substandard mein you do 10%. Substandard mein you do 10%. Then standard mein NBFC other than middle layer means basically base layer. You do 0.25% general provisioning. And middle mein you do 0.40. 0.40. So these are the provisioning norms. This percentage you need to remember. They can test you in MCQs plus they can test you in a theory case also. November 23. Yeah. November 23. No, November 24. November 24 exam question. This was this. Provisioning. Loss is 100. Doubtful mein unsecured is 100. Secured is 0 to 1, 1 to 3, more than 3, 20, 30, 50. Substandard is 10, standard mate is 0.25, middle mate is 0.40. Okay? So understand, loss 100%. Doubtful में 2 category, unsecured, secure. Unsecured is always 100%. Secured में depending upon the year 0 to 1, 1 to 3, more than 3, 20, 30, 50. Substandard cuts flat 10%. Standard में depending upon the company. If it is base layer 0.25, if it is middle layer 0.40. Now, so the provisioning generally what do you do? You show provisions what? You net it off. So the provision what you do under the asset you net it off, like provision for bad debts. How do you show? Debtor में से minus, correct? Here for standard asset what do you do? The provision under standard asset need not be netted off from the gross advances. However, it shall be shown as what? As a contingent provision against standard asset. So if you have given a loan to, let us assume, Senthil, okay, 1000 crores, but he is a standard asset, that means he is paying EMIs on time. So you can't minus that 0.25% or maybe 0.4. You can't minus. You have to show on the liability side contingent provision against standard asset. Contingent provision against standard asset. You will show it as a separate thing. But rest every provision we minus it out. Understood? Read this much. Read the provisioning part. Done? Loss 100%, unsecured, doubtful unsecured is 100, secured parties 20, 30, 50 depending upon your 0 to 1, 1 to 3, more than 3. Standard may it is substandard may it is 10%, standard may it is 0.25 and 0.40, 0.25 and 0.40. Works? Now, question number 4 becomes irrelevant because now Ind AS is applicable to all the NBFCs. It says every NBFCs are required to comply with Ind AS as per the Rule 4 of Companies Ind AS Rules 2015 and the Companies Ind AS Rule 2023. The MCA introduced Division 3 under Schedule 3 of the Companies Act, wherein a format for preparation of FSS complied has been prescribed basically. So as such, previously there were stages, now it has been removed because every NBFC is required to comply with Ind AS. So irrelevant question. Question number 5, important, descriptive MCQ, it can come in the exam. It says, difference in Division 2 and Division 3 of the Schedule 3 of NBFC. NBFC is required to present items of balance sheet as per liquidity, which is not allowed for the normal companies. Which is not allowed for the normal companies, correct? Which is under Division 2. So NBFC is required to, as per liquidity, present items of balance sheet as per liquidity, which is not allowed for normal companies. NBFC is required to disclose by way of note. What? This came in the exam. Other income, other expenses more than 1% of total income. Other income, other expenses more than 1% of total income. Other income, other expenses more than 1% of total income. You disclose it separately. Achha, whereas companies, whether other companies like normal companies are required to disclose any income, any expenses more than 1% of revenue from operation or 10 lakhs, whichever is higher. More than 1% of revenue from operation rupees 10 lakhs, whichever is higher. Like normal companies, like our company, imagine Reliance. So what they have to show separately? Any income, any expenses. If it is more than 1% of revenue from operation or 10 lakhs, whichever is higher. For example, imagine if revenue from operation is a 50 lakh rupees. Okay? Let us assume 1% of revenue from operation is 50 lakh rupees or 10 lakhs, whichever is higher. So you take the limit of 50 lakhs. Now if they are showing electricity expenses in the P&L 55 lakh rupees. So they have to show that separately in the notes. Imagine printing and stationery 23 lakh rupees. No separate disclosure because it is less than 50 lakh. So how do you compute? It is basically 1% of revenue from operation or 10 lakhs, whichever is higher. Then you check the expenses. Any income, any expense, if it is more than that, show it separately. But for NBFCs, how do you show that? Other income, other expenses, more than 1% of total income, more than 1% of total income, more than 1% of total income. Understood? This is the way of presentation. Now, we'll do a question on that. Third, NBFC is required to disclose under the head receivables. Receivables basically means like amount receivable, take a debtors. So what they have to show? Any debt due from director, any debt due from directors, debt due from LLP in which the company ka director is a partner or a member. So NBFC has given loan to LLP. In that LLP, our NBFC ka director is either a partner or a member. So show it separately. NBFC is required to classify the items of balance sheet as financial and non-financial, whereas we show as what? Current and non-current asset. NBFC, financial, non-financial. We show as current and non-current. Then, NBFC is required to disclose the items of revenue from operation OCI on the P&L instead of showing as notes. Previously, long time ago, they were showing in the notes. Now they are showing it on P&L, in the P&L basically. So these are the 5 points of differentiation. Repetitive question in the exam. Difference between division 2 and division 3. Division 2 is normal company, division 3 is NBFC. Okay? Now I am showing you a question on this concept. This concept. Module mein this is a question given. Revenue from operation, interest income, dividend income, rental income, fees, commission, net gain, blah 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 blah. Okay, then net gain on under amortized category. Total revenue from operation 990, other income 100, total income 10,000 crores. This is basically presentation requirement. Okay, so my total income is basically 10,000. Now what they are saying, on going to the details of other expenses and the expense side or the P&L, they found that there was a expenditure relating to manpower outsourcing amounting to 99.50 crores included under other expenses. So they are saying that in the P&L 99.5 crores we have shown it under the head other expenses. Separately it is not shown. Separately it is not shown. The question is, does it meet the requirement of division 3 of Schedule 3? Division 3 is for NBFC. What is the rule? Other income, other expenses exceeding 1% of total income, show it separately. If it is not exceeding, don't show it separately. You tell me whether it meets the requirement or it not meet the requirement. Does it comply or does it not comply? Comply? How, sir? How? Sir, we have to see 1% of total income. Purposefully they have given revenue from operation. No, sir. Revenue from operation has to be seen for normal companies. Division 3 is for the NBFC. Boss, Division 3 is for NBFC. Division 2 is for normal company. Na? So you have to see 1% of not this figure. You have to see 1% of 10,000. 1% of 10,000 is what? 100 crores. Correct? If any income, any expense exceeds 100 crores, it has to be shown separately. Here it is 99.5 crores. So no separately required. Sir, they have not shown separately. Then it means it complies. Understood? Boss, stick to ICI material. What amazing questions they have given. You cannot find such question in any teacher ka book. See, we as a teacher, we can't frame a question. Questions come from ICI material only. Either ICI ka papers, RTPs, MTPs and module. Solve this module ka question thoroughly. Understood, guys? Then, so here your conceptual part of NBFC is done. This was full concept. Now it is full theory part. Okay? Full theory part. It will get over today only. Now see, I think 4 or 5 questions are there now. We'll finish it off. It says classification of frauds by NBFC. Very old answer. In like last 5-7 attempts they have never asked. It says classification of frauds by NBFC. The code is M1CA. M1CA. M. Misappropriation and criminal breach of trust. M is what? Misappropriation and criminal breach of trust. F. Fraudulent encashment through forged instruments manipulation. Fraudulent encashment through forged instruments manipulation. U. Unauthorized credit facilities extended for reward or illegal gratification. Unauthorized credit facilities extended for reward or illegal gratification. You have to ratify this. Mark it up. N. Negligence and cash shortages. C. Cheating and forgery. I. Irregularities in foreign exchange transactions. A. Any other type of fraud. So it's a presentation requirement for fraud. The code is M1CI. Items of 4 and 6. Items of 4 and 6. Items of 4 and 6. What it says, items of 4 and 6 should be disclosed only if the intention to cheat is suspected or proved. Items of 4 and 6 should be disclosed only if the intention to cheat and suspected is proved. Achha, however, for cash shortages, this part, cash shortages, you will show irrespective of the intention, following should be disclosed. What? Cases of cash shortages for more than 10,000. Cases of cash shortages for more than 5,000 if detected by MIA. MIA means what? Management Inspecting Officer Auditor, and not by cashier. So we can assume that this is for cashier ka limit, this is for MIA ka limit. Cases of cash shortage for more than 10,000 is for cashier, and for MIA it is more than 5,000 if detected by management auditor and inspecting officer. Then NBFC having overseas branches should report all the fraud perpetrated at such branch or offices to the RBI as prescribed as per the prescribed format and procedures. So if you have a foreign branch, correct, they have done fraud there also, that also has to be reported to RBI. Okay, read this answer. Read. Done. Next. Next answer says, how as an auditor you will audit the NBFC. The code is BRAP. B. Ascertain the business of the NBFC. The auditor should check the business of NBFC. How do you check that? By reading the Maha and AUA of the company. I. Evaluate the internal control system. The auditor should evaluate the internal control system to determine the nature, time and extent of his audit procedures. R. Registration with RBI. The auditor should check whether the NBFC have registration. If you remember registration, when do you require registration? Two things. First, your net own fund should be 10 crores and you should comply with 50-50 test. Remember 50-50 test? Guys, that 50-50 test is and ya or. That 50-50 test is and ya or. and both conditions should be satisfied. Correct. Okay. A, acceptance of public deposit. A is what? Acceptance of public deposit. The code is what? Bury C. Now this we need to remember. This will be helpful in towards the next answer also. The code here is what? Bury C. One second now. iPad got disconnected. It says the auditor should check that in case of a NBFC not accepting or not holding public deposit have passed a board resolution that they have neither accepted nor would accept any public deposit during the year. So they have passed a BR that they have not accepted nor they would accept any public deposit during the year. First BR. Then A, check whether NBFC has accepted or renewed any public deposits only after a written application form. So any NBFC may, if you want to renew or if you want to give some deposit, obviously you have to fill an application form. So from the perspective of auditor check that whether NBFC has accepted or renewed any deposits only after a written application form is received from the depositors. So check board resolution, check application form. R, check the deposit register maintained by NBFC. One more R, check whether NBFC has filed its prescribed returns in a timely manner. Deposit returns. I, check investment is made in the approved liquid assets. Check whether interest calculation, the auditor should check interest calculation in respect of public deposits. Okay, bury. So board resolution, see in your module or in your teacher book they have given I think 17-18 points, but understand the logic. It's a 4 or a 5 mark answer. So remember rectify only that much what you can write in the exam. Reading 18 points will not give you all the marks. What content you write, that's more important. So today if you study 18 points, we will obviously forget. So we have made a code bury C. B is board resolution, A is application form, R is deposit register, R is deposit returns, I is interest calculations, I is investment, C is credit rating. Credit rating. The auditor should check the ceiling on quantum of public deposits has been linked to the credit rating as per the credit rating assigned agency to the NBFC. Credit rating agency to the NBFC. So credit rating a separate question they can ask. Now in case of upgrading, like you must have seen AA plus, AAA plus, BB plus NBFC ka rating. In the event of upgrading or downgrading, the auditor should check whether NBFC will have to increase or reduce the public deposit as per the revised credit rating assigned to it. Then, in case of downgrading of credit rating, the NBFC shall regularize the excess deposit as given below. What? With immediate effect, stop accepting the public deposits and renew existing deposits. Stop accepting fresh deposits and renew existing deposits. Imagine as per your rating, AAA plus, you are supposed to accept 10,000 crores. Now your rating has become AA plus. Now the AA ka limit is 7,500. So what do you have to do? So you can't accept new deposit because you have already accepted up to 10,000. See, if it was only 4,000 accepted, then it's okay. But if you have already accepted 10,000, so you can't accept more because anyways your limit is now 7,500. Whatever is the excess deposits, in this excess was how much? 2,500. It shall be returned, it shall run off to maturity. That means you have to mature it out now because your rating has been reduced. Then you will report the position to RBI within 15 working days to the concerned regional office of RBI. So report the position to the RBI within 15 working days. So 15 days is your MCQ. No mature deposit should be renewed without the express and voluntary consent of the depositor. Okay. So the code here is what? How as an auditor will audit NBFC? It's a very big code. The code here is BIRA-P. BIRA-P. B is business, I is internal control, R is registration with RBI, A is acceptance of deposits. Okay, and P is your prudential norms. Prudential norms is pending. In acceptance of public deposits, there is one more answer. The code here is bury C. In bury C, mein C is a separate answer. Credit rating. Credit rating wala point. So in the exam, in a syllabus, they have not given any provision for upgrading. They have given only provision for downgrading. If the rating is downgraded, 4 problems will arise. Stop accepting new deposits or renewing any existing deposits. Whatever is the excess deposit, it will run off to maturity. Inform to the RBI within 15 working days. No deposit should be renewed without the express consent of the depositor. Correct? P. Prudential norms. The auditor should check the compliance of prudential norm with respect to CUP. CUP means what? Sir, C is capital adequacy norm. A is asset classification. P is provision for doubtful debts. One more P is prohibition of loans against own shares. Income from investment, income recognition. The auditor should check compliance of prudential norm with respect to CUP. Capital adequacy norm, asset classification, provision for doubtful debts, Prohibition of granting loan against own shares, income from investment, income recognition. That's my first point. Then he should check that the board of every NBFC has framed and implemented a policy for granting demand and call loans, short-term loans. If you have granted, then he should see proper classification of loans and advances, that is standard, substandard, doubtful, losses made. Proper classification of loans, standard, substandard, doubtful, losses made. Third, he should check the income from such NPAs accounted only on realization basis. In case of NPA, in India we follow accrual basis, but in case of NPA you follow cash basis. He should see that income from such NPAs accounted only on realization basis. Then he should check whether income from NPA is received in the current year, so that you will see if there is no income is received, they will still be NPA. But income is received, they will become what? Performing asset. He should check whether income from NPA is received in the current year, or they still continue with the NPA for the current year. So the big answer, if I tell you how would you audit NBFC, the very big answer is BRAP. In that one, this is my first question. Second question is acceptance of public deposit. Here the code is BRC. This is my second question. Third question, credit rating wala point. This is my third question. Fourth question, P prudential norms. So in one answer there are four questions. BRC has also come in the exam, credit rating has also come in the exam, and prudential norm also came. Prudential norm I think November 23 or November 22. I don't remember. November ka time was a question. So all these are past questions. I am giving you 3-4 minutes time, you will read the entire answers. Okay? These notes have already been shared, you mug it up, 4 mark answer it is. You will get 3.5 easily. Read. Done? Last 2-3 answers. Or 2 answers. So question number 8 we skip. It's an audit procedure for ICC company, that you can read it directly from the book. Question number 9, it says, what are the matters to be included in the auditor's report to be given to board in case of NBFC? Now understand the question. Generally guys, audit report is given to whom? Generally audit report is given to whom? Shareholder, correct? But what is the question? What are the matters to be included in auditor's report to be given to board in case of NBFC? So it's a separate report. This is the contents of report of the auditor given to board. Given to board. Audit report we give it to shareholders as per 700 ka format. But this is given to the board. So what will you say? So if it is for all NBFC, the question says what are the contents of report for all NBFC? You will copy question 1 all points. Question 1 all points means this one. Income from assets, financial assets, 10 crores, net own fund, this point you have to write. Net own fund you have to see and 50-50 ka test. So you will copy this, but which will not come in the exam. If they are asking what are the contents of report, it is there in the module also, for NBFCs accepting public deposits. So what you will say, you will use A wala point. A has to be there na. So A mein what it is there, 50-50 test is there, net own fund and registration with RBI. 50-50 test, net own fund and registration with RBI. These 3 points will come. Plus you will write Bari C. Bari C we have done Bari C. Board resolution, acceptance of public application form, deposit register, deposit return, interest income and income from investment, credit rating. That you will write. In the module same answer they have given. I have used common codes here. Sir, for NBFC this is not accepting public deposit. So what will you write? I will use A wala point. A mein there were 3 points. 50-50 test, net own fund, registration with RBI. Plus, you will write this. Whether the board has passed the resolution for not accepting public deposit and they have not accepted any public deposit in the relevant period. Whether the company has complied with the prudential norm with regard to CAPI, we did CAPI, capital adequacy norm, asset classification, prohibition for doubtful debts, prohibition of granting loan against own shares, income from investment, income recognition. Same points. Whether NBFC have been classified as NBFC MFI, the MFI ka amendment has come. 60% you have to see, 60% in the microfinance loans. And whether capital adequacy ratio as disclosed in the return submitted to RBI has been correctly arrived. So these are the 4 points which you will write for not accepting public deposit. So you have to read the question thoroughly. Contents of auditor report given to the board for NBFC not accepting deposit. So 1, 2, 3 point is same. 4, 5, 6, 7 you study from here. Okay? Now last answer. Now irrespective of the logic, just concentrate on the 2 words. One is obligation, other one is exception. Obligation of the auditor to submit an exception report to RBI. Guys, the word is exception. You tell me, when everything is correct, then we will give exception report, or when there is a problem, then we will give exception report. Tell me. When there is a problem. So it says, in case of NBFC, any of the items referred in para 3 of NBFC audit report direction 2016 is unfavorable or qualified. This pointers, this basically. These are the pointers. In case of NBFC, any of the items referred in para 3 of NBFC audit report direction 2016 is unfavorable or qualified, or in the opinion of auditor, the company has not complied with 3 things. A, B, C. Provisions of chapter 3B of RBI Act 1934. Provisions of chapter 3B of RBI Act 1934. If you want to understand what are the provisions, you go and read. In the model they have not given. Just you have to write this line. Provision of chapter 3B of RBI Act 1934. Number 2, NBFC acceptance of public deposits directions 2016. Then master directions RBI NBFC scale based regulation 2023. That BAMUT, base, middle, upper, top. If you contravene 3 things, provisions of chapter 3B of RBI Act 1934. Number 2, NBFC acceptance of public deposit direction 2016. Number 3, master directions NBFC RBI scale based regulation 2023. Then it shall be the obligation of the auditor to submit such report to the concerned regional office of the department of RBI under whose jurisdiction the registered office of the NBFC is situated. So you inform to RBI. Very important line they can test in MCQ. The auditor will report only the contraventions of these three things: RBI Act, directions, guidelines. And such report shall not contain any statement with regard to compliance of those provisions. That means you have to inform this, you have to make this report only when there is a non-compliance of these three things. Chapter 3B, Acceptance of Public Deposit Action 2016 and Scale-Based Regulation 2023. Understood? Chapter is over. Now, what amendment came, I'll tell you. So, in this attempt in September 25, what ICAI did, ICAI had asked to calculate risk-weighted asset. Risk-weighted asset. Risk-weighted asset का calculation is given on 14.93. 14.93, okay? So, this they have given weights. So, you need to mug it up. Cash का weight is 0. Investment में they have given somewhere 20, somewhere 100. Okay, this weights they have given. So the exam में 2 mark का MCQ was there wherein you are supposed to calculate through this. The amendment, the third amendment also pending is in the other asset. What they have written? Other assets में income tax, TDS is there. Advance tax 0, interest due on common security 0. Others to be specified, they have specified one, others including ROU assets. ROU you must have learned in FR in India's lease wala right of use asset. So what is added? Only ROU. So as such answer is not getting changed. So if you read this, I'll show you. Others to be specified including ROU asset. So what is added? Including ROU asset. So total 5 amendments are there wherein we have done the 3 MBSA. 2 are there in professional ethics. When I do professional, I'll teach you then. Understood the amendments? Through with the chapter, we have done 3 chapters. 5 mark ka SRS, 5 mark ka group audit, 5 mark ka NBSA. 15 marks we have completed. You have to be at par with me. Finish off those with the notes plus the model ka questions. Cool? Are you guys enjoying it, guys? Cool. So tomorrow onwards, we're gonna meet in the afternoon. We're gonna meet at 2:30 onwards. Okay, 2:30 to 4:30 or 5 I will take, depending upon the level of chapter what we do. Maybe 2 hours or maybe 2.5 hours. Okay, so we're gonna meet tomorrow and then Monday to Friday, 2:30 to 4:30. So you plan your day accordingly. So we have fixed the timetable. So tomorrow and Monday to Friday next week, we're gonna do 2:30 onwards. Okay. So be at par with me. 3 chapters have completed. We have to finish. We have to reach till 19. Let's see how much we can do it. Okay. Bye-bye guys. Take care. If you have any help, if you need any help, if you need any assistance, I'm there on Instagram, Telegram. Message me. I'll resolve your doubt. Okay. Call your friends also so that maximum people get the benefit of these lectures. So hi guys, what's up? Good afternoon, welcome back to the class, and we have completed 3 chapters. We have done NBFC audit, we have done SRS, and we have done group audit. Okay. Now today we are starting with PSU audit. That's your chapter number 4. I hope you guys remember the content what we have studied. Let's quickly recall. Okay, for NBFC, how much is the net owned fund ka requirement? Can you write in the chat before we proceed? How much is the net owned fund ka requirement? Can somebody write in the chat? Deepak, Senthil, Anirudh. Great, Deepak. It is minimum 10 crores, and if it's a P2P AA account aggregator, no public fund, no customer interface, that is basically 2 crores, and if it is infrastructure wala, then it is 300 crores. Correct, very good. Okay, then can you tell me how much provisions will you make in case of loss asset? How much provision will you make in case of loss asset? 100%, very good. Okay, 100%. When it is, then if it is a substandard category, yeah, substandard category. If the asset is in substandard category, how much provision will you make? Very good. 10%. 10%. Then if it is standard category, base layer, middle layer. For base layer, how much it is? For base layer, how much it is? I'll just say 0.25%. And for middle layer, it is 0.40. Very good, Deepak. Superb. Okay, for doubtful, there were two portions, unsecured and secured. For unsecured, how much was the percentage? Can you please write in the chat? For unsecured, how much was the percentage? 100%. Superb. And for secure part, there were three things, 0 to 1, 1 to 3, more than 3, 20, 30, 50. 20, 30, 50. Perfect. Acha. Then can you give me any one permanent consolidation adjustment? Write in the chat. One permanent consolidation adjustment. Any one permanent consolidation adjustment. Superb. ECG, equity attributable minority, or NC, or CG capital reserve or goodwill as per applicable AS. Very good. Give me any one current period console adjustment. Any one current period console adjustment. Very good. Harmonizing of accounting policies, intragroup indebtedness, assets acquired from subsidiaries, and subsequent event, significant transaction in date of FS parent or NCI, equity attributable to minority or NCI. Correct. So you remember. So we have touched group audit, we have touched NBFC, SRS, compilation engagement we have done. Ticket compilation engagement was 4410. For agreed upon process engagements regarding AUP relating to financial information was 4400. Okay, we have touched that also. The three chapters we have completed. I hope you have done the notes and you have done the questions also from the module or whatever question bank you have. So are you getting confidence of those three chapters? So out of 19, we have completed very well 3 chapters. Are you confident enough in that? Great. Now we are in chapter number 4. We are doing PSU audit. So today I'll be doing 2 chapters. One is PSU audit, then again 1 hour chapter, and then we'll be doing SRE, Standards on Review Engagement. Okay. So these 5 chapters will be completed. So Saturday, Sunday there's no class. Monday onwards we meet 2:30 to 4:30, 2:30 to 4:30 or 2:30 to 5 till whatever time we are comfortable. Cool. So every day 2 chapters ka target we have, and we will try to finish ASAP so that you are at par with me. And understand it's a revision session going on right now. It's not a detailed content. I'll be moving a little faster. But if you have any doubt, I'll make sure that I cover all the points so that it goes in your head. Okay. But if you are still not able to clear something, please put a message in the chat so that I understand that you have a doubt there. Okay. Works? Chalo. So we are doing PSU audit, public sector undertakings. And if you have liked the session, do recommend to your friends also. Now, PSU. Okay. So a government, it's a government company is an entity in which minimum 51% of the paid up capital is held by CGSG or both. A subsidiary of a government company is also a government company. A subsidiary of a government company is also a government company. Correct? Then the audit of a government company or government department or a government corporation will be conducted by CAG. The audit of a government department, government company, government corporation will be done by CAG, Comptroller and Auditor General of India. Who appoints CAG? CAG is appointed by the President of India. He is appointed by President of India. He is appointed by President of India. Then there are 4 articles that they have given in the module. It says Article 140 talks about appointment, salary, removal of CAG. Article 114 talks about powers and duties of CAG. Article 150 talks about accounts ka format of central government and state government. 151 talks about audit report format of CGSG. Okay. Now, Article 148, appointment, salary, removal of CAG. 149, powers and duties of CAG. 150, accounts ka format of central government and state government. And 151 is audit report format of CAG. Now, there's a question in the model which we'll be covering today only. Okay. 148, 149, 150, 151. This QB is basically my question bank, but it's the same module question. I'll be doing it from the module. Then attestation engagement. So all these are your MCQ pointers. Attestation engagement basically are what? Financial audit and statutory audit. Financial audit, statutory audit. Direct reporting engagement is basically performance and compliance audit. Attestation engagement, guys, is basically financial and statutory audit. Direct reporting engagement, DRE. We say this as DRE. Direct reporting engagement is basically your performance and compliance audit. Then my first question is basically explain propriety audit and its principle. Propriety audit. So propriety audit, propriety, it is not proprietor's audit, it is propriety audit. So it is a mug-up answer. We need to ratify, we need to rant it out. Okay, full ratification is required. We need to mug it up. Understand the meaning. There are different kinds of audits here. Propriety audit basically means you consider public money as if it is your own money. Okay, it is called propriety principles. Principles of prudence. So propriety audit stands for verification of transaction on the test of public interest, commonly accepted customs, standards of conduct. Public interest, commonly accepted customs, standards of conduct. Propriety audit stands for verification of transactions on the test of public interest, commonly accepted customs and standards of conduct. Then in propriety audit, the auditor will try to bring out what? The cases of improper, avoidable or infructuous. Infructuous basically means unnecessary expenditure, even though they were incurred as per the rules and regulation. So even if there's a rule and regulation for to spend the money, you have spent, agreed. But was that expenses necessary? Was it required? It is discovered in propriety audit. Like for example, there was already a road which was constructed. So now government of, let us assume, Tamil Nadu said ki, okay, 20 crore rupees have to spend towards infrastructure. So the minister, what he did, because his relatives are into construction business, he gave the contract to them and they first broke the road and then reconstructed the road. So road construction is basically in the definition of infrastructure development. State government has passed order 20 crore rupees have to be spent. So even though the expenditure was incurred as per rules and regulations, sir, was it necessary? Correct? So that is discovered in propriety audit. Then following are the principles of propriety. Following are the principles of propriety. First one, it says government officials should treat public money as if it is their own money. Government officials should treat public money as if it is their own money. Number two, they should not abuse the authority. That means they should not misuse the power. Third, the funds should not be used for the benefit of a particular section or group of society or group of persons. Fourth, apart from the remuneration, no other revenue, that is no other scope is kept open to benefit the management, personnel, employees and others. So only for remuneration they should be working, not for any other thing. So this is the definition of propriety audit. Question number 2 says, what are the areas of propriety under 143.1? Areas of propriety. So this you must have done in your intermediate also. So we will be doing in a chapter called audit report chapter. The code here is LT dice. LT dice. So if there's a question in MCQ, what are the areas of propriety? So you need to remember the headings. Okay? L is loans and advances. The code is LT dice. Okay, LT dice. L, loans and advances. T, transactions. D, deposits. I, investments. E, expenses. S, shares. So areas of propriety. Okay, areas of propriety under Companies Act. Okay, under Companies Act. So this is the same answer in 143.1 also. Areas of propriety under section 143.1. So the answer is basically from Companies Act. But what is the word propriety? So we have done the definition. This is the areas of propriety. The code is LT dice. Loans and advances, transactions, deposits, investments, expenses, shares. LT dice. Okay. So now you will read these two questions. Explain propriety audit and areas of propriety. Okay. Just read the definition. Then there are principles of propriety and then areas of propriety. Okay. There are 4 principles of propriety and there are 6 areas of propriety under Companies Act. Read this answer, then we proceed. Done? So the first question was propriety, or what is propriety audit and areas of propriety. Okay. Now there's a third question. Let's show you in the module what it is. So we have written it from the module. I'll just tell you this one. In your notebook, can you just note it somewhere? Page number 15.30. This came in May 24 का question, May 24 exam question. ठीक है? In your notebook or whatever material you have, just mention module page 15.30. This came May 24 का question it is. So it says, what are the functions of the auditor in context of proprietary audit may be specified as under 2. See, basically we have learned that proprietary audit means basically when the company is spending the money, or when the government entity, corporation, ministers are spending the money, it should be an actual necessary expenses, not unnecessary. That is proprietary audit. Second question was areas of propriety in company sector. Is LT dice what we have done. Okay. Then we have done 4 principles, 1, 2, 3, 4. So we are clear what we have studied. Then in one question in May 24, what they ask? For functions of auditor for improper, avoidable, infructuous expenditure. Like as an auditor, what will you do? To see that all the expenditures incurred are properly planned. What is your duty? To see that all the expenditures are incurred and correctly planned. To see that the size and channels of expenditure are rightful and expected to give maximum result. To appraise. Achha, PSC audit is not there. We'll be sharing it. Okay, by either by today or by tomorrow. I'll send them. Okay. To appraise whether those expenditures are likely to give optimum result. 90% it should be there. Proprietary audit. I mean PSC audit. Oh, my hard disk is not connected. Okay. I will arrange. I'll arrange. Okay, Joy. Fourth, to see that any substitute plan of action can bring an improvement on the current operation and as well as return from capital expenditure. Then, to examine those actions and decisions of the management to see that they are conducted to the public interest. So, it's a ratification will answer. This question came in the exam. Functions of auditor for expenses. See that expenditure properly planned, the size and the channels of expenditure are rightful and expected to give maximum results. Appraise whether those expenses are likely to give optimum result. To substitute, to see that any substitute plan of action can bring an improvement on current operations as well as return on capital expenditure, and examine the actions and decisions of the management to see whether they are conductive in public interest. Okay? To note it, just note it down somewhere. 15.30 functions of auditor. See, there are full chances of getting repeated because in this chapter there are only 12 or 13 questions. So 1 or 2 will be repeated anytime. No? Okay? That is third question. Then question number 4 says role of CAG. Role of CAG in the audit of government company or supplementary audit. Role of CAG in audit of government company or supplementary audit. Okay? Now what first audit we did? Proprietary audit. Next is basically supplementary audit. Now what is supplementary audit? Extra audit. See, the auditor of a government company is appointed by CAG as per 139(5) and 139(7). That's of Companies Act. So the auditor of a government company is appointed by CAG. CAG will give what? Directions and specify the manner in which the account shall be audited. So CAG will give the directions how the account should be audited. Then the auditor shall submit audit report. See, auditor is appointed by CAG. So the auditor will give report to whom? CAG. Okay, including the DAI. Including DAI. What is DAI? The directions issued, the actions taken, and the impact on accounts of the government company. So how the audit should be done? Who will tell? CAG will tell to the auditor. What on the what action should be taken? Who will take actions? CAG will take. And the impact on accounts of the government company, who will decide that? CAG will decide that. So as an auditor, you just have to submit the report to the CAG. So the auditor will submit the audit report to the CAG, including the DAI. DAI means DAI. Directions issued by directions issued, actions taken and impact on accounts. MCQ point. Directions issued, actions taken and impact on accounts. Then within 60 days of the above report. So you gave the report to the CAG. Now within 60 days of the above report, what will CAG do? CAG will pass an order to conduct supplementary audit. To which audit? Supplementary. Supplementary audit means extra audit. Either by the company का statutory auditor. So either the company का statutory auditor can do, or through any of the CA holding COP. CAG also has a right to comment upon or supplement the audit report. CAG has a right to comment upon or supplement the audit report. So basically what we are doing, CAG will appoint an auditor. Imagine CAG, I am the CAG. I appointed Joy, CA Joy. So Joy will give a report to me. Then within 60 days, MCQ pointer, within 60 days of Joy ka report, I will decide. Acha Joy, do one thing, you do the audit again of the company. Or instead of Joy, I'll tell, okay, CA Deepak, you go and do the audit. So either I'm telling the start auditor or some other CA plus COP to do the audit again of the same company. Then on the basis of the second report, I may take an action. So it says, right, the CAG also has a right to comment upon or supplement the audit report. So this is called supplementary audit. Supplementary means extra auditory audit. Proprietary audit means expenses should be considered as if it is our own. This is supplementary audit, okay. Then supplementary report shall be forwarded to every person who are entitled to copies of FS under section 136(1). Supplementary audit report shall be forwarded to every person entitled to copies of financial statement under section 136(1), like the members, auditors, legal representative. Like for example, if I say Rajnikant was a member of BHEL Limited. BHEL, you understand BHEL? BHEL. Bharat Heavy Electricals Limited. Bharat Heavy Electricals Limited. Okay. So CA Joy audited the BHEL. I am the CAG. I told Joy, do one thing, do the audit again of BHEL. Joy will give me supplementary report. Now Rajnikant is a member of BHEL. Rajnikant sir is asking, I want the copy of supplementary audit. You tell me, can you obtain the supplementary audit report ka copy? Can a member obtain supplementary audit report ka copy? Yes. Imagine, okay, it should not happen. Let's take somebody example. X was there, okay. X died. Mrs. X. Can Mrs. X claim the copy of supplementary audit report copy? Can Mrs. X claim supplementary audit report copy of BHEL? Yes or no? Yes, because they are entitled to copy of the main report, so they are also entitled to copies of supplementary audit report. Okay, the CAG may also conduct test audit. Test audit basically means sample based audit, and the provision of CAG Act 1971 shall apply to the report of such test audit. The CAG may also conduct test audit. The provision of CAG Act 1971 shall also apply to the report of such test audit. Understood? Question number 4. Supplementary audit. Now, see the notes what I'll be sharing with you will be of some other student, because this is scattered notes, right? This is of the old student. So whatever notes will be there, it will be in the same pattern. I've written the question number. Okay. So the handwriting would be very different, but the content is exactly same. Okay. Now, so we did proprietary audit, we did supplementary audit. Now we are doing comprehensive audit. Repetitive answer. Comprehensive audit basically means in-depth audit, in detail audit. So it says explain comprehensive audit and the issues examined in comprehensive audit. So it is called as in-depth, comprehensive, in-depth audit. What you have to do, you have to use costing FM ka answer. What are the areas covered by comprehensive audit? So you write material management, productivity of labor, budgetary system, idle capacity, cost prices, capacity utilization, internal control system. That is called as areas covered by comprehensive. This is costing FM ka answer. Okay? Then some of the issues examined in comprehensive audit. This is very important. Okay. Now the code here we have made is OFC Trapper. OFC Trapper. If you see module also, like 4 or 5 questions you will see only on this. What are the areas, what are the issues of comprehensive audit? So the code we have made is OFC Trapper. In the exam, if you can't remember the big point, this is like OFC Trapper, till here it is. Okay. Remember the easy part. At least 6 points you have to write of OFC Trapper. Okay. O. How does the overall capital cost of the project compare with the approved planned cost? Overall capital cost. F. Sir, are the system of project formulation and execution sound? Are the system of project formulation and execution sound? C. Are cost control measures adequate and are there any inefficiencies? T. What has been the performance in adopting new process technology and improving the profits? So this is related to costing FM. So OFCT was tough. Now if you see R, very simple. Does the enterprise have repairs and maintenance system? Does the enterprise have adequate research and development program? So repairs and maintenance, research and development, easy pointers. So you have to write in this format only, like a question. Does the enterprise have a system of repairs and maintenance? Does the enterprise have adequate research and development program? Then, is there a poor or inefficient or insufficient project planning? Sir, are purchase policies adequate? Then, are procedures effective and economical? Has the planned rate of return been achieved? So, towards the end, if you see, are easy: research and development, repairs and maintenance, okay, poor or insufficient project planning, purchase policy adequate, then products procedures are effective and economical, and planned rate of return have been achieved. So, this 6 points towards the end becomes very easy. This 6 points towards the end become very easy. Okay. Now, what you gonna do? You gonna read question number 5, comprehensive audit. Okay. Slowly I'll be scrolling. See, supplementary was not so important because it's an intermediate level answer. MCQ is important. Who conducts supplementary? CAG conducts. Within how many days? 60 days of the receipt of the original audit report. This question also came in May 24 MCQ. Supplementary audit report or supplementary audit order will be passed within dash days from what date? So within 60 days from the submission of original audit report. The start order gives original audit report. Okay. Then can a member obtain supplementary report copy? The answer is yes. Member died, can the legal representative obtain? Yes, he can obtain. Okay. Then proprietary audit basically means public ka money, understand that is as if it is your own money. Then third audit we did comprehensive. Comprehensive means basically in-depth audit, in-detail audit. You have to use costing FM ka answer. Code is OFC trapper. Towards then you will see easy wala part. Okay. So keep on recalling these hints to remember, because see, out of so many questions, only one will come in the exam. Read. Done. So comprehensive basically means in-depth, in detail audit. The code is OFC Trapper. OFC Trapper. Now question number 6 and 7 is connected. So we'll do 6, 7 together. Okay. Next repetitive answer. 6 and 7. So performance audit is, comprehensive audit is done. We are not doing performance audit. Comprehensive is done. Now we are doing performance. So performance में basically we check government का 3E, economy, efficiency, effectiveness. Economy, efficiency, effectiveness. Economy, efficiency, effectiveness. We check government का 3E, economy, efficiency, effectiveness. Now what are 3E? Now see. A performance audit is a systematic examination of evidence for providing independent assessment of the performance of the government का FAPO. What is FAPO? Functions, activity, program, organization. Government का function, government का some activity, government का कोई some program, government का some organization. Like for example, DESU. DESU is basically Delhi Electricity State Unit. We call DESU. Maybe in Tamil Nadu you will have something. Maybe in Karnataka you will have something. Okay, or maybe it could be like PW department, Public Works department. Could be post department. Acha, activity means like some midday meal program. That's a program. Okay, CSR activity, some polio vaccination activity, anything. So whatever government ka FAPO has been done, functions, activity, program, organization, functions, activity, program, organization, in order to improve what? Public accountability and facilitate decision making. Why do you do this? To improve public accountability and facilitate the decision making. So basically performance audit is done also by CAG to understand like government ka FAPO, government function, activity, program, organization, where in order to improve public accountability and facilitate the decision making, whether they have done it correctly or not. Now, by the parties with responsibility to oversee or initiate the corrective action, Now, it focuses on 3E, economy, efficiency, effectiveness. Economy basically means money. So, it says it is basically minimizing the cost of resources used for an activity having regard to improve to the appropriate quantity, quality and at the best price. Minimizing the cost of resources and having regards to appropriate quantity, quality and at the best price. Economy. Efficiency basically means input output. Like for example, we are studying for 2 hours. How much do you remember? That is called efficiency. If you get passed by this batch or by these classes or by these lectures, the course was effective. Okay. Efficiency, it is the input output ratio. Efficiency is achieved when the output is maximized at the minimum of input. It is what? Input output ratio. Efficiency is maximized achieved when the output is maximized at the minimum of input. It covers the following thing. So if you can remember these heroes, that you cover human, financial, other resources are efficiently used, efficient operating procedures are used, resources are properly protected, optimum amount of resources are used, sound procurement practices are followed. Heroes. Okay, efficiency covers this thing. The next one is effectiveness. It is the extent to which the objectives are achieved and the relationship between the intended impact and the actual impact. Like effectiveness, like you have joined this batch to clear the exam. So I thought that I'll get 70 marks, but I got 60 marks. So actual impact versus intended impact, like budget versus actual, you can see. This is effectiveness. So 3E, economy means economy means money. Okay, best quantity at the best price. Then efficiency is basically input output. Output is maximized at the minimum of input. Effectiveness, comparison between the actual impact and the intended impact. Understood? That is performance audit. We check government ka performance. Government performs at lot of places. We check the government ka performance, 3E. So this is a short note on performance audit. Now there's one more question. It says, how would you conduct performance audit? How would you plan? So not conduct, how would you plan for performance audit? How would you plan for the performance audit? This came in November. I'll show you the question also. Not November, May 25. How will you plan for the performance audit? So you need to understand this via story. So I have written in Hindi and English both. So I'll teach you in English because you guys don't understand Hindi as such. So I'll teach you in English. Okay. Now this example what I have made is only for the purpose of understanding. It has nothing to do with the real life. Huh? Like for example, sir, understand the entity or the program to be audited. So we take like for example Sukesh. Okay, Sukesh is going to get married to a girl. So generally in India, we have that arranged marriage proposal, like the guy ka parents will go to the girl ka parents house and they will see the girl first. So same way. So we write here girl. In Hindi we say ladki, okay, girl. So the girl. Understand the entity of program to be audited. Now, define the objectives. Why you want to marry Sukesh? Define the objective, scope and audit. Why you want to marry? Why you want to marry? Define the objective and scope. So in the answers I have written this coding. Coding. Then I asked Sukesh, how you want the girl to be? So determine the audit criteria. So he is asking me, sir, how should I talk to the girl? Define the audit approach. Now, sir, what question should I ask? Develop the audit questions. Then Sukesh was a very doubtful guy, so he appointed detective, assess the audit team skills and decide whether outside expertise is required. Now he started stalking social media, prepare the audit design metrics, like Instagram she is active here this time to this time. Then from at Facebook she is online here, Snapchat this time to this time she is online. Then what he did, he was the chartered accountant, he's a chartered accountant, so he engaged his articles, establishing timetable and resources. So he said, okay, articles, you follow where ma'am is going, what time she is going. Everything was clean sheet. He said to his parents, now please send the invitation card. So intimation of the audit program to audit entities. Intimation of audit program to audit entities. You can't change the order. You have to learn that way only. 9 points are there. This came in exam. Girl, understand the entity of program to be audited. Why you want to marry? Define object, audit objective, scope and objectives. Okay? How you want the girl to be, audit criteria. How you should talk, audit approach. What you should talk, audit questions. Then you appointed expert, assessing audit team skill and whether expertise is required. Then you started doing social media stalking, audit metrics. Then you engage your articles, establishing timetable and resources. Resources means articles basically. Okay, and everything is good. Then you prepare the audit program. Intimation of audit program to audit entities. Okay, once more. The girl, understand the entity of program to be audited. Why you want to marry, objective scope of the audit. Okay, how you should talk, how you want the girl to be, audit criteria. How you should talk, audit approach. What you should talk, audit questions. Then detective you will appoint, assess the audit team skills and outside expert is required. Social media stalking, audit design metrics. Then engaging the articles, establishing timetable resources, and invitation card, intimation of audit program to audit entity. That's question number 6 and 7. Okay, cool. Now you will read, then we do the question. If you have your teacher ka book, you can read from there. So the question 6 is basically a short note. 7th is how would you plan? The hint is plan. How would you plan the performance audit? See, I say will give you story. You need to concentrate on the word planning the performance audit. If they ask you define performance audit, meaning of performance audit, then question number 6. Planning the performance audit, question number 7. Okay, read. Done? Now, I'm showing you a question what you need to answer. Okay, this is May 25 का question on performance audit. You need to answer, guys. Okay, let's first read the theory. This is a theory. May 25 exam question. Am I mute? No. See, this is May 25 final exam question. The audit manager, Mr. G, suggested the following procedure in the following sequence of steps for conducting performance audit. So what we just studied for performance audit ka steps. Okay, these are the steps. Now, what is the question they ask? CAJP, the engagement partner, is satisfied with the procedure suggested by the audit manager, but he is not convinced with the sequence of steps while planning the performance audit of wind power limit. He seeks your advice in suggesting the correct sequence. Okay, hold on. So I'll just note down this sequence here for you guys. B, C, D. 1, 2, 6, 4, 5, 3, 7, 8, 9. 1, 2, 4, 3, 5, 7, 6, 8, 9. 1, 1, 2, 3, 5, 4, 8, 6, 7, 9. 1, 2, 5, 3, 4, 8, 7, 6, 9. See, that's the reason I told you that steps are very important by a story. And it's not that I'm teaching right now. Since ages, I'm teaching the story. Somewhere I expected this answer to be coming in the exam. It came in May 25. Now, choose your option. The questions and options are below. Choose your option. I'm here only. Tell me, guys, tell me. Girl, why you want to marry? How you want the girl to be? How you want the girl to be? Then, how you should talk? What you should talk? So I would say first is 1, then 2. Oh, 1 and 2 is everywhere. Then the next one is 5. Next one is 5. 1 to 5. So I got my answer D. Everybody D. Let's check 1, 2, 5. Then it should be 3, 4. 1, 2, 5, 3, 4. Correct? Then outside expertise required. Outside expertise required. Then social media stalking. Social media stalking, articles engaged. That is 7, 6. And the last one, intimation void program. Correct. D. Let's check the answer. The question was 8th. 8th ka is D. 8th ka is D. 8th ka is D. 8th ka is D. Understood? See, I teach right thing at right time. This is the level of MCQ. It's all about concepts. If you have it's understood the concept, mug up the answer, for sure you will pass in the exam. Okay, one more question came in the exam, but that was basically judgmental answer. This question. This was from sampling. 2 mark only. 2 mark answer. Okay. Now September में Hmm. One second. Huh? To see. Okay, we have not done the concept yet. We'll do it. Then we'll come back to the question paper. Okay. So we're in question number 7. Now we're in question number 8, 9, 10. 8. 8 says what are the contents of audit report. So I expect either performance audit or comprehensive or this answer. So question number either it is comprehensive or while you will get or performance or you will get in the exam or this answer. Very repeated. These are very repeated. These three answers are very repeated. Okay. Now it says what are the contents of audit report of CAG. So here you can't write SS 700 ka format. You have to write this answer. So I made a code here. We need to mug it up. The code says Garu. Why it is what it is I do not know. It is there in the module. You have to rectify. G. Contents of audit report of CAG. Contents of audit report of CAG are Garu. G-A-R-U. Garu. G. General review of the working results of government, deemed government companies, government corporation. General review of the working results of the government, deemed government company and government corporation. A. Results of appraisal. How do you write? Results of appraisal. So this A wala point and this fourth U wala point. You learn it simultaneously. Results of appraisals. Results of appraisal. Of selected undertaking. Of selected undertakings. Same line. Taken up for appraisal by audit board. Not taken up for appraisal by audit board. Taken up for appraisal by audit board. Not taken up for appraisal by audit board. So GAU is very easy. G is what? General review of the working results of the government company, deemed government company and government corporation. A is what? Appraisals of appraisal, results of appraisal. Of selected undertaking, of selected undertaking. Taken up for appraisal by audit board, not taken up for appraisal by audit board. R. Resume. Resume basically means details of company's auditors report on the direction of CAG and the comments of CAG on the accounts of government company. Resume of company's auditors report on direction of CAG and comments of CAG on the accounts of government company. Resume of company's audit report on the direction of CAG and comments of CAG on the accounts of government company. Garu. G-A-R-U. Question number 8. 9. This is also given in the module. It says what are the sources for determining the audit criteria for planning and performance of audit. What are the sources for determining the audit criteria for planning and performance audit? If you remember that performance audit will answer. The first answer was understand the entity or program to get the girl. Okay, why you want to get married? Determine the objective and the scope. How would you talk? Approach. What will you talk? Audit questions. What girl you want? How you want the girl basically? Like audit criteria. So how an audit criteria is decided? The code here is PCPing. It says what are the sources for determining the audit criteria for planning and performance of audit. The code is PCPing. If I want to judge on the audit criteria, I use PCPing. P. Procedure manuals of the entity. Procedure manual of the entity. Criteria used by the same entity or other entity in the similar activities. P. Policies, standards, directives and guidelines. I. Independent expert opinion and know-how. N. New or established scientific knowledge. G. General management subject matter literature and research paper. PCPing. Procedure manual of the entity. Criteria used by the same entity or different entity in the similar activities. Policies, standards, directives and guidelines. Independent expert opinion and know-how. New or established scientific knowledge. G. General management subject matter literature and research paper. The code is PCPing. So this is criteria ka separate answer. Last answer, compliance audit. So compliance audit you will find they have updated in the module, not this time, the last time. And the best part, the same question came in the exam. Compliance audit. Now, this is the question. Let me just read for you. Compliance audit basically means compliance of law and regulations. So if you see the word law, it's called compliance audit. See, the first day audit was proprietary audit. Understand public money as if it is your own money. Then was comprehensive audit, that is in-depth audit. Okay. Then after comprehensive, we did supplementary also, extra audit. Then we did performance, 3E, economy, efficiency, effectiveness. Now we are doing compliance. Compliance basically means law. So this is a story, just a story. Okay? During the course of audit of a state government department, the office of the CAG observed that the prescribed law and state owned defined a flat based on the criteria. This is the criteria. It was written in law. They are asking, this is a full story in the model. Identify the type and nature of audit being performed by the CAG. So basically, there was a law was made, then they have contravened the law. So you will do some audit. So law ka contravention audit is basically compliance audit, and to whom the report should be submitted. Now this is basically law of a state government department. Okay? So in your notes, write there question number 9 of module, page 15.34. Question number 9, module, page 15.34. Sir, in this case, compliance audit is performed by CAG. See, this is bold. It was added in the previous attempt in the module. Compliance audit is the independent assessment whether the given subject matter is as per the compliance of applicable criteria. Then, this audit is carried out by assessing whether activities, financial transaction and information comply in all material respect with the regulatory and other rules governed by the entity. Compliance audit is concerned with regularity and propriety. Two elements, regularity and propriety. Regularity basically means adherence to the subject matter of the criteria which is coming from relevant laws. So regulations, regularity means basically regulations. Propriety basically means sound financial management, ethical code of public officials. Principles of propriety. Then you can ignore this part. Okay, so this till here is your answer of compliance audit. The question was to whom the report will be submitted. This is this theory. Under Article 151, we have done in the start. 148, 149, 150, 151. 148 appointment, 149 powers and duties, 150 accounts ka format, 151 audit report ka format. Now see, what is the answer? This you have said in intermediate also. Audit report of CAG relating to central government should be submitted to President and laid before Parliament. See the color, huh? Central government ka report is submitted to President and laid before Parliament. I am using blue color now. Audit report of state government shall be submitted to respective governor and shall be laid before state legislative assembly, Vidhan Sabha, Vidhan Parishad. Parliament basically means Lok Sabha, Rajya Sabha. Legislative assembly basically means Vidhan Sabha, Vidhan Parishad. Okay. Central government, president, parliament. State government, governor, legislative assembly. In the question, they have used state government. So in the situation, the report is to state department. Therefore, the report has to be submitted to whom? Sir, governor, and laid before legislative assembly. Understood? So they had asked compliance audit plus reporting extra part they have asked. So reporting a part can come in MCQ. Always remember central government ka report submitted to president, laid before parliament. Everything big people. State government, governor, legislative assembly. And nothing come from outside the model. I'll show you that. September 25 question paper. Read this question. This is question number 2C, September 25. Read this question. The time you see the word government to an entity, you see the word CAG. Your brain should start processing which chapter will get attracted? PSU audit. On reading this para, tell me which audit is getting attracted. Compliance audit, hint was here. Correct? And even though if this word was not written, how to identify? Laws and regulation. See, propriety talks about money. Comprehensive talks about in-depth costing, FM ka answer. Supplementary talks about extra audit. Performance audit talk about economy, efficiency, effectiveness. What we are left with? Compliance audit. Correct? So even the compliance audit word is not written, maybe in the next few attempts ka question. Hint is law and regulation. Now what is the question? Explain the concept of compliance and its perspective, that means the theory. What shall be the concern of the auditor when undertaking compliance audit? Compliance audit is concerned with till here. This was your answer. 4 mark answer, question number 2C. People said on YouTube, lot of teachers on YouTube said, I will not say the teacher, the YouTuber said Paper came from outside. Paper did not came from outside. It came from the module. The problem is we don't trust ICI material. ICI material is Bhagavad Gita, Bible, Quran. You need to follow that. I did May 25 ka question also 2 mark MCQ. I did September 25 the latest question from your module. Imagine. So my notes module. That's it. For sure you're gonna clear. It's a secret. Don't tell to anybody. Now are you getting confidence, guys? Total 10 question in the chapter. Total 10 question. 10 may say 1 will come. Compliance audit came now. 4 chapters done. Understood, guys? Are you getting confidence now? Just solve model work questions very thoroughly, and in the between you will see something called TYUs. I think there are 2 TYUs here. Answer to test your understanding. See, one is called as test your knowledge. Other one is test your understanding. Okay? Do that also. Do that thoroughly. In almost every chapter they have kept test your understanding. Because a revision session, I can't do everything with you guys, but question solving, do it from the model thoroughly. See, there are 10 questions in my notes also. There are 10 questions. 2 TYUs are total 12 questions you have to study. My notes, thus module plus your RTPs and MTPs, for sure you will clear in the exam. Ratify, mug it up, rant, write and rant, but that's the only way to study clear audit. 4 chapters done. Cool. Let's take a small break of 5 minutes. Then we start with SRE. SRE, there are 2 SRE, 2 for 00 and 2 for 10. Okay? It's 15:38 right now. We started 43:44 ko we meet. Okay? 5 minutes. Come back, come back. Welcome back, guys. Let's resume SRE. So SRE notes is there in the PDF. Please open those that PDF. SRE notes. We want to do SRE. Hmm. Chalo. So we have completed group audit. Now we are doing SI. This is our fifth chapter. Total 19 are there. Fifth we are doing it right now. Standards on review engagement. So there are only two standards, 2400, 2410. Every time you will find a question on this. First, let's understand what's the difference in audit and review. So basically, audit में we give a reasonable assurance. Okay, it is given by an auditor. We give an opinion there. Okay, that the financial statements are giving true and fair view. In review में you don't give an opinion, you give a conclusion there. It is basically less than audit. Okay. See, highest level of assurance is investigation, that is 100% assurance. Below that is audit, where we give opinion, reasonable assurance. Okay, after that is below that is basically review, where we give limited assurance. So basically, idea here is I'll just tell you a story so you can relate it very well. So if there's a company prepares the accounts, management prepares the accounts. So they want to submit the accounts to the auditor, who will give opinion. Now company has prepared the accounts and now they are going to the auditor to give opinion. Okay. Now, but company is scared. So there could be some mistakes also, na. So they go to a chartered accountant. Chartered accountant, we have prepared the accounts. Can you just review it once? Because see, when we go and submit to the auditor, if something is wrong, auditor will scold us. So we don't want that scolding. So in order to avoid that scolding, they go to one chartered accountant. We say, CA Sukesh. So they went to Sukesh. So Sukesh is not the auditor. Sukesh is what is he doing? He is seeing that, acha, this entry is correct. This entry is not correct. Oh, this working is correct. He is expressing a conclusion there. Okay. And he is giving which limitation. So as per me, it is correct. I have not checked in detail because detail my auditor will check. Reasonable assurance, sample basis, auditor will do. No, I will not do it. So it is basically something between accounts preparation and submission to the auditor. The between stage is called as review. Like for example, you have prepared your college assignment. I was in your class. So you told me, sir, can you just see whether the presentation looks good or not? So what will I say? It looks good. But did I check in depth? No. That checking in depth will be done by a class teacher. So before submitting something, you are asking me for review. Correct? That is called as review. Understood the definition? Let's say, sir, what is a review engagement? Review is a limited assurance engagement. Limited assurance is a level of assurance where engagement risk is reduced to an acceptable level but where the risk is more than reasonable assurance. The risk is more than reasonable assurance to provide a basis for expressing a conclusion. We don't give opinion here, we give conclusion. It involves fewer procedure, audit involves more procedures and gathers size on the basis of which limited assurance can be drawn. So we give limited assurance. Then review is related to financial statements prepared on the basis of historical financial information, just like an audit. So it is similar to audit, but you are not giving opinion, you are giving conclusion. You are not giving reasonable assurance, you are giving limited assurance. Understood the definition? Now, there is one more question. One second. Question number 11, audit versus review. Okay, so see. So one we have done, that's the definition of review. Now we are doing comparison basically. So it may help you in MCQ or maybe for understanding the concept. Audit is reasonable assurance. Review is limited assurance. It's a lower level of assurance than reasonable. Here we give reasonable conclusion, here we give limited conclusion. Here we provide opinion, here we provide assurance conclusion. It is positively worded. Like we say the financial statements are giving true and fair view. It's a positively worded. Here you will see everything is negatively worded. Nothing has come to our attention that it is giving true and fair. Matlab is same, the meaning is same, but it's negatively worded. Then Here we perform test of controls and substantive procedure. Test of control and substantive procedure. Here we perform two procedure A and I. A, analytical procedure. I, inquiry. AI. Only two procedure AI. Here you audit may we perform a lot of procedures. Here it is reasonable level of examination. Here it is less than audit. The extent of examination is lesser than audit because I don't check in deep. I like from above. It looks good. Okay. That is called as audit versus review. Now, so the lengthy essay is 2400. It says engagements to review historical financial statements. Engagements to review historical financial statements. Engagements to review historical financial statements. Take it 2400 SRE 2400. So first question is objectives. It's only for your understanding, not an exam question. To obtain limited assurance by making two procedures. What are the two procedures? AI, A, analytical procedure, I, inquiry. About whether the financial statements are free from material misstatement. Or number two, to report on the FS as a whole and communicate as per SRE 2400. Same point, it can be conducted by any practitioner. Till now we have done two SRS, 4400, 4410, any practitioner. 4410 that is a prohibition that stat auditor can't do. Any CA other than stat auditor should do it. 2400 third standard, any practitioner can do. Okay? Because there are two standards wherein there's a prohibition that engagement has to be mandatorily done by the stat auditor. Rest everywhere it is any practitioner. Those two standards I'll teach you later on. Okay? In case where limit assurance cannot be established, cannot be obtained, the practitioner either shall disclaim the, it is not opinion, it will be disclaim the conclusion. There's a mistake here, it is disclaim the conclusion, because in review we don't give opinion, we give conclusion. So disclaim the conclusion or withdraw if possible. So these are my objectives. Question number 3. So let me teach you till question number 125 or 126. Then you read all the content together of 2400. Okay? What are the factors affecting the acceptance and continuance of client relationships and review engagement? Okay? Now it says any practitioner can do. That means company ka stat auditor can also do, and anybody else, any other CA can also do. Okay? Understood this much? Now, so what are the factors you will consider before accepting and continuing? See, acceptance basically means first time. Continuous basically means you are engaged with the client in some other engagement and they have told you, sir, you do my review also. So what should you do? Because the standards, everything is negatively worded. So everything starts from not. The practitioner shall not accept review engagement if there is no rational purpose for the engagement. There is no rational purpose for the engagement. 2. Review may not be appropriate. Review may not be appropriate. The practitioner may recommend some other engagement like audit or compilation engagement is appropriate. Now, for example, you were reviewing it. Okay, Sukesh was reviewing it. Company saying, sir, please check depreciation entry now. Sir, do the provisioning also now. Arey, you are asking me to check everything. You have given me money for review. Now you are asking to do check in deep. That means it looks like audit. Acha, you are asking to pass entries. It looks like compilation engagement for me. Okay, so you will not accept the engagement. 3rd, he has a reason to believe that the relevant ethical requirements, including independence, will not be satisfied, so you should not accept it. Acha, information needed to perform the review engagement may be unavailable or unreliable. Maybe they will not give what they were given. It is unreliable. The practitioner has a cause to doubt management ka integrity. So that is likely to affect proper performance of the review. Imagine Vijay Mallya has given you the offer. Kingfisher owner, my younger brother. So integrity ka problem is there. Or limitation imposed by the management TCL which may lead to disclaimer. Don't see this, don't go here, don't check this data, will not give you the full data. Limitation. So these are the reason where you will not accept it. So factors affecting acceptance and continuance of client relationship and review engagement. Then question number 4. Sir, what are the preconditions for accepting a review engagement? So on the first day I told you in the new engagement standards there will be 3 types of questions. Before, during, after. This is preconditions for accepting a review engagement. So this is basically what? This is before. Okay? It says number 1. Determine the acceptability of FRF. What will you say? Determine the acceptability of FRF. Determine the acceptability of FRF. Number 2. Obtain the agreement from the management regarding its responsibility towards. This can also come as a separate question. Access to all the information which the management is aware. That is relevant for the preparation of FS. Number 2, additional information. So access to all information, additional information. and unrestricted access to the person within the entity from whom the practitioner determines necessary to obtain evidence. So this same point is in SA 210 also. Access to all the information, additional information, unrestricted access. Then, boss, if preconditions are not satisfied, what will you do? Do not accept the engagement. Arey boss, these are my precondition. Acha, you will give me access to all information, additional information and unrestricted access. Hey, if you are not giving me, I will not accept it. Unless required by law. Acha, law says, arey, CS Sukesh, accept it. Now I am telling you, law is allowing you. Okay? If engagement is accepted due to law and regulation, then when you write the report, we have learned those points that in the contents of report you will write third ups, then write 3 points: management ka responsibility, practitioner ka responsibility, and a statement that the engagement is performed as per so and so standard. So now when you have accepted this, because law is saying, so don't write in the report that this engagement is performed as per SRE. This is not performed as per SRE, this is performed as per law. So it is just an understanding point. Okay, no question on this. If the engagement is accepted due to law and regulation, then do not give the reference to SRE in the review report, Okay. Then after accepting, imagine they have accepted your conditions, you started the engagement. After accepting engagement, if there are preconditions are violated, then what will you do? So today they said, acha, Sukesh sir, we will give you full access, we will give you additional info, everything. When you started the engagement, management said, hey Sukesh, sit down, no checking this, no. They are putting a limitation. So you will determine how matter can be resolved. Number 2, approve whether it is appropriate to continue the engagement. How to communicate in the report. Whether a matter can be resolved, whether it's appropriate to continue the engagement, how to communicate in the report. Then engagement letter. The agreed terms of engagement shall be recorded in an engagement letter. On recurring review engagement, evaluate whether the terms of engagement needs to be revised, whether there is a need to remind the management or dispute as appropriate of the existing terms, and if the management requires the practitioner to change the review engagement to no assurance engagement, practitioner may accept such in if there is a reasonable justification. Like for example, there if you are asking them, sir, what about your this data? They said, sir, this data was data ka data and the data is a 4-year old data. When I say 4-year old data, basically it means time bar debt. You must have heard time bar debt. After 3 years, it becomes time bar debt. So there is no clarification as such. So it's a reasonable justification. So if they are saying, sir, don't say data ka data because it's a very old data, 4-year old data. So don't check this. So then you can accept it. So this is same 210 ka answer. And say 210 also this is same answer. What are the contents of engagement? What if there is a change? You can accept it if there is a reasonable justification. That's question number 4. Fifth. Achha. Fifth is a very lengthy answer because it's about A and I. That's basically procedures. Okay. So what do? You read question number 1 to was a definition. Just read 2, 3, 4 first. I'm here only read 2, 3, 4. Okay. Then we do question number 5, 6, 7. Done? So question number 4 is complete here. So question number 3 and 4 could be an exam question for you. Now question number 5 says, what is the procedure for performing the review engagement? What is the procedure for performing the review engagement? It says step 1. Now there are 5 steps, out of which I would say, I think towards the last, this is MUPPO, MUPPPO, yeah. One answer, that A and I wala answer is very important. Okay, very important. Look, I'll tell you which one. Rest is just read. See, this full answer will not come, because if you see the answer, the length of answer, it starts from here, this full part, this full page, then this full page, then this full page. Yeah. So, but there are separate steps. There are 5 steps. So, MUPPO, MUPPO we say, MUPPO. Third wala step is very much important, procedures. Procedure 2, A and I. Okay? Now, let's read this. Sir, what are the procedure for performing review engagement? You will say step number 1, materiality in a review of FS. So, same what we do in audit, we will use the same language. So, the auditor, so not auditor, the practitioner, my mistake. The practitioner shall determine the materiality for the FS as a whole and apply the same in designing the procedures. He shall review the materiality. You will not use audit. He shall review the materiality for the FS as a whole, and in case if he becomes aware of any information during his review which would have caused the practitioner to determine a different amount initially, so he will change that amount. Okay, that is materiality. Not so important. U, understanding of the entity. He shall obtain understanding of the entity, its environment, its FRF, that's financial reporting framework, to identify areas in the FS where MMS means material misstatements are likely to occur, and thereby provide a basis for designing the procedures to address those areas. So, materiality, understanding of the entity. B, procedures. 2 procedures are there, A and I. A and I, very important. Performing procedure. In obtaining psi, now here when I say psi, it is not sufficient appropriate order, it says sufficient appropriate evidence. So, A will not come. Sufficient appropriate evidence as a basis for conclusion, because review may give conclusion. The practitioner shall design and perform A and I, A analytical procedure, I inquiry, to address the material items in the FS including disclosure, and to focus on the areas in which where MMS are likely to arise. So, address all material items including disclosures and to focus on addressing areas where MMS are likely to arise. Okay? So, first on the material items and to address the areas where MMS are likely to arise. Number 2, SRE wants the practitioner to perform inquiry, AP and specific procedures for specific circumstances. That we'll do it later on. What is inquiry and why it is performed? So, this is a question. Explain A, explain I. Right now we are learning what is I. Sir, inquiry is basically what? Seeking information from management and other person within the entity. Inquiry about the actions taken, the communication the entity has received, and matters arising in applying the procedures. Third, it may extend to the inquiries to obtain non-financial data. It may the practitioner should evaluate the responses to inquiries. You have asked the question, answers have come. So whether the answers are relevant for you or not, to evaluate the response to inquiries. Sir, why? Evidence from inquiry is a principal source of information. It helps in applying the attitude of professional skepticism, like questioning mind, that's called professional skepticism. It helps in understanding the entity and its environment. It helps in identifying the wrong. The same answer, like why it is important, same answer you will use for AP also, analytical procedure. Why it is important? For these benefits. Okay? Analytical procedure essay 520. So you read from your teacher, content from the model, essay 520. Analytical procedure performed on both financial as well as non-financial data. We perform on both financial as well as non-financial data. Same line. Why it is important? Same. Understanding the entity and its environment and identifying of wrong areas. Same. Understanding the entity and its environment, identifying the wrong areas. Same line. Identifying the inconsistencies, then provides corroborative, that is related evidence in relation to other inquiries, and serve as an additional procedure. So this is the importance of AP. So importance of AP is an important question, importance of inquiry is a separate question. Okay, both are important. Step number 4. So procedure in specific circumstance. Now this 4 situations you have learnt in audit also. I mean, we'll be doing it when we do the content, but intermediate level also you have done. Like for example, related parties. Essay 550 if you know. So you will be alert for indicators of RP relationship and transaction, inquire for transactions outside the normal course of business to determine rationale. So the same answer is in essay 550 also. Fraud and non-compliance of law. So fraud is 240, non-compliance is essay 250. So the same answer what we studied is the same answer we use here. So in the exam, they can ask you specifically for fraud. Like review, you are doing review, he came across a fraud. What procedure will perform? Communicate the matter to the appropriate level of senior management or TCWG, requires the management to assess the effect on the FS, consider the effect as assessed by the management to conclude and review report, determine the full additional responsibility if any, determine and fulfill additional responsibility if any. So this is an answer for fraud and non-compliance of law with regards to SRE. Sir, very repetitive, going concern. During the review, if the practitioner identify indicators of material uncertainty, then he should conduct inquiry about management ka plans for future action and whether it will improve the situation and evaluate the results of such inquiry. So this is specifically for going concern in case of review, not audit, review. So you can't give reference of 570. Yeah? See, 570 is basically audit. I'm just telling that content is same only. There we do audit, here we do review, but answer is similar only. Then, use of work performed by others, like internal auditor expert. Perform procedure to conclude about the adequacy of work. So this is a separate question. Okay? Now, sir, other procedures. So, materiality, understanding the entity, performing the procedure, performing specific procedure and other procedures. It says, if what are the additional procedure when the practitioner becomes aware that the FS are materially misstated. So when you saw the FS, you are doing a review, you found out that the FS are materially misstated. What you should do? See, if the practitioner becomes aware of the FS, that the causes him to believe that the FS are materially misstated, he shall design and perform procedure to conclude the matter is not likely to cause the FS as a whole to be materially misstated and determine that the FS as a whole to be materially misstated. That means decide whether the FS are not misstated or decide whether the FS are misstated. Either are misstated or either not misstated. Sir, if he believes that the FS are misstated, what he should do? Perform additional procedure. This is your answer. Perform additional procedure. What additional procedure to be applied is your heart will say. Heart basically means professional judgment. What additional procedure to be applied is a matter of practitioner ka professional judgment. What additional procedure you will apply, sir? Very simple. Additional A, additional I, additional AP, additional inquiry and other types of procedure like test of details or external confirmation. Understood? Very simple answer. You are doing a review engagement, you found some mistake. What you should do? You should decide whether the matter causes FS to be materially misstated or whether the matter does not causes FS to be materially misstated. If practitioner thinks that the matter causes FS to be materially misstated, he should perform additional procedure. What additional procedure will be performed? It is his professional judgment. So additional procedure may be what? Additional A, additional I and other types of procedure. Over answer. So in the exam they will give you, like for example, inventory was 5 lakh rupees. However, you found it should be 4 lakh rupees. So FS may inventory is wrong. That means FS are misstated. Amount is there but it is wrong. Na? What is your procedure? What will you do as a practitioner? This answer will come. Okay? Now, subsequent event, it is same as SA 560 wala content only. He should conduct inquiry and if adjusting events are there, he should request the management to correct it. If it came known after the date of auditor's report, discuss with the management, determine whether FS needs the amendment. If so, inquire how the management intends to address the matter in the FS. Same answer it is of SA 560. Ideally in the exam, they may ask you going concern wala point, law wala, non-compliance of law wala and this if it is misstated. Okay? Then question number 6 and 7 is connected. What are the main WRs? What are additional WR? Same answer we do it in SA 580 also. Main WRs are two. Number 1, that the management has fulfilled the responsibility for preparation as per FRF and they have provided the practitioner with all the information access as per agreed terms. And all the terms have been recorded and reflected in the FS. Prepare the FS and they have given all information to the practitioner. There we say auditor. And all the terms have been reflected in the FS. This is main WR. What are other WRs? All SA numbers. RP, identification of RP and RPT, SA 550. Significant facts regarding frauds and suspected frauds, SA 240. Non-compliance of laws and regulations, 250. Going concern assumption, SA 570. Subsequent events, SA 560. This 5 points. Related party was there, non-compliance was there, fraud was there, going concern was there and subsequent event, 5 points. Same answer, same line. Then material commitments, contractual obligation that may have affected entity ka FS and material non-monetary transactions for no consideration undertaken by the entity in the financial reporting period under consideration. So non-monetary transaction. So 5 to at least you remember So it is 550, 560, 570, correct? 240, 250. This 5 you should remember. 240, 250, 550, 560, 570. Just write name, related party identification, identification of subsequent event, identification of material uncertainty affecting going concern assumption, 240 identification of fraud or suspected fraud, 250 identification of non-compliance of laws and regulation. 5 is very easy. Okay? Then the same answer we're going to do in the next class when we do SA 580. If the management does not provide the requested WR, what should the practitioner do? Discuss the matter with the management TCWG. We said DRT. I'll be teaching you DRT again in SA 580. DRT. Discuss the matter with the management TCWG. Reevaluate the integrity of the management. R is reevaluate the integrity of the management. T. Take appropriate action including the modification of the conclusion. Modification of the conclusion. You won't say opinion. Audit may be say opinion. Review may say conclusion. DRT. Acha, the practitioner shall disclaim the conclusion or withdraw from the engagement if possible. If he has a doubt regarding the integrity of the management such that the WRs are not reliable or management does not provide the requested WR for responsibility. If main WR is not given or he has a doubt regarding the integrity of the management, he should do disclaimer. There we say disclaimer of opinion. Review may say disclaimer of conclusion. Same content is exactly there in your SA 580. So question 6 is main WR, 7 is additional WR, 8 is procedure if WR is not provided. WR is not provided. Okay. Then how the practitioner forms a conclusion for review engagement, you can skip this. Now in the module they have given how to draft a para. Okay. When I teach you audit report chapter, audit report will be, I will teaching you 4 types of opinion. Can somebody tell me what kind of opinions we have in the syllabus? Opinions. Unmodified and modified. Modified में qualify, adverse, disclaimer. So basically 4. Unmodified, qualify, adverse, disclaimer. So that is unmodified opinion, qualified opinion, adverse opinion, disclaimer of opinion. Opinion. Same 4 is for conclusion. Unmodified conclusion, qualified conclusion, adverse conclusion, disclaimer conclusion. Here we say conclusion. So I am not teaching you that right now because I have not taught you audit report. See, because the paras are similar. In I think May 25 or maybe September 25, they asked a para, I think May only. They asked draft a qualified conclusion or adverse conclusion para. So until as we don't learn audit ka para, we will not be able to recollect this para. Okay, so I am skipping that. I have written the page number 10.92, 10.22. I'll be teaching you. Okay, so on Monday ka or Tuesday class I'll be teaching you that. Works with everybody. So drafting the para is important. I have not taught you. The concept is exactly same what we do it in audit. So on Monday ka class I'll be teaching you that. Cool. Now what are the contents of report? Same answer. Title, addressee, date, place, sign. FRA new din. 3 points. Management ka responsibility. A description of the responsibility of the management for the preparation of FS. Then practitioner ka responsibility. A description of the practitioner ka responsibility to express a conclusion. Third, statement that the engagement is performed as per SRE 2400. Correct? Then review, description of the review of FS and installation. You can write extra point also. Then here we learn one extra point for MCQ purpose. Point number 9. It says the date of the practitioner report. The practitioner shall date the report. See, ideally when do you prepare report? After you have done the audit and you have got the evidence. Same way when you are doing review engagement, when will you sign the review report? When you have got it, when you have done the procedures, when you have done the checking and you have got the enough evidence. So you frame that in a sentence. The practitioner shall date the report no earlier than he has obtained sufficient appropriate evidence, not audit evidence. This A is wrong. As a basis for practitioner conclusion on the FS that all the statement that comprises FS under FRF have been prepared and those with the recognized authority, that means management, have asserted that they have taken the responsibility of the FS. FS have been prepared as per FRF and management has taken the responsibility. Once you have concluded this, then only you will put the date, that means then only you will sign. So it's logical MCQ basically. Okay? Date, place, sign. Done. Common answer. Third up is done. Important. What documentation the practitioner will do for review engagement? If you remember, SRS I have taught you code as safe. Almost similar answer. This point was there. Significant matters arising during the engagement and the practitioner ka conclusion reached and professional judgment made. This point is common in all SRS, SRE, SAE. Every time it is there. Then performance nature, time and extent of procedure performed to comply with so and so standard. This is also there. Results obtained from the procedures, practitioner conclusion formed on the basis of those results. So NT of the procedures and the results obtained from the procedures. Then while documenting the NT of the procedure, the practitioner shall also document what? Who performed the work and the date on which it was completed. Who reviewed the work performed for the purpose of quality control. Then document the discussion with the management TCWG, and he shall also document how the inconsistency identified were addressed. So this answer you need to mark it up, question number 10. Cool. 11 we have done audit versus review. So full SRE 2400 is done, 2410 is pending, and my opinions, conclusions here are pending. That we gonna do in the next class. But comfortably we have completed 4.5 chapters, only half this is pending. So in the meantime, now you have a break of 2 days. What will you do? You will complete these 4 chapters, be at par with me. What I have taught you, the notes, that plus what you do the question answer from the module, plus take out May 24 ka paper, September 24 ka paper, May 25 and September 25 ka paper. This 4 attempt ka paper you take out, solve the question, just download the PDF like you are doing NBFC, Control F, NBFC. You saw the NBFC ka question, solve that question. You are doing group audit, you will just type consolidated financial statement or group audit word, you will find out a question. If you are doing review engagement, just type SRE or review, you will find out a question, solve that question. If you are doing related service, type related service in the Control F, you will get the question. So solve every paper. See, when you solve ICA ka question answer, trust me, your confidence will rise. I am giving you a break specifically so that whatever content we have done, you are at par with me. See, I am not here to teach, I am here to make you clear. Okay. Now give me 2 minutes time. Let's do September 25 ka questions. Bro, review came for 9 marks. 3C, 6B. 3C and 6B. Let's see what it is. Acha, 3C was on 2410. I have not taught you. That is pending. Okay? That we are gonna do in the next class. Six B. Achha. Oh, 6B also came on 2410. Both came on 2410. Both. So now what is the conclusion from here? In the next attempt, for sure you will see 2400. For sure. Because 2410 has come latestly 9 mark. Now, ideally ICA will test the next standard, 2400. I will not teach you this answer. Can you answer this? Ideally, the answer of 2400 and 2410 with regard to this content is same. Can you read this answer? Tell me what answer we should write. You have done this with me today. You are required to specify the areas that this WR should cover for the review of interim financial information. So, you will give a reference of SRE 2400 review of interim financial information. The areas the WR should cover are what? I'll just show you the answer so that you get confidence. Can you see question number 4 from the notes? Management representation to be obtained by the auditor in case of review of IFI 2410 basically, okay? Interim financial information. What I have written? Refer question 6 and question 7 of SRE 2400. Hold on. Refer question 6 and question 7 of 2400. Refer question 6 and question 7 of 2400. Same answer it is. Main responsibility. Management has fulfilled the responsibility for preparation of FRF and they have given all the information and access to the practitioner and all the terms have been agreed and recorded. Plus additional WR which the practitioner should obtain, those 240, 250, 550, 560, 570. Everything is from the notes. Provided you understand what content is asked. See, I give you a hint. First see the chapter. What chapter is getting attacked. Then jump to the question, what they have asked. Then open the chapter in your notes. Achha, this question was there. This answer you're supposed to write. Now I hope I'm solving the papers with you guys just to rise your confidence. Audit is all about rising confidence. I hope your confidence is raised. Do recommend to your friends also so that they understand audit is not that tough. It's about the technique, how the teacher teaches. Trust the notes, you will clear. Vignesh, hi. So we have completed NBFC, we have completed SRS, that's 44004410. We have completed group audit. Today we completed PSU and we have completed half of SRE chapter. 2400 is done. Almost it is done. 10% at conclusion is pending. Okay? So Monday to Friday, next week we're gonna meet every day around 2:30 to 4:30 only we will be meeting. Maybe 4:30 or sometimes 5 also. It depends upon the enthusiasm of both of us, like teacher and the student. But I'm giving you a break right now, 2 days. Revise those four and a half chapters in the 2 days so that you are at par with me. So if I say NBS is a 5-mark chapter, group audit is 5-mark chapter, SR is a 5-mark chapter, PSO is like 4-mark chapter, and SRE almost we have done like 5-mark chapter. So around 20-25 marks we have completed. Okay. So we meet on Monday 2:30. Works with everybody? Chalo. Bye bye guys. Take care, enjoy, and aim for a rank or 70 plus, which is earlier. I'll send the notes later in the evening or maybe by tomorrow for PSU. Okay. The team will send you. Don't worry. Bye. Take care. Monday we meet, please. Today for sure I'll be sending, for sure. I forgot, actually I was very busy these 2 days. Or I'll be sending today, Hajit. Okay, I'm so sorry. By evening, because I have back-to-back sessions around 7:30 I'll share in the group. Okay, all good. Chalo. So welcome to the class, guys. Good afternoon. And we were doing our SRE. Let me just run through for SRE ka part, then we continue. When this chapter gets over, then we start with a new chapter. SRE 2400 we have done half. So please open your SRE ka notes. Now SRE. So SRE mein there is 2400, 2410. Review is basically what? Limit assurance engagement, where we don't give opinion, we give conclusions. We give conclusion. Okay? We perform less procedures. Basically we perform 2 procedures, that's ANI, analytical procedure, and inquiry. So the name of 2400 was engagements to review historical financial statements. Engagements to review historical financial statements. So these were the objectives. This was a normal answer. Then the first answer, what we said was logical, was what are the factors affecting acceptance and continuance of client relationships and review engagement. So in this, when we talk about acceptance and continuance, it is a negatively worded essay. So it says the practitioner shall not accept the engagement if there is no rational purpose for the engagement. Review may not be appropriate, and the practitioner may recommend that, sir, either you do audit or some other engagement. Sir, he has a reason to believe that ethical requirements will not be satisfied. Information would be either unavailable or unreliable, and it is likely to affect decision independence. Okay, then or there's a limitation imposed by the management, or there is a doubt regarding the integrity of the management, so he should not accept the engagement. Now, when you are accepting it, that is before the answer, what are the preconditions? Sir, for first, I agree, sir, I am not the auditor, I agree that. But sir, acceptability of FR is very much important. You can't just do any, you can just prepare accounts as per your own wish. It has to be acceptable as per FRF. Then obtain an agreement from the management regarding access to all the information, additional information, and unrestricted access to persons if necessary. This also came in exams and it's common with 210. If the preconditions are not present, then do not accept the engagement unless it is required by law or regulations. If engagement is accepted because of law and regulation, you will not give a reference in the report. Then after engagement, if the management is imposing some limitation, you will check whether the matter can be resolved or whether it's appropriate to continue engagement or how to communicate in the report. Now, engagement letter contents. Agreed terms of the engagement shall be recorded in the engagement letter. In case it's a recurring review engagement, recurring like repetitive engagement, then the terms, evaluate whether terms needs to be revised or whether there's a need to remind or remind the management or TCP is appropriate of the existing terms. If the management requests a practitioner to change the terms which provides lower assurance, sorry, not lower, which provides no assurance, he may accept such change if there's a reasonable justification for so. Then we did procedure code was MAPO, materiality. Then U was understanding the entity. P for performing the procedure. We perform two procedures, that's basically A and I. A is important, I is important. A ka short note, A ka importance. Inquiry ka short notes, inquiry ka importance. Okay. Then we did specific procedure with regards to related parties, non-compliance of laws, going concern, and use of other work performed by other auditors. Okay. Then O was other procedures. Now, if he becomes aware of matters which causes him to believe that the FS are misstated, okay, he shall design and perform to conclude whether there is a misstatement or whether there is not a misstatement. If there is a misstatement, he will perform what? Additional procedures. Now, additional procedure would be what? Additional inquiry, okay, additional AP or other types of procedures. So, this we have done in MAPO. Then, question number 6, what are main WRs, what are additional WR? This came with regards to essay 2410. What we have, this we have already discussed. Then, question number 9 was your what are the contents of practitioner? This is I think 10. Contents of practitioner report. It was third up title, address, date, place, sign, FR, NU date, management responsibility, practitioner responsibility, and other and a statement that the engagement is performed as per SRE so and so. Correct. Then we have discussed that he has complied with ethical requirements. It is not an audit and it's a review. Therefore, no assurance is expressed. Conclusion will be expressed here. So, common answer. Then, documentation answer. This was question number 10. I have written important. It may come in the exam. Documentation with regard to SRE 2400. And last answer was audit versus review. Audit versus review. Clear? Now, from my side, some opinion ka part was pending. So that we have not written in the book. You can do it either from the module or you can do it from your teacher ka book. Okay. That content we have not written in the notes. I'll just show you where exactly it is in the module. Page number 10.19. Module is 10.19. Okay. Now, if you have a notebook, you can just note it on module page number 10.919 onwards. So, how do you frame an opinion? Okay. First, I'm talking about opinion. Opinion. Hold on. I'll show you a diagram. Now, when we talk about guys opinion, unmodified. Unmodified basically means unqualified. Basically means clean opinion. Correct. The next one is modified. Modified basically means qualified, adverse, disclaimer. Correct. Now, when we talk about SRE, so SRE may also, like review engagement may also, instead of opinion, we use conclusion. So, unmodified conclusion, qualified conclusion, adverse conclusion, disclaimer of conclusion. Okay. This diagram will be doing in reporting chapter. This diagram I have made in reporting chapter ka notes. Now modification. Now when do you modify the report? When there is something wrong. What are the wrongs, sir? If the financial statements are misstated or the auditor is unable to obtain SI. I am teaching you with regards to opinion ka perspective. Huh? If the financial statements are misstated or the auditor is unable to obtain SI. If the financial statements are misstated and the effects are material and pervasive, the auditor will give adverse opinion. The auditor will give adverse opinion. If it is, sorry. If it is material but not pervasive, the auditor will give qualified opinion. See, material basically means important. Pervasive basically means universal application. So if I have seen the FS and FS are misstated, that means there is a wrong. If there is a big wrong, basically material means important, pervasive means universal application. That means my share capital is wrong, my datas are wrong, my creditors are wrong, my reserves are wrong, my investments are wrong, my inventories are wrong. Lot of problem means you will give adverse opinion. Sir, it is material but it is not pervasive. Let us assume in stock mein there is a problem. Only in stock mein there is a problem. But my cash bank is correct, my data is correct, my creditors are correct, my investments are correct, my share capital is correct, rest everything is correct. Only stock mein problem is there. So guys, it is material but not pervasive. You will give which opinion? Guys, you will give qualified opinion. You will give which opinion? You will give qualified opinion. Sir, the practitioner is unable to obtain SI. When the auditor is unable to obtain SI, that means he has not got evidence. If you have not got any evidence, when you cannot do, what do you do? Do. Disclaimer of opinion. If it is material and pervasive, what do you do? Disclaimer of opinion. Sir, if it is material but not pervasive, imagine he has just not got some TDS ka challan or maybe some GST ka challan he has not got to see. He has got errors, everything, bank statements, purchase ka bill, sales ka bill, everything else he have got, but he has just not got few TDS ka challan. You will give which opinion? Qualified opinion. So if there is a some problem, qualify. Lot of problem I have seen, adverse. I have not seen anything, do. Disclaimer of opinion. Is this diagram clear, guys? This I have taught you with regards to opinion. Huh? Done. Now when I say unmodified conclusion, unmodified ka simple word is what? Clean. Clean, correct? So it says very simple. Guys, when everything is correct, what will you give? You will give clean opinion. So same logic you use for review also. I am saying the word heading would be what? Unmodified conclusion. If you write opinion, it is 0. Huh? 0. It says the practitioner shall express unmodified conclusion in the report on the FS when he has obtained, when the practitioner has obtained limited assurance, because we don't give reasonable, we give limited assurance here, and he concludes that nothing has come to his knowledge that it causes the practitioner to believe that the FS are not prepared in all material respect as per FRF. See, everything is nothing, not. Why? Because it is negatively worded. If imagine same thing was there in audit mein, when we give opinion, audit mein what do you say? The financial statements are giving what? True and fair view. We say positively, the financial statements are giving true and fair view. Right? Here what we are saying, nothing has come to his knowledge that causes him to believe that FS are not prepared as per FRF. So we use negative statements. Okay, this is the definition. Now in the exam, if they ask us to draft a para, how do you draft a para? 2 points. Based on our review, nothing has come to our attention that causes us to believe that the FS do not give true and fair view as per FRF. This line is applicable when we prepare using fair presentation framework, that is basically schedule 3 AS in days. That is called fair presentation framework. Almost similar line. Based on our review, nothing has come to attention, that causes us to believe, same line. The DFS. Here we say do not give true and fair view. Here you will say in all material respect are not prepared as per applicable FRF. Here it does not give true and fair. That's the only difference. Here we say nothing is are not prepared as per FRF. This is applicable for when FS are prepared using compliance framework. Compliance framework basically means LODR, like you have to follow some rule, law, regulation. This is a para to draft unmodified conclusion. In the previous attempt, May 25, they had asked for review में qualified conclusion, I think, qualified. I'll teach you how to draft that. So this is unmodified. Understood? I am again repeating, please be very clear with your concepts. Here we don't say opinion, here we say what? Conclusion. Negatively worded, you can't say finance is giving true and fair view. See, meaning of this is that only it is giving true and fair view, but nothing has come to our attention that causes us to believe that the FS are not prepared as per FRF. Works? Are you clear with unmodified conclusion? Because this is very important now. I assume they will again ask. Okay. Now modified conclusion. Both the diagram what I taught you for OPN, same language. Sir, FSR materially misstated. It was there also. Unable to obtain sufficient appropriate evidence. Same. Here there we say sufficient appropriate audit evidence. Here we say sufficient appropriate evidence. Logic is same. Okay. Now, use the heading qualified conclusion. Use the heading adverse conclusion. Disclaimer of conclusion. No opinion, conclusion. Now, you have to write basis also, right? Now, understand, I'll be teaching, I think tomorrow we'll be learning audit report chapter, maybe today, I don't know. So, audit report, if you have seen any time, we have learned that first one is the title, then it is the addressee, then it is opinion, and after opinion it is basis. Basis, correct? So, basis generally comes after the opinion para or before the opinion para? Guys, basis come after the opinion para or before the basis para? In audit. After, correct? This much is clear. But very simple, very logical MCQ. In review, like the small points people forget. They don't read also. It comes before the conclusion para. That means first you will write basis for conclusion and then you will write the conclusion. Whereas in opinion, we first write the opinion and then we write the basis. This is a correct, incorrect. They can ask you, they can twist the question. Okay, they can frame a set and choose the correct answer. Always remember in review, first basis comes, then conclusion. So we say RBC, no RCB, RBC. Review में basis and conclusion. Okay, AOB, audit में opinion and then basis. AOB, RBC, RBC. Review में basis and then conclusion. Clear? Now, how do you draft the para? Same situation. So, if the FS are materially misstated, the practitioner will express either a qualified conclusion or an adverse conclusion. So, when do we give adverse? When the effects are material and pervasive. When to give a qualified? Material but not pervasive. Understood? Language. This came in the exam. Based on a review. So, the first para is for fair presentation framework. The second para is for using compliance framework. That's the only difference. So if you remember little, if you have studied inter through me or final through me, you must be knowing this, that I have taught you opinion paras. So when we write qualified, we use the word except for the effects of the matter described in basis for qualified conclusion para. Here also except for the effects of the matter described in conclusion, qualified conclusion para. Same language then. Nothing has come to our attention that causes us to believe that the FS do not give true and fair view as per the applicable FRF. Nothing has come to our attention that causes us to believe that the FIs are not prepared as per applicable FRF. What is the difference here? In qualified, you write except. Adverse. Based on a review. See, understand, in audit, we start with in our opinion and to the best of our information according to the explanation given to us. That is audit. Here it is review. So, based on a review, based on a same line. This is for fair presentation, this is for compliance framework, correct? How do you write here? Due to the significance of the matter described in basis for adverse conclusion para. Okay, the FS do not give a true and fair view as per the FRF. Your FS are not prepared as per FRF, as per applicable FRF. Qualified may accept everything is giving true and fair view. Adverse may does not give true and fair view. Now, when you are adding qualified conclusion or adverse conclusion, this also was asked in the exam. When you are adding qualified conclusion or adverse conclusion, 3 things extra you have to do. What? Describe and quantify the financial effects of the misstatement. Quantify basically means amount. What is the misstatement? What is the amount of the misstatement? You have to give the disclosure. Number 2, how disclosure misstated? If the misstatement relates to narrative disclosures. So here, If it relates to amounts in the FS, you will give disclosure of description and the quantification, that is amount. If it is about disclosures, you will say how disclosures are misstated. Sir, if it was omitted information, sir, if the describe the nature of the omitted information if the MMS relates to non-disclosure of the information required to be disclosed. Three things are there. We do reverse. Something is omitted, describe the nature of omitted information. Something is stated, disclosures are misstated, explain the disclosures. Acha, amounts in the FS are misstated, describe and quantify the effects. Omitted information you will give omission, how omission was there. Acha, if it relates to disclosures, you will write about disclosures are misstated. Sir, if you talk about the amounts in the FS, you talk about describe and quantify the effects of the misstatement. This came in May 25. I'll show you the question later on. Sir, inability to obtain psi. So what will you do? If you will express qualified conclusion when if it is material but not pervasive. Disclaimer conclusion if it is material and pervasive. How would you frame the para? Same, based on a review, based on a review. This is for qualified. Except for the effects of the matter described in basis for qualified conclusion para, nothing has come. Same language for qualified, what we have learned earlier. This is for qualified. Okay? Now, the practitioner shall withdraw from the engagement if the following conditions are present. Number one, if there is a scope limitations of the review imposed by the management, or if he has determined that the effects of the misstatements are material and pervasive, and withdrawal is possible under law or regulation due to limitation imposed by the management. Number two, he says that the misstatements are material and pervasive and withdrawal is possible. He will withdraw from the engagement. Sir, how do you conclude the para? In disclaimer, it says, when disclaiming a conclusion, what will you write? Due to the significance of the matter described in basis for disclaimer of conclusion paragraph, the practitioner is unable to obtain psi to form a conclusion on the FS and he does not express a conclusion on the FS and the practitioner does not express a conclusion on the financial statement. Done. Understood all the paras, guys? Have you understood? So it is in module 10.19 to 10.22. Please note it there somewhere. You don't have to mark, you don't have to write it somewhere. You just have to understand, mark it up, the wordings. Now I am opening May 25 ka paper. I don't know whether you have appeared it or not. Okay. Now I could see SRE 2400. Correct? My brain should directly start processing. This was full story. Even if I don't read, it's okay. I saw my essay 2400. What it says? Based on the evidence gathered and procedure performed, CA should determine that the FS are materially misstated. That means something is wrong. Acha. If it is materially misstated, ideally which conclusion you should give? Guys, ideally which conclusion you should give? Tell me. May 25, question number 4C. Which conclusion you should give? Deepak, there's a mistake. You can't give just qualify. You depending upon material and pervasive. Shri, I agree, modified, but modify me specifically if I have to ask you, which one you will give? Correct. Very good, Ajit. Either qualify or adverse depending upon the pervasiveness. In the question they said, he is expressing qualified conclusion. Why? Because the effects are material but not pervasive. So you were not supposed to use your brain only. They have given. Okay, now understood? Now what is the question that asked 4 mark ka? State the phrases to be used in the conclusion para. That means what? What they had asked? Tell me. What they had asked? I hope you understood the question. 2400 question is there. Okay, the qualified conclusion is there. What does this line mean? State the phrases to be used in conclusion para as appropriate. What are you supposed to write in the exam here? You are supposed to make the para of conclusion, qualified conclusion para. Okay, that except for a line, except for the effects of the matter described in basis for qualified conclusion para. The financial, nothing has come to our attention that causes us to believe that the financial statement do not give true and fair view as per applicable FRF, and in all matter respect has been prepared as per FRF for compliance framework. State the matters to be included in the basis. What you have to write? Those 3 lines. See, based on review except for the effects, This was for fair presentation framework. This one was for compliance framework. Now those 3 lines I told you about. First, if the amount is omitted, if the information is omitted, describe the nature of omitted information. If disclosures are misstated, describe how disclosures are misstated. Acha, if it relates to amount, describe and quantify the financial effects of the misstatement. It has come in the exam for sure. It may definitely be repeated again. I do not know which attempt, but it will come again. Now is it clear to 400 everybody? Tell me guys. ठीक है. Now 2400 is done. Let's do 2410. Review of interim financial information performed by the independent auditor of the entity. Review of interim financial information performed by the independent auditor of the entity. Interim. Can somebody explain me what does interim means? Between a financial year. That's basically either quarterly or half yearly. Okay. Now, whatever essays I have taught you right now, I have always told you any practitioner can do that engagement. We learned 4400, 4410, 2400. This essay specifically has to be done by independent auditor of the entity. That means company ka stat auditor. Nobody else can do. So how do you remember? 2410 III independent auditor. 2410 III independent auditor of the entity. So review of interim financial information. If it was engagement related to review of financial information, 2400. Any practitioner. It was interim, it is 2410. What is IFI? We call this as IFI. So IFI is prepared and presented as per FRF that comprise of complete or condensed set of FS for a period that is shorter than the entity's financial year. Shorter than the entity ka financial year. That's basically 6 months, 9 months, 10 months. Example, quarterly FS. 2410 applies when a review of IFI is performed by the independent auditor of the entity, that is basically stat auditor. So there are only 2 exceptions. One is 2410, other one will come tomorrow or day after, I'll tell you. Rest everywhere any practitioner can do. But here mandatory who has to do? Stat auditor has to do. Okay? Now, procedure performed by the auditor to update the understanding of the entity, its environment and its internal control. So update what? Understanding of the entity, its environment, its internal control. This is basically essay 315 ka answer. Like when we do audit, we understand the entity, its environment. Same answer there is in audit also. Here we are doing with regard to review. Read the documentation working paper of the last year ka audit. Read the most recent annual and comparable prior period ka IFI. Consider the materiality with respect to the AFRF as it relates to IFI. Then consider significant financial accounting and reporting matters that may be of continuing significance such as material weakness in internal control. Just read that. Consider results of any audit procedure performed with regard to the current year ka FS. Okay. Then consider results of any internal audit performed and subsequent action taken by the management. Then inquire with the management regarding what? Management ka risk assessment of risk, changes in the entity ka some business activity, effect of changes in the internal control system, and process by which IFI has been prepared, whether it's reliable and its underlying records. So this an answer can come in the exam. What are the procedure performed by the auditor to update the entity, understand the entity, its environment, internal control? 3. This is how would you perform IFI. How would you perform IFI? First, see, we are talking about interim. Interim means during the year, correct? Half year, quarter. So you will read the minutes of the meeting of shareholders, TCL and other appropriate committees. Read the minutes. Sir, why minutes? See, because June quarter ka if board meeting has happened, so they must have discussed something important data. So I can read and I can understand from there. Number 2, consider the effect if the matter giving rise to a modification of the audit or review report. Now you want to modify the report. Why? Because this is the logic. This is the reason. What is the reason? Understand that. Communicate with the other auditors who are performing a review of the IFI of the review entity ka significant components. Can somebody explain me this line? What does this line means? Communicate with the other auditors who are performing the review of the IFI, that's interim financial information, of the review entity's significant components. What does this mean? Superb. Anirudh, mistake is there. Agreed component co-auditor. Don't write the word practitioner. Why will you say practitioner? Ideally, review of IFI has to be done by the stat auditor, right? So I would say like component ka stat auditor, na? Ultimately, it's component ka stat auditor only. Understood, Anirudh? Because we just learned IFI has to be mandatorily done by the stat auditor. So it's saying if I am reviewing, imagine holding company, Anirudh is reviewing subsidiary company ka IFI. Okay? Obviously, he will be the stat auditor, then only is allowed to do review of IFI, na? So I will communicate with Anirudh because he is review entity ka component ka auditor. Then inquire with the management about the following. What all you will inquire? This can separately come in the exam. Whether IFI is prepared as per FRF. Whether IFI is prepared as per FRF. Whether it contains any uncorrected misstatement. Whether related party transactions have been appropriately disclosed. Whether there are changes in commitments and obligation. Significant changes in the contingent liability. So basically this is again audit wala answer. So this is SA 550 related party. Uncorrected misstatement SA 450. Acha, liability litigation claims SA 250 is there. Acha, then F, compliance with debt covenant, that means any loan conditions are there. Knowledge about fraud SA 240. So what we did WR na 240 250 in the previous session. 550 560 570. Then knowledge of any actual or possible non-compliance of law, that is SA 250. So this is exactly same. This inquiry is regarding representation. So in the exam, if you forget, use the SA wala answer for WR. Same answer it will come. Same answer. This can separately come in the exam. Question 4. Management ka representation to be obtained by the auditor in case of review of IFI. This is same 2400. In the previous session we have discussed this. Okay. Now see, procedure in case the management has changed the assessment of entities able to continuous going concern. Almost similar answer regarding SA 570. Going concern. Ideally, primarily the duty is to evaluate GC is of the management. The auditor should inquire whether management has changed the assessment of entities able to continuous going concern. If he becomes aware of any condition which is casting a doubt on the going concern, he should what? Inquire with the management. Same I will be teaching in SA 570. Today only we will be doing that. Inquire with the management about the plan for future actions based on its going concern assessment and the feasibility of these plans, and whether the management believes the outcome of these plans will improve the situation. Number 2. Consider the adequacy of disclosures about such matters in IFI. Whether this matter has been disclosed in the IFI or not. If the auditor should also make some additional inquiry or perform additional procedures. That's basically additional A, additional I, to enable the auditor to express a conclusion in the review report if a material adjustment in IFI is made. So if he wants to consider, so he should perform additional procedures and additional inquiry. So this is procedures for going concern. This can again be separately asked in the exam. So basically if you found some material uncertainty and management is saying that we believe that we will be running the business very good. So inquire what are your future actions, okay, and what are the feasibility of these plans, and you tell me whether these plans will improve the situation or not. So you will inquire this, okay. Question number 6, you can do it directly from the book. It's regarding other informations or misstatement of fact. This is similar to essay 720. Similar to essay 720. This you can do it directly. Question number 7. How does the auditor communicate in case of misstatement while reviewing IFI? Communication of misstatement. Communication of misstatement. Does anybody remember essay number for this? Communication of misstatement. मिसस्टेटमेंट का ऐसे नंबर ऑडिट में $265 communicating is deficiency in internal control. So Shree's 450, very good. She is correct, 450. Evaluation of misstatements identified during audit. Same answer I'll be teaching you today. Sir, if the auditor comes across any misstatements in the IFI, what you have to do? You will communicate to the management. Sir, please adjust, please rectify. If the management does not respond, you should communicate TCWG in writing. If it is some urgent matter, communicate orally and then document it. When the auditor ka judgment TCWG also does not respond appropriately within a reasonable period, what he should do? He should consider whether to modify the report or possibility of withdrawing from the engagement and possibility of resigning from the appointment to audit the annual FS. Understand the difference. You saw a misstatement, you communicate to the management. They are not responding, you communicate to TCWG. TCWG not communicating, not responding, what we should do? Modify the report or withdraw. Withdraw from the engagement. When I say withdraw from the engagement, guys, this withdraw from the engagement refers to what? Withdraw from the engagement refers to what? Which engagement? Which engagement they are referring to? Very good. Review of IFI and possibility of resigning from the appointment to audit the annual FS. Understood this? Because we are the auditor. So here we are, maybe we will withdraw from that review wala engagement. Here we are resigning from the audit only, because you are not responding properly. Understood both the difference? Here you are withdrawing from that particular review wala engagement. Here from audit only. Then same answer. What are the contents of report? You will write third option FRN. It is conducted as per SRE 2410. Management ka responsibility, auditor ka responsibility, and stating that the review is not an audit and therefore no assurance is expressed. And whether anything has come to the auditor attention that caused him to believe that the FS do not give true and fair view in accordance with FRF. Statement, that unmodified opinion wala, unmodified conclusion wala statement. Okay. Now, what I am teaching you right now, I will again come back today only on this concept when we do audit standards. We are doing 2410 mein SRE 2410. It says, if there is a material uncertainty relating to an event or a condition that casts auditor attention, that comes to auditor attention, that casts a doubt on the entity's ability to continue as going concern. That means there is MUC. What is MUC, guys? Material uncertainty. What it is? It is material uncertainty. It says, and whether the management has made adequate disclosure in the IFI. So if there is a MUC, there is no harm. But whether the disclosure is made in the IFI, yes sir. What will you do? You will modify the review report and add EOM para. And add EOM para in the report. EOM, emphasis of matter. But sir, if the adequate disclosure is not made in the IFI, they have not done. So you will express qualify or adverse conclusion. They have done wrong. And specify the reference to the fact that there is a material uncertainty. And specify the reference to the fact that there is a material uncertainty. Sir, what does this mean? Now understand. We are into a plastic, my client is into a plastic manufacturing. Okay? The government of Maharashtra have come up with an order, or maybe government of Tamil Nadu has come up with an order that October se plastic will be banned in Tamil Nadu. So if plastic will be banned, that means he will not be able to manufacture anything. If he will not be able to manufacture anything, that means the turnover will become zero. But not today. Imagine we are in the month of April. Okay, imagine. But the order will be executed in October. October, correct, when the order pass. So it may happen, it may not happen. So there's a material uncertainty. If that thing has come up in the FS, modify the report and put it in EOM para. They should disclose that in the FS. They have not disclosed in the FS. So or they have hidden, that means they have done something wrong. What will you do? You will express qualify or adverse conclusion. Plus specify the reference to the fact that there is a material uncertainty. Specify a reference to the fact that there is a material uncertainty. Understood? This also came in exam. The last page is article. It's an additional procedure. If you want to read, you can read. Over. Let's do September ka question so that you get confidence. I think 6B2 we had done. Return representation should cover for the review of interim financial information. We have discussed it because the answer is same as per 2400. So whether they talk about 2400, 2410, WRs. Okay. Question number 3C. You have to tell me what you will write in the answer. Tell me. What you are supposed to write? Here you got the thing SRE 2410. What will you write? Tell me. This is basically no. Full story it is. Waste. What is the question? Objective of the engagement. Very different question as in the exam. Objective. Objective of SRE 2410. What is the name? So the name is review of interim financial information by the independent auditor of the entity. What is the objective? So it is not there in the notes, it is there in the module. Ideally, if you use your brain, you could have easily answered that. It is this one. I'll show you where it is. The objective is to enable the auditor to express the conclusion whether anything has come to his attention to believe that the IFI is not prepared as per FRF. That is the opinion conclusion. Correct? He will perform ANI to reduce the risk of inappropriate conclusion. Then, a review of IFI does not provide an opinion whether the FS is giving true and fair view or in all material respect as per FRF. A review is not designed to obtain reasonable assurance that the AFI is free from material misstatement. It consists of inquiries, applying analytical and other review procedures. This was the objective. Module page number 10.28. Previous attempt ka question. Objective of IFI. There are full chances that it can be repetitive. Understood? Both the question of 2410 we have done. So our one more chapter is over. I don't know what has happened to my iPad. It's just showing 14% battery. It's creating a problem today. So we have done NBFC group audit, correct? We did related service, we did review. 4 we have completed, right? Correct? Oh, PSU also we have completed. 5 we have completed. 19 are there. Cool. Let's take a 5-7 minutes ka break. Then we start with completion and review. I will do. Then we will do reporting wala chapter. After this we are doing completion and review. Let's say 560, 570, 580. Cool. Let's meet in 5-7 minutes. Hi guys, welcome back. Let's continue. Okay. Please open completion and review ka notes. That's essay 560, 570, 580. Very simple it is. Very simple. If I open previous attempt, completion and review. Okay, May they had asked, completion review came in MCQ. Correct. It came in MCQ. It was a 5 mark का question. November में no, May में no, September में no. Okay. So it came in May 24. One second, again iPad is 4%. It's draining, by the way. So in completion review, only 3 essays are there. I think we'll be able to finish this in like half an hour, 40 minutes. Then we do the question and we start with the next chapter. Okay, it says a completion review, essay 560, 570, 580. 3 standards are there. Now we are in audit. Review is over. Guys, review is over. Now we are in audit. Audit. So essay 580 talks about written representation. First I am teaching you a WR essay 580. Very simple, sir. What is WR? It is a written statement made by the management to the auditor to confirm certain matters or to support other audit evidence. We're talking about audit, okay? So it is a written statement made by the management to the auditor to confirm certain matters or to support other audit evidence. So like for example, acha, we have purchased a asset, acha, we have purchased asset, give us in writing. So management will give in writing, dear auditor, we have purchased this asset on this date at this amount from this party. So whatever you are saying, sir, I believe you, but please give me in writing. That is called as WR. It does not include any assertions or any supporting books, or because I am not talking about books. WR is a separate statement given by the management. This I have taught you in SRE only. What are main WRs? The auditor shall request the management to provide WR that the management has fulfilled the responsibility for preparing the FS as per applicable FRF. The auditor shall request the management to provide WR that the management has fulfilled the responsibility for preparing the FS as per applicable FRF. That's a main responsibility. Number 2, they have provided the auditor, they will provide the auditor a WR stating that they have provided all the information and access to the auditor as per the terms of agreed engagement and all that have been recorded and reflected in the FS. The same answer what we did in 2400. Boss, you have given me all the information and access and all those things are reflected in the and recorded in the FS. This is main WR. So same is in 2400, 2410. Here we study from the perspective of audit, there we study from the perspective of review. Then, sir, what are other WRs? So we learn this via code. It's called a PLATS. P say plans or intention that may affect the carrying value or classification of assets and liability. Any plans or intention that may affect the carrying value of classification of assets and liability. Number 2, liability is both actual and contingent. A, any aspects of law, regulations, contractual agreement, that is compliance of law, okay, non-compliance. Then T, title over or control over the assets or lien or encumbrances on assets and assets pledged as collateral. S, selections and application of accounting policies are appropriate. The code is PLATS. Plans or intention that may affect the carrying value of carrying amount of assets and liabilities. L, liabilities both actual and contingent. A, aspects of law, regulation, contractual arrangement. T, title over the assets, encumbrances, liens, charges. S, selection and application of accounting policy as appropriate. This is other WR. This is main WR. This is other WR. Now, provision regarding date, period, and the content of and the form of WR. The questions are on this also. So the date of WR, you tell me in the chat box, it should be after the date of audit report or before the date of audit report. Tell me. It should be after the date of audit report or before the date of audit report. It should be before, but as near as practicable to the date of audit report. Very good, Shri. Very good, Ajit. So the date of WR shall be as near as practicable to, but not after. But not after basically means before the date of audit report on the FS. The WR shall be for all the FS and periods. When I say all the FS, what does the word all FS means? All FS means what? All FS. The WR shall be for all FS and the periods referred to in his report. All FS basically means for balance sheet, cash flow, notes, SOKI, whatever he has prepared. Maybe he has prepared standalone, maybe he has prepared CFS for all the items of the FS, like basically the naming, the titles. Okay, when I say all the period, that means if there are comparative, you have to take it for comparative. They're talking about 2 years, you have to take it for 2 years. Okay, for all the FS, all the periods. Now, imagine I have taken some WR during the year. Okay, for example, loan confirmations. But near the year end, like around 31st March, should I continue with that old WR or should I take an updated WR? If I have taken in like August, September, some loan ka WR. Now I'm just closing on the balance sheet around February, March, I'm standing. Should I continue with that old WR only or should I take an updated WR? So logically updated WR. Sir, why? Because June, July mein loan was amount different and obviously there are chances that in February or March the amount will be different. So we'll take an updated WR. In certain circumstances, the auditor may obtain WR along the course of audit. In such a case, updation of the WR near to the end of the audit shall be further obtained to ensure subsequent events are also covered in the WR obtained. Okay? Then, imagine if there is a change in the management. If there is a change in the management. Now, we were talking about financial year 24-25 till October 10th, 24. A, B, C, D were in the management. Now we have LMNO. This is the old management, this is the new management. You guys are the auditor. You tell me, you will take a WR from old or new? You will take from new. Now when new will give you WR, they came on, imagine, let us assume 10th October. Old was removed and new was appointed. So you will take the WR from new management, agreed. So they will be giving you for like part of the year, that is from 10th October when they were appointed, or for the entire year or for the full year. Tell me. They will be responsible for the part of the year or for the full year? Very good. They will be responsible for full year. So if there is a change in the management during the period, the present, that is the new management, is still responsible for giving WR for the complete period covered under audit, for the complete period covered under audit. Clear? Then, it is a written representation letter addressed to the auditor. Okay. So you write, it is on the letterhead of the management to, if I know, let us assume I know Sukesh. So I will not write Sukesh. I will write the name of the firm to Sukesh and Associate. Yeah, to SDA and Company. I cannot write the name of the auditor. I write the firm ka name. Auditor is basically firm, not the individual. Acha, if law, and there was a question on this also. If law or regulation requires the management to make public statement about its responsibility, then they are not required to give WR separately. So what does this mean? So it means if law and regulation requires management to make public statement, if the management has given a public statement like a press conference about their responsibility, what is the main WR? That they have prepared the FS and they have given access to all the information and additional information, everything is reflected in the FS, correct? If they have announced in public, oh okay, this is our responsibility. You are the auditor. You will not go to the management. Arey management, AB sir has taught us, give me in writing. Management is saying that I have given public disclosure, I have given press conference. Then you can't obtain because they have given a press conference, they have given public disclosure. Then the auditors are not required to. Then they are not required to give the WRs separately. Then that means you can't take WRs separately because they have given public disclosure about the matter. Then they have given what? Public disclosure about the matter. Okay. Now explain. WRs are audit evidence. Always remember, WRs are audit evidence, but they are not SI. They are not sufficient appropriate audit evidence. So WRs are necessary information that the auditor requires in connection with the audit of the entity ka FS. So WRs are always audit evidence. Although WR provide necessary audit evidence, they do not provide SI on their own of any of the matters which they deal with. That means you have to perform procedure. You just can't go, acha management, give me in writing you have bought the asset. Sir, I have seen bill of the asset and management is saying they have bought the asset. So that means so they must have bought it na. So why the hell I should go and do the work na? This standard says, hey auditor, just because management is giving everything in writing, you can't blindly trust them. You have to go and perform the procedure. So they are audit evidence. Guys, they are audit evidence, but they are not sufficient appropriate audit evidence. You need to go and perform the work. They are not SI. Then, WRs are important source of audit evidence. If the management modifies or does not provide the requested WR, then it may alert that there is one or more significant issues may exist. So it may be alert to the auditor, some problem is there. That's the reason they have changed it. Further, a request for return rather than oral representation in many cases may prompt the management to consider such matter more rigorously, thereby enhancing the quality of representation. So we are saying that, acha boss, writing, you gave me in writing, When they give me in writing, obviously, so the quality of the evidence what I get is much better. Last answer. What is the audit procedure if the requested WRs are not provided or the auditor has concern about the reliability of WR? Now see. A. Doubt about reliability. If the auditor has concern about DICE, so DICE means diligence, integrity, competence, ethical value. Diligence, integrity, competence, ethical value, he shall determine the effect on the reliability of representation obtained and audit evidence in general. See, like Vijay Mallya, I have a doubt. So I have taught you that go and take written representation. You went to Vijay Mallya. Viju uncle, AB sir has taught us that please give us WR. Acha, you want WR? Acha, come. Gave you in writing. Viju uncle, you have bought some asset? We have bought Mallya Street. Yeah. Writing? Acha, take it in writing. So whatever I have taught you to take WR from the management, you have taken, you have done your job. But the problem here is, as an auditor, you have doubt about what? On the DICE of the management. DICE means diligence, integrity, competence, ethical value. I have a doubt regarding DICE. Sir, what he should do? He should determine the effect on the representation obtained, whatever representation I have got, whether it's correct or not, and audit evidence in general. Like whatever evidence I am getting, that means they may or may not be reliable, correct? If the management does not provide the requested WR, auditor shall do DRT. What is DRT, guys? Discuss the matter with the management. Re-evaluate the integrity of the management and evaluate the effect that this may have on the reliability of representation and audit evidence in general. T. Take appropriate action including considering the modification of the opinion. Discuss the matter with the management, re-evaluate the integrity of the management and check the reliability on the representation and audit evidence. T said take appropriate action including modification. Very important line. If the management does not provide it, requested WR, or you have a doubt regarding the main WRs. Always remember what is main WR. Sir, main WR is basically you have fulfilled the responsibility of preparing and presenting the FS. If you have doubt regarding the main WR is only wrong. It is not reliable. What I will do? Do. Disclaim the opinion. Maximum people write adverse opinion. It's not adverse. See, when management has not given their acknowledge their main responsibility, why the hell you should do the work when you cannot do? What you do? When you cannot do, what you do disclaimer of opinion. Understood? So I'm giving you 5 minutes time. If you have the notes in front of you, you can use the notes, or else I am scrolling it slowly. My video will be off. I'm sitting here only so that you can read it comfortably. Read it essay 580, 570, 560. Maybe the question has come, maybe they can repeat it, or for sure you will see in MCQ. We'll be doing MCQ, don't worry. Okay, first we'll finish all the 3 essays, then we will be doing latest paper ka question. Okay, read. I'm sitting here only. Slowly I'm scrolling. Done? SA 580 is completed. Guys, any doubt on SA 580? All clear SA 580? Now let's move on to essay 570 and 560. Okay? Now 570 is the most easiest logical essay. This you have to link with 2410 what content I have taught you. Okay, we'll do that both content again. Okay, in comparison. It says going concern is one of the fundamental accounting assumptions. It means the company can continue its operation for a foreseeable future. If the management assesses going concern assumptions covering less than 12 months, then the auditor should request the management to extend the period for at least 12 months. Ideally, you see a future. So on 31st March, management will say, Achha, for the next 12 months, we will be running our business. But if they've just covered 10 months, so you will tell them, sir, at least covered 12 months. Now, in evaluating the management ka assessment, the auditor shall consider whether management has considered all the information of which auditor is aware. Imagine 31st March ko management has assessed GC. On that day they were following GC. We went on 5th April as an auditor to check GC. But on 3rd April, what happened? A fire broke out in the factory. So on 31st March, when they were evaluating, on that GC was followed. But when on 5th we are following, when we are going for evaluation, on that GC is not followed, right? On 5th, because of an event. So in evaluating management assessment, auditor shall consider whether the management has considered all the information of which auditor is aware. So ideally, on 5th ko, when auditor will be evaluating, so they must be knowing that 3rd ko the fire has broken. So they need to again re-evaluate it. So those are like basic pointers. From here the question starts. Question number 1. Sir, what is the responsibility of the management for the auditor for GC assumption? What it says? Management ka responsibility. Always remember, fundamental basic responsibility is always of the management. Sir, it is a management ka responsibility to assess entity ka ability to continue as going concern even if FRF does not include an explicit requirement to do so. Even if the management's responsibility of management, it is the management ka responsibility to assess entity ka ability to continue as going concern even if FRF do not include an explicit requirement to do so. Always it is management ka responsibility. Ideally in our FRF it is written, but even if it is not written, it is still management ka responsibility. Sir, what is the auditor ka responsibility? To obtain psi about the appropriateness of management use of GC assumption. What it says, to obtain psi about the appropriateness of the management use of GC assumption. Management will evaluate whether their evaluation is correct or not. We need to go and check to obtain psi about the appropriateness of management use of GC assumption. Number 2, to conclude based on the evidence whether a MUC exists and then that casts a doubt on the entity's ability to continue as going concern. That plastic wala example what I gave when we were doing SRE. To conclude based on the evidence whether a MUC exists that can cast a doubt on the entity's ability to continue as going concern. Third, audit management has assessed, auditor has assessed now company went into liquidation. So company is blaming to the auditor. Boss, it was not my business. But management saying, auditor, you evaluated now, that will be going for the future. Arey bro, we are not the godfathers, we are not saints, we are not Baba that we can predict the future. The auditor assessment cannot be viewed as a guarantee for entity's ability to continue as going concern. Boss, we are not Babas. Okay, then question number 2. What are the events or conditions that may cast a doubt on the entity's ability to continue as going concern? The code here is FU. FU, financial operating others. So in the notes I have written from my book. If you have my book, if you do not have my book, I'll tell you in the model where it is. Okay, model mein FU. This is like intermediate ka answer. In the module they have not given here. Model में just diagram, this diagram they have given. That's it. Hold on. So you just take a screenshot in case if you do not have that content. completion and review. This is it. These are financial reasons, these are operating reasons, foo, and O is others. Now, how do you understand this? See, anything related to money will always fall in financial. Anything related to business operation will fall in operating reasons. Which do not fall in financial, which do not fall in operating, will go in others. So let's read reverse, then you take a screenshot. Others may, like non-compliance of laws and regulations, okay, non-compliance of capital or the statutory requirement, pending legal cases, change in law and regulations, uninsured or underinsured, catastrophe when they occur, like natural calamity, earthquake, tsunami, all those are like other reasons. Sir, what are operating reasons? Operating reasons are like management ka intention to liquidate the entity or to cease operation. Or cease operation means basically operating reason only. Or loss of KMP without replacement, loss of a major market key customer, franchisee, license, supplier, inability to obtain new product loan for new product development, or some labor difficulties or raw material का supply का difficulty or emergence of a highly successful competitor. ठीक है? These are like operating reasons. When we talk about financials, financial में what will come? So net liability or net money. Fixed term borrowings approaching maturity without any prospects of renewal. No bank is giving me more money. They are closing the loans. Indication of a withdrawal of finance support by the creditors. Creditors also not giving me money. Okay, negative operating cash flow, again money. Key financial ratio, money. Sub operating losses. Okay, discontinuance of dividends, arrears or discontinuance of dividend. Inability to pay creditors on due dates. Financial reasons. You are not complying with the loan agreement. Again, financial reason. Then change from credit to cash on delivery transaction with the suppliers. So this can come in the exam, cash on delivery. So it looks like operating, but it is a financial reason. So dividend wala, creditors wala, and delivery, cash on delivery. These three generally students think it's a operating reason. No, it's a financial reason. Inability to obtain financing or for essential new product development or other essential investment. Loan you are not getting. This is financial. Okay. So take this screenshot if you want to take. These are financials. Operating. Done? Next is explain risk assessment and the procedure for evaluating going concern. So how do you do procedures in going concern? So the auditor should consider whether there are any events or condition that is casting a doubt on entity's ability to continue as going concern. Is there any event? In doing so, he should determine whether management has performed preliminary assessment. So ideally, who is supposed to evaluate? Sir, management. The management has whether evaluated or not. In such assessment is performed. They have evaluated. He should discuss the same with the management, check whether management has identified any events or condition that is casting a doubt on the entity's ability to continue as going concern. If such assessment is not performed, he should discuss with the management the basis for the intended use of GC assumption. Sir, you have not checked only. So how can you say that you are following GC? How? Please explain. He should discuss with the management the basis for the intended use of GC assumption. He should remain alert throughout the audit. So it's a procedure. Okay. Now, very important answer. What are the audit procedure when a material uncertainty is identified? MUC. In the exam, generally at final level, question number 4 and 5 have been asked. Okay, you will never see the word material uncertainty in the question. You need to understand that there are situations because of which GC will be affected. Those situations are called as MUC. I have given an example of plastic industry. Okay, plastic industry will be banned not today, maybe in October. So it may or it may not happen. It is called as MUC. So what is the answer? The same as question number 3.1. The point 1 of this answer becomes same as question 3.1. What it is? This one. Question 3.1. The auditor shall consider whether there are any events or conditions that are casting a doubt on the entity's ability to continue as going concern. This line is very important. You need to write like this only. Entity's ability to continue as GC. Entity's ability to continue as GC. Then you will ask, evaluate the management का plan for future action and those whether the plans are feasible. So I'll ask them, sir, your plastic would be banned now, what will be doing? So they are saying that acha, we'll be using we'll be manufacturing now paper cut disposals like paper bottles, paper cutleries and all. So plastic banned now, so we are switching it off. Sir, how much turnover do we expect? Oh, we will make like 5 times of the existing turnover. Plastic mein they were in the business from like past 20 years. They reached a turnover of 50 crores. Now they are saying we will make 10x of the existing, like 10x 500 crores. Oh, check whether plans are feasible or not. Acha, evaluate whether the entity has prepared the cash flow forecast and evaluate the reliability of the underlying data and the assumption used to prepare forecast. Arey sir, for sure. Sir, Starbucks we will get into contract with. McD we will take into contract. They are the biggest consumers of paper things, right? If you go to Starbucks, you get straws of paper, the glasses of paper, the spoon of paper, and everything is now basically compostable, like considering the environment friendly things. Okay. So whether they have prepared the forecast or not. Consider whether any additional facts or information which have become available since the date management made the assumption that management made the assessment. For example, I gave you that loss by fire. 31st March को when the management evaluated, GC was followed. 3rd April को loss by fire happened. Request the WR regarding the plans and feasibility of their plan. Whatever sir you are saying, I believe you. I believe you, sir. Full I believe. Sir, give me in writing. It is called as what? WR. You take a WR for that. Then explain the reporting concept as per SA 570. Very, very, very important. First, let me teach you, then we will compare with 2410. Okay? Sir, GC is appropriate. Clear? MUC is there. It is disclosed. Management has not done anything wrong. What do? You write it. Give which opinion? Unmodified opinion. Unmodified opinion. Which opinion? Unmodified opinion. And you will write in Murga para. What is Murga para? Material uncertainty relating to going concern para. Material uncertainty relating to going concern para. Material uncertainty relating to going concern para. GC appropriate. MUC is there. But they have not disclosed. If they have not disclosed, what will you do? You will write in qualified or adverse para. Because it's a wrong thing. Wrong thing. Sir, GC is only not appropriate. Oh shit. GC is not appropriate. Fundamental accounting assumption is inappropriate. If fundamental accounting is inappropriate, it's a very, very big thing. Which opinion? Adverse opinion. But sir, they have disclosed. Still adverse. They have not disclosed. Still adverse. Sir, when GC is not appropriate, it does not matter whether it is disclosed or not disclosed. It is always adverse. Whether it is disclosed or not disclosed, it is always adverse. Sir, GC is not assessed. What will you say? Sir, GC is not assessed. Sir, if GC is not assessed, consider the implication of the report. That means you will give basically disclaimer of opinion because GC is only not checked. Hey boss, you have only not checked GC. When you have only not checked GC, why the I should give opinion? I'll give disclaimer of opinion. Okay? Hold on. Let's revise this again. GC is appropriate. MUC is there. Disclosure they have done. All good. Unmodified opinion and mention in Murga para. MUC is there. Disclosure they have not done. Wrong thing, qualified or adverse. This is audit. Now hold on. We just did SRE 2410. MUC was there. They have given disclosure. Audit may be give unmodified opinion mention in Murga para. Here we modify the report, add in AOM para. There unmodified opinion and add and write in where? Murga para. Here modify the review report and add in EOM para. This is similar. Disclosure is not made. There we say qualified adverse. Here we say qualified adverse conclusion. Plus one line is here. Specify the reference to the fact that there is a material uncertainty. That's one extra line here. Understood both comparisons? Either of they can ask you. Now you will read SA 570. Then we do 560 and then we do questions. Okay. Read 570. Done? Okay. Last essay. Now see, essay 560. What is subsequent event? Events occurring after balance sheet date but before auditors reported is called a what? Subsequent event. Events occurring after balance sheet date but before auditors reported is called a subsequent event. Now, what is the procedure for subsequent event? The definition is very simple. After balance sheet but before auditors report date. Now, three questions are there. First one is the procedure. What is the procedure for subsequent event? Now, the question will give a story. You have to understand via hint procedure. It says you will perform procedure to obtain psi that all events which require adjustments or disclosure. See, if it's an adjusting event, you will adjust it. If it is a disclosing event, that is non-adjusting event, you will disclose it via way of note. So if you know that you have to create a provision, so it's an adjusting event. But if let us assume there's a contingent liability, it's a non-adjusting event. So perform procedure to obtain psi that the events which require adjustments or disclosure have been identified. Number two, for the purpose of determining the nature, time and extent of procedure, the auditor may, what he should do? Very simple. First, understand the procedures applied by the management for identification of significant event. That is, significant events here basically means subsequent event. It is not our job, boss, as an auditor, it is not our job. It is always management ka job to identify significant events. Now, inquire with the management as to occurrence of subsequent event which may affect the FS. So then you will ask, acha, any subsequent event has happened kya? Then you will read the minutes of the meeting that is held after balance sheet date and study the interim financial statement if any. So this is the procedure. If auditor identifies any event which require any adjustments or disclosure, he should check whether the treatment is made in the FS or not. Sir, if it was adjusting event, you must have adjusted. Acha, show me. Acha, if it was a non-adjusting event, you must have disclosed it by way of note. Acha, show me. See whether they have done the treatment in the FS. Acha, you have considered all subsequent event. Management says, yeah, we have considered all subsequent event. Give me in writing. Obtain a WR from the management that all known events have been appropriately either adjusted or disclosed as the case may be. So this is basically procedures for subsequent event. Number two, what are the specific inquiries? I think question came from this. I don't know whether inter final. One question came in September from this. What are the specific inquiries to be made from the management for subsequent event? So the previous answer was procedure for subsequent event. This is inquiry. So we will ask, acha, sir, whether any new commitment loan you have taken? Oh, please tell me. See, they must have applied or sanction letter must have come in March, but the disbursement came in 4th April, on 4th April. So sanction was in March, that is one financial year, and disbursement in April, that means the next financial year. The question is whether we should consider this in the previous year or the next year. You will consider this in the previous year. Sir, whether any sales or acquisition, I mean purchase of assets have been occurred or planned. You sold the asset, but delivery happened in the next year. Or you purchased the assets, but the delivery happened in the next year. Then, whether there have been an increase in the capital or issuance of debt instruments. Increase in the capital or issuance of debt instruments. Whether you have taken a loan or a bond. Okay. Then, whether any assets have been appropriated by the government or they are destroyed. Whether there are any developments regarding the contingency. Whether any accounting adjustments have been made. Or whether there are events have occurred that require the measurement of provisions made in the FS, that are relevant to the measurement of estimates or provisions made in the FS. So these are specific inquiry example. In the model, I think 9 or 10 points are given. I have written 7. So at least 7 we need to write. So this was the third question. First one was the definition, second was the procedure, third one was the inquiry, fourth is what if we have found out subsequent event. Now understand this by an example I have written here. My financial year is 23-24. Okay, my balance sheet date is 31st March 24. My audit report is date is 28th August 24. Okay. Now, what is the definition of subsequent event? Any event happening after balance sheet date but before audit report. That means during this phase, 31st March 24 to 28th August 24. It is called a subsequent event. So, event happened on 10th April. Now, event has happened. Now, question, when will I come to know as an auditor? Either I came to know on 10th April or 10th June or maybe 10th July maybe 10th August, maybe 10th September, maybe 8th September. Before 10th September, if I come to know, what is before 10th September? See, this is an illustration. Huh? My 10th September is my FS issue date. That means before the FS are issued, if we come to know about subsequent event, it is called as type A event. It is called as facts which came to know by the auditor before the FS is issued. Before the FS is issued. Or I come to know after 10 September. That is after the FS are issued. Before the FS are issued, after the FS are issued. Okay? The best part, answer is same. Before FS are issued. Sir, generally no obligation to perform the procedure after the report. You are also same as A1. Can you see same as A1? Same line. However, facts are such that had it been known to the auditor on the date of audit report, it may have affected his opinion. So he should discuss with the management establishing the matter, the treatment in the FS, and whether there's a need to amend FS. Same way here also. Same as A2. Same point. Sir, if the management establishing amends the FS, what will you do? You will perform new procedure and provide new report via amending the audit report to include an additional date restricted to the amendment. That means you will put a additional date. Like for example, 28th August I was signing the audit report. I will write like 1st September. So 28th August I am commenting on the entire FS. 1st September I am commenting only on the subsequent event. So in one audit report there are two dates. It is called as via dual dating. Or new or amended audit report including adding what? EOM para. What is EOM? Emphasis of matter para. That is subsequently covered the amended matter in the FS already disclosed by the management in FS. So you will write what? EOM para. Sir, what is EOM para? Emphasis of matter. Sir, what if management does not amend the FS? Oh sir, if they are not amending and if the audit report is not given to the entity, what will you do? Modify the opinion. It's with you only. Also, if you have given to the entity, what you will say? Notify TCWC sir not to issue to third party. Sir, don't issue to third party, sir. But this mad people, still they have issued. What you will take? Take appropriate action to prevent reliance. What will you say? Take action to prevent reliance. Take action to prevent reliance. Okay. That is basically public notice. Same way here. See, FS have gone, audit report have gone. That means there is a wrong report. Correct? I go to the management subsequent event is there. So you need to call for the FS, call for the audit report. If the management establishment informs about the situation to everyone who is in receipt of the previously issued FS, the old report, and they are ready to amend the FS, you will issue what? New report. Management is saying we are not calling back. What will you do? Take action to prevent reliance. That is basically public notice. What will you give? Public notice. So ideally in the exam, generally type A event, this story comes in the exam, type A event. This is about essay 560. So with this, your entire completion and review we have revised. Okay. So we have done 580, that is written representation. Then we did 570 going concern, and then we did 560. That is your subsequent event. Understood? Let's do that MCQ. One question was in ESG. We will be doing tomorrow ESG. No. Audit report पे देगा question. Sorry, my mistake. Audit report पे there's a question. Caro पे there was a question. Subsequent, I mean 550, 570, 560, 580 was not here. It was there in intermediate day. But have you understood, guys? One second. So we have completed chapter 6 from the module. We have completed chapter 9, chapter 10, chapter 13, chapter 14 ka one part we have completed, and 15. 6 chapter we have completed out of 19 chapters. Okay. So today I will be pausing here only. Tomorrow we'll be doing class till 5 o'clock. Okay. We'll be doing a class till 5 o'clock tomorrow, 2:30 to 5 p.m. So wherein what I have planned tomorrow we'll be covering full audit report chapter. this chapter number 7 audit report chapter, because there are 4 contents to it, plus we'll be doing ESG chapter. ESG works with everybody. So tomorrow we'll be doing these 2 chapters. Okay, tonight by 7:30 or 8 p.m. I'll be sharing the notes of PSU. Okay, in the group the team will send you. Okay, so tomorrow 2:30 we meet. So whatever I've taught you, SRE we have completed, we have done very thoroughly, guys. Revise SRE, revise completion and review. Okay, chalo. So we meet tomorrow. Bye guys, take care, enjoy, and aim for a rank or 70 plus, whichever is earlier. Tomorrow 2:30 p.m. we meet. Bye. Thank you. Do recommend to your friends also. Okay. Can somebody write in the chat what is SA 580? Guys, what's up? Good morning. Good afternoon. Let's start. What is SA 560? 560. Please write in the chat. Subsequent event. Very good. SA 570 was SA 570 was going concern. SA 570 going concern. 580. 580 is what? Return representation. Return representation. Now, if I have a doubt regarding DICE, diligence, integrity, competence, ethical value, diligence, integrity, competence, ethical value of the management, and the management has not given me, they have not given me the requested W1. Which opinion I should give? Which opinion I should give? Very good, Deepak. You will give disclaimer of opinion. You will give what? Disclaimer of opinion. Okay. Then, with the manage, when we're talking about 570 going concern, my going concern assumption is inappropriate. A going concern assumption is inappropriate. My GC is inappropriate, and they have disclosed this fact in the FS. They have disclosed this fact in the FS. As an auditor, I will give which opinion? Adverse. They have not disclosed this in the FS. They have not disclosed this in the FS. Which opinion? Still, Tiwari, you're wrong. Still, it is adverse. Still, it is adverse. Whether they have disclosed or not disclosed, use the logic. Boss, your fundamental accounting assumption is inappropriate. If your fundamental accounting assumption is inappropriate, it's a very big thing. I will give always adverse opinion. Adverse opinion. Understood? Acha, GC is appropriate. MUC is there. GC is appropriate and MUC is there, and they have disclosed it. GC is appropriate and MUC is there, and they have disclosed it. They have disclosed this. Which opinion? Superb. Unmodified opinion. And you will mention that in Murg para. Murg para is material uncertainty relating to going concern. Material uncertainty relating to going concern. Understood? So we have revised 560, 570, 580. So just to brush up quickly, I'll just tell you what we have already completed. So you are at par with me. Chapter number 6 is done. Chapter number 9 is done. Chapter number 10 is done. Group audit is done. NBFC is done. And PSU is done. 6 we have completed. Okay. Now, today we are starting with first we are doing ESG chapter. ESG. For sure, it will come in the exam. SDG and ESG chapter. 499 to 524. This I'll be teaching you from the notes. If I show you the analysis of it, 4 mark, 4 mark, 5 mark, 4 mark, 4 mark, 4 mark, 5 mark, 4 mark. This is the minimum weightage plus 2 marks you can consider this in MCQ. Chapter number 7, what we are doing. We'll be solving September question also. Let's start. So we have a target today to complete 2 chapters today. Explain sustainability, sustainable development and the pillars. What it is? Explain sustainability, sustainable development and pillars. It says, see, basically here we talk about environment, social, and ethical governance. Okay, it says sustainability is a concept related to the development of what? PSG, products, PGS, or you can say products, goods, and services that involves meeting the needs of the current generation without compromising the ability of future generation to fulfill their own. That means today, if I require water, if I require air, if I require, let us assume, greenery, if I require coal, minerals, so I'm using it. I'm fulfilling the needs of the current generation, but without compromising the ability to meet the future generation. Like after 10 years, it should not be depleted, it should not be over, it should not be exhausted. It should not be over, it should not be exhausted, it should not be depleted. This is called as what? ESG ka concept, sustainability. What it is called as sustainability. Then it encompasses three pillars of sustainability. What it is? ESG, environmental, social governance. Environmental, social governance. The environment basically means what? Sir, it will stand for corporate climate policies, energy use, waste, pollutions, natural resource conservation, treatment of animals. Basically, you write your EVS, environmental study content. Okay, you talk about water, you talk about pollution, you talk about waste, you talk about natural resources, all those. It includes the natural resource that every entity absorbs for its functioning, like that of coal, electricity, water, and so on. Like in a factory, you will see water use they are using, electricity they are using, water they are using. Okay, thus one is dependent on the environment for carrying out its operation. So first I explained what is sustainability. Then I said three pillars of sustainability. ESG. E is what? Environment. Then you spoke about environmental content. S, social. Social में what you will write? See, it is basically benefits of the people. I agree you are a corporate, you are a company. Agreed. Your main goal is to earn profit. Agreed on that. But not at the cost of just exploiting people. You have to do a lot of benefits also for the people. Like for example, you must have heard about Wipro. So Wipro give lot of donation. You must have heard about PNG, Procter and Gamble, the brand of Head and Shoulders, the shampoo brand. So if you see their ads, they say that 1% of our profit goes to education, shiksha, girl education. What it is social responsibility. It addresses the relationships that entity has and the reputation it fosters with the people and institutions in the communities where you do business and the value chain involved. You have to take care of everybody in the value chain, like for example, purchaser, supplier, seller, distributor, everybody you will take care. It further includes labor relations, diversity, and inclusion. Like you must have seen, a lot of workmen compensation policies are there. Insurance have been taken. Mediclaim have been done by the company for the employees and their families also. What it is basically social responsibility. G, governance. What is governance, sir? It is an internal system of practices, controls, and procedures which entity adopts in order to govern itself, make effective investment decision, comply with the law, and to meet the need of all stakeholders. So basically, you're complying all the laws, regulation, procedures, okay, to govern itself, make effective investment decisions. That is called as governance. Therefore, every entity which itself is a legal creation requires governance. Basically, compliance of law. G is basically what? Compliance of law. So first you will write the definition of sustainability, then you will say there are three pillars to it. ESG, environmental, social governance. Environmental, you talk about environment. Social, you talk about relationship between the employees, laborers, and those involved in value chain. G is your governance. Here you talk about the controls, practices, compliance of laws and regulations. Then the above pillar will include following elements. So pillars is ESG. Every pillar has some elements. What you will write? Environment may you write five things. What all? E-waste, packing material and waste, e-waste, packing material and waste. Then carbon emission and you can say water stress or product carbon footprints. In FR you must have done about carbon accounting, right? You have carbon credit ka concept in FR right now. Previously it was there. I do not know about the new syllabus. Do you have carbon credit ka concept in FR? Anybody? No. Okay. It was there. Counting was of carbon credit was there previously. I think it may be removed now. Yes. Social. We will talk about labor, human, product safety and quality, financial product and safety. So labor management, human capital, you can say human management, product safety and quality. Like for example, you must have seen when if there is somebody who smoke, Cigarette smoking is injurious to health. Drinking alcohol may also, it is written a line there. If you see on the medicines, keep away from children, stay in a warm place or a cool place. Those instructions are given. It is about social governance. Then G, governance. What you can write here? Corruption and sustainability, anti-competitive practice, business ethics. Corruption and sustainability, anti-competitive practice, business ethics, and ownership. This is what your governance. So first we learned definition of sustainability, then we learned the pillars. Pillars में there were elements. So E, S, G. Then fourth point, this can come as a separate question to you. ESG reporting can be both quantitative and qualitative. ESG reporting can be both quantitative and qualitative. Quantitative reports describe company का strategy or policy around the relevant topics. See, this is what qualitative, sorry. Qualitative reports describe what is a vision, mission, we're gonna do this, we have done this, okay, will be acquiring a village. Like I'll give you an example in Maharashtra. There's a place called as Nasik, Nashik. Nashik. There's a brand called as Sula. They make wine, Sula wine. You must have heard about this. So Sula wine is basically Nasik outskirts. So what they have done, Sula is basically the area there. What they have done, they have adopted the entire area. The workers working in Sula factory, in the Sula vineyard, it's basically those village workers only. Plus they have given electricity free for them. Plus they have built a school for them. Plus they have built a garden for them. So why Sula is not a listed company? Why Sula should do this? Because to sustain in the market, what you are doing for environment, what you are doing for social, what you are doing for governance, very important. If you see about Tata brand, so Tata is very environmental friendly. If you see about Starbucks, if you go to Starbucks, everything, if you see those cups, okay, those straws, those tissue papers, those spoons, everything is of paper. Everything is of paper, guys. Everything is of paper. Why? Environmental friendly. Okay. So qualitative aspect will talk about like what is our strategy, policies around the relevant topics. So while quantitative approach, quantitative is basically numbers, includes the metrics like we have distributed, let us assume health package to maybe like 500 employees. Okay, maybe we have given donation to like 200 kids. We have given school books to maybe like 400 kids. It is called as quantitative approach. Quantitative approach includes metrics and KPIs. KPIs is basically what key performance indicators linked with each area to measure the progress against the goals and report on the achievement. So qualitative talks about the descriptive and quantitative talks about the numbers. Okay, I'll just show you Reliance ka KPI, so it becomes easy for you to do. Now see, so for carbon ka we have just learned some time ago, like 2 minutes ago, to announce net carbon 0 by 2035. Then they have established and enable 100 gigawatt of renewable energy. This is 230 ka target. This is 24 mein what they have done, 5.28 million gigajoules, I think, gigajoules it will be, joules. 6.85 million GJ renewable energy consumption. This is what, guys, this is quantitative data or qualitative data? What it is? This is quantitative or qualitative? This is quantitative. Now, if you see this, Reliance ka goal is to reduce its operational GHG, GHG is a carbon footprint as a part of its long-term emission reduction strategy. This description is quantitative or qualitative? This is qualitative. Understood how it looks like? Every listed company, they give ESG ka scores. Okay. Let's see. Air emission at Reliance. So how much they are polluting the air? Okay. 23, 24, 22, 23, 22. Last 3 years ka data they have given. Okay. This is ESG ka data. Then. So this was my first question. Explain sustainability, sustainable development pillars. So pillars are ESG, environmental, social, and governance. Environmental, mein then there were elements. So carbon emission was a product, packing material, e-waste and raw material sourcing. Social में labor, human, product quality and safety, privacy, data and security. Governance में you can say ownership, business ethics, anti-competitive practice, corruption and sustainability. Then here you will talk about both quantitative and qualitative. Quantitative talks about the numbers, qualitative talks about the description. Okay. Then number 2. What are SDG? SDGs are basically Sustainable Development Goals. SDG Sustainable Development Goals. Now see, SDGs was adopted by all UN member states to provide a blueprint which mentioned the SDG. It was adopted by all United Nations member states. There are 17 SDG which are considered as an urgent call for action by all the countries, whether developed or developing countries. So I call this as, he has written some other story called Deepika Padukone, Ranveer Singh, Priyanka Chopra, Ranbir Kapoor in Goa and Ghaziabad. So you can make any story. You have to understand these are my 17 SDGs. So I call it a call dippers. One second. So my story was call dippers. Okay. So there were 17 SDG, story plus call dippers. Now how do you do it? Okay, now listen. First, let me teach you why. So answer is same only. The code is different. That's it. Okay. Now first understand the story. Sir, when I become chartered accountant, sir, there will be no poverty. No poverty means, sir, zero hunger. Zero poverty, zero hunger. You can see zero poverty, zero hunger. So my health will be good, good health and well-being. Then, sir, I will have quality education to the entire younger generation. I will treat all the gender equal, gender equality, and reduce inequalities. And reduce inequalities. So these are 1 to 6. No poverty, zero hunger, good health and well-being, quality education, gender equality, and reduce inequality. So my first 6 are the story. First, so when I become chartered accountant, no poverty. 2, zero hunger. Health will be good, good health and well-being. I will have a quality education. When I study, I will treat everybody equal. So gender inequality, gender equality and reduce inequalities. Gender equality, reduce inequalities. Call. Then clean water sanitization, climate action, affordable and clean energy, life below water, life on land. Life below water, life on land. Clean water sanitization, climate action, affordable and clean energy, life below water, life on land. It was called dippers. Decent work and economic growth, industry innovation and infrastructure, peace, justice and strong institutions. One more P, partnership for the goals, responsible consumption production, sustainable citizen communities. In the exam, if you are unable to write 17, but at least they can test you in MCQ. Out of 4 options, 3 will be this, 1 would be something else. So you should understand odd man out basically. So for odd man out, you should understand this. Story called dippers. Story is very simple. So when I become CA, so zero poverty, zero hunger, good health and well-being. Then I'll have quality education. I will treat everybody equal, gender equality, reduce inequality. All clean water and sanitization, climate action. A, affordable and clean energy. L2, life below water, life on land. Life below water, life. So this is very easy. Only deepers may you need to little concentrate. Deepers. What is D? Decent work and economic growth. I is what? Industry, innovation, and infrastructure. P. Peace, justice, and strong institution. Partnership for goals. Responsible consumption, production. Sustainable cities and communities. Clear? Then, what are global trends in sustainable reporting? You can skip this answer. It's not an exam question. Global trends in sustainable reporting. You can do it directly from the model. This page number is of my book basically. You can skip this. Then, this is important. What are 6 C's? What are 6 C's of integrated reporting? This they can test in MCQ also. The code here is MISFIN. Okay, I'll be teaching you this from the module. 6 C's of integrated reporting. M, manufactured capital. S, social capital. F, financial capital, intellectual capital, natural capital, human capital. The code is MISFIN. M, manufactured capital. S, social capital, financial capital, infrastructure, intellectual capital, natural capital, human capital. MISFIN. Manufactured, social, finance, intellectual, natural, and H, human capital. Now what it is? Now see, there are 6 C's of integrated reporting known as 6 capital. First, I'll talk about manufactured capital. It's on module page number 18.9. Module page number 18.9. If you want to mention, you can mention module page number 18.9. Sir, manufactured capital. What is manufactured capital? Basically, human created product oriented equipment tools, like machine if you have made. It's my manufactured capital. If I built a machine, maybe a lift in a building, it's a manufactured capital. It is available for the organization for use in the production of goods or for service, including building, equipment, infrastructures. Could be roads, ports, bridges, waste, water treatment. S, social capital. Social capital basically the relationship within and between the community, group of stakeholders and other networks to enhance the individual and collective well-being. It includes common values and behavior, key relationship, the trust and the loyalty that an organization has developed. Like for example, if I say Reliance, what do you think? Sir, chore, worst, waste. But when I say Tata Group, what will you say, sir? Good, amazing, super. Why? You don't work in Tata, but still you are talking about Tata. You have never seen Ratan Tata, but still you are talking about Tata. Why? Because of the social capital, common values and behavior, because ethics they follow. Key relationship, trust and loyalty that an organization has developed, and organization का social license to operate. That is called as social capital. Manufactured capital, social capital. F, finance capital, money. That's basically debt capital, equity capital, debt, equity grants generated through operations or investment. I, intellectual capital. Intellectual capital basically brain. Key element in organization का future potential with a tight link and contingency between R&D, innovation, human resource and external relationships. That is called intellectual capital. N, natural capital. Natural capital basically means nature. Whatever water, land, minerals, forest, biodiversity, ecosystem, health, whatever you're using, it's called as natural capital. H, human capital. Skilled labor, unskilled labor, whatever you're using. That is people ka skill and expertise, their capacity, motivation to innovate, including their alignment with the support of the organization ka governance framework. So if some employee has a very good brain, but he has a corrupt mind, it will not be aligning with the organization objective. You can't be corrupted there. Even if you're smart, you can't do corruption. That is basically human capital. So they can test us in MCQ, a descriptive also, or maybe they can ask us to identify which one is not a capital, which one is a capital, or which one is 6C of integrated reporting. Manufactured, S, social, F, finance, I, intellectual, and nature, H, human capital. Works? So read this because this is important. Read this from the screen. I'm switching off my video. I'm here only. I'll be scrolling slowly. Okay, read. Done? Next question. Now, question number 5 says, what is sustainability reporting and can you list out some benefits? Now, see, the first question was, what is sustainability? This is what sustainability reporting. I'll open that same note so it becomes easy for you. What is sustainability reporting and can you list out some of the benefits? So, sustainability reporting is an organizational practice and reporting publicly on its ESG, environmental, economic, and/or social impacts, and hence its contribution, whether positive or negative, towards the goal of sustainable development. So, whether they are able to achieve sustainable development, so they need to announce this publicly via report. They make a report about sustainability, like how much environment we have done protection, how much social contribution we have done, how much governance we have followed. Sustainability reporting refers to the information that companies provide about their performance to the outside world on a regular basis in a structured way. What I have showed the Reliance ka thing. So because it's a listed company, it comes in top 1000. It is mandatory for them to give that details. What are the benefits? It helps the stakeholders to understand the organizational performance. Okay, preserve sustainability and impacts. It helps the entity to focus on long-term value creation by addressing environmental, social, and governance issues. So long-term value creation. Okay, then number 2 was understand. It helps the stakeholders to understand organizational performance. Third, it can help the investors to make investment decisions, because if I say Tata, people will be more convinced to invest as compared to if I say Reliance or maybe Adani, because they do not follow some ESGs. Then investing in social and environmental issues will not only improve business continuity of the company, but also put them in a better position with their B2B customers, as well as enable them to acquire the new ones. B2B means business to business. This is the definition. This is the definition of sustainability reporting and its benefit. This answer has not been asked in the exam. This I expect to come in the upcoming exam. Read this again. Sustainability reporting. Read. Done? Okay. Question number 6. What are global scenario various countries see in institute, in our institute? I will be asking questions. What is happening in global, they will not ask this. So this is also article. Don't read this. Okay? Question number 7. Now, 7 and 8 is an understanding concept. It's not an exam content, but we'll understand this. It says what are the initiatives taken by ICA for sustainability reporting. So maybe at times they can ask you this question. It says ICI has constituted Sustainability Reporting Standard Board, SRSB, Sustainability Reporting Standard Board. ICI has started a certificate course on SDG. ICI has started a certificate course on SDG, Business Responsibility Reporting, Integrated Reporting, and also propose an ICI Executive Development Program on Business Responsibility Reporting. ICI has issued following publication: Standard Assurance Engagement, Assurance Engagement on Greenhouse Gas Statements, Background Material on BRSR, and SDGs. Sustainable Development Goals. So these are the initiatives taken by ICA for sustainability reporting. If they ask you like a 4 mark question, they will make a story and they will ask, being a chartered accountant in practice, what are the initiative, or maybe being a member of ICI, what are the initiatives taken by institute for BRSR? Okay, 1, 2, 3 points. Now what is BRSR? Business Responsibility Sustainability Reporting. Business Responsibility Sustainability Reporting. Business Responsibility Sustainability Reporting. It says reporting under BRSR is mandatory from the year 20 to 20. Now it's become mandatory. It has become mandatory for top 1000 listed entity. Which companies, guys? Top 1000 listed. That line will be coming in the next page. The question here is divided into 3 sections. We say GMP, general disclosures, management process and disclosures, principle wise performance disclosure. General disclosures, management process and disclosures, principle wise performance disclosure. G. What does general disclosure means? This section contains the listed companies, its products, its services, its operation, and employee related details like holding, subsidiary, associate companies, etc. Basic disclosure: name of the company, address of the company, GST number, PAN number, financial year. All those will come in general. Management process and disclosure may it contains questions related to policy and management process, governance and leadership and oversight. That is called management process. How management will be doing the things, that will be writing in B. P. Principle wise performance disclosure. P is what? Principle wise performance disclosures. Here companies are required to report upon KPIs, key performance indicators, in alignment with the 9 principles of NGRBC. That will be doing in the next page, 9 principles of NGRBC. It is called principle wise performance disclosure. GMP, general, mandatory, principle wise. Now it is classified into 2 categories. Principle wise are categorized into 2 categories. Essential indicators are mandatory and leadership indicators are optional. Essential are mandatory, leadership are optional. We say M-low. M-low. Essential, mandatory, leadership optional. Essential, mandatory, leadership optional. Okay, M-low. So this is about question number 7, question number 8. Read 7. Initiative taken by IC and what is BRSR. So here they have not tested this also. I expect the first answer, the 7th question, initiatives by institute. That could be a question. Maybe they want to test you. Okay. I will tell you what. See, 4 attempts have come. We will be solving all the 4 questions. What has come in the exam? Okay. Read 7 and 8. Done? Now, question number 9 is very important answer. Question number 9. What are the 9 principles of BRSR? What are the 9 principles of BRSR? No, pencil is not. 9 principles of BRSR. One second. Now see, the code what I had made is E Shesh Epic. In the out of 4 exam, twice they had asked this principle. I'll be teaching you the heading of those principles. Internally, you need to mark it up. As a student, I know it's very difficult, but internal points you have to mark it up. At least 4-5 points you have to write. Acha, the breakup here is 2, 3, 4. 2 is in environment, 3 is in social, 4 is in governance. And the code is E Shesh Epic. E. It talks about ethics, transparency, and accountability. E. Ethics, transparency, and accountability. That means you have to be ethical, transparent, and accountable for all your deeds, whatever you are doing. Business. Okay. S. Safe and sustainable goods and services. Safe and sustainable goods and services. Goods and services. Safe and sustainable goods and services. Then ESE. Promote the well-being of all employees, including those in value chain. Promote the well-being of all employees, including those in value chain employees. S. Respect for stakeholder ka interest and responsiveness. Respect for stakeholder ka interest and responsiveness. H. Respect and promote human rights. Respect and promote human rights. The code is what E says. E. Ethics, transparency, and accountability. S. Safe and sustainable goods and services. Yes. E. Employees. Promote the well-being of employees, including those in value chain. S. Stakeholder ka interest and responsibility. H. Human rights. Epic. E. Environment. Protection and restoration of environment. Protection and restoration of environment. P. Influence on public and regulatory policy. Influence on public and regulatory policy. I. Inclusive growth and development. I is what? Inclusive growth and development. And C. Provide value to the consumer in a responsible manner. And I have written your refer book for the detail. Or you can refer your teacher ka book or module. E. First way of question in the exam, they will give you the theory, ask us the principle. Or they will write principle number, then they will use 4 theories from here. You can't change the order, and that's the reason we have made this code E-Epic. The other question, explain principle so and so. Explain principle number 5. They can ask anything. It will take little time, but yeah, over the period of time, if you do it, you will get it. Okay? Let's do it again. Epic. E. Ethics, transparency, and accountability. S. Safe and sustainable goods and services. ESE. E was protection of employees. First one is employees. Okay, so including those in value chain. ESES. I generally forget this. This is S is stakeholder ka interest. Stakeholder ka interest and responsiveness. ESES. H. Protection of human rights. E. Environment. P. Public policy. Influence on public and regulatory policy. P. I. Inclusive growth and development. C. Protection. Provide value to the consumer. Provide value to the consumer. Okay. Let me ask you a few questions to you. You tell me human rights. Wala is which principle? Write in the chat. Human rights wala is which principle? Write in the chat, guys. Human rights wala is which principle? Write in the chat. Principle number 5. Very good. ESESH, human right. EPIC. Okay. Now, employee protection. Providing protection of well-being of employees. It is written where? Superb, Sukesh, superb. Principle number 3. Providing value to the consumer. Providing value to the consumer. 9. Acha. What is there in principle number 7? Reverse, principle number 7. What is there in principle number 7? Principle number 7 is ESESHEPP, public policy, public and regulatory policy. Deepak, you're right, wrong. Sukesh is I think right. SK, whoever is SK is right. Public policy, okay. Then consumer wala is written in which principle? Consumer wala. Super. Then reporting on BRSR or assurance. This is also read answer. Reporting on BRSR is applicable to thousand listed entity. Thousand listed entity. Thousand listed entity. This thousand listed entity is basically as per market cap. Last year ka 31st March, whoever is the top 1000 listed entity, reporting on BRSR is applicable to top 1000 listed entity. Now, ICA has recently issued standard on sustainability assurance engagement. That is SSI. SSI. Standard on sustainability assurance engagement. That is SSI 3000. Assurance engagement and sustainability information. This channel will deal with assurance engagement on sustainability information. This channel applies for assurance engagement, that is basically audit, okay, which pertain to providing reasonable or limit assurance on sustainability information. The standard have come, the name have come, the content have also come, but it is not yet applicable in the syllabus for us. Okay, so clear ASAP if you don't want to study this standard. The effective date is followed as voluntary basis by 31st March 23 and mandatory basis for period ending on 31st March 24. So mandatory it is applicable in practical life, but it is not there in the syllabus. ICA has also issued SASAI 3410. This was 3300, sorry, this was 3000. SASAI 3000, this is 3410. Assurance engagement on GHG, greenhouse gas emissions, which deals with the assurance engagement on entity ka sustainable information regarding assurance of BRSR. So 3000 have come and 3410 have come. 3000, 3410 have come. So here one line was only important, applicable to top 1000 listed entity. Top 1000 listed entity. Then question number 11 may also come in the exam. Either sustainability reporting the benefits of question number 11 or any principle out of 9. These three questions are little tentative, they can come in the exam. It says methodology to provide assurance on BRSR. Methodology to provide assurance on BRSR. First one, preliminary review of ESG report and parameter. What will you say? Preliminary review of ESG reports and parameters. So how do you report basically? So first understand, I'll just a preliminary review. Then I will go to the site on-site assessment and verification of ESG report. First I am reviewing the ESG report. Then I will go for online assessment. Sorry, on-site assessment. I'll go for on-site. That means going to the client place, on-site assessment. Then issue of assessment report and assessment statement. Then I will issue one assessment report. First preliminary review. Oh, it's good. I'll go and check on on-site assessment. Achha, then I will issue something to them. Then issue of assessment report and assessment statement. Then review of the responses and clarification of the findings. So when I have issued, they will reply to me. Okay, it is called review of the response and clarification of the findings. Whatever findings I've got, they have to give me an answer. That is a review of the responses. Then submission of findings of the on-site assessment and document review. So you will submit to some authority. Submission of findings of the on-site assessment and document review. Last, you will prepare the final report, including including recommendation. Preparation of the assessments or verification report, including final results of the assessment or recommendation. So these are in sequence. You can't change the order. First, like I'll give you a story here. Okay. For example, I am seeing my result, preliminary review. of the ESG report. I got my report card. I reviewed. I failed. I applied to ICA. On-site assessment verification of the ESG report. I applied to ICA. Online, it's on-site assessment. I issue my result, my mark sheet, my answer sheet to my teacher. I will issue a report to my teacher. What will my teacher do? Teacher will review the response. He will review. Then teacher say, acha, acha, beta, this was your mistake. This is not your mistake. This is your mistake. This is not your mistake. Here I say is wrong. Here you are wrong. So submission of findings. So teacher found out something. Then what I will do? I prepare a proper letter to the ICA. So preparation of the assessment of verification report, including final results of the assessment or recommendation, including final results of the assessment or recommendation. This is called as what? Methodology. Methodology to provide assurance on BI. Understood? I checked my result, preliminary. Then I applied for RTI or maybe for rechecking. Was on-site assessment. I did myself. I was doubting. I issued it my to teacher. Teacher will review it. After reviewing, teacher find out something, submission of findings. I will prepare final report. Prepare the final. Understood? Can you connect with the story? You can find this exam a 4-mark answer. 4-mark answer. Okay? With your result, just connect this. Question number 12. What is the role of auditor on ESG in the audit of FS of the company? What is the role of auditor on ESG aspects in the audit of FS of the company? Role of auditor. This came in exam, I think, in September 24. The very simple answer, like a BCom should have tried. The role of the auditor is to obtain reasonable assurance that the FS as a whole are free from material misstatement, whether due to fraud or error. This you must have learned it lot of times in intermediate also. Then he should report that the FS are prepared as per applicable FRF. In developing the understanding of the entity, he should include the consideration of climate related risk and how this risk may be relevant to the audit. If imagine I'm auditing an insurance company, an insurance company has lot of customers from Kerala. Now Kerala is a more prone region to flood, very much prone, correct? So if imagine flood comes in Kerala, so all the claims will be coming to the company. The company ka profitability will be getting reduced. So what it is called climate related risk. Another example. I have a company, I'm auditing a company which make apple juices. Apple come from Himachal. Himachal mein if imagine flood comes out, like Uttarakhand mein flood, one I think 4 or 5 years back ago it came. So obviously apple would be destroyed and apple will be destroyed, then their juices will be destroyed because you will not be able to make juices and then eventually company will shut down. Climate related risk. So you should consider climate related risk and how this risk may be related to audit. This climate related risk may be more relevant for certain industry like bank, insurance, agriculture, energy. What I give you the example. The audit report is a mechanism of communication to the user. Now we talk about audit report. First we talk about what we should do. Now we will prepare a report and give it to the user. It provides the information about the auditor responsibility and about the understanding of significant matters in audit and how they were addressed. It gives about my responsibility, what about the significant matters and how they were addressed. Due to some circumstances, it may include EOM para also. In some circumstances, we will include EOM para also to draw the attention that are fundamental importance to the user's understanding of FS. So in EOM para, what do we write? Matters which are fundamental to the users. Then the auditor should also read the OI. OI means other information for consistency with the information disclosed in the FS like annual report, press release as per SS 720. So this is 706, this is SS 7. So this answer when it came in the exam, it was very generic answer. You are supposed to write auditor ka duty basically. Okay. Read this answer once again. Read this answer. Done? Okay. Let's do a question. This is September 25 ka paper. Wow. This came in exam. What I told you, methodology. PP Limited wants to make disclosure on its performance against the various principles of NGRBC. Okay? That's National Guidelines on Responsible Business. 9 principles. To meet reporting requirements on ESG parameters, call the business report, blah, 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 blah. Full story. While making disclosure on the performance, I read here, while making disclosure on the performance against various principles of BRSR, BHSO are following methodology to provide BRSR. This is the steps they have given. From the above methodology adopted, which is correct? Choose which is correct. Give me an option. Remember that story? I gave it the story also. Tell me. A was there, preliminary assessment, preliminary review of ESG report, right? You saw your result. So A is there. So B got struck off because B starts with B. On-site assessment verification of ESG report. You will mail to ICA, apply for re-verification. Then you will issue it to your teacher, issuance of assessment report. That means ABC is correct, ABC is correct. So I will look up to single option. B, C, D, D. Review of response and clarification on the findings. So my teacher will review it. Now E is what? Deliberation of findings of the off-site assessment and overlooking of documents. Not overlooking. And recommendation of the assessment verification report including interim. There is no interim only. There is final report. So that was a twist. So it was ABCD. September 25 exam. Understood? 2 mark answer. Descriptive. You tell me what answer you'll write. This is the C question. Question number 4C. Tell me what answer you will write. What are the key elements in the pillar? Tell me what answer will come. Anybody, any idea? So you were supposed to write, highlight the key elements including this pillar. They are referring to which pillar? They're talking about management is keen to assess the safety of products, quality and labor relations. So the labor is what? ESG, na? Environmental, social governance. Environment is not about labor. Governance is about laws and regulation. They are talking to social elements. That means this answer. I'll just show you exact answer. So first you were supposed to thoda sa story about this social, this definition. So copy from the question and what are the elements involved? This they had asked. Labor management, human capital, product safety and quality, financial product safety, privacy and data security, controversial source. This was asked in the exam. Understood? We have completed September 25, a full period. Okay. Now, in principles, I'm telling you, mark those as one and one second. इस epic में से one was asked already, one they have asked, seven they have asked, eight. So 178 has already been asked. 178 has already been asked. But still 178 you have to do plus 3 and 9. 3 and 9 into 3 and 9. 1, 3, 7, 8, 9. 1, 3, 7, 8, 9. This you should know very well. 1, 3, 7, 8, 9. Cool. Guys, your one more chapter is complete. We have completed out of 19, 7 chapters. If I talk about marks, weightage 5, 7, 35, so around 35 to 40 marks we have completed. Okay. Let's take a small break of 5 minutes. Okay. We'll be starting with reporting chapter. I'll be doing Caro and all those other provisions. I think 80% of that chapter will be over to today only. Whatever is left, I will be doing that tomorrow. Okay. So tomorrow, by today, we'll be trying to finish off almost 8 chapters. That's almost 50% of your syllabus. Okay. So let's take a break of 5 minutes. By 4, 5, we continue. Start. So now we are starting with guys reporting chapter. Reporting chapter. If I So we are starting with reporting chapter. Now if I show you reporting chapter का module, so reporting में first one is reporting. There's an entire 700 का series. 700, 701, 705, 706, 10, 26 channels are there that we're going to do tomorrow. Today we are doing 7A, 7B, 7C. Caro is there, fraud reporting is there, and duties of audit is there. Caro, fraud reporting, and duties of audit. The first I am teaching you reporting on fraud. It's very simple. Part A, reporting of fraud to CG. The auditor, when he was doing audit, comes across a fraud. He will first go and report it to audit committee. If audit committee is not there, he will go and report it to the board of directors. If audit committee is not there, he will go and report it to the board of directors. They will have to revert back. They will have to revert back to him within 45 days. They will have to revert back within 45 days. Now the question is, the auditor will go to the audit committee, or if audit committee is not there, to the board within how many days? Within 2 days. You saw the fraud, you don't have to go immediately. You can go within 2 days. They will reply within how many days? 45 days. Acha, this fraud has happened, that has happened. They'll give all the details. So if the reply is received, the auditor will go to CG within 15 days of the receipt of reply. Within 15 days of the receipt of reply, along with the details, the reply and the comments. The details, the reply and the comments. If the reply is not received, the auditor will report to CG still within 15 days after the expiry of 45 days. After the expiry of 45 days, along with what? The details and the fact of non-receipt of reply. The details and the fact of non-receipt of reply. The details and along with the fact of non-receipt of reply. He will report in form number 884. He will report only in form number 884. If 143.12 is contravened, that means you have not reported. So if you are auditing listed company, the penalty will be rupees 5 lakh. This penalty will be on the auditor. In case of other company, that means unlisted public and private company, the penalty will be of rupees 1 lakh. 143.12 contravened, listed company 5 lakh, other company 1 lakh. Now, this section is applicable to the statutory order, secretary order, cost order, branch order. Statutory order, secretary order, cost order, branch order. If the auditor will report the fraud to CG only if the amount of fraud is minimum 1 crore. This section is applicable only if the fraud amount is minimum 1 CR. Sir, what if the fraud is 80 lakhs? Guys, if the fraud is of 80 lakhs, you will be reporting. Ideally, you will be reporting to whom? You will be reporting only to audit committee or board. If fraud is of 125 lakhs, if a fraud is of 125 lakhs, if the fraud is of 125 lakhs, you will report to whom? Audit committee or board plus CG. You just can't go directly to CG. There's a hierarchy you have to follow that. First audit committee board, audit after audit committee board, then to CG. To go to CG, the amount should be minimum 1 CR, minimum 1 CR. Okay. Now on reading this much, can you tell me what are the days the auditor should report the fraud to CG within dash days? The auditor should report the fraud to CG within dash days. What are the days, guys? Can you tell me? What are the days? Can somebody tell me? The auditor should report the fraud to CG within dash days. Days. What is the breakup of 60? 45 and 15. 45 and 15. The auditor will report the fraud to CG within 60 days only if the fraud is conducted by company का officer and company का employee. Company का officer and company का employee. Company का officer and company का employee. Understood? This is about 143.12. Read this 143.12. These notes are not there. Okay. I will just send this also. 112. Can you see Karo ka notes is there? Karo? Karo is there, right? I'm just arranging. In 5 minutes you will receive. I'll send to the team. They will be sending. Okay. So part B is Karo that we do separately. Part C. Okay. Duties of auditor. So what is duties of auditor? The duties of auditor is in section 143.1, 143.2, 143.3. 143.1, 143.2, 143.3. Specific inquiry. So the auditor will make specific inquiry into 6 areas. What are the 6 areas? LTDIs. L. Loans and advances. Whether loans and advances made by the company are prejudicial to the interest of company or members. Oh, this we have done in that PSU chapter. LTDIs. Loans and advances, T's, transaction D's, deposits, I's, investments, E's, expenses, S's, shares. LT dies. LT dies. Then 143.2. Very simple line. It says it is a duty of the auditor to report that the financial statements are giving true and fair view. How do you remember 143.2? True and fair view. 143.2 true and fair view. 143.2 true and fair view. 143.3. 143.3 talks about reporting requirements of the auditor. So here you need to understand these are the reporting requirements of the auditor. The code here is A B C D E F O. What's the code? A B C D E F O. These are the contents of report. A. All information and explanation is obtained. B. Proper books of accounts including branch books have been kept by the company. C. P&L balance sheet is in conformation with books of accounts. D. The P&L balance, FS are done up as per AS. E. Eligibility, whether any director is disqualified under section 164(2). F. Whether company has adequate internal financial control with respect to FS. O is your others. So what is the code? A, B, C, D, E, F, O. What is the code? A, B, C, D, E, F, O. A. All information and explanation is obtained. B. Proper books of accounts have been kept by the company. C. P&L balance sheet is in conformation with BOA. D. Done up as per AS. E. Eligibility. F. Internal financial controls. O. Others. Others may first one. You will write impact. See, they can ask you what are the other reporting requirements as a short note. This can be a question. Or what they can say, following are the reporting requirements. Choose which one is not a reporting requirements as per 143. So they can use any point from here and put something else also, like basically odd by not wala concept. Okay. So it says impact of pending litigations, if any. First one is pending litigation. Number two, whether the company has made provision for material forcible losses. Whether the company has made provision for material forcible losses. Third, whether there's a delay in transferring the amounts to IPF. Whether there's a delay in transferring the amounts to IPF. First one is pending litigation. Second is material forcible losses. Third is transferring the amounts to IPF. D is omitted by the government. No, I have not omitted, government has omitted. E, whether the management has represented that no funds have been advanced or loaned or invested by the company to any other person or entities or intermediaries with the understanding that the intermediary shall lend or invest in other person or entity by or on behalf of the company, which is ultimate beneficiary. Means what? So I've drawn a diagram here. We are auditing AB Limited. AB Limited is ultimate beneficiary. AB Limited has not given any loan or advance to Divyanshu Limited, which is an intermediary, to give money to Reliance. AB has not given any money to Divyanshu to give that money to Reliance. I have not done this transaction. Second, we are auditing AB Limited. AB Limited has not received any money. AB Limited has not received any money from Jack Limited with an intention to transfer it to Reliance Industries. They have not done such transaction. We have not started any transaction. We have not received any transaction. Okay. So 1 and 2 is this expression. E ka 1 and 2. E ka 3. Based on the audit procedures, nothing has come to the notice of the auditor that representation made above under subclause 1 and 2 contain any misstatement. That means whatever management is saying regarding 1 and 2, both are correct. Both are correct. Then whether dividend declared is paid or during the year as per 123 of the Companies Act. F wala point is whether dividend is declared or paid as per 123 of Companies Act 2013. G. With effect from 1st April 23, every company is required to maintain a software tally, that accounting software, which has a feature of edit log, that is audit trail facility. With it should not be disabled. It should not be disabled at any time during the year. That means whatever changes the management is making, that changes ka backlog should be created. Backend may backlog should be created. You changes you can make, no problem. But whenever somebody is making a change, who made the change? What changes have been made? When the changes have been made? Why the changes have been made? Should be recorded in a backlog. So auditor will go and see, acha, changes have made. Oh, Mr. Ram has made change. So he will call, acha, Ram, come. Tell me why have you made change? So we'll give a reason. If the reason is genuine, he will accept. If the reason is not genuine, he will consider the implication on the audit. So the code here is, first my main code is ABCDFO. Then others, there are other reporting requirements A, B, C, D. D is omitted. E, E, 1, 2, 3. F and G. F and G. Understood? This is reporting requirements of auditor. Because of LT dice, it can come as PSU question or maybe as a reporting requirements. Or I personally think this answer, other reporting requirements. This can come as in the exam. Read this part. I have shared the notes, the team will send you. Once you receive it, inform me. Okay. After this, we're going to do Kalu. You have to read part C. Start reading from the screen if you don't have the notes right now. Done? So we have completed part A, we have completed part C. Now we're doing part B. Now see, Caro 2020. For sure, you will see a 4 mark question in the exam on Caro or maybe in MCQ. Okay, let's read this together. We'll be solving September paper also. 20 minutes will take for Caro and then last 10 minutes for the questions. Okay, by 5 o'clock I leave you. As I told you, we'll be taking 2:30 to 5. Okay, tentatively on Thursday. Tomorrow, I'm taking class on Thursday. I will not be able to take a class because I have some commitment on Thursday. I will ask the team to drop a message to everybody of you. So I'm taking today. Tomorrow is what, Wednesday. I'll be taking tomorrow also. Thursday I will not be taking. Friday I'll be taking. Okay. Thursday you can plan, or if you have some other plans, guys. Thursday I will not be taking. 90% I'm not taking. If I'm taking, I'll inform. Fine. Now see Caro. Sir, Caro ka applicability. Caro is applicable to all companies, whether in India or a foreign company having a place of business in India. So Caro is applicable to all the companies. Caro is applicable to all the companies. All means all. Caro is not applicable to BIPs. E say it is banking, I insurance. P is private limited company. Private limited company. Private company. Yeah. Private company. S section 8 OPC small. Caro is not applicable to banking, insurance, private companies. Section 8 OPC and small. Now, private company, it should not be a subsidiary or a holding of a public company. The paid up share capital and reserves should be less than or equal to 1 crore, and loans and borrowings from bank or FI should not exceed 1 crore, that means should be less than equal to 1 crore at any point of time, and the total revenue, that means basically turnover plus other income, should be less than or equal to 10 crore, including revenue from discontinuing operation. Ticket is 1110, 1110, 1110. Capital reserve should be less than equal to 1 crore, loan should be less than equal to 1 crore, revenue should be less than equal to 10 crore, less than equal to 1 crore, less than equal to 1 crore, less than equal to 10 crore. Okay? Then you are exempted from Caro. Then you are exempted from Caro. So Caro is not applicable to BIPs, banking, insurance, private section and OPC and small. Private company में three things are there. Okay? Capital reserve should be less than equal to 1 crore, and loan should be less than equal to 1 crore, and revenue should be less than equal to 10 crores. Then you are exempted from Caro. So this is 4 mark answer. Thus, Caro is not applicable at the time of consolidated financial statement. Caro is applicable to the deemed public company. Deemed public company means a private company whose holding company is a public company. A private company whose holding company is a public company. Caro is applicable to private unlimited company. Caro is exempt to private limited company. This is unlimited. Then, if Caro is applicable to a company as a whole, then each and every branch also it is applicable, because Caro is applicable to a company. If you have multiple branches, then it is also applicable to multiple branches. Okay. Now, Caro mein there are 21 clauses. Okay? 21 clauses. So let's do this. So how do you write in the exam? As per clause 1 of para 3 of Companies Auditors Report Order 2020. You have to write clause 1. Number 1 you will write in Roman number. Para 3 is basically this. So para 1 is applicability, para 2 is non-applicability, para 3 mein 21 clauses are given. So you have to write the word para. Instead of para you write paragraph. As per so and so clause of paragraph 3 of Caro 2020. Okay? Now if you can understand this via code, it's good. Or else whatever shortcuts you have studied or whatever your teacher have taught. So my code is basically FIDA se PC has statutory income and default. The first 9 clauses. So let me read first 9 for you. Then you read 9. Okay, first I'll explain the 9. Sir, FIDA, fixed asset. So fixed asset means what you will say, where the company is maintaining proper records. Okay, for quantity and situation of PPE, including intangible assets, both tangible and intangible. They should maintain proper records regarding quantity and situation of both tangible and intangible. Whether PP are physically verified by the management at regular intervals. If any material discrepancies only, it should be dealt in BUA. It should be properly dealt in BUA. Third, whether company has reevaluated PP or intangible, and the revaluation should be done by a registered valuer. The revaluation should be done by a registered valuer. If the change is 10% or more, of NCV. What is NCV? Net carrying value. Net carrying value. Net carrying value. It shall be specified. See, 3 points are there. First, check whether the company is maintaining proper records regarding quantity and situation of PP and intangible. Number two, whether PP is physically verified by the management at regular intervals. If there's any material discrepancy, check how it is properly dealt in. Third, whether revaluation is done properly, and revaluation should be done by register value. You will report in Caro if revaluation ka amount is minimum 10%. If the revaluation amount is minimum 10%, 10%, 10%, then you will mention in the Caro. Fourth, whether any, so this is first through three, first, second, three. This was one block. There can be a question of 1 to 3. Then this block is another block. There can be a question on this separate point. Whether any proceeding have been initiated or pending against the company for holding any Benami property. If yes, ensure the company has disclosed the details. So it's a separate question on Benami property. Auditor don't have to disclose. Audit management will disclose. Auditor go and check whether management has disclosed or not. Then, whether the title deeds, what it says, whether the title deeds of all immobile properties, whether the title deeds of all immobile properties other than the properties where the company is lessee and the lease agreements are duly executed in favor of the lessee. So whether the title deeds of all immobile properties are, as disclosed in the FS, are held in the name of company. If not, give details. What details you will give? Description of the property. This box you have to make in the exam. Description of the property, gross carrying value held in the name of, whether promoter, director, employee, the period held, and the reason for not holding in the name of company. This box you have to maintain. This is a separate question. Title deeds of immobile property. Okay. So this is about fixed assets. So F is fixed assets. I is inventory. Second clause is I, inventory. Fixed assets, inventory. Sir, whether inventories are physically verified by the management at regular intervals. Okay, then whether discrepancy of 10% or more, 10% or more means minimum 10% in the aggregate for each class of inventory, one notice. If so, whether it is properly dealt in BUA. So there's a discrepancy of minimum 10% in each class, then you have to separately disclose. Yeah, class basically means, imagine I'm making a what example? Okay, this pencil. I'm also making color pens. I'm also making color pen and this white pencil. Okay, so this pencil is one class. Color pens is one other class. Okay, so there should be difference in physical verification in books of 10% in the particular class. Then you have to report. Then this is very repeated. This have come twice in the exam. Whether at any point the company has taken working capital of more than 5 crores at any point of time from bank or FI on the basis of security of current asset. So there is no harm. You have to just. Acha. Whether quarterly returns or a annual statements filed by the company with such banks or FI is in agreement with the BUA of the company. If not, give details. So whether the quarterly returns or the statement filed by the company with such bank or FI is in agreement with BUA. If not, give details. So when you are taking a loan, working capital loan from bank or FI, you have to give quarterly statements or maybe annual statement. It should match with the BUA. Company, your statements given and your BUA should match. If it is not matching, I will give details. Understand, 10% wala point of discrepancy is in the physical verification. Here, even if 1 rupee ka difference is there, you have to report. In fixed asset, 10% wala point was there on the revaluation. If there is a discrepancy in physical verification of 1 rupee also, you have to report. Physical verification, material discrepancy, PP, 1 rupee, report. Material discrepancy, physical verification, inventory, you will report only if it is 10%. Only if it is 10%. Here, in when you're taking working capital loan, in books and the statement, even if there is a 1 rupee ka difference, report. 1 rupee ka difference, report. Okay? 1 and 2. See, there are only 5 clauses which are lengthy, which is 1 and 2 and the 3. And one more will come, 9 and 15. Only this 5 are there which is lengthy, which are repetitive in exam. Okay? So F is fixed assets, I is inventory. D, we said is debts given. D is debts given. Debts given basically means asset for us. Okay, loans given. For the code I have used that. The aggregate amount of LIGS. LIGS means loans, investments, guarantee security during the year with the outstanding balance on the balance sheet due to such subsidiary, associate, joint venture, any other entity should be disclosed. So how much amount you have given to such means what? Subsidiary, associate, joint venture. How much amount you have given to other than such, you have to give disclosure. Such means subsidiary, associate, joint venture. Number 2, whether LGAs are not prejudicial to the interest of company. Whether LGAs are not prejudicial to the interest of company. In respect of loans and advances, in the nature of loans, whether schedule of repayment of principal and interest has been regular, whether repayment is regular. If the overdue amount is more than 90 days, check steps for recovery has been taken or not. Who will take the steps for recovery? Management. Then specify the amount of any loan renewed or extension given or fresh loan given to settle the old loan. Imagine Sukesh ko we had given 5 lakh rupees. He says, sir, I can't pay 5 lakh rupees. You give me 1 more lakh rupees, 1 lakh rupee more. I will do some business and repay all your entire. So to settle the old loan, we have given 1 lakh rupee ka more loan to him. No problem. Give the details in Karo. If the loan is granted, which are repayable on demand, or without specifying the terms of period or repay, that is short term. Give details. What details? Percentage of such loans to the total loans and aggregate amount of such loan to the promoters or related party. So this is a lengthy clause for loans granted. That's granted. A. Adequacy. Sorry. In adequacy of section 185, 186. So you will say the auditor should check the provision of section 185, 186. If not, give details. If not complied, give details. So FIDA is fixed assets, inventory, debts given adequacy. We need to remember clauses also. Writing clause number will give you extra 1 mark. See, for sure Caro is coming in the exam. You can't skip Caro. Plus they can test in MCQ also. So FIDA may fixed assets, inventories, debts, adequacy. P, public deposits. P is what? Public deposits. Whether the company has complied with directions of RBI, provisions of Companies Act, orders of NCLT. Orders of NCLT, CLB, RBI. If not, give details. So what we will say? Public deposit. We will check DPO. Directives of RBI, provisions of Companies Act, orders of NCLT. DPO. C. Cost records. Whether the cost records are prepared by the company as per section 148 of the Companies Act. Whether cost records have been prepared by the company. If not, give details. If not, give details. Next, statutory dues. In case of undisputed, whether the company is regularly depositing the due to the authority, if outstanding amount is more than 6 months, it should be indicated. If the outstanding amount is more than 6 months, it should be reported. In case of disputed, you will state the amount of dispute and the name of the forum wherever it is disputed. In case of undisputed, the amount is outstanding for more than 6 months, it should be reported. In case of dispute, you will report always the amount and the authority. Then unrecorded transaction. This also is repetitive. 7th and 8th both are repetitive. Whether any transactions not recorded in the books of accounts have been surrendered or disclosed as income during the year. If so, whether the previously unrecorded income has been properly recorded in the BUA during the year. If income tax people have come to the company and they have found out some unrecorded income, then unrecorded income is disclosed in the FS, check whether it is disclosed or not. If not, give details in CAR. Unrecorded transactions. 9th. And it defaulted. Defaulted in repayment of term. This is the 4th big clause, very important. If the question says AB Limited has taken the loan, clause number 9. AB Limited has given the loan, clause number 3. AB Limited has taken the loan, clause number 9. AB Limited has given the loan, clause number 3. It says repayment of loan. The report whether company is declared as a willful defaulter by any bank or FI or any other lender. So the company has been declared as a willful defaulter, report that. Number 2, report whether fund raised for short term have been used for long term. If yes, give the details. Report whether the fund have been used by the entity to meet the obligation of such. That means you have taken a loan and you are paying off the obligation of such. Give details. Report whether the company has raised the loans by pledging the investment in such. Whatever investment was there in such, you have given that as a collateral and you have taken a loan. Give details. Then, report on default and repayment of loan and borrowing. If yes, you have to state the amount and the period of default. What will you write? Nature of the borrowings, name of the lender, amount not paid on due date, whether principal or interest, number of days, and remarks. This table also you have to make. So clause number 9, repetitive. 1 to 9 we have done, out of which 1, 2, 3, 8, 7, 8, 9. Very important. 1, 2, 3, 7, 8, 9. Okay. Giving you 5 minutes time, just run through 1 to 9 because this is very important. Then we do the smaller ones. In that only NBFC wala clause is important, which is very lengthy. Rest everyone thing like one liners. Just run through once. Read. Done. So we have completed 1 to 9 class. Let's quickly recall 1 to 9. F is your fixed assets, I is your inventory, D is your debts given, adequacy of 185, 186 FIDA, T is your public deposit, C is your cost record, statutory dues, unrecorded income, and it defaulted in repayment of borrowings. On repayment of borrowings. Then 10th, money. Whether money raised to public offer or private placement. It says whether the money raised from IPO or FPO or is utilized towards the purpose for which it was raised. If not, give the details of delays or defaults and subsequent rectification, not ratification, it is rectification. Then whether the company has made provisions, any preferential allotment or private placement as per section 42 and 62, whether it is complied on. So money raised to a IPO, FPO or private placement. That's clause number 10. 11. What do you do? Fraud. Fraud. 11 is fraud. 11 fraud. Okay. Whether any fraud has been fraud by the company or any fraud on the company has been noticed and reported during the year. If yes, you have to give nature and amount. You have to give details. Then whether the auditor has reported anything in ADT4 to CG. Remember ADT4? 1 CR ka fraud. Whether auditor has considered whistleblower complaints, if any. So 10 May it is public offer, 11 May it is fraud. 12 May what you give? You give it to Nidhi. Nidhi May clause number 12, there is a ratio 1 is to 20, 1 is to 20. Guys, clause number 12, ratio 1 is to 20. Clause number 12, ratio 1 is to 20. Whether Nidhi company has complied with the net own fund to deposit liability in the ratio of 1 is to 20 to meet out the liability. Whether the Nidhi company is maintaining 10% of unencumbered term deposits. So the ratio is 1 is to 20, that's max, and minimum 10% should be invested unencumbered term deposit. Unencumbered basically means without any charge. Without any charge. Then related party transaction. 13 is what? Related party transaction. 13 is what? Related party transaction. So very simple. The auditor should check the compliance of section 177 and 188. 177 and 188. If not complied, give details. If not complied, give details. Then 14, internal audit. Whether the company has internal audit system commensurate with the size and the nature of the business, and whether the reports of internal audit have been considered by stat audit. Whether internal auditor report has been considered by stat audit. That's clause number 14. So 10 May you raise money by IPO, FPO. 11 you did fraud. 12 May you give it to Nidhi. 13 May you give it to related party. 14 May internally you have given. 15, non-cash transaction. 15 is what? Non-cash transaction. Whether the company has entered into any non-cash transaction with the directors or persons concerned with him. If so, whether section 192 is complied. So non-cash transaction section is 190. So that was clause number 15. 16, registration with RBI. So this is another lengthy clause which can come in the exam. 16, section 45 IA of RBI Act 1934. Whether the company has conducted NBFC activities without a valid certificate of registration under RBI Act, or whether the company is a core investment company. Core investment company means CIC, which invest only in group companies, group companies. Okay, and whether it fulfills the criteria of CIC. In case the company is exempted or unregistered, whether it fulfills the criteria for exemption. So if it is a CIC, whether they meet the criteria of CIC. If it is exempted from CIC, whether it meets the exemption criteria. This 16. 17 cash losses. If the company has cash loss in the current year, in the current year, give details of the cash loss. 18 repetitive. 18 resigning. 18 resigning. What will you say? 18 resigning. Whether there have been any resignation by the stat auditor during the year. If so, whether the auditor has taken into consideration the issues, objections, or concern raised by outgoing auditor. Okay. If there are any he must have resigned, so you join. When you join, whether you consider the issue, the objection of the outgoing auditor, that is clause number 18. 19. Material uncertainty. Material uncertainty. Whether the auditor is of the opinion that the material uncertainty exists on the date of the audit report. And in the opinion of the auditor, whether the company is capable of paying all the debt which are in existence, whether they will pay all of the liability, that is material uncertainty. 20. This came in the exam. Whether the company has transferred the unspent amount to a fund specified in Schedule 7 uh, within a period of 6 months of the expiry of the financial in compliance of section 135. So basically of the Companies Act, Schedule 7 to the Companies Act. So you have to transfer the unspent amount of CSR within 6 months from the expiry of financial. This came in the exam. 20. 21. This also came in the exam. Whether there have been any qualifications or adverse remarks by the respective auditors uh, of the group companies including CFS. If yes, the details of the companies and the parent numbers contain the qualification or the adverse remarks should be given. Basically, imagine if you have a subsidiary associate, those company auditor have said, sir, clause number 3, clause number 4 is contravened. You have to give the detail of the clauses and the name of the company. Just cross-referencing. Cross-referencing. It is called as clause number 21. It is called what? Clause number 20. So let's quickly recall 11 to 21. 11 is public offer. What you did? Fraud you did. Acha, then you gave it to Nidhi. Then you gave it to related party. Then you distribute it internally. How much is left? Non-cash. Then you gave non-cash. How much is left? Section 45 I of RBAC 1934. Then cash losses, 18 resigning, 19 material uncertainty, 20 transfer to CSR fund, 21 adverse or qualified remark in group company ka Karo. Karo for sure will be there for minimum 5 marks in the paper. I hope you have understood entire Karo. If you want this code, you can take a screenshot of it because I think it will not be there in the notes. First 9, then 10 to 16, then 17 to 21. That way we study. Cool. Let's do the question. Answer 10th question, guys. Karo ka question. With regard to unspent amount of 20 lakhs out of the following, select the appropriate reporting responsibility as per Karo. Give me the option. Give me the option. Schedule 7, 6 months. Schedule 3, 6 months. Schedule 7, 3 months. Schedule 3, 3 months. Tell me. 10th. You have to transfer the amount of CSR. Within how many months? Mukesh, Senthil, Deepak, Sipari, can you answer? 6 months as per schedule 7. A was the answer. A was the answer. One more question came. Let's read this story first. As a result of revaluation, the carrying value of building was increased. It represents 6% in gross carrying value, 12% in net carrying value. 6% in gross carrying value, 12% in net carrying value at the beginning of the year. Software has a downward trend of revaluation adjustment. It continues 10% reduction over gross carrying value and 16% reduction on net carrying value. Now the question here was, what do you have to see, gross or net? Percentage is 10. What do you have to see? Answer 12th. Which one should be reported as per Caro? Net carrying value, both. Because if you see net carrying value, this is 16% reduction in net carrying value, and here it was 12% increase. One was reduction, see upside downside 10% you have to report. Okay. Now, तो 4 mark का came in MCQ. The descriptive paper में, 1 second. See question 1C. Read this. I will scroll. Read this. Read this. Till here, which clause is getting attracted? Till here. Which clause you're supposed to write? Which clause getting attracted? So till first we will write 21 clause where you talk about group company के Caro report में the subsidiary auditor have mentioned something. You write the name and the respective clause number. Plus you will also mention clause number 1 also because of immovable property. This is September 25 का question number. If you see the number 4 marks here plus 4 mark in MCQ, 8 mark का question है. We have completed close to 7.5 chapter. Only 700 series is pending. That will take approximately half an hour to 45 minutes. That we're going to do tomorrow. Okay. Tomorrow I have a target to finish this chapter. That's chapter number 8 for you. And we will try to finish. I'll tell you which chapter we'll be doing it. We do investigation, forensic accounting. That's one chapter. Plus, we may start with chapter number 8, specialization. Okay. Tomorrow target is 700 ka series plus investigation, forensic, and if time persists, we will be doing specialized areas, 800 series. Works with everybody? Tomorrow I will be able to finish off 10%, 10 chapters out of 90. Guys, works with everybody? Cool. So be at par with me. We have completed 7.5 chapters. Finish off your chapters. You finish off all your chapters and then we continue. Okay. So tomorrow 2:30. Okay. Bye. Tomorrow 2:30 to 5. Same time 2:30 to 5. Bye. Thursday I may not take the class. I will inform. Hi guys. Good afternoon. Am I audible, visible? Can somebody confirm? Check, check, check. Hello. Good afternoon, guys. Hi Senthil, hi Sivari, hi Ajira, Deepak, hi Saranya. We have a new student today. Good afternoon. Okay, so let's quickly recall what we did in the previous session so that we start with the session then. Okay. Yesterday, if you remember, we have done Karo. What is the year of Karo? Write in the chat. What is the year of Karo? Write in the chat. Uh, 2020 Karo it's 2020. Karo is applicable to all committees, not applicable to BIPs. Banking, insurance, private limited, section 8, OPC and small. So BIPs may you will see directly, but private limit company में there's a condition. The condition says the paid up share reserve should be less than equal to 1 crore and the loan should be less than equal to 1 crore and the revenue should be less than equal to 10 crore. This is and condition. If any one condition contravened, Karo becomes applicable. Then there were 21 points of the Karo. Let's quickly recall one by one. Okay, F was fixed assets, I was inventory, D was debts given, E was education 185 160. P was public deposit, C was cost records, statutory dues, unrequired income and it defaulted. Then 10 is public offer, 11 is fraud, 12 is Nidhi. Nidhi means there's a ratio of 12, that's 1:20, and 10% should be invested in unencumbered term deposits. 13 was a related party, 14 was internal audit, 15 was non-cash, 16 was NBFC, 17 was cash losses, 18 was resignation, 18 resigning, 19 is material uncertainty, 20 is your transfer to CSR fund. The dates are 6 months which came in the exam. 21 is qualified adverse remark in the group company ka Karo report. Qualified adverse remark in the group company ka Karo report. Yesterday we had done about fraud also. The auditor should report the fraud to CG. Only the amount of fraud is dash. Only the amount of fraud is dash. What it is? Is 1 CR. If the fraud is of 80 lakh rupees, he will not report to CG. But if the fraud is of minimum 1 CR, he has to first report to audit committee or board and then he will go to CG in form number 884. Form number 884. Okay. Then, so we have completed that. We were left with only 700 series. So let's start with that 700 series. One second. Okay. So 700 was very simple. One second. iPad not connected. So it says, so 700 is basically forming an opinion and reporting on financial statement. That's not so important. You directly start with 705. It says modification to the opinion in the independent audit report. First, let me teach you, then you read. It says modification, opinion. In India, there are two kinds of opinion: unmodified opinion, modified opinion. Unmodified opinion basically means unqualified opinion, means clean opinion. Modified opinion basically means what? Qualified adverse, disclaimer of opinion. Qualified adverse or disclaimer of opinion. Now when we talk about modification, so if somebody say कि sir I have modified the opinion. See, layman के language में modification basically means change. But here it does not mean change. It means any opinion other than clean. Any opinion other than clean basically means qualified adverse, disclaimer. Now when do you modify? So two reasons are there. This we have done that in when we were doing SRE also. If the financial statements are misstated, the effects are material and pervasive, the author will give adverse opinion. Lot of problem. If it is material but not pervasive, the author will give qualified opinion. Some problem. He is unable to obtain size or sufficient appropriate audit evidence. Sufficient appropriate audit evidence. And the effects are material and pervasive, he will give disclaimer of opinion. If it is material but not pervasive, he will give qualified opinion. He will give what? Qualified opinion. If you see this guy is totally clean, no problem. Your lot of problem are there, adverse. Your some problem are there, qualify. This guy is sleeping like you people, he cannot do what you do, disclaimer of opinion. That's the way you connect the answers, okay? This is about modification. Now in the exam, what they can ask us? Now drafting of opinion. So this is a pair of unmodified, this is a pair of qualified, this is adverse, disclaimer. So first let me teach you, then you read it together. How do you write unmodified opinion pair? That means basically clean opinion. Unmodified, clean, unqualified. It says, in our opinion, to the best of our information and according to the explanation given to us, the aforesaid standalone financial statement, SFS means standalone financial statements, gives the information required by the act in the manner so required and gives a true and fair in conformity with the accounting principle generally accepted in India of state of affairs of the company as on 31st March. Then of P&L, state of affairs basically means balance sheet, P&L, SOKI and its cash flow for the year ended as on that date. So that is basically FS ka definition. It's very simple. You say, in our opinion, to the best of our information according to the explanation given to us, the aforesaid standalone financial statement gives the information required by the act in a manner so required and gives a true and fair in conformity with the accounting principle generally accepted in India of state of affairs, P&L, cash flow, SOKI for the year ended on that date. That's unmodified. Qualified, what do you say? Qualified, you will say, in our opinion, same line, in our opinion, to the best of our information according to the explanation given to us. What will you say? Except for the matters described in basis for qualified opinion para. Except for the matter described in basis for qualified opinion para. Same line. The aforesaid SFS gives the information. Gives a true and fair in conformity with the accounting principle generally accepted in India of the state of affairs, the balance sheet, the cash flow, and so as on that date. Same line. Adverse. Same line. In our opinion, to the best of our information according to the explanation given to us. Because of the significance of the matter discussed in the basis for adverse opinion para, the aforesaid SFS or if it is CFS by question CFS do not give a true and fair in conformity with the accounting principle generally accepted in India for the year of the state of affairs, balance sheet, P&L for the year ended as on that date. Here we say it does not give true and fair view. It does not give true and fair view. Fourth, disclaimer of opinion. Because of the significance of the matter described in the basis for do para, we have not been able to obtain SI to provide a basis for the opinion and accordingly we do not express any opinion on the FS. So here we don't say in our opinion, here we say because of the significance of the matter described in basis for do para, we have not been able to obtain SI. When we were doing SRE, in basis para and opinion para, you tell me which one will come first in SRE, which one will come first? Basis, and then you will write about the conclusion. Basis for so and so, conclusion, then conclusion. Here in audit we say first opinion para will come and then basis will come. First opinion will come and then basis will come. Okay? So giving you 2 minutes time, quickly run through modification ka part. So 700 you can skip. 705 this is for the purpose of MCQ. 4 mark ka 3 mark ka answer opinion para drafting. They will give a situation and this is the language of writing. Okay? Read. I'm here only read. Done. So 705 is completed. Now I'll give you one simple answer for 706. You just need to understand via this diagram. It says there are two paras. One is emphasis of matter, other one is other matter. Emphasis of matter para and other matter para. Emphasis of matter para and other matter para. Emphasis of matter para basically means a matter which is adequately disclosed in the financial statements. Something which is adequately disclosed in the financial statements. Something which is adequately. One second. A matter which is adequately disclosed in financial statement. Now my question is, who discloses in financial statement? Guys, who discloses in financial statement? Management. So management has disclosed something in the financial statement and which is fundamental to the user's understanding of FS. Which is fundamental to the user's understanding of FS. As an auditor, I'll be writing the same in emphasis of matter. As an auditor, I will be writing in which para? Emphasis of matter para. A matter which is adequately disclosed in FS and that matter is fundamental to the user's understanding of FS. The auditor will put that matter in emphasis of matter para and it is not determined to be a CAM. What will you say? It is not determined to be a CAM. CAM means key audit matter. That matter should not be a CAM. Then as an auditor, I'll put that matter in EOM para. EOM para. Very simple. Something is disclosed in the FS. You think it is fundamental for the user. You put it in EOM para. You put it in which para? EOM para. Any matter which is disclosed in the FS and you think it is fundamental to the users, you put it in which para, guys? EOM para. And it is not determined to be a key audit matter. It is not determined to be a key audit matter. Then other matter. It is a matter which is not disclosed in FS. It is not disclosed in FS, but it is relevant to the user's understanding. Relevant to the user's understanding of what? Either audit or audit report or auditor's responsibility. Either audit or auditor's report or auditor's responsibility. You will put that in which para? Other matter para. You will put that in which para, guys? Other matter para. And it is also not determined to be a CAM. It should not be a key audit matter. It should not be a key audit matter. So how do you differentiate? Something is disclosed in the FS, fundamental to the user's understanding of FS, EOM. Something is not disclosed in the FS, but it is relevant for the user's understanding of audit, audit report, auditor's responsibility. Audit, audit report, auditor's responsibility. You put it in OM para. Okay? Now I'll give you example. You need to identify where we'll put, it will go in which para, EOM or OM. First example. Contingent liability, guys. Contingent liability. Which para? Tell me. Contingent liability. EOM. Perfect. Then when we talk about holding audit, I have done, subsidiary audit, Hajit has done. Holding audit, I have done, subsidiary audit, Hajit has done. Which para? OM para. Early application of new accounting standards. Early application of new accounting standard. early application of new accounting standards. Sir, accounting standard if they are applying early, they will be giving disclosure in the FS. If they have given disclosure in the FS, I'll put in which para? EOM para. EOM para. Okay. Then company have not fulfilled CARO requirements. Company has not fulfilled CARO requirements. Which para? Like fixed asset register, they have not maintained, etc. They have not maintained inventory records. All this will come. Will they disclose in FS? No, sir. If they will not disclose in the FS, it will come in which para? OM para. Which para? OM para. Understood? Only for the purpose of MCQ. Okay. EOM, OM. Acha, one more important. Going concern affected. Going concern affected. Which para? EOM. He'll put in EOM. Okay. Chalo, read 706. If you have a notebook, if you want to write, because there is no notes for 706 as such, this is the basic. If you have a teacher ka book or module, just draw this diagram, okay, or you can take a screenshot. Just revise this in 5 minutes. EOM and OM. Okay, I'm switching off my video. Do that. So 705 was modification to the opinion in the independent auditors report, and 706 is basically EOM and OM. Emphasis of matter and other matter para in the audit report. Emphasis of matter para and other matter para. Okay. Now, right now I'm teaching you 720. 720. It says auditor ka responsibility in relation to OI. Guys, OI ka meaning is basically other income. Auditor ka responsibility relating to OI. OI means what? Other income. Now, other information, not other income, my mistake. Auditor responsibility relating to OI, other information. Now, I have written hint also. In the question, they will use the word annual report or a board report or prospectus. If you see, then 720 will be the part. 720 ka theory you have to write. It says like, what is other income? See, we have completed the audit. We have done the entire audit. So, our job is over. So, we give the audit report to the management. We have signed the FS. Now, what is the job of management? So, they will prepare an annual report or a board report. wherein the data of the audited FS is used, like profit का figure, reserves का figure, then foreign exchange earning का figure, sales का figure. So whatever is audited, they just have to copy it and mention in the board report, like, oh, this year ka PAT was this much, earnings was this much, EPS is this much. They mention in the board report, right? Or they mention in the annual report, or they mention in the prospectus. So the audited data is be going in the OI, other information. The other information example is annual report, board report, prospectus. Now, ideally 99.9999% it should be matching. The audited FS and OI ka data should be matching. But what if it is not matching? Then this essay comes into picture. What it says, if the auditor identifies material inconsistency in OI, so I am finding a mistake where in OI. OI means annual report, board report, prospectus. What I should do? The auditor shall discuss the same with the management and perform procedures to conclude that MMS of OI exists, that MMS of OI exists, or MMS of FS exists, or auditor's understanding of the entity and environments need to be updated. So either there's a mistake in the annual report or there's a mistake in the FS. So if there's a mistake in the FS, we will follow SA 560. Or whatever I have understood about the entity and its environment, it needs to be updated. That you will write as per SA 315. So this year, previously, there was a content year. Okay, there was a content year, but now they have deleted. They have said this, that you follow SA 560, you follow 315. They have just kept this part. MMS of the OI exists. So you will follow SA 720. It says, if MMS in OI exists, the auditor will request the management to amend. If the management agrees to amend, determine that the correction is made. As sir, annual report में there's a mistake, please correct it. If the management agrees, the auditor will determine that the correction is made. If the management refuses, the auditor shall request a TCWG for correction. If it was prior to the date of audit report, and the management is agreeing, you just have to go and check, determine that the correction is made. If they are refusing it, consider the implication for the audit report and communicate the same with TCWG how the auditor plans to address the MMS or withdraw if possible. So see, if they are not correcting it, obviously there's a mistake. So the report is with you only. What will you say? Consider the implication report. That is basically will modify. Plus, you will communicate with TCWG how the auditor plans to address the MMS or withdraw if possible. Okay? Sir, after the date of audit report. So my report is gone. So I have found some mistake in the annual report. I will tell them, sir, please rectify it. If management agrees, we are rectifying it. Determine that the correction is made by performing procedure. That means you go and again check it whether they have rectified or not. If they are refusing, what will you take? You will give public notice. Because you don't have the audit report. What will you give? Public notice. That is called as take action to prevent reliance. That is called what? Take action to prevent reliance. So ideally this answer was very important till last time. Generally in 720, this is the answer they have been asking. But what happened in the previous attempt, September, I think in November 24. November 24, May 25. Yeah, this question was asked. I have written a May 25 question. So it says, what it says. When the audit report is required to include an OI, what it shall include. So that was a procedure. Now imagine you are modifying the report. So other information has to be added. So what you will include? A statement that the management is responsible for the OI. Number 2, identification of the OI, if any, obtained by the auditor prior to the date of audit report, and for an audit of FS of listed entity, the other information, if any, expected to be obtained after the date of auditor's report. So first I will say a statement that the management is responsible for OI. Number 2, that OI needs to be obtained prior to the date of audit report. For which company? Unlisted companies, public or private. But in case of listed company, you can obtain prior to the date of audit report also, or you can obtain after the date of audit report also. Like we have given audit report and management has not yet prepared the board report. So I will tell to the management, Acha theek hai, I am giving you the audit report. You give me the OI ka details to read as soon as possible, but before publishing in the market. So in case of listed entity, either he has got prior to the date of report or he expects to be obtained after the date of report. ठीक है, there can be an MCQ also. Listed company में you can take before also, after also, but unlisted company it is mandatory before the date of audit report. Then a statement that the auditor's opinion does not cover the OI, and according to the auditor does not express opinion or will not express any form of assurance conclusion. Boss, I don't give opinion on OI, I give opinion on the FS. So clearly I'll say a statement that the auditor's opinion does not cover the OI and does not express any opinion. A description of auditor responsibility. A description of the auditor responsibility relating to reading, considering the reporting on OI, and whether when OI has been obtained prior to the date of report, a statement that the auditor has nothing to report if the auditor concludes that there is an uncorrected misstatement of the OI, a statement that describes the uncorrected material information. So if there is a misstatement, you will say that there is a misstatement. If there is no misstatement, you will write that the auditor has nothing to report. Then when the auditor expresses a qualified or adverse opinion as per 705, the auditor shall also consider the implication of the matter giving rise to modification of the opinion required in the above para. So in OI you will give the reasons also, like qualification. You are qualifying it because board report mein problem is there. You are giving adverse because board report mein problem is there. Understood? So this now has come as a separate question in the exam. Okay. So first you will read that notes wala diagram, and then in your teacher ka book on the module, please see there would be a point when the auditor's report is required to include OI. If it is not there, just take a screenshot of it. It was May 25 ka question number 1A, May 25. Read this first, then I will open parallel with that. Read this first. Done? To 720 is done. Okay. So we have completed 700, we have completed 705, we have completed 706, 720. 710 you can take, you can do it on your own. 710 is like intermediate content. I am teaching you 701 right now. Key audit matter. Key audit matter. Okay. Now if I open the module ka part of reporting chapter, now see. I am in module 7.21. 7.21. Okay. It says communicating key audit matters in the independent authors report. Communicating key audit matters in the independent authors report. Now what is the meaning? Now for example, we say CA Deepak. Take a CA Deepak was auditing Reliance Industries. So CA Deepak communicates with Reliance का management or TCWG as per 2 SA 260 265. He communicates as per SA 260 and 265. The auditor communicates with the management TCWG as per SA 260 and 265. Imagine he communicated around 1, 2, 3, 4, 5, 10 matters. ठीक है, 10 matters. Sir, what is your accounting policy? Sir, what are your assumptions? What are your estimates? Okay, how is your internal control? What is the policy for revenue recognition? He had a proper discussion. Now, out of those few matters, 1, 2, 3, 4, 5, few matters were significant matters. Few matters were significant matters. Out of this, 1, 2 is most significant matter. That most significant matter is called as key audit matter. What it is called as key audit matter. So basically, what is key audit matter? Key audit matters are most significant matters which are selected, which in the auditor ka professional judgment are of most significance out of the matters which is communicated to the management at TCWG as per SA 260 and 265. So this is the definition of key audit matter which you need to mark it up, and it has come every time. Okay. Now it says, so key matters are those matters which in the auditor ka professional judgment were of most significance in the audit of the FS of the current period, and those matters are selected from the matters which is communicated with TCWG as per 2 SA 260 and 265. Okay, so I'm just putting a number so that you will easily revise when I scroll the PDF. Okay, number 1, definition. Then number 2, this one. Now it is not a substitute for disclosure in FS that a management is required to make. It is not a substitute for auditor expressing a modified opinion as per SA 705. It is not a substitute for reporting as per SA 570 when there is a material uncertainty. Now basically management thinks that there was a contingent liability. The management is supposed to disclose in the FS. and as per auditor, contingent liability is a key audit matter. So management thinks like this, acha, auditor will be putting this in key audit matter. He thinks it is a key audit matter. So why I should repeat that in the FS? Why I should repeat this in FS? So let me ignore it. Can the management think like that? The answer is no. Key audit matter, see, management you have to write as a contingent liability because it is as per schedule 3. As per auditor, it is a key audit matter. He will write as per following the requirement of 701. Both ka logic is different. Even though the matter is same, both ka logic is different. So it is not a substitute for disclosure in FS. Number 2, it is not a substitute for disclosure for expressing a modified opinion as per 705. Like we just did, when you write opinion, you write basis. Now, as per me, whatever basis I put it, let us assume qualification. I am qualifying the report because there is a problem in inventory, and I have spoken to the management regarding inventory, and as per me, it's a key audit matter. So I am thinking, anyways, I am putting the matter in key audit matter. Let me ignore it for basis ka para. Can I ignore it? No. It is not a substitute for an auditor expressing a modified opinion. It is also not a substitute for auditor for expressing a report as per SA 570 that is going concern. So it is not a substitute. Then it is not a separate opinion. It is not a separate opinion on individual matters. Now, for example, if you remember the hierarchy, it is title, addressee, opinion, basis, going concern, and then you write key audit matter. So first I will give main heading key audit matter. Then I say I will use subheading. For example, I spoke about internal control. Then I will write what I have spoken, what reply I have got. Number 2, I spoke about accounting policy. What matter I have spoken, what reply I have got. Number 3, I spoke about revenue recognition. What matter I have spoken, what reply I have got. So basically I am writing the main heading and the subheading. This is the presentation. Guys, tell me, am I pointing out the mistake in internal control system here? Or am I pointing out the mistake in accounting policy? Or am I pointing out the revenue recognition mistake? Am I pointing out the mistakes? Am I pointing out the mistakes of the management, guys? Tell me. No. See, for mistakes ke liye you will put that in qualify para, adverse para, disclaimer para. It is just an additional disclosure requirement which I want to inform to my users. So I am not commenting anything on ICS, I am not commenting anything on accounting policy, I am not commenting anything on revenue recognition. So it is not a separate opinion on individual matters. It is not a separate opinion on individual matters. So 4 points are there. It is not a substitute for disclosure in FS, not a substitute for auditor expressing modified opinion, not a substitute for reporting as per 570, not a separate opinion on individual matters. Second point. Third, this essay is applicable to which entity? Listed entity. It's lagging, right? 1 second. No, it's correct. Yeah, this essay is applicable to a listed entity. Number 2, to an unlisted entity if the auditor wants to communicate. Third, as if the law intimates, law or regulation requires. So this essay is applicable to a listed entity. Number 2, of auditor otherwise this has to communicate, or if the law prescribes. This is third. Fourth, very important. Sir, how would you decide? It's a CAM. I said okay, my heart significant, most significant, right? But there has to be logic na, for most significant. So why it is a most significant matter? So what will you say? The auditor has to take into consideration 3 factors. Number 1, areas of higher assessed ROM. This is a repeated pointer. This question. Fourth, areas of higher assessed ROM or significant risk as per SA 315. Areas of higher ROM or significant risk as per SA 315. Number 2, significant auditor judgment relating to the areas in the FS that involve significant management judgment. That is like estimates, provision for bad debts, provision for depreciation, having high estimation uncertainty. First example would be like, for example, if I'm auditing Tanishq mein stock is a high value item. Tanishq is a jeweler, or you can say Joy Lucas or any jewelry company. So it's a high risk area. So if it's a high risk area, it's an important matter. Number two, auditor का judgment on management का judgment. So management makes judgments regarding estimates provision. Third, the effect on the audit of significant events or transactions that occurred during the period. Like for example, some loss by fire has come, some insurance claim has come. So that's effect of the audit, effect on the audit of significant events or transactions that occurred during the period. So it says, how would you decide the CAM? I will consider A, B, C. A, B, C. Then, what is the presentation requirement? The introductory language will give the definition first. Key audit matters are those matters which in the auditor professional judgment were of most significance. So this becomes number fifth, and those matters in the context of the audit of F as a whole, and informing the opinion the auditor does not provide a separate opinion on this matter. So I'm not giving any opinion. So I give the main heading, then the subheading. I write the definition, and then I say, okay, boss, I'm not giving opinion on the separate individual matters. If there are no CAM, the auditor must specifically mention that. So you'll give a heading key audit matter, and you will write that there is no CAM to communicate. Heading will always be there in listed company, key audit matter. Then you write there is no CAM. See, as per your heart, it should be a matter, no? Significant matter. If it is not, it's okay. But write the main heading key audit matter. You can't delete that heading. You write key audit matter and then no key audit matter. Okay, this is an example. How does it look like? You can cut this over. Okay, 5 points. So I am scrolling slowly. It's in the module, page number 7.21. Start reading. Okay. I'll scroll slowly. Done. So we have completed 701 also, and with this your entire reporting chapter is over. 700 is forming an opinion, 705 is modification of the opinion, 706 is EOM and OM. Then 701 is about key audit matters, 710 is comparatives that you have to do it on your own, and 720 is OI. And as out of this, 705, 706 and 720, three are important. 720 is important. Huh? I have a question for you guys. Let's see whether you can answer it or no. First answer. First answer. Tell me. EOM, early adoption of AS. We have discussed this. EOM, perfect. D. Then there was a question on this. For this we need to read once how H will report the matter relating non-compliant under FEMA. Read this para. C as in the course of audit notice that the ED had issued show cause notice for various non-compliance of FEMA and regulatory action against the company may be expected. The board have not mentioned the same in the report as the outcome is uncertain. This is not reflecting anywhere in the FS. This is not reflecting anywhere in the FS. However, estimate is relevant for the user's understanding of FS. Okay. Eleventh. Tell me. B. B is wrong. It is not OM. Understand. What was the definition of OM? Something not disclosed in the FS, agreed, but it should be relevant to the user understanding of audit report, order responsibility. If it is related to audit report, order responsibility, then it will come in OM. See, understand the comparison. Not in if it is in FS, EOM. Not in FS, OM. Agreed. Second line is fundamental to user understanding of FS, then EOM. Relevant to the user's understanding of audit report, order responsibility. The answer is D. It will not come in other, report. See, key audit matter is basically when you have communicated. In the question, in the story, they have nothing spoken about communication. He noticed that there was some notices. And says, may be expected, maybe expected. Some action may be expected. Right now, there is no liability. It may be expected. You don't have to report anywhere. Understood? D it was. Then, one more question. What type of opinion should issue in the audit report? 1 second. These are the two observations. It's very dark. I'll read for you guys. Okay, it's very dark. I'll read. The company procures raw material from a large number of local and international suppliers. As on 31st month, the trade payable from a significant portion of the liabilities forms a significant portion of total liabilities. A substantial number of supplier accounts were subject to reconciliations, issues, delayed confirmation, or significant error in adjustment. The management did not respond properly to the issue raised by the auditor. It was considered as a high risk area, Based on the audit procedure, it was concluded that the trade payable balance had been appropriately recorded. Okay. Observation 2. Batch of finished goods worth 1.5 crore was found to be missing during the physical verification of inventory. It constituted a significant portion of the value of inventory of finished goods. The management stated that it was due to a clerical error in location mapping and claimed to have traced the goods post the year end. They have got the goods. The documentation presented was insufficient and not identifiably variable. Not independently verifiable. The documentation presented was insufficient and not independently verifiable. You want me to open the para again? It was a high risk area. High risk area. Tell me, what's the answer? D. Correct. D it is. High risk area means keyword matter, and here it was clearly mentioned that documentation was insufficient and not independently verified. So I have not got SI. I have not got SI for goods. Unable to obtain SI. I have not got only for goods. So it's a material but not pervasive. So I'll give qualify. So I was very much clear that answer will be qualify. So wherever I see qualify, that is very important for me. So here it was qualify, here it was qualify. Now I have to decide between OM and CAM. OM card logic is what? Not disclosed in FS, not disclosed in FS, and relevant to the user understanding of audit, orders, report, orders responsibility. Correct? Here they are not talking anything like this. So it will be CAM. That was D. Understood? 6 marks. Imagine 6 marks. 6 marks. Cool. Chapter is over. So finally we have completed the entire report chapter, audit reporting chapter. The most important chapter. It is very important. It is coming now in the exams. You can see there were questions. 4 mark ka Karo ka question was there, and 10 marks approximately was there in MCQ. 14-15 mark ka the weightage is there. So we have done 6, 7, 9, 10, 13, 14, 15, 16, no 15 and 18, right? 6, 7, 9, 10, 13, 14, 15, 18. 8 out of 9 I have completed 8. Okay, let's take a small break of 5 minutes, then we will be starting with the I'll be teaching you today's specialized areas, chapter number 9. Specialized areas, 800 series, 800, 805, 810. Okay, we'll be doing that. Very simple. I think it will take 45 to 50 minutes. We'll finish it off. Chill for 5 minutes, then we continue. Okay. Chalo, let's start. Specialized areas. So this is your chapter number 9. Now see, is everyone back? Check, hello. ठीक है, स्पेशलाइज्ड एरिया में there are 3 standards: 800, 805, 810. 800, 805, 810. Now if you see the analysis, 4 mark, 5 mark, no question, 5 mark. ठीक है, weightage 5 mark, 1 question will be there, 1 question. Now it says what is specialized areas. So 800 ka series. So 800, first we're doing essay 800. It says special consideration, that is audit of FS prepared as per special purpose framework. Generally in India we follow FRF, financial reporting framework, which is acceptable generally. That is basically AS schedule 3. So you have to prepare the FS generally as per schedule 3 and following AS or Indians. But now your management has been told by somebody that you follow different FRF. It could be like SEBI LODR. In India we follow accrual basis, correct? But creditors or banker has told the management prepare the FS as per cash basis. So generally it is accrual, but here it is only cash basis. So it's a special purpose framework. So this framework has been told by somebody to the management, and we have been called up to do the audit of it. So I am auditing an FS which is prepared by the management as per special purpose framework. As per what? Special purpose framework. So it says audit of FS prepared as per special purpose framework. So SA 800 defines special purpose framework as a FRF designed to meet the needs of a specific use. Like I told you, the creditors or the bankers. The FRF may be fair presentation framework, that is cash basis. It could be a compliance framework, that is basically SEBI LODR. It could be either of it. Now examples of special purpose framework. These are the 3 examples. The entire essay revolves around this 3 only. Okay. Preparing the accounts on cash basis for creditors, which I give you the example. Number 2, when the FS are prepared as per the regulatory requirements, like SEBI LODR, that is compliance framework. Third, when FS are prepared as a part of a contract such as a bond, indenture, a loan agreement or a project grant. Imagine some mergers amalgamation must be having. So they will say, okay, follow this accounting entry, this is accounting treatment. So this has been told by somebody else, right? So because of a contract such as bond, indenture or a loan agreement or a project grant. So cash basis for example. Then as per the regulator. Third, as per the contract such as bond, indenture or a loan agreement. Cool. Then what are the considerations when accepting such engagement? So here I agree that FRF would be spoken to us to the member by somebody, right? But it should be acceptable. Now see, you can't change the basics of accounting. Like basic of accounting, what purchase to creditors, debtors to sale. If someone is saying no, do one thing, it is purchases to sales, pass this entry. That is fundamentally incorrect. So it's like the auditor should consider the applicability of FRF. The FRF would be presumed acceptable if the organization follows an established and a transparent process considering the views of relevant stakeholders. Okay? So generally it should be acceptable somewhere. Then it is an acceptable FRF. I agree the FRF is different, but it should be at least acceptable somewhere. Na? Somebody is following, some entities are following it, some organizations have been following it. Then 210 requires the auditor to determine whether any conflict between the financial reporting standards and additional requirement exist, and the prescribed procedure to be taken by the auditor if such conflict exists. So if they are not giving me access to information, additional information, what we should do? We should withdraw. Correct? Then whether a framework is acceptable or not, it is final matter of the judgment of the auditor. Then question number 3. Considerations when planning and performing the audit. Consideration when planning and performing the audit. This is basically what? This is a during one answer, like during the audit. So you will just mention the reference of all the essays. Sir, as per essay 200, check whether ethical requirements are followed, and all essays relevant to the audit should be followed. It also requires the auditor to comply with each requirement of an essay. Unless that essay is not relevant, you have to follow each requirement of the essay. In exceptional circumstances, if there is a departure from the relevant requirement, then you should do it by performing alternative procedures. So if that some essay ka some particular requirement is not applicable, okay, and you are following something else, so you can do it by following alternative agreed upon procedures. He should comply with essay 320. 320 talks about the matters which are materiality. Now, imagine when I am talking about audit, so we decide a materiality level. Who decides? Auditor ka heart. This is material. So for sales, I am saying 1 crore rupees is my materiality level. For inventory, I am saying 30 lakh rupees is the materiality level. Sir, for maybe cash expenses are 20,000 is my materiality level. Correct? Now, in case of special purpose FS, which is those prepared as per the requirements of a contract. So imagine Reliance ka and AB Limited ka merger was going. So Reliance have and AB has decided for us materiality level is 1 lakh rupee. They both have decided. Management have decided and the party with whom they have a contract, they have decided. I am the auditor. You tell me, should I follow that same 1 lakh as materiality level, or can I have a different materiality level? Should I follow that same materiality level, or I can have a different materiality level? Tell me. Is it mandatory to follow same materiality level? No, I can have a different materiality level. Senthil, I can have a different materiality level. See, management may agree with the intended users like Reliance, AB Limited agreeing with the Reliance that on a threshold below which misstatements during the audit will not be corrected or otherwise adjusted. So this is ML 1 lakh ke below we will not see, 1 lakh ke upar we will see. Management and the Reliance have decided. The existence of such threshold does not relieve the auditor from the requirement to determine materiality as per essay 320 for the purpose of planning and performing the audit of special purpose FS. That means I can have a different materiality level. I am not bound to follow that. So it can come in MCQ. Then the auditor needs to comply with essay 260, that's communication with TCWG. Achha. When a complete set of FS is prepared by the entity, the person responsible for special purpose framework may not be the same as TCWG who is responsible for the oversight and preparation of general purpose FS. So general purpose FS ke ABCD is responsible. Special purpose ke EF is responsible. So you should ideally communicate with EFG because they are responsible. Then one framing an opinion, you should comply with the requirement of essay 700. Okay, format of audit report. The audit report format remains same. Only the framework which the FS has prepared is different. In case the FS are prepared as per the provisions of a contract, like for example merger amalgamation, the auditor shall, as per 315, obtain the understanding of the significant interpretation of the contract that the management has made in the preparation of those FS. An interpretation is significant when adoption of another significant interpretation will produce a material difference in information. So it basically trying to say if FS are prepared as per contract terms, you go and read the contract terms, interpret it as per essay 315. Okay? And this is a definition of interpretation significant that you can ignore till here it is little relevant. Then how will you prepare a report for the engagement as per special purpose framework? So the auditor shall prepare the report as per SS 700, correct? Format. His report should describe the purpose and the intended users. This we have discussed in like penal and all SS wale mein. Then, very important, his report should also contain that if the management has a choice of FRF in preparation of such FRF, who is responsible? Management is responsible. For the FRF is acceptable in the circumstances. Then when you are writing CAM, you can use 701 also. We just did. When the auditor plans to determine that the entity plans to issue a report accompanying special purpose FS, he can also check the requirement 720, other information. Then the auditor may also deem it appropriate to refer OM para and EOM para as per SS 706. So basically you are just giving reference of 700, 705, 706 in the answer. How will you prepare the report? Now 7 and 8. To avoid the misunderstanding, the auditor would clearly, very important, this can come in the exam, 7 and 8. To avoid the misunderstanding, the auditor shall alert the users of the report that the FS are prepared as per special purpose framework. Three examples were there: cash basis for creditors, regulator का requirement SEBI LODR, and as per the contract between the management and the user of that contract. ठीक है? So you should clearly mention that, boss, this FS is not suitable for general purpose, it's only for specific users. The auditor may consider appropriate to indicate the auditor's report is intended solely for the specific users. This may be achieved by restricting the distribution or use of the report. For this, he will add a para. What para he can write? This para. So in the exam, they can ask us to draft a para, how to restrict the usability of the report. Okay, I have used a module ka example using contract. See, there are three examples basically: cash basis, number two, regulator for SEBI, okay, and third one is what? It is as per contract. So it says for restriction or distribution and use of the report. So I have underlined that what can be changed. So this is a common answer. Without, the heading would be for restriction, distribution and use of the report prepared as per special purpose framework. Without modifying our opinion, we draw attention to the note A in the FS, which describes the basis of accounting. The FS are prepared to assist the company to comply with the financial reporting provisions of the contract. If the question says in the exam, cash basis, the FS are prepared to comply with the requirements, financial reporting provisions of the creditors on cash basis. Achha, regulator. So only this you have to change. As a result, the FS may not be suitable for any purpose. Our report is intended solely for whatever question they have given the name, use that name, and should not be distributed or used by the parties other than so and so. So whatever this word and this word, only this has to be changed. This is an example as per contract. They can ask you cash basis pay, they can ask you as per regulator. That's it. I expect this answer should come in the exam. It has not yet asked. Okay. This is 800. It says basically FS are prepared as per special purpose framework, and we are supposed to do the audit. We don't prepare the FS, management prepares the FS. Okay. Take 5-7 minutes time and read this. Okay. Slowly I'll scroll. Done? SA 800 is done. That is basically audit of the FS prepared as per special purpose framework. Prepared as per special purpose framework. Okay? Now, let's do 805. Again, special consideration. It says audit of single FS or specific, not special, specific. Specific I accounts, items, elements of FS. Guys, audit of single FS or specific AI. Single FS is basically what? Balance sheet ka audit. Only P&L ka audit or only cash flow ka audit. That's single FS. Specific AI basically means debtor ka audit, creditor ka audit. That is specific AIE. Okay, AI. Now, 805 deals with a special concession in the application of those essays to an audit of single FS specific AIE. If it is prepared as per special purpose, like if single FS or specific AI is prepared as per special purpose, then you will also follow 800. You have to follow both 805 and 800, both you have to follow. Now, 805 does not apply the reports of component auditor. Component basically means subsidiary, associate, joint venture. It does not apply to component ka auditor. It does not apply to component ka auditor. Okay? Then, sir, what is single FS? So, single FS is basically distinguished from a complete set of FS. Example, CFS is a single FS. Cash flow, not CFS, cash flow statement is a single FS. Sir, what is specific AIE? Elements of FS or elements means an element, account or item of FS. Example, trade receivables, cash and bank balance, debtors, creditors, stock, all those are elements. Okay? Question number 3 you can skip. Question number 3 you can skip. Directly question number 4. It says, what are the considerations when planning and performing the audit as per SA 805? What are the considerations when planning and performing the audit as per SA 805? It says, the auditor shall adopt all the essays relevant to the audit as necessary in the circumstances of the engagement. The auditor shall adopt all the essays relevant to the audit as necessary in the circumstances of the engagement. So, even though you are following, you are doing audit of single FS, but you have to follow all whatever requirements of essays are there. When the auditing a single FS or specific AIE is in conjunction with the audit ka entity ka complete set of FS, he may be able to use evidence obtained as a part of audit of the entity ka complete set of FS in the audit of the FS or the element. Like if you are the auditor, stat auditor, okay? If you are the stat auditor and you are doing stock audit also. So when you are doing stock audit, you must have collected some evidence for stock, correct? The question is, can I use those evidences when I am doing stock audit of the entity? I was a stat auditor and they have also told me to do stock audit. The question is, whatever evidence I collected when I was a statutory auditor, can I use those evidences when I am doing stock audit? Yes or no? Yes or no? Yes. So it says, the auditor may be able to use evidence obtained as a part of the audit of entity ka complete set of FS in the audit of the FS, single FS or element. Okay, you can use that. He should plan and perform the audit of the FS or element to obtain psi on which to base the opinion. So you have to get the evidence. Then also the auditor may need to perform procedure in relation to the interrelated items to meet the objective of the audit. Like interrelated item like stock, if you are doing audit, so stocks are, it is linked to what? Creditors, manufacturing creditors. So obviously you have to check creditors also. You have to check interlinkages. Then the maturity determined for a single FS of a specific AIE may be lower than the maturity for the FS as a whole. So entire FS claim I am saying maturity is like 1 lakh rupee. But when I am doing stock audit here, the entire stock is only 10 lakh. So I'll keep maturity level as 20,000 rupees or maybe 30,000 rupees. So it will be lower. This will affect the NT of AUP, nature, time and extent of agreed upon procedures and evaluation of uncorrected misstatements. Okay? Then, so question number 4 is relevant for us. What are the considerations when planning and performing the audit? Question 5 and 6 both are read. How would you form the opinion? So it says, if it's a fair presentation framework, what words you will use? The auditor should use that the FS present or fairly presents in all material respects as per FRF, or FS gives a true and fair view. If it's a compliance framework, what will you say? FS are prepared in all material respect as per FS. These are the wordings of writing the opinion para. So not a question. Okay. Question 6 is read. It's a what are the factor which affects the auditor's consideration. That is only read. 7. Examples of specific AI. This is 8th. Achha, 7th is on the right side. This is 8th. Huh? Examples of specific AI. Examples of specific AI. Debtors, creditors, accounts, allowance for doubtful accounts, receivable inventory, schedule of externally managed assets, then schedule of net tangible assets in the model they have given, and schedule of disbursement in relation to lease property. So you are just doing specific things. That is example of specific AI. Now, forming an opinion. Okay, so we do this very important. Now listen. If the audit report on the complete set of FS is modified, so modified means qualified adverse disclaimer, or contain EOM, OM, CAM or Murg para, material uncertain relating to going concern, then the auditor shall determine the effect on what? So if the big report, we are using the word big report may what it is, either it is qualified adverse disclaimer or EOM or OM or CAM or Murg para, anything is there, then he should consider the effect on if you are auditing single FS or specific AI. When deemed appropriate, he may also modify the opinion or use EOM or OM or Murg para. So he can use the same thing here also. So if big may any of the 7 paras are there, so same thing he will consider when he is giving opinion on single FS or specific AI. Okay, very generic. From here you have to use your brain. It can come in MCQ or maybe in descriptive also. It says, if the entity ka complete set of FS contains what? Like the big report contains adverse or disclaimer. If the entity ka complete set of FS contains what? Adverse or disclaimer. Big report contains what? Adverse or disclaimer. Then the single FS cannot be unmodified. I am talking only on balance sheet or cash flow or P&L. So if the entity ka complete set of FS is adverse or disclaimer, then the single FS cannot be unmodified. That means cannot be clean. This is because unmodified opinion would contradict the adverse or disclaimer of opinion on the entity ka complete set of FS as a whole. So the big reported adverse or disclaimer, then the single FS, I am not talking about AI, single FS cannot be clean. But there's an exception. There's one exception. What is the exception? This exception. This. If the auditor's report on the complete FS is disclaimer, because of what? Because of operations of P&L and cash flow. Okay? That means because of P&L and cash flow. The big report you have given disclaimer because of cash flow or because of P&L. Now they have told us to audit balance sheet audit, only balance sheet. I just taught you if the big report is adverse or disclaimer, the single FS ka report cannot be clean. Now the exception is if the big report was disclaimer because of what? Because of P&L and cash flow. Then still the auditor can express clean opinion regarding the state of affairs. What is state of affairs? Balance sheet. That is, disclaimer of opinion has expressed only in respect of the results of operation and cash flow, and not in the respect of FS as a whole. Not in the respect of FS as a whole. Understood? So general rule is what? Big report, adverse disclaimer, single FS cannot be clean. Exception, big report is disclaimer because of P&L and cash flow. Then the single report on balance sheet, single report on this, balance sheet can be clean. Okay? Then this came in the exam. If the big report contains what? Adverse or disclaimer. Big report contains adverse or disclaimer. Then unmodified opinion on the specific AI. Specific AI means stock or debtor or creditor. So on specific AI can still be clean. See, if it is single FS, it can't be clean. That we have discussed previously. But specific AI it can be clean provided everything is in negative. No. The auditor is not prohibited by law or regulation. The auditor is not prohibited by law or regulation, and that opinion expressed in the auditor's report is not published together with the audit report containing the adverse or disclaimer of opinion, and the specific element does not constitute a major portion of the entity or complete set of FS. Not prohibited by law, not published together, does not contain the major portion. Not prohibited by law, not published together with the main report, and does not constitute a major portion of the entity or complete set of FS. Okay? It says 800 and 805 do not override the requirements of the other essay, nor they purport to deal with. So you have to follow all essays basically. It's not that these are supreme essays or these are lower essays. No, these are different essays. That's it. 800 talks about basically special purpose framework. 805 talks about single FS का audit, like balance sheet, cash flow का. Or AI. AI basically means date recorded, credit recorded. Again we do. Big report, adverse disclaimer, single FS cannot be clean. Exception, if big report was disclaimer because of penal cash flow, then balance sheet you can give clean opinion. Acha, big report adverse disclaimer, then specific AIE can be clean provided it is not prohibited by law, not published together, does not constitute major portion of the entity ka complete set of FS. Cool. This is important. Huh? Read 805. So whatever I have taught you, I'll be taking you the questions on that only. So whatever I said read, so I will not be showing you on the screen. Okay, read. Done. 805 is also done. Okay. So let's be very clear. If the big report is adverse or disclaimer, then the single FS cannot be clean because it will be contradictory. But exception is if the big report is disclaimer because of P&L and cash flow, then the single F balance sheet ka report pe we can have a clean report. Okay. Then if the big report is adverse or disclaimer, then specific AI pe we can give a clean opinion provided it is not prohibited by law, not published together, and does not constitute a major portion of the entity ka FS. Okay. Now 810. 810 says engagements to report on summary FS. What it says? Engagements to report on summary FS. So like we had 210, 2410, same way 810. Mandatory it has to be done by the stat auditor. Yes, every essay in the entire syllabus can be done by anybody. But 810 has to be, and 2410 mandatory has to be done by the stat auditor. So engagements to report on summary FS can be taken only if the auditor has audited the complete FS. Okay? So if you are the complete FS auditor, then you can become the summary FS auditor. So what is summary FS? Summary FS reflects the historical financial information which is derived from the main FS. It contains less details than the FS. It will contain for the full year, but it will contain less detail. It will contain what? It will contain less details. Then, while providing a structured representation consistent with that provided by the FS, say everything would be same. Data would be there, creditor would be there, asset would be there. The pattern would, everything would be same, but it will contain just less details. Okay? That was the definition of summary FS. Now this came in the exam. What are the factors to be considered by the auditor before accepting summary FS ka engagement? So we say CMO, CMO, C. Criteria. Check whether the criteria is acceptable. See, summary FS will be prepared by the management. We are the auditor there. So they will be what to take in summary, what basis. There has to be some criteria. So first point is check the criteria is acceptable. M. Obtain the agreement of management ka responsibility. M is management ka responsibility. O. Agree with the management the form of the opinion to be expressed. So the main answer is CMO, criteria, management responsibility, opinion. Agree with the form of the opinion to be expressed on the summary FS. Criteria, management ka responsibility, management ka acknowledgement, and O is form of the opinion on summary FS. Okay? Now, first, determine whether criteria is acceptable. This came in the exam separately. Sir, what do you mean by the word applied criteria? Applied criteria refers to the criteria applied by the management in the preparation of summary FS. Definition is what? Applied criteria means a criteria which is applied by the management in preparation of summary FS. Management is responsible to determine what criteria should be there, okay, so that they are consistent with in all material respect and will present a fair summary of the audited FS. So it should be presenting a fair summary of FS. This came in May 24. What are the factors to be determined by the auditor the criteria is acceptable or not? The code is pink. Purpose of the summary FS, information needs of the intended use of the summary FS, and nature of the entity. C. Whether the criteria will result in the summary FS that are not misleading in circumstances. The code is pink. How would you decide the criteria is acceptable or not? Pink. Purpose of the summary FS, information needs of the intended user summary FS, nature of the entity, whether the criteria and will result in the summary FS that are not misleading in the circumstances. Then management ka responsibility. So obtain the agreement for the preparation of summary FS as per the applied criteria. So here we do not say FRF, here we say whether the summary FS have been prepared as per applied criteria. You don't say FRF. To make the audited FS available to the intended users without any undue difficulty. To make the audited FS available. 1 second. So see, ideally this FS, like I'll give you an example, like listed company. Listed company can give summary FS. It is written in SEBI LODR in section 136 may also it is written of Companies Act. The listed company, rather than giving the full FS, you can give summary FS. Now, management was giving summary FS. So obviously, auditor has to give a report on summary FS. But there was a shareholder called as Deepak. Deepak says, no, I don't want full FS. Management, see, SEBI listed entity say, they have given a benefit that you can send summary FS. So they are sending summary FS and they're giving a report also on that. But one of the shareholders says, I want full FS. The question is management bound to give full FS? Tell me. Is management bound to give a full FS? Yes, sir. You have to give. Then, it says it should be available, okay, without any undue difficulty. The auditor ka evaluation whether the audited FS are available to the users of the summary FS is will depend upon the following factors, like the summary FS clearly describe from whom or where the audited FS are available. So they have written clearly, go to our website, sorry, contact Mr. Ram Kumar on this number. So they have given from whom and where the FS will be available. Number two, the audited FS are on public record. So it is with the ROC, you can download from there. Or they have given a process by which the intended user of the summary FS can obtain the ready access to the audited FS. So you go to this website, okay, enter your OTP, go to the website, enter the put your mobile number, you get an OTP, enter the OTP, you will get audited FS. So either they have given person ka name, or they have, it is publicly available, or they have given a process. So I can assume that it is easily available to the intended users without any undue difficulty. Okay, this can come in the exam, they have not asked yet. How the auditor should decide whether the FS are, that the audited FS are available to the users of summary FS without any undue difficulty? 1, 2, 3. 12. One second. Huh? So the same notes, I am just reading it from here. Okay. Question number 3. What are the procedure performed by auditor for 810? This came in exam. Evaluate whether summary FS disclose, it's same only, it's just color and that is student handwriting. This is when I had asked somebody to make it fair. First I wrote in the book, then the student wrote with the color pens, that's it. The content is same. Evaluate whether the summary FS disclose the summarized nature and the entity and identify the AFS. AFS means audited financial statements. Sir, if the SFS are not accompanied by the AFS, describe from whom or where the AFS are available and whether the law or where the law or regulation prohibits that AFS shall not be available. Evaluate whether they disclose the applied criteria. Compare the SFS with the related information, whether it is as per the criteria or not. Evaluate whether SFS are prepared as per applied criteria. So first you check the criteria, whether criteria is disclosed or not. Then you check whether SFS are prepared as per the applied criteria. Evaluate whether the information in SFS is not misleading in the circumstances. Evaluate whether the information in SFS is not misleading in the circumstance. Third, evaluate whether the AFS are available to the users of the SFS without any undue difficulty. This is a procedure. This is a procedure. Okay? Then, forming an opinion. So, if the auditor wants to give unmodified opinion on SFS, he should use the following. What wordings he will use? That the SFS are consistent in all material respect with the AFS as per the applied criteria. You don't use FRF. Here basically SFS should be consistent with the AFS as per the applied criteria, or the SFS are a fair summary of the AFS as per the applied criteria. The SFS are the fair summary of the AFS as per applied criteria. Then you can skip point number 2. This is the wordings. Then if the auditor concludes that the additional explanation in the report cannot mitigate the possible misunderstanding, what he should do? He should not accept the engagement unless required by law. This we have discussed in 2410 also. If the engagement is done as per law and regulation, okay, therefore his report should not indicate that the engagement was conducted as per SA 810. You know that line? Because law is telling us to accept it, so we have done it as per law, not as per 810. Contents of audit report, same third up wala answer, title, address, date, place, sign, FR and UD. Management is responsible to prepare summary FS as per applied criteria. The auditor is required to check the consistency of the SFS with the applied criteria on the AFS and issue a report. Then a statement that the engagement is conducted as per SA 810. Then define 81 and then applied criteria definition. So common answer. For us, what is important is this one. This one is important. Let's see. If the audited FS contains modification EOM OM, so same line. big report, small report. If the AFS contains modification EOM OM, then and the auditor wishes to give a clean opinion on SFS. If the audited FS contain what? Qualified EOM OM, qualified EOM OM, and the auditor wishes to give a clean opinion on SFS, small report पे, then the auditor report on SFS shall contain the following. What all? State that the auditor's report in AFS contains qualified opinion UM pair or OM pair, to state that the main report contains whatever it is, and describe the basis for the opinion, and that opinion or UM or OM pair. So basis plus whatever it is, UM or OM or opinion, and the effect on the SFS if any. So it says if the big report contains qualified or UM or OM and the auditor wishes to give a clean opinion on the SFS, his report shall also contain following details. Number one, state that the audit report on the AFS contains qualified UM or OM and describe the opinion and the basis for the opinion and the opinion and the effect on SFS. Neighbor, if the AFS contains what? Adverse or disclaimer. Here it was qualified UM OM, here it was adverse or disclaimer. Then to clean the you can't give. It says the auditor's report on SFS shall additionally state what? Same line. State that the audit report on the AFS contains adverse or disclaimer opinion. Describe the basis for the opinion, adverse or disclaimer, and that opinion. Third line, very important. State that as a result of the adverse opinion or the disclaimer opinion, it is inappropriate to express opinion. Here we were giving clean opinion. If it was qualified or UM or still you were able to give clean opinion. Here though you can't give opinion only. If the main report is adverse or disclaimer, then the small report, summary report cannot. We are unable to express opinion on the SFS. Okay. Then modification. This can come in MCQ. When will you modify? Sir, if the SFS are not consistent, like summary FS are not consistent, or it is not as per the criteria, or management refuses to make changes, the auditor will express adverse opinion. SFS are not consistent or not as per the criteria, or management refuses to make changes, what will the auditor do? Auditor will express adverse opinion. Okay. Then one point, you are not required to obtain any subsequent event details. It says if the audit report on the SFS is prepared after the completion of the audit of the main report, he is not required to obtain any additional evidence on the AFS or report on the effects of events that occurred subsequent to the date of audit report, since SFS are derived from the AFS. Summary financial statements are derived from the audited financial statement only. So you don't have to do anything in SFS for as per SA 560 subsequent event. You are not required to do anything. Clear? Main part is this much only, this much modification. So 5 minutes, I'm just run through once, then we'll stop. Read. SA 810. Read. Done? Finished. So guys, we have completed 800 series also. So total 9 chapters have completed. So your 50% of syllabus is over. We are just left with 50%. Okay. So tomorrow I'm not taking a class. Tomorrow is Thursday. I'm not taking class. We'll be meeting on Friday at 2:30 p.m. Cool. So 2:30 p.m. on Friday we meet. Bye guys. Take care. Okay. Thursday there's no class. Bye bye. Take care. Bye. Thank you. OBS फोन वो विशेष कर वो बैकग्राउंड से लोगो और जूम चालू हो गया। हाँ सर, अभी कोई भी स्टूडेंट नहीं है, ऐड ही नहीं हुआ स्टूडेंट। चलो, ठीक है डन। अभी स्टूडेंट ऐड नहीं हुआ सर आप। मैं अब तो रिकॉर्ड कर देंगे। एक ये वाला ऑन कर दो बस, ठीक है चलो। ये लाइट है भी, ये वाला, ये तीनों कनेक्टेड है क्या एक साथ? क्या बहुत मुंह पे आता है यार। ठीक है। तो कनेक्ट कर, ठीक है। Hi Deepak, am I audible? Can you guys confirm Deepak? Okay, ठीक है, let's start. In the meantime, people will join, but let's start. Now see. So today we are supposed to start with a new chapter. So we have completed 5, 7, 8, 9, 10, 13, 14, 15, 18. We have completed 8 chapters. Correct? So today we have a target of 2 chapters. We'll be completing total 10 today. So let's start with first general auditing and principles. General auditing and principles. Start with general auditing and principles. I think general auditing we have done it. One second. I am asking the team to share this with you. Now, so team will share you this notes, okay? Or else you can find this on my Telegram. We will be sharing on the Telegram. It says general auditing principles and audit record responsibility. So here, if you see the module, there are 5 or 6 essays, I think, in general auditing in the module. One second. If you see this, I'll show you. Yeah. So in the module, if you see there are 5 standards: 240, 250, 260, 290, and 402. Okay, 5 standards are there. So ideally, from this chapter, a 4 or 5 mark question would be there, plus 2 mark MCQ would be there. Hi Sivari, hi Senthilai, Sukesh. So uh, these are the 5 standards we'll be will be studying like. So today we have completed 8 chapters. We'll be doing 10 chapters today. I mean, 2 more. One second, my pencil got discharged. Okay. So tentatively 10, and I think tentatively by next week, because every day we're targeting 2 chapters, so I would require, I think, around 4 days more, 4 to 5 days more, I think. So tomorrow again we're gonna meet. So around 4 to 5 days I'll take more. I think by next Friday or next Saturday we'll be able to. Hmm. The next Friday or Saturday we'll be doing it. Okay. I hope you are studying. I hope you are understanding the concepts and you're revising it. Those 2 minutes, 7% charge. And okay, so we're gonna study 240, 250, 260, 299, and 40. These are basically intermediate class content. So we are recalling it again with regards to CFM. Now it says Essay 219. First, I'm teaching you joint audit of financial statement. This notes will be shared with you in the group. If you don't get it, you can take it from my Telegram. Okay. Joint audit of financial statements. Now imagine as a company, Reliance Industries. Okay. Now Reliance Limited is a company. So there's one firm AB and Co, PQ and Co, ML and Associates. When one company ka more than one auditor is appointed, it is called as joint auditors. So the name is joint auditor of financial statements. So why do we appoint? Why? Because the work is voluminous, huge work is there. Then, sir, what are the special consideration to be considered by joint auditor and how they will divide the work? Now, when joint auditors are there, so obviously one CA firm, if it is doing the work, I can do it at my own way. But when there are two, three CA firms together working on one client for the same financial year, obviously there would be some issues, objections. So we need to resolve it. So it says what are the considerations and how the work will be divided. The engagement partner and other key members from the each joint auditor should be involved in planning, like everybody. So like AB ka form say senior partner would be there and other key members. Same way P2 ke form say one would be there. MN ke form say one would be there. Okay. Then joint auditor should establish an overall audit strategy and plan. Like together we are a team. Though we are three different CA firms, but we are a team. We are auditing one company. Before commencing the auditor should discuss and develop a joint audit plan. Now, in developing the plan, what will you consider? Communicate among all joint auditors the significant factors. Communicate among all joint auditors the significant factors, like what are the risky areas, who will be auditing risk areas, who will be going for a stock audit, who will be going for physical verification, who will be doing bank repo. Then identify the division of audit areas and common audit areas. So you divide some work and like some area, for example, tax calculation, we do it together. Okay, formatting of the balance sheet, we do it together. That's a common area. Then ascertain the reporting objectives of the engagement. Ascertain the reporting objective of the engagement. See, if it's a listed company, sorry. If it's a listed company, there they have to give quarterly reports also because SEBI ka requirement is there. If it is just a private company, only one. If it's a private company, only one report you have to give. So ascertain the reporting objectives. Then consider the results of preliminary engagement. What will you say? Consider the results of preliminary engagement. Then check the nature, time, and extent of resources necessary to carry out engagement, whether you have articles or not, whether you have people who can do the work or not. So these are 5 points when you're planning for joint. In the question, they will clearly say, boss, there are two CA firms. Okay, well, there are two CA firms, one or more CA firms. That means it is SA 299 joint. Then each joint auditor should consider and ascertain the ROM and communicate with other joint. Now imagine I am doing stock audit. I got some risky areas. I found out some problem. So I will tell, imagine Sukesh ka firm is doing, let us assume they are doing credit account. So I'll tell Acha boss stock में mistake is there, so you please check data and credit thoroughly. So if I'm getting a risky area, okay, if I'm getting a risky area, I should communicate with other joint. Then joint auditor should obtain common engagement letter and management representation letter. So you, like management will is not mad that he will give separately to Sukesh, separately to Deepak, separately to Sivari, separately to Abhishek. No, they will make a one common joint audit, common engagement letter and management representation letters. Then the work allocation document should be signed by all the joint auditors. Now, when we're dividing the work, like Deepak will do maybe purchase sales. Okay, Shiva says, sir, I am good at bank reconciliation. He will do bank reconciliation. Okay, Sukesh says, I'm good at checking liability. I'll check liability. I'm saying I'll check asset. So we have divided the work. When we have divided the work, it's how can you divide? So it's as per area of expertise, as per components of FS, sir, as per geographical location, and as per period. So you can divide this. And when you divide the work, sir, everybody would sign. So why signing is required? Because, boss, in case I'm saying I have to support, I'm will be auditing assets. Sivari says, no, sir, I will do assets. So there could be a fight between both of us. So to resolve the dispute, it should be signed by all the joint auditors. That's question number one. Question number two, what are the responsibilities of joint auditors? So there are individual responsibilities and joint and several responsibilities. Sir, each joint auditor shall be responsible for the work which is divided to. For your work, your duty, your procedure, your documentation, your work will do. It is your duty. Common area के लिए common responsibility. Sir, each joint auditor shall be responsible for the work allocated to such joint auditor, including proper execution of audit procedures. Number two, each joint auditor should determine the NT of his procedures. So for the work divided, it is your duty. Okay, the nature, time, and extent of the audit procedure for the work divided, it is your duty. Internal control relating to your work, it is your duty. It shall be the responsibility of joint auditor to communicate to other joint auditors if you come across some matters which are relevant to the areas of responsibility of other joint auditors, which I told you. I was auditing stock, I got some mistakes in stock. I will tell to Deepak, you're doing data creation and do it properly. There could be an area. That is my individual responsibility. Now, what is joint and several responsibility? So the work which is not divided. What will you say? The work which is not divided. Like for example, formatting of balance sheet, preparation of audit report, CARO preparation. It is a common responsibility. Decision taken by all joint auditors in respect of common audit areas. Like for example, I am saying that there's a mistake in the presentation, and Deepak is also agreeing. So who will be responsible? All of us will be responsible because it's a common decision. Matters which are brought to the notice of joint auditor by any one of them, and on which there's an agreement among joint auditors. So some mistake I have found out where everybody is agreeing. In case of responsibility, everybody would be responsible. Examining that the FS of the entity complies with the requirement of relevant statutes. That means presentation requirement is proper. Reporting requirement is proper. Audit report complies with the relevant essay. With 700, 705, it complies. So for all this, it is joint and set. In the exam, maximum time you will see responsibility wala. So individual and joint and set. They can ask individual also, they can ask joint and several also. Then reporting by joint auditors. See, generally they have to give a unanimous report. Unanimous basically is common report. But for example, Deepak is saying, no, I want to give advice. Shiva, Hari, Sukesh, we are saying we will give qualified report. Deepak is saying advice. So Deepak has a power to give a separate report. Okay. Now the joint auditors are required to issue a common audit report. Okay. If the joint auditors are in disagreement, they shall express their opinion in a separate audit report. So Deepak can give a separate report. A joint auditor is not bound by the view of the majority of the other joint. He is not bound. He can give a separate. Generally, it should be unanimous report, common report. But if there's a disagreement, he can issue a separately. Okay. So ideally, for final level exam point of view, I would say question number 2, that's responsibility, and question number 3, reporting plays are very important. Okay. So let me teach you two essays. Then you just run through from them. Okay. If you get the notes in the group, just message me in the chat that you have got the notes. Then essay 260. Communication with TCWG. Communication with TCWG. What is the SA number, guys? SA 216. It says communication with TCWG, those charged with governance. So again, inter-level guys, it says first question. I think in this essay there would 2 or 3 questions. So first question says, what are the matters to be communicated? So let's be very clear. What is management? What is TCWG? So as an auditor, when I go and do the work, every day I have some other work here and there. I have to ask this document, give me GST ka paper, service tax ka paper, maybe some bank statement. So I will not disturb the COCF. I will obviously not disturb COCF, correct? I'll be asking from the directors. That is management. If I have some serious issue, I'll speak to KMPs like CEO, CFO, MD. That is called as COCF. That is called what? TCW. Auditor's responsibility in relation to FS audit. What it is, auditor's responsibility in relation to FS audit. So the code here is what are the matters? It is basically RASO. R. Responsibility. What is our responsibility? What is my responsibility, sir? I have to give opinion on what? Financial statement that it is giving true and fair view. The auditor shall communicate with TCWG the responsibilities of the auditor in relation to FS audit, including the auditor's responsibility for forming an opinion on the FS which have been prepared by the management and TCW. So my responsibility is to give opinion. The auditor ka responsibility. S. Plan, scope, and timing of audit. The auditor shall communicate TCWG the scope and timing of audit. So my responsibility is scope and timing of audit. How I will be doing, what I will be checking, all those would be communicated. One more S. Significant findings from the audit. So this can come as a separate question. What are the significant findings from the audit? It says the auditor shall communicate with TCWG the auditor ka view about significant qualitative aspects of the entity accounting practices. We are following SLM, WDB, FIFO, D4, consistency is there or not? How do you choose an accounting policy? Do you change? Why do you change? What are the reasons for the change? That's qualitative aspects of the accounting policy. Then, what you will ask? Auditor's approach to internal control system relevant to audit, application of materiality in the context of audit, and where the entity has internal control function, the extent to which the start auditor can rely on internal audit. That is basically qualitative aspects. Then, next one is significant findings, significant difficulties during the audit. So this came as a separate question. What are the significant difficulties encountered during audit? This you must have experienced in an article sheet. For example, significant delay in the management providing required information. I am asking that give me bank statement, give me bank statement. They are not giving it. It's a difficulty. And unnecessary brief time within which to complete audit. Are sir, we have sent you the data. Has the work over? Is the audit complete? Acha, they are giving like, sir, we have sent you the data. 3 days when you give the audit report. You must have experienced it. That is significant delay. Sorry, unnecessary brief time to complete the audit. Third, extensive unexpected efforts required to obtain sign. Imagine in Tamil Nadu, some village made there's a factory. To reach to that village, you have to use all modes of transport: waterways, airways, railways, walkways. First you go by flight, then you go by train, then you go by bus, then you have to cross a river, and then you have to little walk, then you will get the evidence. Will you go? No, sir, it is a difficulty. Then unavailability of the expected information. I'm asking them, sir, GST challan, give me GST challan. They are not giving it only. Sir, we arrange. Then restriction imposed on the auditor by the management. Don't go here, don't go there, don't check this, check that. That is called as what? Restriction imposed. And management unwillingness to make or extend the assessment of entities able to continuous going concern. They are not checking GC only. If they're not checking GC, what goes off my father? I will not do any work. Okay. O. Other matters arising from the audit, which in the audit of professional judgment are significant for the oversight of financial reporting process. So what do I communicate? RASO. R say it is what? Auditor ka responsibility. S say it is scope and timing of audit. One more S is significant. No, one more S is this one. Significant findings from the audit. Significant findings from the audit, and O is other. Auditor ka responsibility, scope and timing of audit, then significant findings from audit, other reporting, other matters. Okay. Question number 2. Sir, what are the factors governing the modes of communication of auditor with establishment? What are the factors affecting the mode of communication? Like you should communicate when, how you will communicate. First one, following are the factors. Whether the matter has been satisfactorily resolved. Boss, if the matter is satisfactorily resolved, you will not communicate back again because it is resolved. Number 2, Whether the management has previously communicated the matter. If management has already communicated the matter, you being an auditor, you will not communicate the same thing because it's already been communicated to them. Third, the size, the operating structure, the control environment, legal structure of the entity. I'm giving you two clients. One Imagine AB Limited and one Reliance Industries. Okay. Now you are the auditor. Everybody who's watching me right now, you are the auditor. Now you tell me your communication will be quicker, faster in AB Limited or in Reliance. Your communication will be faster in AB Limited or Reliance. Tell me. No, the Sukesh in AB na. AB mein to you can come and directly talk to me. Reliance mein you have to first take an appointment from the secretary. Then she will coordinate with the director. Then you will get to meet Mukesh Ambani. So communication with TCS becomes easy when the entity is small. Understood, Sukesh? Then imagine if it's a company, then it's a complicated structure. But if it's a partnership firm, you can communicate directly. Correct? So the legal structure, the operating structure, it will affect your communication. Now, if you're auditing special purpose FS or if you're auditing general purpose FS, if you're auditing special purpose FS or general purpose FS, like yesterday we have done in the previous session, I think 800 ka series, special purpose FS, right? So imagine I have appointed Sukesh to do a audit of only creditors on maybe credit basis. Okay, also on cash basis. Generally, we follow accrual. I'm telling you, you prepare the FS on cash basis because I need to give this report to the creditors. And my start order is Deepak. So Sukesh has been told to prepare a report on a special purpose. Deepak is a general purpose order. He is a special purpose order. Deepak is general purpose order. Now you tell me my reliance or maybe the communication will be faster, will be more responsive when? When you're a special purpose order or when you're a general purpose order? Tell me when you're a general purpose order or when you're a special purpose order? General purpose. Again, Sukesh, yeah. See, special purpose mein to you have come only for like 5 days, 10 days. So you are not that important for me. My Deepak, my general purpose auditor, he's there with me for 365 days. So whatever he says, I will consider more na, as compared to you. You to came only for 5, 10 days. My general purpose auditor is like full 365 days. He is sleeping here only. Correct? So my reliance, my communication, my response will be more faster with general purpose. Okay. Any legal requirements are there. Then the expectation of TCWG, including arrangements made for periodic meeting or communication with the auditor. Now you are the auditor, I am the management, I'm the teacher. You're telling me, Arey, AB sir, let's meet. I'm saying, Achha, let's do one thing, let's meet after 3 days. After 3 days you came. Arey, AB sir, let's meet again. Let's meet once. I'm saying, so Monday we'll meet, for sure. Monday I did not came. You tried once, you tried twice, you tried thrice. Now you are least bothered, you will not communicate. So you will be least bothered. If management is only not putting efforts to meet, why then you should be bothered? So it affects your communication. But if management says, okay, every Saturday we'll be meeting, every Saturday. So obviously you'll be more inclined to communicate more, no? Because management is also interested. So it says the expectation of TCW, including arrangements for periodic meeting. Then the amount of ongoing contact and the dialogue the authorized with TCW. The amount of ongoing contact and dialogue the authorized with TCW. Like you suggested to me, AB sir, your internal control system is weak. Please install CCTV. I responded. I installed. Next time, if some other matter comes to you, you'll be communicating to me. Correct? You told me, AB sir, your CCTV is weak. Here, sir, internal control system is weak. Sir, please install CCTV. I'm saying, yeah, okay, I'll see to it. Again, you communicated. Achha, I'll see to it. Twice, 4 times we communicated. Now you tell me, if your suggestion management is not listening only, you tell me whether you will communicate to me again for the same matter. Write in the chat whether you will communicate. No, let it go to hell. I don't care. Boss, you are the auditor. I'm the client. Let it go to hell. Then, any significant changes in the governing body. Imagine Deepak was the auditor. He came and informed to me. He came and informed to my one director. The director left the company. Then he informed to another director, sir, your ICS is weak. He left Mumbai only. Okay, he informed to another director. He left India only. He informed to my wife. My wife, example, my wife did not leave. So whenever the auditor is informing, there's a change in the governing body. Then you at least bother you not informed. These are the factors which affects the communication. Okay. What are the question was what are the factors which affects the mode of communication? So these are the factors. Those are the two questions. Then third, this came in the exam. How as an auditor you will communicate the matter justifying your independence. Spelling mistake, independence to teacher. So ideally, auditor has to be independent. So you need to satisfy the teacher that boss, you are independent. So what will you say? In case of listed company, the auditor shall communicate with TCWG a statement that the engagement team and the others in the firm or network firms has complied with the relevant ethical requirements regarding independence. So if you are auditing a listed company, you say my firm, my network firm, everybody has complied with all the relevant ethical requirements. And all the relationships and other matter between the firms and network firms and the entity which may have thought to bear on independence shall include total fees charged for audit and non-audit services provided by the firm to the entity and the component controlled by the entity. Whatever fees we have charged, whatever fees we'll be charging, whatever audit fees we'll be charging, whatever non-audit services we'll be charging, it has been disclosed to the management and related safeguards have been applied to the element that the to eliminate it. The mistake is eliminate. This is eliminate. To eliminate the threat or to reduce them to an acceptable level. So in case if imagine my one of the partner wife has bought shares in the company, if you know you two can't buy any shares, the partners can't buy shares, but the relative can buy. Anybody any idea what's the limit for relative? Up to what amount the relative can buy? Anybody must have studied at inter level. 1 lakh, up to 1 lakh rupees, correct, up to 1 lakh rupees. So if she has bought up to 1 lakh, it is okay. We have given a disclosure. If it has more than 1 lakh, we have told her to sell the shares, keep the limit as 1 lakh. So we have taken all those steps to make sure that we either eliminate the threat or we reduce them to an acceptable level. Either we eliminate the threat or we reduce them to an acceptable level. Okay. So question 1, 2, 3, all questions are important as a 260. So we have done 250, 260. If you have got the notes, you read from the notes, or else I'll be slowly scrolling the screen. Okay. I'm sitting here only, my video will be off so that you can easily concentrate and read. So read 219 and 260, then we do other two channels. Okay. Read. Done. So we have completed 250 and sorry, we have completed 260 and 290. 260 was communication with TCWG and we completed 290 in joint audit of financial statement. Okay. Now let's do two more essays. Now we are doing 250 and 402. Let's do 250 first. It says consideration of laws and regulations in audit of assets. What will you say? Consideration of laws and regulations in audit of financial statement. Consideration of laws and regulations in audit of assets. This came in this attempt, September attempt. First question. What are the responsibilities of management for compliance of laws and regulations? And give examples of policy and procedure for prevention and detection of non-compliance of laws and regulations. So it says it is the responsibility of the management with the oversight of TCWG to institute policies and procedure and system to ensure compliance with laws and regulations. So management will be responsible with the oversight of TCWG to frame the policy whether all the laws are complied or not. Because to a company, a lot of laws are applicable, whether they are complying or not, it is a duty of management to check, to make the policy for that. What policies they will include? Sir, the code here is mid-mean, mid-mean. Everything ka first alphabet, mid-mean. And monitoring the legal requirements and ensuring that the operating procedure designed to meet these requirements, monitoring the legal. I, instituting and operating appropriate system of internal control. D, developing, publicizing, and following the code of conduct. Everybody should follow code of conduct. Monitoring the compliance of code of conduct. Ensuring that employees are properly trained and understand the code of conduct. One more M, maintaining a maintaining a register of the significant laws and regulation where the entity has complied within its particular industry and a record of complaints. So the code here is mid-mean. E will be there. Engaging legal advisor to assist in monitoring the legal environment. So who is responsible, sir? Management is responsible. What are the examples? What are the examples of policy and procedure? Mid-mean. This came in exam. Second, sir, what are the responsibility of auditor in relation to non-compliance of laws and regulations? What are the responsibilities of auditor in relation to non-compliance of laws and regulations? Number one, the auditor is not responsible for preventing and detecting non-compliance. It is not my job. If you have not paid GST, it is your problem. If you have not deposited TDS, your problem. Deposit TDS return is not filed, your problem. GST return not filed, your problem, not my problem. The auditor guy is only one duty to obtain reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error, whether due to fraud or error. In conducting the audit of FS, the auditor will take into account the applicable legal level framework. Like to a company, see, I don't have to be well versed with all the laws. I have to be well versed with those laws which are applicable to my client. Like for example, it's a listed company, so SEBI would be applicable, but maybe FEMA would not be applicable if they're not doing import export. But if my client is doing import export, then FEMA would be applicable, but SEBI would not be applicable because it's an unlisted company. So whatever laws are applicable to your client, you have to have a take into account the applicable legal and regulatory framework. Then I've written important. This also is a separate question. Inherent limitations on the auditor ability to detect misstatement is greater when the law and regulation relating principally to the operating process not captured by the entity's financial reporting system, like child labor law, Factories Act. This can never be detected by the FS or Tally or SAP because child labor में तो there's no accounting entry. Like PF में you pay the payment of PF, right? So PF Act का compliance I can check. GST में you pay GST, I can check GST का compliance. But Child Labor Act, Factories Act, Maternity Benefit Act, Pollution Control Act, all this ka to I do not know. So the inherent limitation will be higher because I will not be able to detect it. Non-compliance may also involve the conduct designed to conceal it. If management has hidden only everything, if they have taken bogus bill, if they have taken GST ka credit, bogus GST credit, I will not be able to detect it because I take only reasonable assurance. I don't do full assurance. Then, whether an act constitutes a non-compliance is ultimately to be decided by court of law. Whether it's a compliance or a non-compliance, who will decide? Court will decide. Then, non-compliance with laws and regulations may involve financial reporting issues, imposition of fines, penalties, and auditor adjustment regarding integrity. I can say, okay, boss, management is chore, they are not doing work properly. So this is my judgment. Question number 3. What are the indicators of non-compliance? So one was management ka responsibility, second was auditor ka responsibility, third is indicator. How you can say there's an indicator that non-compliance is a, sir, investigation by a regulatory organization, CBI ka रहे, CID का रहे, income tax का रहे, payment for services or loans to consultants, related parties, employees or government employees. You are making payment. Why? There's no transaction still you are doing. Boss, there's a non-compliance. Purchase at a price either above or below the market price, either high price or low price you're purchasing. Unusual payments in cash or purchase in the form of a cashier check. You know, the 10,000 tak it is allowed, but above 10,000 is disallowed. The per day, cash payments. Then unusual payment towards legal and retainership fees. Lawyer, you are making payment. Obviously, there's non-compliance of laws. Why would you make payment to the lawyer? Then unusual transaction with the companies in registered in tax havens, Croatia, Mauritius. You are doing a lot of transaction with them. Then payments made without proper exchange control documentation. Adverse media comment like Kingfisher, Vijay Mallya. There's non-compliance of laws. Then fourth, what are the audit procedures where non-compliance is identified? Now, first question was management ka responsibility. Second question was auditor ka responsibility. Third was indicators of non-compliance. Fourth is now there's a non-compliance. What will you do as an auditor? What are the audit procedures? So, sir, you will first obtain the understanding of the nature of act, the circumstance in which it was occurred, what act has occurred, and why it has occurred. Further information to evaluate the possible effects like fine would be there, penalty would be there, or disclosure would be required, or need to qualify. Then consider whether any fine would be levied on the company, whether they need to give some disclosure in the FS, or I need to qualify the report. The auditor should evaluate the implication of non-compliance, including the auditor ka risk assessment and the reliability of WR and take appropriate action. Nothing more. When non-compliance have been observed, they are not complying the law. So whatever WR we have obtained or whatever I have considered wrong, okay. Now you tell me whether those WR will be correct or incorrect. Will it be right or wrong? Whatever WR we have obtained, it will be right or wrong. Tell me. Whatever non-compliance I have observed, it will be wrong. So my risk would be high now. The WR I will can't rely because was non-compliance is there and whatever data they are giving me, it is wrong only, sir. Then, if the auditor suspect that the non-compliance, that there may be non-compliance, the auditor shall discuss with the management and TCW should discuss. If the management and TCW does not provide sufficient information, the auditor should consult with the legal expert, management expert or my expert. Then, if the sufficient information on non-compliance cannot be obtained, the auditor should withdraw from the engagement if it is permitted. If you see what there's a non-compliance, what you should do, you should withdraw from the engagement. Then, if withdrawal from the engagement is prohibited, you shall consider modifying the report as per SA 705. If you think was withdrawal is prohibited, what you should do, you should withdraw from the report if it is possible. Not possible, qualify that. Fifth answer. How will you report in case of identified or suspected non-compliance? Sir, reporting to first TCWG. Whom you will report first? TCWG. First one. The auditor shall communicate with the TCWG about non-compliance of laws and regulation. If TCWG is involved, communicate with the next level. If no next level exists, obtain legal advice. Number two, members. How would you report to members? In the audit report. So either you can give qualified opinion or adverse opinion. In case of scope limitation, what you can give either qualified or disclaimer. If there's a scope limitation, unable to obtain some. So reporting to regulatory bodies, like we have done 143.12. If there's a non-compliance identified, you should check whether it is required to communicate with outside authority, like CG for your report that one CRP you have to report to the CG, right? So this is about reporting of to regulatory bodies. Understood? So five questions are there: management ka responsibility, auditor ka responsibility, indicators of non-compliance, audit procedure for non-compliance, and reporting. SA 250, consideration of laws and regulation audit of financial statements. I have taught you 5 questions, correct? Again, I say management ka responsibility, auditor ka responsibility, indicators, procedure for non-compliance, and fifth, reporting. Read these answers. This is September 25 ka question paper. Question number 2A. Okay. This is full story, full story it is. This is the question. Tell me, which answer will you write? Tell me, which answer will you write? Everybody. Question number 2, auto response. See, papers are easy. They just give you story. Just look up to the last four. What are they asking? They're asking direct question. This story has nothing to do with my answer. There's the question directly. What are the auditor responsibilities in relation to compliance with laws and regulation? If I open my notes, question number 2, see the question. See the question. What are the responsibilities of auditor? In that auditor responsibility in relation to non-compliance with laws and regulation. Same question. Essay 250. Understood. I trust the notes I'm telling you. Trust the notes. Keep on revising again and just solve past people. You will clear. Okay. 250 is done. Then let's do one more. Then you read 402. Audit consideration relating to an entity using service organization. What it says? Audit consideration relating to an entity using service organization. Audit consideration relating to an entity using service organization. Let's make you understand with an example. AB Limited has given stock or a fixed asset or payroll to HDFC. Okay, and they have taken given a loan. Okay, and Neha is the user auditor. Yogesh is my service auditor. AB Limited is called as user entity. Service entity is HDFC, and this is called service auditor. When the question talks from the perspective of Neha, user order, you will use SA 402. When the question talks from the perspective of Yogesh, you will be using 3402. 3402, 402. We have not done 340. It's pending. I think probably tomorrow or maybe on Monday class, I'll be doing that. Now, the question is why will a user auditor obtain an understanding of the services provided by service entity? So it's not a reporting essay, like there's no non-compliance as such. It's basically a procedural essay. Procedural essay. It says audit consideration relating to an entity using service organization. So you are the auditor of AB Limited. They're using a service from HDFC. So in my example, stock, fixed asset, or maybe payroll, they've outsourced something. Okay. The user auditor shall obtain the understanding of how user entity uses the services of service entity in user entity operation. So for me, Acha sir, you have outsourced your payroll to them. So salary is distributed by them. PF is deposited by them. So it's an integral part of your process. I need to understand. So what I will consider NMDR. What I will consider NMDR. N. The nature and significance. The nature and significance of the services provided by the service entity. M. The nature and materiality of the transactions processed and its effect on user entity of financial reporting process. Nature and significance of the services. Nature and materiality of the transaction. D. Degree of interaction between the user entity and the service entity. Degree of how many times the transaction is happening. R. The relationship between the user entity and the service entity. NMDR, nature of the transaction, materiality of the transaction, degree of interaction, and the relationship. So 4 points I will consider. Then question number 2. What procedures a user auditor will perform in 402? What procedures? So the user auditor, in my example, Neha, will first understand the user entity and internal controls relevant to the audit has been obtained to provide a basis for the identification assessment of wrong. Wrong basically means risk of material missing. So you check the internal controls at home. Like we have outsourced salary. Na? So for salary, what internal control it is? Like every month attendance register is going by a mail to them. Okay, or maybe you're giving physical register to them. Mr. Ram is there, he's dropping the register, whatever it is. You first understand the internal control at home. If you are not satisfied, if he is unable to understand, what he will do, he will follow following procedure. Obtain type 1 or type 2 report if available. Contact HDFC Bank. Auditor will contact HDFC Bank through the user entity to obtain specific information. Or what you can do, you can visit HDFC Bank. So you can visit the service entity and perform procedure that will provide the necessary information about the relevant controlled service entity. Or use another order to perform procedure that will provide necessary information about the controls at service entity. Maybe like Yogesh, you can call Yogesh and say, Yogesh, my client is saying that they have outsourced to your company. Can you tell me whether you have received those details or not? How are you processing? I want to understand your company ka internal. I'm not interested in HDFC Bank profitability. Neither I'm interested in the sales. I'm interested in whether whatever my client has given to your client, whether they have received or not. So four steps are there. First, opt-in type 1, type 2 report if available. Number 2, contact the service entity. Number 3, visit the service entity or contact service order. Correct. Service order. Will contact service order. Okay. Explain the types of report available at service entity. What are the types of report? Type 1 report, type 2 report. What will you say? Type 1 report, type 2 report. So type 1 report says report on the suitability of the design on the system of accounting and internal control. Basically, ICS is there. An opinion by the service organization auditor that the description is accurate, the system controls have been placed, are in operation, and the systems are suitably designed to achieve their stated objective. Type 2 me, what will you say? So the report on the suitability of the design and operating effectiveness of the system of accounting and internal control. ICS is there, type 1. ICS is there and it is effective, that is type 2. What it is type 2. Then, how will you report in case of sub-service entity? Now, what is sub-service entity? AB Limited का audit you are doing, they outsource it to HDFC Bank. Now HDFC Bank outsource it, let us assume Deepak Limited. So for us, for my auditor, I am user entity. HDFC Bank is service entity. Deepak is sub-service entity. Deepak is sub-service entity. Answer is very simple. Whatever thing you are following for service entity, same thing you will follow for sub-service entity. Same thing will follow for what? Sub-service entity. It says if the user auditor plans to use type 1 report or type 2 report. Type 1 ICS is type 2 ICS is there, but it is effective. That excludes the service provided by sub-service organization and the services are relevant to the audit. The user entity FS, the user auditor, that is Neha in my example, shall apply the requirement of SC 402 with respect to the services provided by sub-service entity. With respect to services provided by sub-service entity. Understood? Now, how would you report in SA 402? What it says, how would you report in SA 402? If the user, Neha in my example, is unable to obtain sign regarding the services provided by service entity. See, procedure is there, but still I am not getting satisfaction. HDFC Bank is not replying only. We went there, they're not opening the door only, they're not allowing us. What I should? Paste. You should modify the opinion as per 705. Remove your green pen from the bag and attack. What will you do? Modify. Modify the report as per 705. The user auditor shall not refer to the work of service auditor if it is containing unmodified opinion unless required by law or regulation. Now, if it is my unmodified opinion, I would not write in the report the service auditor name. But if I am modifying the report, why I am modifying? Because service auditor gave me some different details. So I need to write his name in the report to make modification more clear. If I'm writing his name in the report, I have to take his consent also. Remember that one. If you're adding a service auditor name in your report, you have to take his consent. Such reference does not diminishes the user auditor responsibility for that opinion. Responsibility will be yours only. User auditor, your responsibility. Okay. Before giving the reference from the service auditor, his consent should be obtained by the user auditor. I've written this. Now see, opinion. If it is unmodified, no reference required, no name will be required unless required by law regulation. If it is modified opinion, reference to make modification more clear. Reference to make modification more clear. But if you are referring it, you take his consent. Okay. Now, I have written something like refer question 11 in SAE 3402 notes. This was the latest question, September, May. The question came. It was a collab of 402 and 3402. Collab of 402 and 3402. Because see, content is same, answer is also same. But the only point here is when I answer from start order point of view, I write 402. But when I answer from like service order point of view, I write 340. Okay. So now you will read 250 and 402. If any point you have not understood, please message in the chat. If I show you the analysis, May 24, 5 marks. November 24, 0. May 25, 10. September 25, 10. So 2A was law wala answer, non-compliance of law. 6 I need to check. I don't remember what is 6. I'll check. Just check 6. First you read. Read 250. This we have done. Question number 2 came in the exam. And then read 40. Okay, read. Done. Last essay of this chapter. That's essay 240. ठीक? Essay 240. So it says, as per essay 240, the auditor का responsibility in relation to fraud in audit of FS, relation to fraud, 240, 240. Okay. So very simple. So we will be reading the report. So that's the reason you do it at the last of 240 as a less probability. It came, I think, in May 24. But now, more important can come in MCQ. Misstatement in FS can be intentional, which is called as fraud, and unintentional is called as error. The primary responsibility to detect misstatement is of the management, and the secondary is of the auditor. Correct? If the misstatement is existing in the FS, what it should do, and if it is not rectified by the management, the auditor should modify the opinion, or if it is withdrawal possible, you withdraw. Now, common answer on detection of fraud. So a lot of questions are there. They will get a common answer. If you are confused in the exam, what you should do? First, you write as per essay 240. What is the name? The auditor responsible in relation to the fraud in audit of financial statements. To write the name. The auditor responsible in relation to fraud in audit of financial statements. Then number two, copy the question. What is the question? Right? Write this line. If as a result of misstatement resulting from the fraud or suspected fraud, the auditor encounters exceptional circumstances, what he should do? That brings in the question that way to continue. What he should do? Determine any professional or legal responsibility is there to report the person to the regulatory authority or to persons who made the appointment. So if you're finding a fraud, so please check whether there's any professional responsibility to report to the some authority or to the person who appointed him. Like for example, if the fraud is of 1 CR, you go to CG. But if it is not 1 CR, you go to board. And then you write in the CARO also clause number 11, right? Check that. Consider whether it is appropriate to withdraw where withdrawal is legally permitted. Check if you can withdraw it out. If you withdrawing, discuss with the management and the TCLG the reason for the withdrawal. Why are you withdrawing? And same as 3A. What is 3A? This one. Determine any, this is 3A. Determine any professional legal responsibility required to report to the authorities or to the person who appointed. Like if you're resigning it, so you have to file ADT 3. Correct? If you're a listed company, you also have to inform to BSc, MSc, wherever it is listed. If it is insurance company, you have to inform to the IRDA. Okay, if you're working in banking company, you have to inform to RBI. Check whether any responsibility is there. Then, as per section 143.12 of Companies Act, if the auditor comes across a fraud of minimum 1 CR, he should report the matter to audit committee board and CG inform number 82. This line will copy. As per clause number 11 of CARO 2020, the auditor shall report if any fraud is committed on the company by the officer or employee of the company. So what we have made a common answer. If you are in the exam hall, you do not know what to write. So first you write the name of the essay, then you copy the question, then you write about withdrawing it, then you check A, B, C. Then if you think you are withdrawing it, you need to check communicate with the management. This is the reason for the withdrawal, and this is same as C. Then you write 143.12 character, then you write CARO. So in the suggested also there has been this pattern. Now copy it from the suggested. Then it says, what are the sources of fraudulent financial reporting and misappropriation of asset? So generally, what are the sources of fraudulent financial reporting and misappropriation of asset? We call this a FFA. This we call this Maha. So fraudulent financial reporting, misappropriation of asset. When you read from the module, there are two answers. But in the exam 2, they will not ask. They'll ask only one. Correct? So the code here is toilet eye. Whether they ask about misappropriation, whether you talk about fraudulent financial reporting, what are the sources? You say toilet eye. First, it is a complex or unstable organization structure. Obviously, people will do fraud. Complex or unstable organization. O, if you have an opportunity to do fraud, you will do it. I, internal controls are deficient. L, low moral or initiative among the senior management. E, excessive pressure exists on the management. Toilet. E, the relationship with the management and the current officer, it is not restrained. A, attitude rationalization. I, incentive pressure. It's a common answer for whether they are asking why the fraud happened because of MOVA, why the fraud happened because of fraudulent transfer. There are extra points also, but I have taken common points. Toilet I. Then explain how FFR may be accomplished and the technique of committing fraud by management overriding controls. Like imagine if it is my store, I have made a proper internal control system, like there's a barcode system, proper billing system is there, then gateway watchman is there, CCTV, everything is there. Okay, but my mom says, okay, maybe I need 5 kg sugar. Now you tell me, will I ask my accountant to make a bill? First, take the payment from mom, ask her to come and stamp the watchman will stamp the bill, and then the sugar will move out from the store. Will I do all this? No. I just say to accountant, just send 5 kg sugar to the home. So he is removing the goods without routing it through any internal control system, no stamp, no billing, nothing, right? So what I did, I overrided the control. Management overrided the control, means compromise the control. So it says fraudulent financial reporting can be accomplished via mean manipulation. See, fraudulent financial reporting basically means the balance sheet basically. So how can you do? Via manipulation, falsification, altering the accounts in record, or supporting the documentation upon which FS apply. I. Intentional misapplication of accounting principles relating to amounts, classification, manner of presentation, or disclosure. M. Misrepresentation or intentional omission from the FS or events or transaction or significant information. This is called as MIM. Manipulation, intentional manipulation, and misrepresentation. This is called as how it is done. Now, what are the techniques for fraud? The code here is COREI. Then, concealing or not disclosing a fact that could affect the amount recorded in the FS. What it says, concealing or not disclosing a fact that could affect the amount recorded in FS. O. Omitting, advancing, dealing the recognition. You are doing a fraud. Either you omit it only, either you book it in the this year, earned in April, you book it in this, booking it this year. You have earned in March, but you're delaying it, taking it into next April. That means the next year. Recording fictitious journal entries near the year end, bogus billing, which we generally do. E. Engaging in complex transactions that are structured to misrepresent the financial position, like Adani ka fraud, Hindenburg Baratin. Full complex transactions there. A. Altering the records and terms due to significant and unusual transactions. And inappropriately adjusting assumptions and change, like provision for bad debts. For Deepak, I am saying it is 40%, then Hajit Kire is 10%, 70%. Then after some time, no, Sukesh Kire 10%, Hajit Kire 100%. Yeah, again and again change. So this is core EI. Core EI. Okay? And there's one answer. Refer question 1B, May 25 ka suggestion. So there was a new question in question number 1B, May 25 suggested. Understood? Chapter is over. Okay, there's a mistake here. Significant deficiency in internal control is an audit evidence chapter. 265. This is 265. You know, 260. By mistake, I have written 6A. No, it came from 5 marks only. 6A is on essay 265. That we're going to do in the next chapter. I think it is in maternity chapter 265. Okay, there was only one question. This will be doing it again when we do essay 260. But have you understood all the 5 essays? 240 fraud, 250 loss, 260 communication with EWG, 299 joint audit, 402 service organization. Understood, guys? Cool. Have you understood? Have you got the notes in the group? Have you got the notes of this chapter? You have got the notes, right? Okay, great, super. So you can revise it from the handwritten notes and just solve the question from your teacher ka question bank or from the module ka behind. Just solve the question bank today. So you're at par with me. So we have completed 9 chapters, 50% syllabus done. Okay, let's take a 5 minutes ka break. I'll leave you around 4:40, 4:45. We'll be doing ESG chapter, SDG and ESG, chapter number 10. Okay, let's meet in 5 minutes. 4:50 we meet. Okay. Okay. Now let's start SDG and ESG. SDG and ESG, Sustainable Development Goals and Ethics, Social and Governance Responsibility. Okay. If you see the weightage every time it is coming in the exam, if you see this weightage ESG 4, 4, 5, 4, every time it has come in the exam, guys, every time. Plus 2 mark it will be there in MCQ. So you can't skip this, huh? For sure you can't skip this. Now what it says. Now, so there are 11 questions. First one, explain sustainability, sustainable development, and this we have not done, right? We have done this. We did this, right? SDG. Yeah, already done it is. Yeah, already done. Oh yeah. Hmm. Then let's do this part. Forensic accounting investigation. Yeah, SDG is done. I got recall because I same example I was giving. So I was thought we have done this. We are doing investigation and due diligence in forensic. Now see. So investigation again, 5 marks. Again, it is getting drained. 1 second. Battery is getting drained. There's some problem with my iPad. Charged. Hmm. So we are talking about investigation and due diligence first. So there are 3 topics: investigation, DD, and forensics. I think last attempt May investigation came. Prior to that, forensics came. Hmm. First, we talk about DD. So there are 3 parts. First, DD. Due diligence is used to investigate and evaluate a business opportunity. It is performed in case of what all? Corporate restructuring, venture capital financing, lending, disinvestment, public offers, IPO, FPO. That is DD. How audit differs from DD? So it is independent examination of financial statement. It is a detailed review of all the aspects. Your CA plus COP will do, your DD expert will do. Sir, it is true and fair view, here it is true and correct view. Here it is reasonable assurance, here it is absolute assurance. Here you report to members, here you report to appropriate authority. Here it is for a fixed period, here it is for any period. Here it is statutory, that is counting year April to March, it's mandatory. You have to do it. Here there is no such requirement. Here there is no such requirement. Okay? Sir, what is the importance of DD? To confirm that the business is what it appears to be. What it is? To confirm that the business is what it appears to be. Like it looks like. I'm saying that my valuation is 500 crores. My company ka valuation. So I'll call an DD expert. So he has to prove that the valuation of AB company is 500 crores. To identify potential deal killer defects in the target company. Like some negative points are there, some legal cases going on. Somebody has filed a case on you, or some income tax already is going on. Anything. That's called deal killer defect to gain information that will be useful in valuing the assets of a company and to verify that the transaction complies with investment organization criteria. So these are the importance of DD. So what is DD is this answer. What is importance? This answer. Okay. Okay. So here I have given in the notes the marking from my book. Okay. We'll do it from the module because this is marking from my main book. So from my main book. So let's do it from the module. I'll just tell you where it is. So this is my third question. So I'll tell you what is the first one. First one is the definition of DD. Second one is this importance of DD. There was a difference of DD and audit also. Then this is the answer. What is classification of DD? Types of DD. commercial and operational due diligence, which talks about like operations of the company. Then we have one more. They are missing personal due diligence. Personal basically means here. Personal means public, the staff. Personal due diligence basically means the staff of the company, skilled and skilled. Then we have tax diligence. Then we have financial due diligence, like whether the profitability is maintained or not. I, information system due diligence. L, legal due diligence. E, environmental due diligence. So here the code here is CPT 5. C, commercial. That's on page number guys 17.5 module 17.5. So in my book also same answer is there. It's just that we delete the redundant content, waste content. I'll be giving you marks on the mark. Okay. So later on when you're watching the recording, you know what to study. CPT 5, commercial personnel. T is tax. F is financial. I is information system. L is legal. E is environment. CPT 5. Now, question number 4. So generally in the exam they have asked this. What do you check for due diligence? In the exam, they have asked for financial. Whatever DDK they will ask, you'll have to write this answer. So I will check the description, the history of the business, the background understanding of promoters. I'll check accounting policies, MIS, management structure, trading is both past and the recent, like last year and the last to last year, assets and liabilities, income tax assessments, cash flow, future profitability, and commercial objectives carried out by the organization. This is a 4-mark answer. So this can come in the exam. What things you will check for financial due diligence, or what thing will check for any due diligence. This is a common answer. Now they have explained one by one. Okay, one by one. You can ignore all this. I'll tell you which answer to remember. This one. Fifth answer is this one. Hidden liabilities. With this hidden liabilities. The object of DD will look into any hidden liabilities, and the second one will be overvalued asset. Overvalued asset, this one. This becomes the sixth answer. Hidden liabilities or overvalued asset. Hidden liability. Now there's a list. 7-8 points. Here also list is a 7-8. So previously in the exam, what used to happen? This was both. It was like a 10-mark answer. Old scheme. Very old. Now it has become 4 or 5-mark answer. So either they can ask you hidden liabilities or they can ask you overvalued asset. Now, how to think? See, you can write in your own words. Absolutely fine. This chapter is a very generic chapter. Full own words where you can write. It says hidden liabilities. The company may not show cause any notices which are not matured into demand as contingent liability. This may be really important. So contingent liability not shown in the books is a hidden liability. Then easy wala part. Product and other liability claim. Like imagine entire laptop got corrupted. The full batch of laptop production got corrupted. So the liability will come on the company. Any tax liability. So if you're talking about tax, you talk about sales tax. You talk about custom duty. So all related together. Tax and direct and indirect. Then sales tax assessment. Then custom duty assessment. Agreement to buy back shares sold at a stated price. There could be future lease liability, there could be environmental problems, unfunded gratuity, huge labor claims, unresolved labor litigation. So one by one, point form, upside down, you have tried all simple points. Just remember 6 to 7. That was for hidden liabilities. Sir, what is overvalued asset? In the books, you are showing 100 rupee, but actually it is maybe 2 rupee, 1 rupee. Like for example, says uncollectible receivable. Imagine Deepak is my debtor. I know that he has gone to Dubai. He will not give me money only. 3 years have passed, 4 years have passed. So it becomes time barred debt. Still, I'm showing in the book the amount is receivable. Still, I'm showing it is my asset. It is uncollectible receivable. Then any obsolete, slow, non-moving inventories, all the inventories valued above NRV, underused or obsolete plant and machinery. Then litigated assets. There's a dispute property. Still, we are showing in our books it's our asset. Investment carried a cost, though the realized value is much lower. Investment carrying a low rate of return or income. Infructuous projects like bogus expenditures. Group company balance under RICO and intangibles of no value. So all easy wala part you should remember. All easy wala. Then question number 7. What will you check for cash generation? What will you check for cash flow? How do you see a company makes a cash requirement, fulfill the cash requirements? For number 1. Is the company able to honor its commitment to its trade payables? If you remember working capital cycle, trade payables, trade receivables, stock, all those things were there. So see, is the company able to make commitments to trade payables, the bank, government, other stakeholders? how well the company is able to turn the trade receivables and inventory. So trade payables, trade receivables. You got the money. How the company is deploying its funds. Now, are the funds lying idle in the company or they're reaping maximum benefits? Fifth, what is the investment pattern of the company and are they really easily realizable? Are they easily realizable? So these 5 points have come in the exam. How would you check a cash flow or a cash requirements of a company? You have to write this answer only. If you don't write this answer, you will not get marks. Okay, number 7. Then eighth, what are the contents of DDR? Question number 8, what are the contents of DDR? So I write here a code TOBA CPT file say. TOBA CPT file say. T. Terms of reference and scope of verification. O. Objective of the business. B. Background of the target and the company. A. You will say assessment of. So this is what assessment of CPT file. Commercial, personnel, tax, financial. This is mathematics personnel. Okay. Information system, legal, litigation. E is environment. Okay. So assessment CPT file. S is your SWOT analysis. S is your SWOT analysis. And E is your executive summary. So I have written a content. What are the contents of DDR? TOBA CPT files. TOBA CPT files. Over. So your DD का part is over. So I quickly recall from the module, there are 8 questions on DD. First is very easy definition and distinguishing between audit and DD. Number 2 is what is the importance of DD. Number 3 is classification of DD, that's CPT file. Number 4 is about what are the content, what will you check for DD. So you write about like management structure. I will check about background of the company and the promoters, accounting policies, management information system, cash flow patterns, assets, liabilities. Okay. Number 5th, what will you check for hidden liabilities? Number 6th, what will you check for overvalued asset? Number 7, what will you check for cash flow? Okay, and number 8, what are the contents of DDR? Taba CPT file say. Understood? So we have done this from the module. Now, so my next part is forensics. So let's see how much we can finish by 4:40, 4:45. Page number 17.58. 17.58 forensics. So I have completed DD wala part, now we're doing forensics. So few marking that basically to read. Forensic basically means suitable for use in court of law. This is the definition. So what does forensic accounting mean? Just put a tick mark. The definition they have not asked, they will not ask in the exam. Generally, they should not ask. It's more conceptual paper. It's all case-based paper, but you can't trust ICF for this. So you should just mark definitions. So one is forensic accounting a definition. It says the integration of I. I means accounting, auditing, investigation. I yields the specialty known as forensic accounting. It is a study and interpretation of accounting evidence, application of methods to track and collect the forensic evidence. That is called what? Forensic accounting. What it is called as forensic accounting. Then number 2, red flags. So like girls must be known as red flag. Okay? Red flags means, what does red flags mean, sir? Impending danger. We are not saying that fraud will happen. Fraud may happen. What will you say? Fraud may happen. It says red flags are the indicators or warning of any impending danger or inappropriate audit behavior. So there are 4 kinds of red flags. It says it does not indicate the existence of fraud. However, or indicate that the caution needs to be exercised. Caution needs to be exercised. What are the four kinds of red flags? We call it a FABO. FABO. F is a financial performance red flag. A is accounting system red flags. B is behavioral red flags. O is operational red flags. Financial accounting system, behavioral operation. FABO. What is called as FABO? FABO. And this is cancelled. Now, so my first question is, how is forensics differ from audit? So I take an example of forensic wala. So forensic, we say it is object is what? Discover facts and evidence. There we say it is true and fair. Number two, here the focus is narrow. There the focus is broader. Approach, focus testing to confirm. Here, there we follow sample based and details. Here we follow detail. Target, you identify and confirm the nature of violation. There we give financial statements with reasonable assurance. Here, scrutiny and analysis is required, fact finding, interviews. There you just have to be following professional skepticism. Professional skepticism. Presumption is neutral. Here, presumption, here you skills may you say it is inquiry, observation. This is professional skepticism, do professional care. Okay. Here, outcome, you have to present the evidence to the court of law. They will judge. There we give opinion. So if this have also come out 2 or 3 times difference between forensics and audit. Difference between forensic and audit. Okay, let's do again. Forensics में what it is about facts and evidence. There it is basically reasonable assurance on the FS. Number two, here the focus is narrow, there it is broader. There we check FS. Here we talk about it is conducted by an auditor, that is conducted by forensic professional. He has to have a scrutiny, analysis, fact finding, interview skills. He must have observation, inspection, computation, analytical review, all skills. Okay, then he has to be neutral here. Here they have to be following professional skepticism. Here you have to present it in the court of law. Audit may it basically you have to give an audit report, opinion basically. It has come in the exam. Question number 1. Oh, here the distinction. This came in the exam. This was it. Okay. Then next process. How would you do forensics? How would you do forensics? Okay. So this has 6 stages. So this is one answer. Then in the exam, this separately was asked stage 3. Stage 4 have been asked twice or thrice. Stage 5 have been asked. So stage 3, 4, 5 can also be a separate answer. Stage 3, step 3 was asked in this May wala attempt, obtaining evidence or answer. Okay, let's first understand the brief answer. It is process of forensic accounting. There are 6 steps to it. So imagine, can you tell me forensic audit, okay, will be done by forensic professional. Like I'm a forensic professional. Okay, I've done that course of forensics and I have the degree and the membership number of forensic institute. Now, like we say, start audit is mandatory for a company. Is forensics mandatory or voluntary? Can you write in the chat? It's mandatory or voluntary? Forensics is mandatory or voluntary? It's voluntary. Okay. Forensics will happen when a fraud has happened. So it can be, I mean, the forensic professional is not appointed by the company, it can be appointed by anybody. Imagine a bank has given a loan to lands. They are not repaying. So they're suspicious of fraud. Okay, forensic professional AB, go and do it. So I've been appointed by a bank. Imagine there is a partnership form. There's a dispute going on regarding the profitability. Some are saying it is profit, some are saying it's not a profit. There's a loss. So partner called me, okay, AB, go and do the audit. So it's basically voluntary. Anybody can call. If anybody can call me, I will just first go and meet them. What is the scope? How much I have to check? That is called as what? Initialization. That is called as what? Initialization. Next, what I will do, I will develop a plan. What I will do, I will develop a plan. I'll come back to my office. I will sit with my team and say, this is the assignment. This is all we have to do. It is called developing the plan. Then, sitting our office, we will try to gather evidence. Sitting at our office, we will try to gather the evidence. It is called what? Obtaining relevant evidence. Like it is called desk review. Off-site. Yeah, in my office, we are gathering the evidence of the person who is suspicious to be fraud, who have conducted a fraud, who may have conducted a fraud. Then I got the evidence, I put the evidence on the table, I perform the analysis. What it says, I perform the analysis. Now, when I perform the analysis, what I got, I saw a fraud. It has happened. I will report. I'll prepare a report. Now, because your job is not over here, audit me, your job gets over here only. Just give the report, finish. But forensics, what you have to do, you have to present that in the court because the judge will be telling them whether the person is guilty or not guilty. Acha, he is guilty. Why? Because the forensic professional give a report. So you have to be present in the court. Boss, you have to be present in the court. So, guys, there are 6 steps. Go with the story, okay? The client has called us, we go and meet the client. Initialization. We discuss the scope, we came back to our office. It is called as what? Developing the plan. Developing the plan. Now, sitting in the office, I told my team, okay, get the evidence, gathering evidence. Once evidence is together, we place it on a table. We started doing analysis. After analysis, what we came to know, oh, that fraud has happened. Fraud has happened. We came to the fraud has happened. Then you report. What will you do? You report. Once reporting is done, you will present that in the court. It's called court proceeding. Okay. 6 steps. Very important answer. The full answer also, plus the 3 different, inside steps also. If it comes full answer, just two lines. Two lines. Okay. Just two lines you have to do. So first one is what? Initialization. Number 2 is what? Developing the plan. Third one is gathering the evidence. Fourth is performing analysis. Fifth is reporting. Sixth, court proceeding. Understood? Clear? I hope you have understood. So we'll be stopping here, guys. So we have completed today full general audit analysis chapter, 5 mark weightage chapter. Plus, we have completed half of investigation. We have done the DDR part. We have done half forensics. Half forensics and investigation pending. So in the next class, it will take, I think, around 35 to 40 minutes to complete this chapter. Plus, we'll be doing it, doing with the new chapter also. Okay. So around, because it's a revision session, so I think as per my target, we'll be able to complete, we'll be requiring 3, 4 more classes. We're on 10th chapter right now. Total we have 19. So ideally, I think this materiality wala chapter 1 and digital audio. These 2 chapter I will not be doing in the class. I'll be putting that recorded content on the video, or you can do materiality on your own. Discuss the materiality. This one and digital audit I'll be uploading as a recorded content. Digital. Okay, like full rectification wala chapter, digital audit, AI and all those things. Okay. So my target will be to do 17 chapter together with you guys. So materiality you will do on your own, and digital audit I'll be uploading in English on the channel. Okay. So that you're prepared what is going to happen in the next week. So next week maybe we have a target to finish 7 chapters. Yes, all 7 I'll be doing it. So I'll just revise what is pending. Internal audit 1, code of ethics 2, then bank audit. So bank audit we are not counting right now. 2, prospective is 3, then audit evidence is 4, audit planning is 5. And what is left? Yes. 1, 3. So sorry, you have to do planning on your own. Materiality will be doing in the class. Planning wala chapter. You do it on your own. It's very easy chapter. Material will be doing in the class. So 1 is pending. 4, 5. 1, 4, 5. Prospective, internal, and code of ethics. 6. And bank audit 1, 7. Bank audit will be doing it separately. Okay. So only planning while you will be doing it on your own. Digital audit will be giving you recorded content so that you can watch it, or with my handwritten notes you can mark it up. Rest everything will be done in the class itself. Okay. So we meet in the next class. I think tomorrow there's no class schedule. Sunday also there's no class schedule. We'll be having a test, I think. I hope so, because I got a message that we'll be having a test. So please appear for the test thoroughly in the next class with me. Okay. Done everybody be at par with me. We have done almost 10 chapters. Works with everybody? Okay. We meet in the next class. We continue investigation and we will be doing quality control. Quality control. Okay. Bye guys. Take care. So, hi guys, welcome back to the class. And we missed yesterday because I missed, was not keeping well, and tentatively Thursday also will not be having class because I have a flight back to Mumbai. So Thursday also I'll be skipping, and I have planned Saturday would be our last class. That is today, tomorrow, Thursday, Friday, Saturday. Okay. I'm good right now. So Friday and Saturday we'll take a little longer session. We'll finish off the syllabus. Let's just reconfirm whatever we have finished right now. We have done 2, we have done 6, we have done 7, we have done 8, we have done 9, we have done 10, we have done 13, we have done 14, we have done 15, we have done 17, we have done 18. 7 chapters. Okay. Let's do today Code of Ethics number 19. This is the 12th chapter. Okay. So we are starting with Code of Ethics right now. Please open your book. Code of Ethics there is no notes because I will be teaching you from module. Okay. Whatever is important content, relevant content, clause, part, schedule. So we have a target to finish Code of Ethics today. 12 is done. Then 19, 12, 7. 7 more chapters are pending. Let me count. 1, 2, 4, 5, 6. In that I have told you 2 chapters, digital audit and audit. That you will do it separately. Digital I'll give you the video, and planning you do it on your own. Okay. So 5 more will be doing in the class. So Saturday would be your last. Did you appear for the test? Guys, did you appear for the test? I have given them those chapters ka name. They said that they are preparing a paper for you guys. Now see, I'm teaching this from the module. Okay. Now for sure you'll see this chapter for minimum 17 to 18 to 22 marks. 3 questions in the paper plus 4 questions in the MCQ. For sure you will find this. Few parts are cut basically. We are going for revision quickly. This part is cut, part is cut. First answer says fundamental principles. What are my fundamental principles? The code here is OIPCC. What's the code? OIPCC. Objectivity, integrity, professional behavior, professional competence and due care, confidentiality. OIPCC. Objectivity, integrity, professional behavior, professional competence and confidentiality. These are my 5 principles. In the exam, they have asked separately they have asked competence and due care, and they have asked in confidential. Confidential, I remember. Competence, I think either of it may they have asked one. We'll see what they have asked. Integrity. Integrity talks about honesty, sincerity. The professional accountant. Here we are not saying chartered accountant, we are saying professional accountant. That basically means CA in practice, CA in service. Okay, he should comply with the principle of integrity, which says that he should be straightforward, honest in all the professional business. Integrity implies fair dealing and truthfulness. Then he should not be associated with any report returns which contains what? False or misleading statement. It should contain statement or information provided negligently. He should not be associated which contains omits or obscures required information where such omission or obscurity would be misleading. Now, but if he has given a modified report, if he has given modified report, guys, modified basically means qualified as disclaimer. He would not be considered in breach of the above matters. Now, if he becomes aware of such information, he should what? Disassociate. That means he should withdraw from the engagement. So they can ask us as a short note, okay, write about integrity. I mean, they will make a story, then they'll say, okay, what principles is getting attracted and what principle is getting attracted and what will you, how would you explain that principle? Let's talk about integrity. How do you remember? Integrity, honesty, sincerity. Then objectivity. Very simple it is. So that brief answer is very difficult in the exam because there's only 2 points here. Objectivity basically means there should be no conflict of interest, there should be no biasness. So he shall comply with the principle of objectivity, which requires the accountant not to compromise professional business judgment because of bias, conflict of interest, undue influence of others. Should be performing your duty objectively. Then professional competence and due care. I think yeah, this came in exam. Professional competence and due care. So when you're performing the work, you should be highly competent enough. Like for example, if you're auditing a listed company, you should know that listed company audit will be done by only CA firm who has a peer review certificate. Or if you're auditing a listed company, they should know that SEBI laws are applicable, the LODR is applicable. You should know which act is applicable. Okay. So they should maintain and attain professional knowledge and skill at the level required to ensure the client elements for practicing CA. Employing organization, that basically means CA and service, receives competent professional services. Okay, based on the current technical professional standards and relevant law, and they should act diligently as per the technical and professional standards. Then this came in exam, like write about short notes. You should serve clients with professional competence which requires sound judgment and applying professional law. You should maintain professional competence, continuing awareness and understanding of technical professional business development. Continuing professional, like you should learn, like CPRs, the programs are, you should continuously learn. Like you learned 10 years back, you are not updating yourself, you are not upgrading yourself, so you are not acting diligently. Okay, so this is a short note we should remember. So in the module page number 9.7, please mark this as important because this has come in the exam. Again, it may come in the exam. Then confidentiality. So the facts of one client, the data of one client should not be shared with another. You need to maintain what? Principle of confidentiality. You need to maintain a principle of confidentiality. Now here, uh, generally you will not disclose the facts of one client. So they ask what are the exceptions to it. So the exceptions are first, disclosure required by law. If you remember 143.12, I have taught you that auditor should report the fraud to see if the amount of fraud is minimum 1 CR. So we will explain how the fraud has happened, who were involved, right? He will be giving a lot of confidential details because it is required by law. Second, permitted by law and authorized by client or employing organization. So bank, HDFC Bank was giving loan. Sorry, HDFC Bank was giving loan to Reliance. I was your auditor of Reliance. Mukesh Ambani told me, "Hey, AB, HDFC Bank would be calling you to know the profitability. How do we determine profitability?" Here, I am sharing the confidential details to HDFC Bank, right? About Reliance. Who has permitted me? Client has permitted. Guys, allowed or not allowed? Tell me. Allowed or not allowed? Write in the chat. Allowed because permitted by law, authorized by client. Third, or there is a professional duty. Like for imagine some income tax raid is going on, or maybe some disciplinary proceedings are going on in ICA. They will ask me, so what report they have done, what they have done. So I need to tell them. So to comply with the requirements of peer review or quality review, to respond to an inquiry or investigation by a professional regulatory body, to protect the professional interest of a professional accountant in a legal process, like some cases going on, to comply with technical and professional standards. So what are the exceptions where disclosure is required? By law. Number 2, authorized by client. Number 3, where there is a professional duty to disclose. Okay. Then this was also asked in the exam. When considering confidential information, what you should consider? So whether the interest of any party, including third parties whose interest might be affected, could be harmed if the client or organization consent to the disclosure of the information by the professional accountant. That means whose interest would be affected. You need to consider that. Number 2, whether all the relevant information is known, substantiated to the extent it is practicable. Third, the proposed type of communication to whom it is addressed, and whether the parties to whom the communication address are appropriate recipients. I'm informing to HDFC Bank. So HDFC Bank is appropriate recipient or not. So I need to consider. Okay, this came in the exam confidentially. Last one, professional behavior. Right, this is also important. It may come in exam. This no, this come here. Professional behavior is also come. Behavior. So behavior basically talks about because of you, the entire community pe there's a question coming. The entire community pe there's a question coming. If you're doing something because of you, you're wrongdoing, people are doubting the entire CA profession. It is called what? Professional behavior. He shall comply with the principle of professional behavior, which requires an accountant to comply with relevant laws and regulations and to avoid any conduct that accountant knows or should know might discredit the profession. Might what? Discredit the profession. That means there's a question on the profession. You have not complied with professional behavior. Then, when prompting himself and his work, accountant should not bring the profession into disrepute. He should not make what any exaggerated claim for. Oh, I can do this, I can do that. No exaggerated claims. Disparaging references of unsubstantiated comparison to the work of others. Hey, CS people, sheh. CMA people, sheh. BCom people, hey, hey. No, to respect every profession. Because what will somebody say? Hey, so he's CA, na? So he's saying like this, all this. Because CA, they are saying, you are discrediting the profession. Any direct or indirect advertisements for any profession are the fact which are in violation. Like you can't advertise, but if you're advertising, like I'm the best in audit, I'm the best in law, best in tax, okay, that's you're discrediting the profession. Okay. The 5 principles are there, guys. OIPCC: objectivity, integrity, professional behavior, professional competence, and confidentiality. Okay. That's first set of answer. So before you move on to the ethics, like all the 34, 35 clauses, you should first understand the basics of it. Number 2, threats. So threats ka code, what we say, this can be asked in MCQ. We call this as IRAFI. IRAFI. I, this you must have studied in intermediate also. I is your self interest threat. R, self review threat. A, advocacy threat. Sorry. A, advocacy threat. F, familiarity threat. I, intimidation threat. These are the 5 types of threat. IRAFI. Interest, review, advocacy, familiarity, intimidation. So let's quickly recall interest. Where my greed is there, money, monetary greed. Greed. Like for example, if I depend 100 rupees I am earning, 80 rupees Reliance is only giving. So I am totally dependent on Reliance. Correct? I am totally dependent on Reliance. It is which threat? Interest. Institute says we are not saying that this will happen. It may happen. That's interest. Review. When I was doing audit, somebody stopped me to give an opinion there. Why? When I was doing review, somebody stopped me. Like for example, Sukesh. Sukesh was my partner. Sukesh says me, "Acha, sir, what is the opinion you have formed for Reliance?" So I tell him, I think I will be going for adverse opinion. So Sukesh is coming and telling me, "Sir, don't give adverse." I asked him why. Sir, actually, I was working in Reliance only. Now, if Mukesh Ambani comes to know that I'm your partner and you're giving adverse opinion, so he will feel bad about it. He will not give me my FNF, my gratuity, my bonus, spending, sir. So while doing review, somebody stopped me. A, advocacy. Canvassing on behalf of client. That's basically giving wrong advice. Or a Reliance is amazing, amazing. Why I'm saying all this? Because Mukesh Ambani called me. He was AB, if you don't talk about me today, we will remove you from the audit. That's called advocacy. F. What is F? Familiarity threat. What is F, guys? Familiarity threat. Like you know the person. That's called what? Familiarity threat. Long relationship. I, intimidation threat. Like somebody threatening you. Achha, if you don't give clean opinion, we will leak your MMS. We will kill you. We will kidnap your daughter. That's called intimidation threat. So the code is IRAFI. They can test us in MCQ. Interest, review, advocacy, familiarity, intimidation. Interest, review, advocacy, familiarity, intimidation. IRAFI. Okay. Copy this. Copy me. Read this from the screen. I'm here only. Then we'll proceed. Done. So two answers we did, OIPCC and IRAFI. Okay, next. So this you will read. Next one is nuclear. Non-compliance of laws and regulations. The third answer is your non-compliance of laws and regulations. Important, they have been asking. What is basically nuclear? So nuclear is basically where you are doing audit or where you are doing job. So if you are practicing CA or for a CA in service, it says there is basically non-compliance of laws and regulations. When there's a non-compliance of laws and regulations, bro, what you have to do? You don't have to see anything. If you know there's a non-compliance of laws and regulation, what will you do? You will go and inform to an authority. Which authority? Prescribe authority. In how many days? Prescribed days. Which form? Prescribed form. What's the procedure? Prescribed. Everything is prescribed. It says non-compliance of regulation says if you are a professional accountant who is CA in practice or CA in service, CA in practice, CA in service, right? CA in practice, CA in service. You need to, if you have seen non-compliance where either at your client place or at your employer place, you need to inform to an authority. Which authority? Prescribe authority. They have not given anything. Now, what is non-compliance? So it could be one, fraud, corruption, bribery. It could be about money laundering, you're saying, some SEBI ka, some banking and other products ka, data protection, environmental protection, public health and safety, tax and pension liability ka payments. So what it is basically the examples of nuclear. Then, so some important facts about nuclear. Nuclear will be applicable if the accountant is aware of non-compliance, like he saw non-compliance, or he suspects non-compliance. There's a doubt. In the course of professional providing a service to a client, he is not required to investigate, nor is responsible for compliance. I am least bothered. I am not interested in compliance. I just have to inform to the authority. Then, I don't have to be an expert of law. You don't have to be an expert of law. You just have to inform to the authority. Whether it's a compliance or non-compliance, who will decide? It's a court or the competent adjudicative body. Then, matters which are clearly inconsequential or relating to personal misconduct. Like if imagine if somebody have stolen, chartered accountant stolen something. It's a personal problem, not a professional misconduct. It will not be covered here. Then, disclosure to the of the matter to an authority would be precluded if doing so would be contrary to law. So generally you should inform to authority, but if it is against the law, you will not inform. Okay, these are few important points. This is important. This came in exam. The nuclear is applicable to whom? So nuclear is applicable to, please underline this, page number 19.8. Senior professional accountant service being employees of listed entity. So it is not applicable to every chartered accountant service. It's applicable to all chartered accountant service who are working as a senior professional in employees of listed company. Now, what is senior professional accountant? Senior professional accountant means director, officer, senior employees who are able to exert significant influence and make decisions regarding acquisition, deployment, control of the employing organization in human, financial, technological, physical, and intangible resources. Basically, who? KMP. All those people who have a very good decision making power towards the human, financial, technological, physical, intangible resources, it is called as what? Senior professional. Now, practice. So it's applicable to audit engagements of entity whose shares are listed. Yender. If they have a net worth of 250 crore rupees or more, that means minimum 250 crores. How much, guys? Minimum 250 crores. See, understand. Nuclear is applicable to chartered accountants in service and practice, but not to everybody. Chartered accountant in service where they are doing service in listed company. Acha, chartered accountant in practice. Chartered accountant in practice. Which companies? Sir, where you are when you are auditing a listed company and that listed company ka net worth should be 250 crores. Service में is only listed company. Practice में listed company plus net worth of minimum 250 crores. Then if I see no clear, non-compliance of laws and regulations, I inform to authority in the prescribed form and in the prescribed procedure. Procedure they have not given. Next, this also came. No clear versus 250. No clear is applicable on audit and not on other assurance engagement. No clear is applicable only on audit and not on other assurance engagement. And not on other assurance engagement. However, it is applicable professional accounting service and in practice, which I discussed above. SA 250 is applicable only on audit and not on the assurance engagement, whereas NOCLA is applicable on CA in service and CA in practice. I mean, there's a category there, but yeah, it's applicable that way. SA 250 talks about laws having effect on the amounts and disclosure in FS and other laws which do not have a direct effect, like for example, child labor and all. Whereas NOCLA talks about non-compliance that causes substantial harm resulting in serious consequence, financial or non-financial term, like money laundering का है, bribery वाला provision. Okay, so SA 250 talks only about the effects on the FS. Here they talk about financial as well as non-financial term. 3. SA 250 do not define stakeholders, whereas NOCLA is investors, creditors, employees, and also the general public. Understood? So this 3 point important. Then last answer, documentation in NOCLA. Documentation in NOCLA. So documentation in NOCLA, what documents we will maintain? So this can come in the exam. And how management TCLBG responded to the matter. The course of action, the judgments made and the decision that were taken regarding to reasonable informed third party test. How the accountant was satisfied then the responsible public interest has been fulfilled. In addition to this, they will prepare documentation to understand significant matters arising during the audit. Conclusion, reach significant professional judgment made. Number 2, what documentation else? Document discussion of significant matters with the management TCWG, you will document that also. Document identify suspected non-compliance as a result of discussion. So discussion of the significant matters with management TCWG, you will document identify suspected non-compliance as a result of the discussion, and you will document the understanding of significant matters. I understood, documented. I discussed with management TCWG, documented. And third point, whatever is a non-compliance, will document. This can come as a separate question in the exam. Okay, this is NOCLA. So quickly I'll just run through because NOCLA had come in the exam twice. Okay, so you start reading from here. I'll be scrolling quickly. Okay, read from the screen or from the book. Read about NOCLA. I hope it's clear. NOCLA is not applicable to every CA in service, senior professionals working in listed companies, practicing CA audit engagements of listed company and having a net worth of 250 crores or more. Okay, minimum 250 crores. Read. Done, guys? Okay. Okay. Now quickly, membership. So there are two kinds of members. One is associate. Other one is fellow. Associate, fellow. So the day you become CA, you'll apply for membership. Then for the first 5 years of your life, you'll be called as associate member. For the first 5 years of life, you'll be called as what? Associate member. Any person whose name is entered in ROM shall be deemed to have become an associate member of the institute and will be writing ACA. Who's a fellow? An associate member who's been continuous practice in India for at least 5 years, or a member who has been associate for continuous period for not less than 5 years, minimum 5 years, and who possesses such qualification which is equivalent to the practicing SECA qualifications. Okay, then will be termed as FCA. So till 5 years you are ACA. ACA after 5 years, what do you become? FCA. The day you become FCA, I mean 5 years are completed, you become FCA, fellow chartered accountant. Fellow chartered accountant, associate chartered accountant. Okay, remember 5 years MCQ. Not important, not important, not important. Now come to page number 19.28. As a practicing CA, what you can do? So you can give management consultancy and other services. What you can do? You can do management consultancy and other services. So the management consultancy, they can full list. It's basically full costing FM. Full costing FM का details. This all services a practicing CA can do. This all practicing CA can do. He can give so many services. He can give so many services. So many services he can. Okay. For us, what is important? Tell you. Point number 10, 9, 19. Acting as an advisor or consultant to an issue, basically public issue. So you can be an advisor to the public issue. You can draft the prospectus. You can prepare a publicity budget, advise regarding arrangement for selection of who's the banker, social media, everything. Okay. Advise regarding various agencies connected with like a registrar, issue printers, advertising agencies. Advice on the post issue activity. So you can give advice. So you can help the management to become an advisor or consultant to the issue. But three things are prohibited. What are the three things? Broking, underwriting, portfolio management are not permitted. What it is, guys? Broking, underwriting, portfolio management. Broking, underwriting, portfolio management is not prohibited. Broking, underwriting, portfolio management is not permitted. Not permitted means prohibited. That means as a chartered accountant, you can give all kinds of services except pub. We call it pub. PUB. Broking, underwriting, portfolio management. Okay? Then every service you can do except PUB. What? Except PUB. Every service you can do except PUB. Now let's do that question which came in the exam. This was the question. Question number 5C. You need to answer this. K. Neha, a chartered accountant in practice, is approached by Growtech Limited, a startup company, planning to raise capital through a IPO. The company requested assistance in guiding them to selection of advertising agencies, coordinating with the bankers and broker to the issue. Okay. Besides helping the company as an advisor, she also underwrote the public issue. Underwrote the public issue of the company to the extent of 20% at the commission of 1%. She was taking what? Public issue of the company to the extent of 20% at the commission of 1%. She contends the provision of code of conduct are not binding. Do you agree with the view of CA? बैंक की वाले बैंक की हाँ ठीक है बैंक की ना ठीक है क्या tell me guys, do you agree with the view? Anything? Do you agree guys? No? Why? Give me the reason for that. Right in the chat, why don't you agree? Pub? Pub. Because chartered accountant can give all kinds of services relating to public issue except pub. You can draft the prospectus, you can select the banker, advisor, consultant, do all sort of things except pub. PUB, broking, underwriting, portfolio management. Broking, underwriting, portfolio management. Okay. So let me just see the answer. Just give me 1 minute. I will download the suggested. September 25. Question 5C. How do you write the answer? The council of the institute has passed the resolution permitting a chartered accountant to provide what? Entire range of service for management, consultancy, and other services. Can you say okay, a clause of such resolution allows that a chartered accountant can advise, can be an advisor, consultant to the issue, blah 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 blah. You write the theory. Okay? It is stated that you can't do what? What you can't do, guys? You can't do broking, underwriting, portfolio management. Correct? Now, this is the question. Now, Sneha is permitted to provide service of advisor, consultant to the issue as a part of management consultancy services and other services as per CA 1949. However, he would be guilty of professional misconduct for underwriting the public issue. And I'll tell you what happened in this paper when I was reading the paper checker comments. Most he has written, the paper checker has written, majority people wrote what? That percentage of profit wala clause. In case if you know that clause number 10 wala, percentage of profit. Was it was about IPO. You are a practicing CA. You are not taking profit here. Now, if you read the question, I'll open the field of question paper only, even though it's there suggested. She is charging commission of 1%. Sir, 1% मतलब percentage of profit. Are bro, she is underwriting the public issue of the company. They're not talking about audit fees. We are not talking about audit fees. We are talking about commission of 1% on the IPO. Understood? And boss, this is not a new question. It is there in my question. Same question. Old question. Okay. One question we have done. 3 questions came in the exam. One I have taught you September 25. Okay. Understood now? All clear? Important. Now, branch. Next one is branch. Guys, how many branches you can start? Sir, n number of branches you can start. How many branches you can start? Sir, n number of branches you can start. Provided each branch should be in separate charge of a member of the institute. It should be n number of branches you can start, but every branch means there should be a separate CA in charge. Now, separate CA in charge ka definition they have given. Separate CA in charge means a chartered accountant in practice or the firm chartered accountant shall be satisfied only if the member is actively associated with such office. Means if he resides in the place where the office is situated for how many days? Minimum 182 days. Or if he attends the said office for minimum 182 days in a year, okay, either he stays there or he attends the office for how many days? Minimum 182. It is not 183, it is not more than 182, it is minimum 183. So he is called as what? Separate CA in charge. So very simple, you can start n number of branches, provide every branch has a separate CA in charge. Okay, and separate CA in charge means either you reside in that city, for how many days? Minimum 182 days, or you attend the office for minimum 182 days. You attend the office minimum 182 days. You are called separate CA in charge. Now, there are 2 exceptions to it. If I have office, let us assume I'll give you example of I have an example like Shimla. Shimla is an hill area. I want to open an office in like Chandigarh. So Chandigarh is a plain region. Shimla is on the hills. So I am practicing in Shimla. I want to open in Chandigarh. Can I start? The answer is yes, you can start. So I'll have 2 office. Rule says you have 2 office. Every branch may have a separate CA in charge. But in this case, I will not have a separate CA in charge. Why? Because I'm exempted. How you are exempted, sir? Such member of the firms to open temporary office in a city in the plains. Like plains means like Chandigarh. So Chandigarh is on the plain region. Shimla is on the hilly area. For a limited period of of not exceeding 3 months. That means maximum 3 months in a year. Maximum how many months, guys? 3 months in a year. Then the regular office need not be closed during this period, and all the correspondence will be made to at regular office. So letters and all will come from the top only. The name board of the firm should be used at temporary office, like Chandigarh ka address pe, should not be displayed times other than such period, 3 months. The temporary office should not be mentioned on the letterheads, visiting cards, or documents. Before commencement of every winter, it shall be obligatory on the firm that he is opening the temporary office from a particular date and after the office is closed. So you need to inform to ICM before coming down and after going. Okay, before coming down and before going up, you need to inform to the ICM by registered post. Okay, so this is one reason. Winter. Number 2 reason. Second set of exemption. Number 1, if it is located in the same premises, first build floor, second floor, I can go and visit every day. Same city, Mumbai mein, place A, place B. Chennai mein, I know TN Nagar because academy is there. Not know any other area. T Nagar I know. Okay, same city, like Chennai. Third, if it is located within what? 50 kilometers. Within 50 kilometers from the municipal limit of the city in which the first office is located. For example, my first office is here. Okay, city X mein here my office is there. The border till here it is 15 kilometers. Now from this border, the municipal limit is 35 kilometers to city 2. City 2 mein inside me if I go 10 kilometers, I'll have my second office. Now when you talk about sir within 50 kilometers, the 50 kilometers has to be counted from border of the first city till the second office, not to the border. You have to count till when? Till here, till the second office. It says if it is within 50 kilometers. So here it is 35 kilometers plus 10 kilometers, that is 45 kilometers. If it is within 50 kilometers, so from this border till here, okay. If it is within 50 kilometers, no separate CA in charge needed. No separate CA in charge needed. Understood? So total 4 exception. 1 hilly wala, second same premises, third same city, fourth within 50 kilometers on the municipal limit of the city, in which the first office is situated, like border from the first city ka border till your second city ka office. Okay, read this, then we do a question. Read this. Now see, there's a question which came in May 25, I think. You have to choose this answer. Okay, MCQ. Everybody concentrate here. It says Messrs. DG and Co. is a firm of chartered accountants consisting of two partners. DNG, the firm operates main office in Delhi and established a branch in Gurgaon and Shimla. DZ applied for exemption with respect to Shimla office due to hill area location. So hilly wala point Shimla wala. The permission was granted to allow them a temporary office in Chandigarh during winter season. The temporary office in Chandigarh displayed the name board year round and used the address on form station. Oh, temporary office. The form is in compliance with section number 27. Exemption has been given to the members in hill areas. You are required to identify the correct condition from the following. Now, first, identify from this 1 to 5 which one is correct. Which is correct. Then we look up to the options. You tell me which one is correct. Okay, write the numbers in the chat. Which one is correct? One, three, four, five. 1, 3, 4, 5. 1, 3, 4, 5. Everybody 1, 3, 4, 5. Done. Everybody 1, 3, 4, 5. 1, 3, 4, 5. 1, 3. No, this is not there. 1, 3, 4, 5. 1, 3, 4, 5. 1, 3, 4, 5. B answer. Let's check the answer B. B. 1 का B, 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 1 का B. Understood the level of question? So whatever I am teaching you, we are doing it from the past paper so that you little get confidence about whatever I am teaching is I am teaching right thing. Okay. Now we have completed the 50% I would say of the chapter of ethics. Like the basics of ethics we have completed. Okay. Now there's something of KYC norms you can read directly. Okay. Then this diagram says pending. Okay. Basically, misconducts are pending. Misconducts are pending. So let me teach you misconducts and schedule idea. Then we'll take a 5-minute break. Then we'll move on to all the clauses. Okay. So I'll teach you misconduct and the penalties and the schedule how to remember those schedules, and then we will do clauses. Okay. Clauses will take approximately an hour. An hour will take. Okay. Because I'll be recalling the clauses quickly with the shortcuts so that you remember easily. Because here you will require more practice on the clauses. So practice ke liye, if you see ISEC module, towards the end there are a lot of questions. So they have given around 35 questions. So even if you do this 35 question plus May, November 24, May 24, November 24, May 25 and September 25. If you do this 4 attempt ka paper, 3, 3, 3, 3, 12 questions you got here, correct? 35 plus 12, 47 question. This attempt ka RTP you take 50 question. Practice 50, you are champ of ethics. Okay. Now, this we need to remember it came in May 25. Okay. Now, flowchart of disciplinary mechanism. It says first you will make a complaint along with the prescribed fee to the against the member of institute on the alleged misconduct. To whom you will complain? Disciplinary directorate. MCQ. First complaint should be made to whom? Disciplinary directorate. If he is of the opinion that either you are guilty or you are not guilty. If you are not guilty, ignore. If you are guilty, whether the clause, wherever you are guilty is falling in first schedule or second or board schedule. First schedule, second or board schedule. So first schedule, place the matter before board of discipline. If you are placing the matter, if you are falling in first schedule, it will be placed before board of discipline. Second board schedule में disciplinary committee. Board of discipline, disciplinary committee. If you are found guilty, how would you remember this? Reprimand the member, reprimand the member. Remove the name of the member up to 3 months, up to permanently or for any duration. Impose a fine of up to 1 lakh, impose a fine up to 5 lakhs. Then, if you are not agreed by the order, you will prefer an appeal to appellate authority within 90 days. This also came. If you are aggrieved by the order, you will file an appeal to whom? To appellate authority within 90 days. So the logic is very simple. If you are guilty under first schedule, matter will go to Board of Discipline. If you are guilty under second schedule or both schedules, both may, okay, the matter will go to disciplinary committee. Okay. Now, if you are guilty, reprimand. Remove the name of the members up to 3 months, permanently or for any duration, up to 1 lakh, up to 5 lakhs. Understood? And also, if you are aggrieved, file an appeal within 90 days. Then misconduct. One is professional misconduct, other one is other misconduct. Professional misconduct is basically a guilty according to your work. Other misconduct, because we carry prestige of institute. In personal life, if you have done something wrong, like for example, if I kidnap somebody, what will people say? Oh, chartered accountant, sheh, this CA like mad only, sheh, because of me. There's a bad name on the profession. This other misconduct. I gave a check, the check got bounced. Other misconduct. Now, how do you remember the schedules? So, ignore this. See, there's an amendment. I'll tell you what is the amendment. So how do you remember? See, I am teaching a short way wherein I generally revise in this way only with the students. Again, first schedule, second schedule. Part 1, part 2, part 2, part 3. Okay. Part 1, 2, 3, 4, 1, 2, 3. Clear this much? It is applicable to practicing C, it is applicable to practicing. It is applicable to CA in service, it is not applicable. It is applicable to CA general, CA general. That means both practicing and service. This is other misconduct, this is other misconduct. So if you are guilty till here, here, it is professional misconduct. The last one, other misconduct. How do you remember the clauses? 1, 2, 3. 1, 2, 3. 2 up, 2 down. 2 up, 2 down. Total 19. 10, 4, 1. Total 15. Grand total 34. Now, amendment has come here. Now, there are total 35 clauses. Here it is basically 16 clauses. Where is the amendment? The amendment I am writing with green. Previously, we used to say 10, 4, 1. Here it is not 10, 5, 1. So, the one clause have been added here. One clause have been added. I'll teach you that clause, what it is. The explanation of the clause is there in RTP. It's just one line, not so major. It will be there in the exam for sure because amendment is there. Okay. Let's quickly recall. Two schedules, first and second. Okay. Part 1, 2, 3, 4. 1, 2, 3. Practice, practice. Service, no service. General, general. Others, others. A 1, a 2, a 3. 2 up, 2 down. Total 19. Grand total now 35. Balancing 16. 10, 5, 1. We have revised always 10, 4, 1, or it is 10, 5, 1, 10, 5, 1. Again we do. First schedule, second schedule. First schedule, second schedule. Part 1, 2, 3, 4, 1, 2, 3. Practice, practice, service, no service, general, general, others, others. Okay. 1, 2, 3, 2 up, 2 down. Total 19. Grand total 35. Balancing 16. 10, 5, 1. 10, 5, 1. Understood? In the model also they have not updated it yet here. Like I am having an old edition. This is 5. 10, 5, 1. So in your respective teacher ka book, it is not wrong. Because our earlier amendment came recently. You get 10, 5, 1. One clause have been added. Total 2 amendments are there in ethics. Both are very easy amendments. As such, no major change. Okay. So we have completed everything, the basics of the ethics in like an hour. Next 1 hour, I'll be teaching all the clauses. Let's take a 5-minute break quickly. Get light, have some water, have some coffee, then be ready. Okay. Around 5-7 minutes we meet. Cool. 5-7 minutes. Okay. Chalo, let's start. Okay. Now schedules. Now understand by one. So I'll be teaching you from this chart. You can take the screenshot later on this chart. It's not there in the notes. It's just a chart which I write when I teach. You can first understand. All the keywords are written here. It says a chartered accountant in practice shall be deemed to be guilty of professional conduct. I am teaching you first schedule part 1 clause 1. If he practice in his name, unless he is a chartered accountant holding certificate of practice and he is a partner or employee It says a chartered accountant practice shall be deemed to be guilty of professional misconduct if he practice in his name unless he is a chartered accountant in practice and either a partner or an employee. So my firm ka name is Abhishek Bansal and Company. Now imagine Sukesh wants to use my name Abhishek Bansal and Company. So he'll be representing my firm. He can representing my firm only if he is a practicing CA and he should be my partner, or he should be a practicing CA, or he should be my employee. Practicing CA and partner, or practicing CA and employee. If he is neither of it, he can't use my name. And if he has used, he will be guilty under clause 1, part 1, first schedule. Clause 1, part 1, first schedule. 2. If he pays, allows or agrees to pay. Pays, allows or agrees to pay. Any BCS. BCS means what? Brokerage commission share of profit. What it is? Brokerage commission share of profit to any person. So you are guilty. So if you pay to your brokerage, like imagine whatever fees I am earning, I'm telling you, Acha, Deepak, get work for me. I'll give you 20% commission. If I give 20% commission to him, so sir, you are guilty. You can give to 4 people. So how do you remember, guys? Clause 2, 2 ka double is 4. Clause 2, 2 ka double 4. Who are the 4 people? CA partner, retire partner, legal representative of deceased partner, or a member of professional body or a person having prescribed qualification. Member of a professional body or a person having prescribed qualification. So you can give it to a chartered accountant or you a partner, retired partner, legal rep of deceased partner, member of a professional body and person having prescribed qualification. Now, number 3, agrees or accepts to accepts or agrees to accept. So to whom you can pay, you can accept from them only. To whom you can pay, you can accept from them only. So clause 2 talks about payment, clause 3 talks about accept. Hold on. In 2 and in clause 2 basically, there are more points they have given the module. It says, sir, you are paying or allowing, agreeing to pay or allow any BCS, brokerage commission, share of profit to any person. Okay, you're guilty, but you can give it to your chartered accountant, another chartered accountant, or your partner or member of professional body or prescribed qualification, right? Now the question is, who's a person? Basically, is a member of professional body. So they have given 5 bodies: ICSI, ICWA, Institute of Cost and Works Accountants of India, Bar Council of India, Institute of Architects, and Institute of Actuaries of India. Institute of Actuaries of India. Now, those 5 institute they have given 5 degrees. So ICSI was there, so CS came here. Institute of Cost and Works Accountant was there. Then we had Cost Accountant, Actuary, Institute of Actuaries of India. Then we had Institute of Architecture, Bar Council of India, Bachelor in Law. Okay. So 5 institute ka 5 degree plus 3 extra degrees they have given. Which are the 3 extra degrees? BE, BTech, MBA. BE, BTech, MBA. BE, BTech, MBA. Now when you see MBA, what they have written? MBA from the university established by law or technical institute recognized by All India Council for Technical Education. That means it is not chota mota small wala MBA. It has to be recognized by All India Council of Technical Education. It has to be recognized basically. MBA from a recognized institution. MBA from a recognized institution. So 5 institute ka 5 degree, correct? Plus 3 extra degree. BTech, BMBA. Why I am stressing on this recognized? Because in the May 25 ka paper, there was a question on this only. So from a local university, they have used in the question. So if you are making payment to a MBA who has done MBA from a local university, guys, guilty, not guilty? Tell me. Guilty, not guilty? If you are making payment to a person who has done MBA from local university, guilty, not guilty? So you are guilty because you are basically talks about from whom? Recognize. It talks about recognize. Okay. Now there's one more point which is covered in clause 2 only, sale of goodwill. So it says in case of proprietorship firm, death of the proprietor has occurred after 30th August 1998. Okay, this is the rule. It says uh, we have studied that if there's a proprietor, okay, the proprietor can sell the goodwill of the firm. Okay, to whom? To another eligible CA. Eligible CA means basically CA plus COP. Then the purchaser and the seller, basically who will sell? So the legal heir, nominee will sell. So they have a time limit. It says such sale should be completed in all aspects within a year from the death of the proprietor. From the death of the proprietor. It says the name of the firm would be kept in abeyance. That means ICA will not release it. It will be kept with ICA only. Okay, only up to 1 year from the date of the proprietor concerned as above. So within 1 year from the date of death, family you sell the name. So any eligible CA can buy. So why any eligible CA can buy? Because goodwill is there, same contacts, network, business, clients. Now, can we have a subsequent sharing of profit? The answer is no. You can't have a subsequent sharing of profit because you have taken goodwill ka money. Achha, sir, can I make payment in installment for the goodwill? Yes, you can make, provided it is written in agreement, sale of a goodwill agreement. But if it is not written, then you can't. It has to be mentioned. In the question, they have not mentioned anything. Never ever assume. So installment ka payment can be done only if it is written in the agreement. If you have done the payment, it is not allowed. It should be specifically mentioned in the agreement. So this is a normal case. Sir, what about disputed case? The proprietor has died and the kids are fighting. Who's a legal heir? It says you have to inform to the institute the existence of dispute. Okay, institute is received by the institute within 1 year from the date of death of the proprietor concerned. You inform to the institute. You inform to the institute that boss, yeah, dispute is going on. Then dispute got settled after 4 years. When the dispute got settled, then you can sell the firm. Okay, within 1 year from the settlement of dispute. 1 year from the settlement of dispute. In the normal case, it was 1 year from the death of proprietor, yeah, 1 year from the settlement of dispute. Okay. It's on model page number 19.46. 19.46. Repetitive. Okay. Fourth, if he enters into partnership with any person, whether in India or outside India. If he enters into partnership with any person, whether in India or outside India, so clause number 4, you can enter into partnership with whom? And the chartered accountant. A person of prescribed qualification or a member of a professional body. Body is 5, qualifications are 8. Resident outside India, you can get into partnership provided he is a chartered accountant and recognized by CG Council. Recognized by whom? CG Council. They have not yet recognized anything. Okay, clause 4. Fifth, if you secure professional work to any person, if I am telling my article, acha, get work for me, acha, my student get work for me, I am guilty. But if I am telling it to my partner, not guilty. Telling it to my employee, not guilty. By means which are allowed to practicing CA, not allowed. Means basically you can create your own website. That is allowed. So MEP means employee partner. What it is? Means employee partner. So 1 to 5, I would say clause number 2. Little tricky in the exam, it can come. Okay. 6, 7, hot favorite for sure you will see in the paper. 6, 7. Go with the sound. 6, solicit. What will you say? 6, solicit. If you solicit professional work via CAPR. What is CAPR? Circular Advertisement Personal Commission Interview and either. Circular Advertisement Personal Commission Interview and either. Lot of data is there. Lot of data. Ultimately, if I see the conclusion, 99% the chartered accountant will be guilty. Guilty of professional misconduct. Okay. Solicit professional work via CAPR. Like website is allowed to make. It should be website should be on guys push mode or pull mode. Website should be on push mode or pull mode. Pull. Pull. Push is basically push up notification. When you listen Spotify or music, there's an ad and you click on that. That's a push up notification. It should be always on pull mode. It can be in any color, any taste. Okay. You have to intimate to the institute every year. No, while paying annual membership fees. You don't have to inform any time. You have to inform only once. That is annual membership fees. You have to inform to the institute. Okay. Then lot of data they have given about in clause number 6. Okay, you have to read that. 90% if you're confused in exam, say you're guilty. 7. Advertise. So advertisement may we have done about visiting cards. In visiting cards, see, father is father, rest everything is son. That means CA has to be used as a prefix. I can't use CA below. If I'm a practicing CA, I have to use CA before my name. Sir, I've done CS also. Can I write CS Abhishek Bansal? No. You can't write CS. You write ACS or FCS. That is basically the degree you are writing. You can't write cost consultant. You can't write company secretary. You have to write that I have done ACS, like associate company secretary, Pollock's company secretary. You can write membership of the body, that you have a membership of that body. I can write the word lawyer. I can write BLLB. I can't write the word graduate. I can write BCom. So my degrees I can write. But those degrees have to be written below my name. Only 2 exceptions are there. First exception, anybody? What other exceptions are there? So CA to I will write. Along with CA, what is allowed to write beside your name? Can somebody tell me what is allowed to write? Insolvency professional IP and RV, registered value. Insolvency professional and registered value. Insolvency professional and registered value is allowed to write. Plus, there's an update in the model on 19.57. Generally, people miss this because if you studied long back, this was not there. If the members are not permitted, so you can write what insolvency professional, registered value number 2, 2 exceptions. Number 3 is the members are permitted to mention a title on their visiting card to indicate membership of foreign institute of accountancy. Which institute they have recognized? South African Institute of Chartered Accountant, page number 19.57. 19.57. Okay. South African Institute of Chartered Accountants, Ireland and England and Wales. So South Africa, Ireland and England. So if you have a membership of this 3 institute, okay, Africa, Ireland and England and Wales, that only you can write beside your name. Okay. So total I would say 2 plus 3, 5 exceptions are there. Besides your name, you have to use the word CA mandatory. Degree is what you have earned below. Degree is what you have earned below. Okay, you can't write the post. Like I'm a director, I can't write that. No, it's my personal visiting. I can't write that. Okay, you can't write post. You can write cost consultant, like expert in law. No, no, no. You can write as membership of professional body or your degrees basically. 5 exceptions. Number 1, IP you can write, RV you can write, insolvency professional registered valuer, then membership of African Institute, membership of Ireland, membership of England. 5 exceptions. Okay, clear everybody? Achha, can I become a director in a company? Please tell me in the chat. Can I become a director in a company? Can I become a director in a company? Please write in the chat. Yeah. Pranay Iyer. Oh yeah, you can become a director. Huh? Director simplicity or director. Yeah. I can become an MD, but I can become a director in a company. No issues. Now when a company is going for IPO, they will make a prospectus. When they make a prospectus, they write CA Abhishek Bansal director. So they are using my name. They are writing CA. They are using the word director because I'm a director in that company, right? So like with other directors, my name is there and the prospectus. Allowed, not allowed. Tell me, allowed, not allowed. Allowed it is. Sukesh, where am I publicizing myself? No, I'm a director in a company. That's the reason they're using my name. It is allowed. Huh? If they say partner of Abhishek Bansal and Company, one of the biggest firm of institute, okay, of India, then it is a publicity. Else it is not a publicity. Boss, I am a director. I hold a position in the company. Obviously, they will be saying my name, and I have to write my name as C Abhishek Bansal every time because I'm a practicing CA. So it is allowed. Okay. One more example. Now understand, Sukesh? I hope. Yeah, correct. Okay. One more example. Now imagine we are a firm of chartered accountants. We became advisor to the issue. Like we are an advisor to that IPO. Okay. No director. We are an advisor to the issue. So in that column, when they're making the prospectus, the advisors part, they're writing Abhishek Bansal and Company chartered accountants advisor to the issue. They have written the firm name in the prospectus. Allowed, not allowed. Tell me, guilty, not guilty. Allowed, not allowed? Allowed it is. Arey boss, you have done, you are the advisor to the issue. Why the hell your name would not be there? Your name would absolutely be there. If you're like zooming it, making fonts like 50, font size 50, this much big, Abhishek Bansal and company. Oh, use red color, Abhishek Bansal. Then you are guilty. Because you are the advisor to the issue. Your name will always be there in the prospectus. No? And obviously, advisor is who? A chartered accountant or a merchant banker or investment banker. So if they're writing chartered account, I'm not publicizing it. Because it is my client only. Na? I am the IPO advisor. He's already my client. We have already agreed on the terms. Understood? Sukesh, I think your basics are not clear on class 6. You need to revise class 6 very thoroughly. Everybody else have understood? It is not publicity. It is not publicity. Achha, let's do this illustration. Achha, 35 questions are behind in module in between. There are a lot of illustrations, so you can do those questions also. Okay, and everything almost is repetitive. Tell me this answer. You have to say guilty, not guilty. Tell me guilty, not guilty. Superb, not guilty because it's an exception. Can mention solvency professional the visiting card, letter, other communication. If the complaint of neighbor is not valid, that means he is not guilty. Works. Okay, clause number 6, 7. 6 solicit, 7 advertisement. Okay, 6, 7 is very important, guys. It will be there for sure in the exam. So let's quickly recall. Number 1, practice in his name. Number 2, pays. Number 3, accepts. Number 4, partnership. 5th, secures professional business through any person. 6, solicit. 6, solicit. Sound. 7, advertisement. 8, go the sound. 8, communicate. 8, communicate. 8, communicate. 8, communicate. Sound. 8, communicate. You have to communicate with the previous auditor. Provide the position was held by a chartered accountant. The position was held by a chartered accountant. Then only you have to communicate. For all types of audit, for all companies. All types of audit, all companies. Communicate. All types of audit, all companies. So when I say all types of audit, means like stat, internal tax, VAT, GST, all types of audit. All companies means government, dormant, non-government, listed, unlisted, public. For all types, you have to communicate. How will you communicate, sir? Either by hand delivery, RPAD, register post acknowledgement, you email, you did. When? Before commencement of audit. Before commencement of audit. You can't do it after commencement. Okay? Now, the logic of this clause was, see, I am been appointed this year. Obviously, previously somebody else was here. That somebody else, I need to ask, sir, why did you leave? He told me, sir, I've got a big client there. Okay, so this client was giving us 3 lakh rupees. I've got like 20 lakh rupees. I left it. Genuine reason, you can start now. Correct? He says, sir, my fees is spent. My fees is spent. Yes, sir, they are not giving my fees only. Guys, should you continue? Should you accept the audit? Tell me. Tell me. My fees is pending. Should you accept the audit? No, 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 no. Are bro, my brother ka money they have not given. My brother ka money they have not given. How will they give my money? Should not accept the audit. Okay. The previous auditor gave adverse opinion, and that's the reason client removed him. Which checked the last check data. Oh, it was coming clean opinion. Shit. That previous auditor ka setting was there with the daughter of MD. The MD did not agree. So CA gave adverse opinion, and he was removed. In this case, can you accept the audit? Tell me. Can you accept the audit, guys? Can you accept it? Yeah. The attitude of the previous auditor was not correct. You can accept that. Acha. Now, it is my duty to communicate. It is his responsibility to communicate, like professional responsibility. But he is not bound. He is not communicating only. So I am to waiting. Because before commencement of audit, Arey bhai, I need to speak to my brother, bro. He will speak. He will communicate. He will reply. Then I will start the work. Client is saying, sir, due date is there, 30th September. If you don't upload, sir, there will be a problem. Sir, penalty will be there. He is pressurizing. I can't start out because before commencement of audit, correct? I am waiting. So like for example, bank audit or maybe like listed company, quarterly statements you have to upload. So quarter to SEBI ka due date is there, no? You have to give quarterly results there. Now what do? I will give a conditional acceptance. This question was there in November 24. Conditional acceptance. Boss, I will give conditional acceptance means sir what? I will say to the client, dear client, comma, today I am starting your work because you're pressurizing me. But tomorrow if my brother communicates to me that you have done something wrong with him, like fees you have not paid, okay, you have removed, like him simply you have removed him, boss, I will leave the work as it is. It is called what? Conditional acceptance. If like the time is very less, like listed company, bank audits, okay, in that case, if the time is less and the outgoing auditor has not responded, the incoming auditor can start the work after giving a conditional acceptance. With the condition that if anything wrong has been communicated to us, if anything has been communicated to us which is wrong, which is ethically wrong, we will leave the work immediately. It is called as conditional acceptance. Same old question in the model it is there. It was asked in November 24. Okay. One more example. Internal audit was done by BCom. So there was a BCom guy, like let's assume CA, sorry, BCom Deepak. Deepak is a BCom graduate. He was the internal auditor. He left. We became internal auditor. I am a chartered accountant. 9 says you have to communicate for all types of audit. All means sub. Internal audit will communicate. I did not communicate it to Deepak. I started the work. It says before commencement, I am not communicating with Deepak. I started the work. Guys, guilty, not guilty? Guilty, not guilty? Guilty, not guilty? Not guilty, guys. Not guilty. So why not guilty? Arey bro, you have to communicate with person like me, like a CA, sir. A BCom graduate, no level only. Hence you say no guilty, but yeah, it's a healthy practice to come. If you want to come, you can communicate, but if you have not guilty. Actually, if you imagine Deepak is a chartered accountant, CA Deepak, and then you have not communicated internal audit, CA Deepak, I did not communicate. Then you are guilty, sir. Correct? Then you are guilty. Perfect. Acha. Certification ka work was there. Previously, Sukesh was doing. Sukesh is a chartered accountant. All the certification were done by CA Sukesh. This year, I got certification. I did not communicate. I got certificates ka work this year. I did not communicate with Sukesh. Guilty, not guilty? Not guilty, sir. So this rule is applicable for all types of audit. Institute says that certification is like normal work. Na, sir. It's a healthy practice to communicate. If you're not communicating, sir, not guilty. Not guilty. Okay. Then 9. A certain. How do you remember the clause? Sorry, ASCERTAIN. 9 alphabets. A certain clause number 9. The chartered accountant practice shall be deemed to be guilty of professional misconduct if he accepts the position as an auditor without ascertaining the provision of. Now there's an amendment here. I was teaching firstly only, but now I see I have added here. See what they have added. Now if you see in the Baar Act, in the Baar clause, they have written only 139, 140. Correct? Now I'll open the RTP of this attempt. So what it is, basically 139, 140, 140. 139 talks about appointment, 140 talks about removal, 141 talks about qualification, disqualification, plus section 225 of Companies Act 1956, plus any other law pertaining to the appointment of the auditors for timing input. Any other law basically means listed company के लिए SEBI is there, banking company के लिए RBI का act is there, or banking regulation act is there. If you are not complying with those also, you are not checking those provisions also, then you are guilty. So for sure you will see this in the for sure. So if you accept the position as an auditor without ascertaining the provisions of 139, 140, 141 of Companies Act 2013 plus section 225 of Companies Act 1956 plus any other law for time being in force, you are guilty under clause number 9, part 1, first schedule, clause 9, part 1, first schedule. Okay. So wherever book you are, whatever book you are following, maybe my book or maybe your teacher book or maybe module, right there, refer amendment Jan 26 RTP number 1. Jan 26 RTP, right there. Done? You have to check. compliance of three things: 139, 140, 141 of Companies Act 2013, 225 of Companies Act 1956. Any other law for time being in force. Okay. 90% they will be testing on any other law. Give example as SEBI. SEBICA. Okay, you have to be like CA firm has to be a peer review. Okay, so you are accepting the position whether they have done the peer review or not. Or maybe like banking company. Banking company we have to do CISA DISA course. Okay, then insurance company में joint audit is mandatory, whether joint auditor is appointed or not. Okay, joint audit is written in Insurance Act. Okay, so you have to check the compliance of those laws also. Understood what is added? Amendment. Clause number 9 is done. 10. Now because it is amended, I will write here 39, 140, 140 plus section 225 of Companies Act 19 plus other law related to appointment. Clause number 10, 10 circle, percentage of profit or results which are contingent. Okay, percentage of profit or results which are contingent. Okay, you are charging fees on percentage basis, then you will be guilty of professional misconduct. There are clause number 3, 5, 2. 10 exceptions are there. 3 plus 5 plus 2, clause number 10. Regulation number 192. Those 10 exceptions are important. It will be there in the paper. So what are the 10 exceptions? First one, being a liquidator receiver, you can charge fees on percentage basis. Number 2, if you're an auditor of copy society, you can charge fees on percentage basis. Number 3, if you're a valuer for direct tax, you can charge fees on percentage. This 3 is old, like our time commitment. Receiver, liquidator, auditor of copy society, valuer for the purpose of direct tax. Then, in case of management consultancy, the new amendments. Then fundraising services, debt recovery services, services related to cost optimization, and my favorite, any other service. So these 3 were oldest. Then 1, 2, 3, 4, 5. 3 plus 5, this came. Then via any other, they added 2 more. What are the 2 more, guys? Acting as an insolvency professional and non-assurance service to non-audit clients. Acting as insolvency professional and non-assurance service to non-audit clients. Like liquidator was already covered, na? So they added insolvency professional. This is very easy. You can charge fees on percentage basis. If you're a chartered accountant and you're a liquidator, you can charge fees on percentage basis. You're a chartered accountant practice and you became insolvency professional, you can charge fees on percentage basis. It's allowed as per regulation 192 clause number 10. Very important is this: non-assurance service to non-audit clients. Non-assurance service to non-audit clients. Non-assurance service to non-audit clients. Now see, TCS, AB and Co. We are the start auditors of TCS. Now, let us assume we are also GST consultant for TCS. So GST consultancy is not an assurance service. It's what? Non-assurance services. Correct? Non-assurance services. TCS is saying, sir, AB sir, how much will be your fees for GST consultancy? I say 5% of your GST payment will be my fees. I am charging percentage basis to TCS. You tell me guilty, not guilty. Tell me guilty, not guilty. Others guilty, not guilty. Deepak says not guilty. Pranay says guilty because you are guilty. Guilty. What? Sir, non-assurance services. What is the line written? Non-assurance service. But non-audit client. Non-audit client. TCS ka I am a start auditor. You are guilty. Now imagine, I am the start auditor of TCS I am becoming the GST consultant for, let us assume, Adani. I am becoming a GST consultant for Adani. Adani, I'm just giving GST consultant. EY is the start auditor. Okay. Adani is asking, how much, sir, your fees will be? I am saying 5% of GST payment. 5% of the GST payment will be my fees. Now you tell me, guilty, not guilty. Guilty, not guilty. Mistake. Pranay and Sukesh, I am giving just GST consultancy to Adani consultancy and I am charging fees on percentage basis. Tell me now. Not guilty. Correct. Because the line is what? Sir, non-assurance service to non-audit client. Is this clear, guys? Non-assurance service to non-audit clients. Clause number 10, percentage of profit, regulation number 192. In totality, you have to remember 3 regulations. Clause number 10, 192 we have done. Clause number 11, we say two business. Two business. Clause number 11, two business. Okay. Sir, if you are doing any of the business, you have to take what? Prior and specific permission from the council. Like to be a director, it is an exception. You don't require any permission. But for other business, you have to take prior and specific permission. In that, you will see two regulations. 190A and 191. 190 is about prior and specific permission. They have given full list. You have to remember that list. 191 talks about, this is also important. This came in the exam. So part-time employment, the chartered accountant can accept. It says you can be a liquidator, trustee, executor, arbitrator, administrator, receiver, advisor, representative of tax matter, financial costing matter, or may take up the appointment made by CG, SG, or a court of law, or any other legal authority, or may act as secretary in professional capacity, provided the employment is not on salary come full-time basis. That means you don't require permission if you have like MCA ka secretary have become, or maybe like Department of Commerce ka you have become. Government is making you as a secretary there. You are a practicing CA and government is giving you a post there, not on full-time basis, not on salary basis. Okay, so you are being appointed as a professional there. Allowed, sir. No permission required. Where it is written? Regulation number 191. So in totality, you have to remember 190A, 191, 192. 192 is fees wala regulation. 190 is prior and specific permission. 191 is this one, liquidator arbitrator. Remember liquidator arbitrator. Again, May 25 exam question. Liquidator arbitrator. Okay. Now, as a chartered accountant practice, I can teach. How many teaching hours are allowed? How many teaching hours are allowed, guys? Tell me. 35? 40? What you people are studying? Bro, it is 25 hours per week. 35 is proposed, it's not yet updated. 35 is proposed. It is not yet updated, not yet approved. So whether you are teaching at IC or you are teaching at private institute, anywhere you are teaching, okay, like coaching academies, any college, wherever you are teaching, such general and specific permission subject granted subject to condition that the direct teaching hours devoted to such activities taken together should not exceed 25 hours per week. 25 hours per week. Okay, 35 is proposed. I mean, in the last meeting it was proposed, it's not yet approved. Okay, model limit is 25 hours per week. So you have to read all this, these details. Clause number 11. Very simple. It is what is permitted Directly. For what all you have to take permission. They have given the list, you have to remember that. Okay. Clause number 11. Clause number 12. Signing. Sign on the financial statements or report by any person. So I tell my article, hey, sign the audit report. Say you are guilty. But tell to my partner, not guilty. And a person who's a member of the institute. Of the institute. My partner should be holding COP. My partner should be holding COP. Like for example, CS can also be my partner, but she can't sign the audit report. It should be signed by a partner and holding COP. Holding COP. So there are 12 clauses. The part 1. First one, practice in the name. Number 2, pays. 3, accepts. 4, partnership. 5, secure. 6, solicit. 7, advertisement. 8, communicate. 9, ascertain. Ascertain my amendment is there. 10, percentage of profit. Percentage of profit means there's a regulation number 192. Then clause number 11. 1, 1, 1. 2 business. 2 business. 2 business. You get 12, signing. 12, signing. Signing on the FS or report by any person other than partner and person who is a member of institute. Okay. Now, part 2. Can somebody write in the chat, part 2 is applicable to whom? Part 2 is applicable to whom, guys? CA in services. Like practicing CA. Correct? Pay, not allowed. Except not. So, chartered accountant service shall be deemed to be guilty of professional misconduct if he pays his share of emoluments to any person. Pays his share of emoluments to any person. Number 2, accepts any fees, profits, gains from ABC 12. ABC 12 means what? Agent, broker, customer, CA, lawyer of a company, firm, person by way of commission or by way of gratification. By way of commission or by way of gratification. Okay. So you will be guilty. Like for example, Sukesh is my neighbor. I tell to Sukesh, Sukesh, I'm a normal person. I supply cement and bricks. So can you get me entry in your company? Sukesh works in Reliance. Okay. So Sukesh said, okay, sir, I'll help you out. So I got an entry in Reliance. I started supplying cement, bricks, huge quantum ka bill. I became very rich. I went to Sukesh's house and said, Sukesh, you have helped me so much. You take this 2 lakh rupees. I paid 2 lakh rupees to Sukesh. In from Sukesh's perspective. Once again, AB paid 2 lakh rupees to Sukesh. Sukesh accepted. Sukesh accepted this. Sukesh have not asked, but he accepted. Tell me, guilty, not guilty? Guilty. That is by way of gratification. By way of gratification. Okay, Sukesh says, sir, I will get you entry there, but 2% ka bill you have to do, give me 2% of the bill amount you have to send me. Now tell me, guilty, not guilty? Then also guilty. That is by way of commission, by way of gratification. Okay. Only 2 clause, pays and accepts. 3. Part 3, 1, 2, 3. Part 3, 1, 2, 3. CA in general. First clause, not a fellow, act as a fellow. CA in general basically is applicable to both practicing service and just a member also. It says, not a fellow, act as a fellow. After how many years you become a fellow, guys? After how many years you become a fellow? After 5 years. Deepak cleared in this attempt, okay, this attempt, and he's telling to people, oh, I'm a fellow chartered accountant. Because you became C in this attempt, and you are saying to everybody, you're a fellow chartered accountant, guilty. Clause number 1, part 3, first schedule, 131. Clause 1, part 3, first schedule. Clause 2, two things: does not supply, does not comply. Does not supply the information called for, does not comply the requirements asked for. Does not supply the information called for, does not comply the requirements asked for by A, B, C, D, 2, IQ. Appellate Authority, Board of Discipline, Counselors Committee, Director of Discipline, Disciplinary Committee, I, Institute Q Quality Review Board. We need to remember this. IC is calling me, AB, how many articles are there in your form? Please reply. I am not replying. I have not given information. Guilty under clause 2, part 3, first schedule. Acha, Hajit is a CA in service. Institute is asking, hey Hajit, you joined this company on which date? Please reply to us. Hajit is not replying only. He's a CA in service. You tell me, guilty, not guilty? Guilty, not guilty? He is not replying only. Guilty, bro. Guilty, Pranay, guilty, bro. Why this clause is applicable in general, na? Means CA in practice also and CA in service also. I gave first example from my perspective. Hajit is CA in service. So both code is applicable. You are not informing to institute. You are not replying, bro. You are not replying to institute. Gone. Guilty. 3. 3 का double 6 clause 6 and 7 का false information. Like website पे data you can upload, right? I can give my bio data. I can give my name, age, everything, date of birth. I have given wrong details. Are in my firm 50 articles are there. We are 10 partners. I have only one article. I gave the data which is permitted in clause 6 and 7. That website where you can give, but I gave wrong data, false information. Guilty under clause 3. Guilty under which clause, guys? Clause 3. Part 4. Other misconduct. Now, other misconduct. Number 1. If you are held guilty by a civil or criminal court for imprisonment for less than equal to 6 months, you will also be guilty under clause 1 part 4 first schedule. Clause 1 part 4 first schedule. Clause 1 part 4 first schedule. 2. To disrepute. What will you say? To disrepute. To disrepute. Bring disrepute to the profession or the institute whether or not related to professional work. Bring to disrepute. To disrepute. Bring disrepute to the profession or the institute whether or not related to his professional work. So what does this line mean? It basically means you are bringing disrepute. Like for example, you have done murder. You are guilty in money laundering act. Bringing disrepute, you will be guilty under 241. Clause 2, part 4, first schedule. 2, you will write in normal number 2. 4, you will write in Roman number. That like what I have written. First, FIRST, full you have to write. First schedule. Understood? So guys, this is my first schedule. Can you take a screenshot of this? One second. I'll send the photo then. There's no PDF of it, it's a photo. I'll send. Okay, after the class, I'll send. Okay? Then you make a note in the notes. Hey, Sivari, you are asking for notes. Why the hell are you not answering in the class? Everybody else is answering. Deepak has answered. Hajit has answered. Sukesh is answering. Pranay has come for the first time. Still he is answering. But why are you not answering, Siva? Wrong, Siva. You just message me for the notes. Sir. What is, bro? If you don't answer, how I will raise your confidence? Please answer next. Guys, are you clear with the first schedule? Okay. Now let's do second schedule. Maybe like 20-25 minutes will take. We'll finish second schedule. Second schedule is very easy. Okay, let's finish it off. Second schedule. Now, second schedule may if you are guilty, last part. Sir, if I was guilty under some similar civil or criminal code for imprisonment up to less than 6 months, less than equal to 6 months, I was guilty here. What about more than 6 months? I will be guilty in second schedule. Civil or criminal imprisonment for more than 6 months. Second schedule over. Part 3, second schedule over. Okay, 1 plus 1. Now, second schedule ka part 1. If you disclose this, it's a part 1, second schedule is applicable to whom? Applicable to whom, guys? Practice. Discloses confidential information acquired in professional capacity. You are guilty, except permitted by client and law. This we discuss when we are discussing about those principles also. I was auditing Reliance Industries. Reliance confidential. I leaked it here and there. Guilty. 2. Certifies report on FS unless examined by 4 people. 2 ka double 4. 2 ka double 4. Certifies report on the FS unless examined by 4 people. Like somebody has to check. Either you, yourself, your partner, or employee, or another CN practice. So without checking, you have signed. In clause 12, in the first part, in the first schedule, I have signed. Sorry, I have checked, but sign was done by my article. Guilty. Here, you are signing without examining. Signing without examining. Signing without examining. Signing without examining. Guilty. 4 people should check. Himself, partner, employee under CN practice. Himself, partner, employee under CN practice. 3. After 3, what comes? 4. He vouches for the accuracy of forecast. He vouches for the accuracy of forecast. You tell me, can I, as a practicing CA, can you predict? I mean, can you help the management in preparing forecast? Can you help the management preparing forecast? Pranaya. Yes, you can help them in preparing the forecast, but you cannot vouch for the accuracy of forecast. Or you saw, or I'm swearing on my mom. Okay, I'm swear to God, sir, you'll have like turnover of like 30,000 crore, 543 rupees 30 paisa. Can't vouch for the accuracy of focus. Hey, it's not vouching, huh? It's like you're saying, confirm, sir. Array, I'm telling this much will be your turnover. Then you're guilty. You can prepare forecast, but you can't vouch for the accuracy of forecast. Okay. Oh, express opinion on FS where he already firm partner has substantial interest. Like I can't do my father ka company audit, my brother ka company audit. I'm teaching in a college, I can't do their audit. Okay? I cannot do a audit of a trust where I'm the trustee there, or when I'm a member there. I can't do the audit because I have a substantial interest. Now here there's one more clause. Okay. Now please listen to my question. Huh? I was auditing Reliance Industries. Sorry. Again, I'm a director in Reliance Industries. I'm a director in Reliance Industries. Can I audit Reliance? Can I audit Reliance? No. No. I left Reliance. I started my practice. Today I started my practice. Left Reliance yesterday. Today I started my practice. Can I go and pitch to Mukesh? Yeah. Give me your audit. Can I audit Reliance now? Can I audit Reliance now? Tell me. There has to be a cooling period. Pranav, what people do, I don't care for it. We are studying for exam, bro. What is there in the book? Let's study that. What happens in practical life? I don't care for it. Let's talk about books. Tell me. There has to be a cooling period. There's a cooling period. How many years? The cooling period. Very good, Deepak. 2 years. That 2 years ka thing is written in clause number 412. How do you remember? 2, 2 ka double 4, 412. 2 years ka cooling period should be there. Previously it was a guideline of the ICA. Now they have put it in the model in clause number 4. 412. 412. 412. Okay? Fifth. He fails to disclose facts. Fails. FAILS. 5 alphabets. FACTS. Facts. He fails to disclose material facts known to him. 6. There we study with sound. 6. Solicit. Here 6. Miss. 6. Misstatements. He fails to report misstatements. He fails to report misstatements. Like see, what is difference in 5 and 6? 5 may in the FS some data has not come. It has not come only. And you know it. Like for example, they have taken a loan. They have not shown the loan in the books. They have not disclosed only. Fails to disclose facts. 5 may GPM, guilty of professional misconduct. They showed a loan. Loan was of 50 crores. They showed a 5 crore. That means it came in the FS. But at wrong amount it came. It was disclosed. But it was misstated. You failed to report misstatement. You did not report anywhere. Guilty under clause number 6. If it did not came in the FS only, in the books only, 5. It came but at wrong amount, 6. 6. 7. Grossly negligent did not exercise due diligence. Grossly negligent did not exercise due diligence. Grossly negligent did not exercise due diligence. In the question they will specify you are grossly negligent. Guilty under 7.1.2. Clause 7, part 1, section 8. There we remembered 8 by 8 communicate. Here 8 negate. 8 negate. He fails to obtain evidence to warrant the expression of opinion, or his exceptions are sufficient material to negate the expression of opinion. That means I am doing sample based audit. I chose the sample, but if I would have checked the entire other things, my opinion would have changed. I have not done my work properly. Clause number 8. Never ever ask it. 9. There we studied 9 via ASCER. TAIN. 9 alphabets. Here also. The word is what? Departure. DEPARTURE. 9 alphabets. A certain departure. Departure from gap. What is the full form of gap here? Generally accepted audit procedure. You are guilty. Now, previously these three things were written in guidelines. Now they have brought this in clause number 9. This came in May 25. May 25 or I think November 24. Peer review wala thing, UDIN wala thing, membership number FRN wala. Like every document, a membership number should be written, FRN should be written. Where it is written? 912. Acha. Every document when you're signing, if it is given to an outside authority, any certificate, any report, GST report, tax report, stat report, any certificate, UDIN is mandatory. Where it is written? 912. listed company ka audit will be done by only that CA firm who has a peer review certificate where it is written 912. So previous it was in guidelines. Now when they changed the model, they brought it in 912. Peer review, you did membership. Okay. 10. Fails to keep money in a separate bank account. Fails to keep money in a separate bank account. Okay, you are guilty. Except if your fees advance is there, no separate account. Money to be spent in reasonable time, no separate account. Like for example, today is Friday. Client says me, "AB, take this 1,000 rupees. You get the stamp paper on Monday." So he gave me 1,000 rupees today because Saturday Sunday court is closed. Should I deposit that 1,000 rupees in a separate bank account? Tell me. Should I deposit that 1,000 in a separate bank account? No, it has to be spent within a reasonable time. No? Like Monday I'll spend. Now what is the reasonable time? It will depend on case to case. Okay. 1. Discloses confidential information acquiring professional capacity. 2. Certifies report on FS unless examined by 2 का level 4 people. 3. 3 के बाद 4. Forecast. Vouches for the accuracy of forecast. 4. Expresses opinion where 4 people have substantial interest. 2 years are cooling period in 412. 5. Fails to disclose facts. 6. Miss. Fails to report misstatement. 7. Grossly negligent due diligence. 8. Negate the expression of opinion. You can ignore this. 9. Departure from gap. Departure में 3 things are there. Peer review, UDIN, membership number. 10. Fails to keep money in a separate bank account except his fees, additional fee, fees, advance fees, and money to be spent in reasonable time. Last part. Part 2. Contravenes the provisions of the Act, regulations, guidelines of the Council. Now they have given a lot of guidelines. For example, tax audit. How many tax audit you can do? Tell me how many tax audit you can do, guys, as a practicing CA? 60 per partner. 60 per partner. Okay, we are 3 partners. In totality, how many we can do? We are 3 partners. 180. 180 ka 180 tax audit report Abhishek Bansal have signed. Guilty or not guilty? My other partners have not signed. 180 I have signed. Sir, not guilty. Not guilty. Pranay, not guilty. Not guilty. Bro, not guilty. Tax audit is a guideline. Sir, allow it is. Okay, not guilty. Acha, you will see only 44 AB is tax audit. They will give you confusion of 44 AD, AEF. Ignore everything. Ignore. Okay, just concentrate on 44 AB. Start audit. As per Companies Act, how many start audit I can do? As per Companies Act. As per Companies Act, how many statutory audit I can do? Pranay, you are weak in ethics, bro. Bro, you need to work more harder. Almost every answer you're giving wrong, bro. What is this, bro? 20. Companies Act is 20. Ethics में is 30. Companies Act में 20, ethics में 30. Okay. Now 20 में I can do 20 audit. We are 3 partners. Totality 60. All 60 का 60. All 60 का 60. Abhishek Bansal have said. Guilty, not guilty. Guilty. The benefit is given only in tax audit. Only in tax because tax audit is given by the ICAI guidelines. Companies Act it is written per partner, per practicing partner. Only per practicing partner can sign. So if all 60 I have signed, I am guilty there because my limit is only 20. Stat audit. Tax audit 60. If I am signing, okay, if I am signing, stat audit is always as per Companies Act only. No? Statutory audit is as per Companies Act. Tax audit is ICAI guidelines. If 180 I have signed, no guilty. Allowed it is. Okay. Done everybody? Then 2. Discloses confidential information acquired in employee capacity. Here also it was disclosed confidential information acquired in professional capacity. Like practicing CA disclosing 112. Clause 1, part 1, second schedule. My employee disclosing. I am not disclosing. My employee disclosing. 2. We say chu. Clause 2, part 2, second schedule. Similar. Employee capacity except permitted by employer-in-law. Their client-in-law. Your employer-in-law. 3. He includes in any IFRS. What is IFRS? Information form return statement. IFRS. Information form return statement. Any information submitted to ABCD to IQ knowing it to be false. Knowing it to be false. You are guilty. I have not given only. I have not given to ABCD to IQ. Guilty under clause 2, part 3, first schedule. Not given only 231. Given but given wrong. Given but giving wrong. Then clause number 3, part 2, second schedule. Be very clear. Huh? Not giving only. Clause 2, part 3, first schedule. Given but wrong given. Clause 3, part 2, second schedule. 4. Defalcates, embezzles money received in professional capacity. Defalcates, embezzles money received in professional capacity. You stole the money of a client. Okay, you stole the money of a client, or you were working in a company, you stole the money of the employer. Guilty, because part 2 is what? Applicable generally, it's applicable to everybody. Clear? Now, here there is one more clause, fifth clause. Hold on. What's the amendment here? So, clause 5, part 2, second schedule. What it is? Clause 5, part 2, second schedule. If you act as an auditor of a Companies Act in contravention of the Companies Act, if you act as an auditor of a company in contravention of the provision of Companies Act, this has to be added there. Okay, so whatever material you have, you can add this. Act as an auditor of the company in contravention of the provision of Companies Act. Like imagine qualification is there, CA plus UB. Disqualification is there. So if you're acting as an auditor, even if you're disqualified, you know that uh, if I hold one share of Reliance, can I audit Reliance? If I hold just one share of Reliance, no. Till you audited Reliance. Acha, I hold in Reliance Infocom. Infocom. I am been appointed as an auditor of Reliance Industries, its holding company. I am holding one share of Reliance Infocom. I am appointed as an auditor of holding company Reliance Industries. Can I audit? No. There you see CHAS na. Company, holding company, associate company, subsidiary of such holding company. You are disqualified for entire family. Still you are the auditor. So, still if you are the auditor, you are guilty under clause 5, part 2, second schedule. 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 Understood, guys? Clause 5, part 2, second schedule. Achha. Indebtedness. I am indebtedness to the company for 6 lakh rupees. Can I audit? Can I audit? No. Still you have audited. Guilty under 522. Clause 5, part 2, second schedule. 522. Clause 5, part 2, second schedule. Understood. 5 clauses. First, contravenes the provision of the Act, regulations, guidelines of the Council. Number 2, to disclose confidential information, employer capacity except permitted by employer and law. 3, submits to IFRS, submitted to ABCD to IQ, knowing it to be false information. Okay. 4, defalcates embezzles money. 5th, act as an auditor of a company in contravention of Companies Act 2013. Done. See, what is the difference here? You have been getting appointed, you need to ascertain that whether they have complied with the provision or not. Here, you have accepting the position as an auditor, even though you are disqualified. Okay? So either of it you will see in the exam. For sure, in your exam you will see it. Okay? Over. My ethics is over. I'll be sharing you this photo so that you can revise from there. Guys, are you getting confidence now in ethics? It's 18 marks chapter. Okay. So today what you do is I'll be sharing this. After like 10 minutes you will get the photo. Start revising ethics. Solve like 35 questions from the module behind. Say you will see those illustrations are also there. Around 20 illustrations are there. 50 questions. Take May 24 ka paper, September 24 ka, November 24 ka paper, May 25, September 25. Three questions are there. Just do type like Chartered Accountants Act, or just write 1949 in the PDF. 1949. You will see questions of ethics. Just solve those questions of ethics. This article I'm just saying in the actual paper of ICA. So what happens? You just see, acha, this is the question. Say to yourself, clause this, this schedule, guilty. Go see the answer. Acha, clause this, part this, schedule, guilty. My answer is matching. That means you know the clause. 4 में से 3 marks you will get. Perfect. We have completed 12 chapters of our syllabus. There are more guidelines also. It's a revision session. I can't do everything, right? So there are few guidelines which you need to study from the module. There are a lot of this thing. One second. Recent decisions of the institute. Please do it thoroughly. So on page number 155, see, can you see this recent decision of ethical standard boards? So there are total how many guidelines? 45 guidelines are there. 45 guidelines. So you have to just read this 45 guidelines. There were MCQs in this attempt in September 25 from these guidelines. Okay. 2-3 guidelines I quickly recall for you guys. A practicing CA can become a director in a company, but he cannot become an MD in a company. To become an MD, you require prior and specific permission. But I am starting a management consultancy company. Management. The question is, can I become the promoter of that management consultancy? The answer is yes. Can I become a director? The answer is yes. Can I become the MD of that management consultancy? I'm practicing CIT in articles also. Can I become the MD of that management consultancy? Yes or no? Yes, because it is an exclusive area. Imagine there's a company who sells his water bottles, okay? Water bottles, or maybe this cup. Okay? Can I become the MD of this company? I'm a practicing CA. Can I become the MD of this company who's selling these cups? No. If you want to become MD of this company, you have to take prior and specific permission as per clause number 11, part 1 for schedule, regulation number 190A. 190A. Okay. Now, point number 1 also important. I have an uploaded video in Hindi. It is okay on my channel. It says it is not permissible for member in practice being a start auditor of a company to prepare BAR report. Correct? Because it is a start auditor. But he can provide advisory services on the same. It is permissible for a member in practice being a start auditor to be the assurance provider of BRSR. So there are two things. One is you have to prepare that BRSR report. Company do not know. Chartered accountants know. You are the start auditor. Company calls you, "Ares, bro, can you come and help us?" No. You cannot prepare the report. You can give the advice. Acha, this, that. Okay, this data, advice. Acha, can you give an assurance report? That means can you do audit of that BRSR ka? Yes, we have studied that in ESG chapter. Understand the difference, huh? It's like basically FS preparation. Can you assist the management preparing FS? No. But can you do audit of FS? The answer is yes. Same way. Can you help management in preparing BRSR report? No. But can you give audit report on BRSR? The answer is yes. This has not been asked. It's the latest guideline. It will be there in our paper. Okay. So there are around, see, whatever is bold in the module, those are like new guidelines. Okay. For sure, I will be testing you on this. Please do this very thoroughly. People don't do it because it's towards the end. 159. Cool. So tomorrow, guys, tentatively we'll be meeting around 3 o'clock. So 3 to 5 we'll sit. I'll message in the group with the team because I have an appointment tomorrow. So I'll be reaching by around 2:30. So I don't want you guys to wait. We'll start at 3 o'clock tomorrow. Okay. Works with everybody? 3 to 5 tomorrow. Thursday, no class because I have a flight back to Bombay. So we'll be meeting on Friday and Saturday. Saturday, last class. Okay. Tomorrow, 3 o'clock. If this team forgets to message you, but I'll start at 3 only because I'll not be able to reach till that time. Okay. Tomorrow, 3 o'clock. 7 chapters pending, 2 you'll do on your own, 5 are pending. Tentatively, we do quality control and SAE tomorrow. SAE and quality control, either of it will start first. Okay. Bye, guys. Take care. Aim for a rank or 70 plus, which is bye. Yeah, I'm sending these notes. Okay. Bye, Pranay. Bye. Bye. So let's quickly scribble once ethics, then we start. So ethics, there were 2 schedules. One was first, other one was second. Then we had part 1, part 2, we had part 3, we had part 4 here. Pranav, the lecture will be given by the academy. They will have a backup. I don't have it right now. I'll be having post Sunday. I'll be uploading on my channel, Abhishek Bansal channel, post Sunday. 1, 2, 3. Practice, practice, service, no service, general, general, others, others. Okay. So this was 1, 2, 3, 2 up, 2, 9, 2 down. Total 19. Now 35. Balancing now 16. 10, 5, 1 because of the amendment. Let's quickly recall. The first one was name, second was pays, third was accept, 4 partnership, fifth secure, 6 solicit, 7 advertise, 8 communicate, 9 ascertain, 10 percentage of profit, 11 2 business, 12 signing. Part 2 pays, accept. Part 3 not a fellow, act as a fellow, does not supply, does not comply the information ABCD to IQ. 3 plus 6 or 7 का false information. Part 4 less than equal to 6 months. 2 disrepute to the professional institute whether not related to professional work. Done. Second schedule. Second schedule number 1 was sources confidential information acquired in professional capacity except permitted by line 10 law. 10 law. 2. 35 FS unless examined by 4 people. Himself, partner, employee, and the same practice. 3. 3 के बाद 4. Voucher for the forecast. 4. Gives opinion, expresses opinion on the FS where he has a substantial interest, where himself Firm relative partner substantial influence. Cooling period of 2 years is written in this clause only. 5. Facts. 6. Misstatement. 7. Grossly negligent due diligence not exercise. 8. Negate the expression of opinion. 9. A certain amendment 139. No, no. Departure. Sorry, my mistake. My mistake. Departure from gap. 10. 10. Fails to deposit money in a separate bank account. Fails to keep money in a separate bank account. Okay. Now, when we talk about the other part, cooling period is 2 years for, like, if you were the auditor of a company and you leave that company and from tomorrow you start your practice, can you audit the same company? The answer is no. It has to be a cooling period of 2 years. Then part two, there were 5 clauses. Now, Parag, conference of provision of the Act, regulation of the institute, guidelines of the council. Two, may it was discloses confidential information, employee capacity, except permitted by employer and law. Three, three is he includes in IFRS anything which is submitted to ABCD IQ knowing it to be false. 4 was defalcates or embezzles money received in professional capacity. Fifth, he act as an auditor in contravention of Companies Act provision. And part 3, it was more than 6 months. I hope everybody remembers this. Okay. Now, right now, what we are doing is first we are doing internal audit. We are doing internal audit. Hmm. So I'll be doing it from the model because here we have done marking from my book. Okay, we have made the question to the marking from the book. So let's do internal audit right now. Model. Let's do it, guys. Internal audit. So minimum 4 marks. It will come in the exam. So come to page number 16.4 directly. Point number 1. Objectives and scope of internal audit. What are the objectives and scope of internal audit? We call this as objectives and scope as mergy. What it is, guys? It is mergy. M. Monitoring of internal controls. E. Examination of financial and operating information. R. Reviewing of operating activities. Review of compliance of laws and regulations. R. Risk management. G. Governance. So whatever are the duties, jobs of the company, that job duty is when done by the internal audit. So what is the scope, guys? Merge. M. Monitoring of internal control. E. Examination of financial operating information. R. Review of operating activities. Okay. Review of compliance of laws and regulations. And R. Risk management. And G. Governance. Okay. G. Now there's a question on this. Eva, you too. I'm pretty much sure you'll go wrong in this. Read the question from the screen and tell me what's the answer. Read the question and answer. Question is, can he perform such type of engagement in the capacity of internal auditor? Tell me. See, what are they saying? You comply with the laws and regulations. No, you can't comply. Very good, Pranay. You can just review. You can check. You can do the review of the compliance. Understood? Okay. So you have to write the scope of the internal auditor. You will say, boss, he can just review. He can review the compliance of laws and regulations. So there was a question on this. Question number 2, applicability of internal audit. Applicability of internal audit. Internal audit is applicable to, guys, every listed company, every unlisted public company, and every private company. D, deposits of 25 crore rupees or more. P, paid up, we say this is DP Letu. Here we say Letu. D is deposits, P is paid up share capital, L is loans, T is turnover. Here loans, turnover. 2 points you need to remember. Now the data. Data is what? 25 double P, 50 double L, 100 T, turnover 200. If the data is double basically. 25 double 50 double 100 double 200. Private में ले तो 100 and 200. So it is 100, is 200. Okay. Now 2 points you have to remember. Everywhere it is what? More than, or I mean paid up capital of 50 crores or more. That means basically it is minimum. Minimum. Turnover minimum. Deposits minimum. But loan में what they have written? Exceeding. Exceeding 100 crores. Here also what they have written? Exceeding 100. That means exact 100 crore पे internal audit is not applicable. Exact, and the condition is or. All the conditions are or. Exact 100 crores per internal audit is not applicable. It should be exceeding 100 crores. Okay. One more point. To see this year internal audit applicable, not applicable. To see internal audit this year applicable, not applicable. You have to see the previous year. So previous year generally we say 31st March. But what two important points here also, for deposits and for loan. As for deposits and for loan, you have to see at any point of time last year. At any point of time or last year. Any point of time of last year. So generally you see all this year ka applicable, non-applicable, last year ka 31st March. But when you talk about loans and when you talk about deposits, you have to see at any point of time. So 2 points you have to remember. Loan is exceeding 100 crores. Number 2, at any point of time for deposits or loan. An internal auditor who can become, guys? Anybody can do internal audit. BCom guys can do it. Person who is not a chartered accountant can do it. Person who is a chartered accountant can do it. MBA can do it. CS can do it. Provide board. Uh, board has appointed you. So board will appoint you. The board has passed the board resolution. So can a company become an internal auditor when the company? The answer is yes. So can an employee can do it internal audit of the same company? Yes. Internal auditor can be anybody. Okay. Read this answer. Applicability. Read this on the screen. I'm here only. Okay. it is outstanding deposits from public or total deposits on the balance sheet. It can be different. The company you disclose it in the balance sheet only, na? Take the data from balance sheet. You will not go and ask public, na, how much is your balance? As an auditor, you have all the data from the data of balance sheet last year. Okay, the second question. Third question. Who can be appointed as internal auditor? He can be a chartered accountant or a cost accountant or such other professional as the board may decide. Board appoints. Okay. He may or may not be the employee of the company. He can be anybody. So internal auditor can be anybody. This is my third question. Fourth. Fourth. What are the responsibility of internal auditor with regard to what accounting function and financial records of the organization? Basically your financial statements, balance sheet, P&L, tally, SAP, all those. What are the duties of internal auditor? So to make sure that adequacy of internal control system by continuous examination of the accounting procedures, receipts, disbursement, like payment, um, receipts, disbursements, everything is proper. The accounting is proper. So you check the system of internal control. Number two, to operate independently of the accounting staff and must not in any way diverse with any of the responsibilities upon him. The accounting staff is different. You go and review the accounting staff. Okay. Third, not to involve in the performance of any executive functions in order that the objective outlook does not get obscured by the creation of vested interest. Like you don't go and pass the accounting entry. See, you are an internal auditor. If you only go and pass the entry, so what are you checking? You see, you have only passed the entry. Obviously, there would be no mistake there. Then correct. So you should not be involved in the performance of any executive function which affects your objectivity. Fourth, to observe facts and situation, bring them to the notice of authorities who would otherwise never know them. So basically, if you see something, facts, situation, you bring to the eyes of the management. Fifth, to associate closely with the management, keep knowledge up to the date by being informed about all the important occurrences and events affecting the business. To associate closely with the management, keep knowledge to up to date by being informed about the dates, the events happening and affecting the company. Last, he must enjoy an independent status. He must enjoy independent status. Now, this is the responsibility. Please understand the question. Responsibility of the internal auditor. Responsibility of the internal auditor with regards to what accounting and financial records. Accounting department and financial records. That's number 4 for you. So you check internal control system for accountancy. Number 2, you check we act independently of the accounting staff, not to involve in executive functions. Bring the facts and information to the knowledge of the management. Fourth, to be updated about the important occurrence and events affecting the business of the company, and to maintain independent status. To maintain what? Independent status. That's answer number 4 on page number 16.7. Read this again. Answer number 4. Now, answer number 5. Come to 16.10. How, as an internal auditor, you will review custodianship and safeguarding of assets. I mean, see, independent status also includes employees, everybody. See, you are an employee of a company, you're getting a salary there. Okay, so that's an employer-employee relationship. Now they have told you to do a dual role. You become an internal auditor. So when you're an internal auditor, you will be performing that function, not saying that I'm the employee also. No, I will get salary. Achha, if I point out some mistake, they will not give me salary. No, you're a professional there. Just because, like for example, directors become CFO also, right? So they are the directors also. Then they become CFOs, CEOs. So they have a dual positions. Okay. Then review of custodianship and safeguarding of assets. What it is review of custodianship. It is different from the star order. Obviously, in a star order, there's a law proper. You can't buy shares. You can't take any relationship, any transaction. Now, if you say employee of internal auditor can be employee who is drawing salary. So if you are drawing salary, you are already associated with them. So independence is there, but it is less independence compared to star order. Star order, you have to be independent company. So no relation should be there. Okay. Now, review of custodianship and safeguarding of assets. So in the exam, there's a question, they will be asking a question. How as an internal auditor, you will review the custodianship and safeguarding of assets. The assets are of company. Who are you? You are the auditor. Which auditor? Internal auditor. You will see the assets are used only for the benefits of the company, benefits of the stakeholders. Like for example, if I talk about Domino's when there are two-wheelers used, right? So imagine one delivery guy went out on a date with his girlfriend using the bike of Domino's, consuming the petrol of Domino's. It is wrong, right? So this involves verifying the existence of assets. So first, existence you will check. Number two, there should be proper segregation of duties. You don't have to do anything. You have to check whether there's a segregation of duties or not. Then he should review the systems to ensure all assets are accounted for fully, like accounting entries, projects recorded in the books of accounts. Then he should review the means used for safeguarding the assets against losses, like proper locking system is there, shutter is there. If you know those like red cans of water, fire extinguishers, they are generally locked. Okay, all those are there. He should review the control system for intangible assets. So control system for tangible, control system for intangible. Existence of the assets and segregation of duties. So 4 to 5 points. Mark answer. Then sixth answer, organizational structure. How would you review the organizational structure? So you read 2-3 questions together now. Okay. Review of organizational structure. So organizational structure is basically the hierarchy. The hierarchy in the company. So because if I'm an internal, obviously I have an independent citizen. I can go and meet, like imagine I'm an internal for Reliance. I can go and meet Mukesh Ambani. Hey Mukia, I am your internal auditor. But ideally, practically, it will not be allowed that way, right? So you have to check the organizational structure. Like who, which employees are reporting to which authority. Below Mukesh Ambani, what is the chain? Like Mukesh Ambani is there, then Nita Ambani is there, then there will be like 3-4 people. And below the 3-4 people, there will be like more 2 to 3 people. Then below that will be like 50-100 employees. So that's called organizational structure. So he should review the manner in which the actors of enterprise are grouped for managerial control. How the actors are grouped, like production department, sales department, accounting department, tax department. That is grouping. Then the internal auditor should examine the organizational chart to find out whether the structure is simple and economical. Which I don't know, like Mukesh Ambani, then Nita Ambani. Then below that 4 people are there, 4 pillars of them. Then below each pillar there are like more 2 to 3 employees. Then below those 2 to 3 employees, there are more 50 people are there. It's very simple, not complex. Then he should see that the responsibility of the manager staff at headquarters do not overlap with those of chief executive operating units. So who are managerial staff who has to take decision. Obviously, they will be doing some work also. It should not overlap. Their duty should not ever overlap. Then he should examine that there's a unity of command. That is, each person reports only to one superior. So if there are, like for example, accounting department 20 people, the 20 people will report to, let us assume, Mr. A. They are not reporting to Mr. B also, Mr. C also, Mr. No, the reporting has to be unity of command. Like 20 employees are there, they will report to me. That's called unity of command. Then check the dual responsibility cannot be avoided. The primary one should be specific. The specific responsibility to each senior is fixed. He should review aggregate segregation of duties is there, and he should evaluate the process of managerial development in the enterprise. Like for example, proper training is given. Like on Big Four, if you have worked or any good firms of your city, they give proper training. Okay, how to talk, how to walk. I mean, how to talk, how to handle the client. All those should be given. That's called managerial development. Okay, this is answer number 6. Say one. Review of utilization of resources. So management is using it. See, top management has to increase the business. Production is always done by whom? The lower management, the employees basically, correct? So production and purchase department would be there. So purchase department will purchase when there's a request from the production department. Now they will purchase and they will allot some quantity to the production department. Production department, you should use the resources properly. Internal auditor, what should check? There should be proper operating standards and norms used for measuring the economical and efficient use of resources. Like if you see Starbucks, so Starbucks when they make a coffee, they have a standard system. Like for example, 2 spoon of like 10 grams of sugar, 5 spoons. I mean, just give an example. Okay, so imagine if they bought like 1 kg ka coffee ka packet. Okay, they know that 1 kg say we can make like 500 coffees. We can serve 500 coffees. So they know the exact quantity. So every big company they have standard mix. We say standard mix, actual mix. So whatever is the standard quantity, you should tell them. Go and check whether there's a proper standard operating procedure or not. Number 2, they should be detailed enough to be identifiable with specific operating responsibility and should be capable of being used by operating personnel. So who is in charge of giving the goods to the next department? Person who is using that goods, raw material, is he capable enough? You should have to check that. Third, he should review the methods of establishing the operating standards and norms. See, what are we checking in first? What are the standards? Second, what are the methods of establishing standards? Like how you got this standard, like 20 grams you have to use, 2 spoons you have to use. How have you got that? Acha. Then when there's a wide difference between the actual and the corresponding, the reasons may be considered. Standard mix, actual mix. There's a difference. You have to inquire with the reason. So as a part of evaluating resources utilization, identifying the facilities which are underutilized is an important function of internal audit. So out of 5, 6, 7, 6 have come in the exam. 6 have come in the exam long time ago. How as an internal auditor you will review organizational structure. Okay? Read. I'll be scrolling slowly. Okay? Read 5, 6, 7. Utilization of resources can be clubbed with something else, but yeah, organizational structure they have asked, so it may come in the exam again. Okay. Then come to question number 8, 16.16. It says, how would you perform internal audit? How would you perform internal audit? We call this as KPR. KPR. K. Knowledge of the business and its environment. P. Performing audit planning. I. Gathering the information. A. Performing audit checks. R. Reporting. So if there's a question, how would you perform internal audit, guys? The code is KPR. Knowledge of the business environment, performing audit planning, AI information, A. Audit checks, R. Reporting. The code is what? KPR. Obtaining knowledge of the business environment, P. Performing the planning, I. Gathering information, A. Audit checks, R. Reporting. Now, when you read, you just read like one line because it's a big answer. So they will not check, they will not ask you so big answer. Okay. So obtain knowledge of business environment, so just one line. So internal auditor must understand various business documents like SOPs, financial structures. Okay, you should underline, you should understand the information technology landscape, then knowledge of business and environment. P. Planning. Internal auditor must plan the engagement as per CR 310, planning the internal audit assignment. The scope must be approved by audit committee and board of directors. So heading and like a BCom student and then explain. One line. KPI. Then gathering information. He must obtain the required information checks to ensure correctness and integrity of the information received. I is information. A is your audit checks. Now audit checks they have given a lot of SA ka name, CR ka name, standards on internal. So this you need to remember. So he can perform the data by following standards. Standards on internal audit, analytical procedures. He must select sample as per CR5 or sampling. He must ensure that evidence is collected as per CR 320 internal audit evidence. Then he should review the work performed by others as per CR 350. He should document the internal audit work as per CR 330. Like 3 to 4 numbers you will remember. CR 5 and 6 you can remember. 5 is sampling and 6 is analytical procedure. Okay. Then reporting of internal audit. Internal auditor will prepare a draft internal audit report. Draft internal audit report. Then the report shall include what all scope, coverage, exclusions if any, audit period covered during the audit, summary with the issues. So you will write report will contain the issues, the observation, the fact, the period, the scope and objectives. Then he should circulate final report and his findings to the audit committee. It must adhere to CR 360 communication with management, CR 370 reporting results while sharing the results of the internal with the stakeholders. So heading is important because the paper checker matches the heading. How would you perform internal audit? My code is KPR, obtaining the knowledge of the business. P, performing the audit planning. I, gathering the information. A, performing audit checks. R, reporting. And then you, like a BCom student, you write. Okay? Use a heading and then make the sentences. Cool. Here 5 and 6, 6 you remember, 5 is sampling, 6 is analytical procedure. Acha, report me remember 370 reporting results. 370 is reporting results. Okay? Standards on internal audit. Okay. So let me just teach you, then you read. Ninth answer. This was asked in the exam. This came in, I think May 25 or November 25. I don't remember, but this came in exam. Now, internal audit reporting is generally taken in two stages. So it's basically interim and final. Interim and final. Interim is what? Basically, you started the work you're doing like 6 months ka internal audit you're doing. So after 2-3 months, management will like, "Arey, hey, Sukesh, hey, Pranay, you must have done something. Na? Show some report. Give some report." What will you say? So we have not completed the data. Management will say, "Acha, we know that you have not completed, but yeah, 2-3 months you are checking what you are doing. At least show something to us." That is interim. Then what will you do? You will complete the audit. So you will continue that report only and make that final report, or you will make a final report separately. A final report separately. Okay. Now at the end of a particular assignment, internal audit report covering a specific area, function or part of the entity is prepared by the internal auditor, highlighting key observations from those assignments. This report is generally issued with the details like the key findings, the audit procedures taken. This report is issued to the auditor, that is the client. Copies will be shared with the local executive management as agreed during the planning phase. This is basically final. On a periodic basis, at the close of a plan period, a comprehensive report of all the internal activities covered in the entity and the plan period is prepared by the chief internal auditor. Now, quarterly, it can be done quarterly and submitted to the highest authority, generally the audit committee. So, first one was the final report, second one was the interim report. It could be quarter, it could be half yearly. This came in exam, okay, 2 stages, ninth. Now, contents of internal audit report, answer number 10. Contents of internal audit report, answer number 10. So, what you have to write? Do you remember the Tauba wala part we have done? Tauba, A, Tauba 75 terms and scope of verification. O, objective. B, background of the company. A, assessment of CPT file. Then we said summary of financial activities, and E, executive summary. So, here also it's almost similar. Scope, period, executive summary, findings. Then detailed audit findings with elaboration. Then rating of highlighted issues, whether it's high, medium, low. How would you rate that this issue is high alert, low alert, medium alert? Audit recommendations, you give recommendations also, and the response received from the functional authority. So these 3 points you need to add towards the end. Rating of the highlighted issues, audit recommendation to improve control environment, and response received from the responsible functional authority. I'll show an example so it becomes easy to remember this answer. So we had done internal audit for one of the client. Okay. So like this was a report. This was the key highlights. Okay. So we wrote something in the table below. We have given a summary below of the key areas. Yeah, I'll just show the high low. Process gap was there. The risk is what? Medium. So this was my observation. So I wrote this was the observation. Pending sales order. Blah 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 blah. Okay. This was the observation. Then what could be the risk? I wrote the risk also. Then above risk, I rated the risk as medium risk as per my judgment. Okay. Then management ka comments are there. We studied in that contents of the management comments. And what do we recommend? This is our recommendation. So if you are sitting in the exam hall, you do not know what to write in the contents report, like understand first what will you write, the terms and scope, objective, background of the company, right? Then you say okay, findings, obviously that's the main work of ours, findings. Then rating, because it's an internal report, you'll write rating. Remember this, rating, high, medium, low. Okay, then management ka recommendations, auditor ka suggestions. Okay, sorry, auditor ka recommendation, management ka comments. Okay, medium, one is this is low. There was something about here also, this is low risk. You understood? High, medium, low. Works? So you will read now 8th, 9th, 10th. 9 has come in the exam. 9 has come in the exam. Huh? Start reading. I'll be scrolling slowly, okay? 8th, 9th, 10th. Done? Good, Pranay, good. 11th. Now, 11th is basically distinguish between internal audit and external. Very easy it is. Very easy answer. It's basically intermediate ka answer. It says, sir, internal audit is performed by anybody. It can be done by CA or MB or employee. It can be done by an outsider. He will check the operations of the entity. He will check the financial statements of the entity. Appointed by the audit committee or board, appointed by the members of the company. The users of the report are basically top management or the stat auditor. Here, the reports is submitted to stakeholders. Here, internal audit report provides weakness in the internal control. Here, your objective is to give true and fair view of financial statements. Internal auditor could be an employee of the company. It could may or may mandatory not to be an employee of the company. He has to be an outsider. So this is basically inter level ka question. Question number 11. Inter level. Okay, so you can do it on your own. Now come to the next part. 12. Now internal audit, you will see SA610 is there. What is the name of 610? Using the work of internal auditor. What will you say? SA610 using the work of internal auditor. Using the work of internal auditor. This is a question. This is your answer number 12. Determine whether in which areas and to what extent internal auditor can be used to provide what? Direct assistance. Internal auditor can be used to provide direct assistance. Generally, internal auditor is appointed by management. So he has a duty to report to management. Correct? I am a star auditor. Imagine we take internal auditor as a Pranay. Okay, Pranay is an internal auditor. So Pranay has been appointed by the management, so he will go and directly report to the management. But I want Pranay, you should assist me directly. You give me reports. You work directly for me. I am not giving him salary. I am not giving him remuneration. Who will give? Management. So can I ask the internal auditor to report directly to me? The answer is yes. He is assisting me directly. I have to follow which SA? SA 610. What's the answer? The EA. EA basically means external auditor. External auditor should consider what all? We call this as JAT. J-A-T. A-J-A-T. What is J? Sir, the amount of judgment. The amount of judgment involved. A. Assessed wrong. T. Existence and evaluation. Sorry, evaluation of existence and significance of threats. What's the code, guys? JUT. J-A-T. JUT. The amount of judgment involved with regards to what? Planning and performing audit procedures and evaluation of the audit evidence gathered. Planning and performing of the audit procedures, evaluation of the audit evidence gathered. What procedure you are performing and how audit evidence will gather. A. Assess wrong. T. Existence of and significance of threat. Evaluation of existence and significance of threats. Now, so this was a 12th question. This is 13th question. Point number 12 said what? When I want to use as a stat auditor, if I want to use an internal auditor to assist me direct, this is your internal direct assistant. I have what I will consider JAT. Agreed? Now, 13 question says which areas where you can't use. You can use internal auditor for direct assistant, but there are certain areas where you can't use internal auditor for direct assistant. What are it is? The stat auditor shall not use internal auditors to provide direct assistance to perform procedure for what? Significant judgments in the management. Jawd. JAWD. A Jawd. JA. Assess risk of material mishandling, like higher risk. Okay, for assessed ROM you can use, but for higher related risk you can't use. W. Relate to the work which is reported to the management or service by internal audit department. If the internal auditor is doing a work which will be directly reported to the management, why the hell he will come to me? He will not come. D. Relates to the decision by the stat auditor which he makes as per 610, like to rely on that, to rely on internal auditor or not. It is my decision. I can't take assistance on for this work. Okay. So JAWD. So you can't take internal auditor का direct assistance for JOD. JOD. J. Sir, significant judgments. The judgments के लिए you can take, but significant judgments के लिए you can't take. A. Sir, assessed ROM के लिए you can take, but higher assessed ROM के लिए you cannot take. W relates to the work which is reported to the management or distributed by internet function. D relates to the decision which stat order makes as per as 610. This also came in exam as a descriptive also in MCQ also. May 25 MCQ was this. Find the odd man out. So here they twisted something here, I think. They added anything which is not reported to the management. Something like this was there in May 25 ka paper. Okay, 12, 13, 14. If the stat auditor uses internal auditor to provide direct assistance. If the stat auditor uses internal auditor to provide direct assistance on the audit, the stat auditor shall include in the audit documentation. So this is audit documentation. What it is? It is basically your audit documentation. So what you will include? See, my JUT was what point should consider. JOD was where I can't use. This is what if I'm using him. So what documents I will do, sir? The evaluation of existence and significance of threats, objectivity of the objective of the internal auditor, the level of competence of the internal auditor used to provide direct assistance. So I will see JUT may say T was there. So my evaluation of existence and significance of threat, competence of the internal auditor, decision regarding the NT of the work performed by the internal auditor, who reviewed the work performed, the rate and extent of that review, written agreements obtained from the authorized representative. See, for internal auditor, you will directly report to me. So you will have no problem, sir, no problem. Get into agreement with me. A management, your internal auditor is directly assisting me. Do you have a problem, sir? No problem. Give me in writing. So both party agreement I will take. That is my documentation. Working papers prepared by the internal auditor who provided direct assistance on the audit engagement. So direct assistance ke prati you had those working papers. With regards to that, you will give me those working papers. I will keep as a documentation. So 14 question can also come in the exam. 12, 13, 14, both are tricky, both are important. I mean, all three are tricky and all three are important. Okay. And this is a question illustration to uh, employee high attrition rate. Basically, employers are leaving the organization. Why do you leave? Remember your articleship experience and write job stress, work-life imbalance. Wrong policy of the management. Right, your full heart. Your heart should pour out. Okay. Read 12, 13, 14 this illustration. 12, 13, 14 important. Done, guys. 14 questions we have done. Last question 15. Audit trail. This was May 24 का exam question, audit trail. So we discussed in the reporting chapter, every company in India today should have that accounting software which has a feature of audit trail, stating that it has an edit log facility. So the records maintained as audit trail may include the following information: who, when the changes were made, mm, who made the changes, what data was changed. So there should be a backlog, a backup of the changes you're making. In the exam, they ask what are the illustrative list of control which is required to be implemented for audit trails. So what will you have? Sir, controls to ensure that the trail has not been disabled or deactivated. That means it should be enabled forever. To ensure that the user's IDs are assigned to each individuals and user IDs are not shared. Controls to ensure that the configuration of the trail are authorized and logs are maintained. Controls to ensure that access to the trail and backup is disabled or restricted, like backlog. See, controls so it should be reasonably restricted, but when you're making the changes, uska backlog will be created. That backlog ka access should also be restricted. Controls that the access to the trails and backup is disabled and restricted, and access log whenever the trails have been accessed are maintained. Periodic backups of the trails are taken and archived as per the statutory. So generally it is 8 years we keep the books, so backup should be kept for 8 years. This came in exam. Cool. So total 15 questions have come in the exam. I mean in this chapter, 15 is here, and in the module there are also 15 questions which you should do. Like this was May 24 ka question, audit trail. Suggest them a list of control which may be required to be implemented. This is a list of controls what we just studied. These are the list of controls. This was supposed to be the answer. So do those 15 questions thoroughly. 15 concepts are there. Cool. We have one more chapter over. So we have completed 13 chapters. Have you understood, guys? Internal audit. Don't skip this chapter. Will you do it? Okay. So let's take a small break of 5 minutes. It's 4:05 right now. The 4:10 could continue. Okay. Take a get lights. Go to restroom. Relax. Have water. Eat something. Then we do some interesting chapter. Okay. In 5 minutes we continue. Done, guys? Let's start. So now, digital bank planning. These three you will do. Digital bank plan planning. Okay. Digital bank. I'll try to upload a lecture. I don't know when, but I'll try to upload. I'm not sure about it. Rest everything I'll teach you in the class. Okay. So we're done with 12 chapter. 13 is this. 14 is materiality. 5th is audit. 15 is audit evidence, and 16 is prospective. So tomorrow there's no class because I'm traveling back to Bombay. Tomorrow there's no class, so we're gonna meet on Friday. So Friday and Saturday last lecture. Okay, I will check with the time with the team, and they will update you. So two chapters on Friday, two chapters on Saturday. We will do it. Digital audit and bank. I'll try to find out the recorded lecture and try to upload it on the drive. I'll try. I'm not sure. Okay. If you have a doubt, you can ask me definitely. But yeah, 16 chapters we will be completing in the class itself. Okay. So today we are starting with quality control. Quality control. So we're left with what? If time personality is planning also, this study material you can buy. It's a book. It's not an open PDF for anybody. It's a book basically. When is your attempt run? And very less time now. Okay, do it from my website, letslearnindia.in. Uh, do it right now because I think yeah today the courier has left. We have a cutoff at 3 o'clock. Today the courier is left. So what we can do is we can order so that we dispatch it tomorrow. Tomorrow is what? Thursday. So tentative Thursday, Friday, Saturday. Maybe Saturday or Monday you will receive. You're from which city? अच्छा, Bangalore. ठीक है, तो maybe Thursday you're ordering. If you order today, tomorrow they dispatch. Saturday or Monday you will receive it for sure. Okay. Let's do quality control. Okay, Pranay, noted. Let's do quality control. SQC1, SA220. Now, let's understand the difference between both. SQC1 is applicable for all. We say it's a father of all the standards. All means sub means all. It says audit of historical financial information, review of historical financial information, other assurance engagement, related service engagement. Okay, audit of historical financial statements. Okay, review of historical financial information, other assurance and related service engagement. Okay, Pranav, you are from Bangalore, right? Okay, just give me uh, 2 minutes. I'll just ask. I'm in Bangalore right now. If they have it here in the car, okay. They are checking and updating. Okay. Now see, SQC1. SQC1 talks about audit of historical financial information, review of financial information, other assurance engagement, graded service engagement. SQC1 is father of everything. Okay. And SA220 talks about audit of financial sheet. SA220 talks about what? Audit of financial sheet. Now you have to read the question very thoroughly. If they are talking specifically about audit, you will quote SE220. If they talk about like any review, okay, they talk about other assurance, if they talk about related service, you will write SQC1. SQC. Okay. Now what's the difference? The difference between SQC1 and SA220, sir, it applies to the entire firm and fixes the responsibility of the firm to be assumed by CEO or managing partner, like the main partner or the CEO. Achha, SA220 applies to a particular audit engagement. And who is responsible? The engagement partner will be responsible. Here, who is responsible? The managing partner would be responsible. Here, engagement partner would be responsible. It is applicable to what? Audit review of historical financial information, other assurance engagement, other related service engagement. Audit and review of historical financial statements, other assurance engagement, related service engagement. Here, it is applicable to audit engagement. Then, it relates to the setting up of quality control system for the entire firm. Like I should have a proper policy for my firm. When we onboard a client, we have this policies. When we leave a client, this is the checklist we have to do. This is the documentation procedure. All those policies are set up by whom? In SQC1, as per SQC1. Now, here it deals with the responsibility of engagement team to implement quality control procedures that are applicable to only audit engagement. If imagine our firm is doing audit of Reliance, and we have appointed Sukesh to go and do it. So Sukesh is the engagement partner and you guys are engagement team. So you will be maintaining the quality control, developing the system of quality towards Reliance audit only. Okay, how you will collect the documents from Reliance, what procedure you will perform for Reliance, all those will be done by you guys. Okay, for audit. For overall, I am the managing partner, I will be handling it. Like we should take manufacturing clients, service clients. Okay, that is my decision. Okay, because I am the managing partner. Now, it pertains to establishing a system of control designed to provide firm with a reasonable assurance that the firm and its personnel comply with professional standards, law and regulation requirement. Like we have to do peer review. We can do maximum 60 tax audit. We can do maximum 20 stat audit. Although I have to communicate, right? That is SQC1. Acha, here it is premised on the basis that the firm is subject to SQC1 because SQC1 is BAP, like the father. It is within the overall context of a firm ka system of quality control. Engagement teams to implement the quality control procedures which are applicable to only audit engagement, because the engagement team will establish procedures towards audit engagement only. Okay, so this is my first question, difference between SA220 and SQC1. Okay, so read this page, then we proceed. Any dot message. Pranay, book is not there, I'm so sorry, you have to call it from Bombay only. Read. I'll scroll slowly. In the Google Drive there's a link of this PDF. Huh? Done. That's the first question. Now, next question, what are the elements of system of quality? See, you can't skip this chapter because question number 1A specifically generally comes of this only. If I show you 1A, May 24, 1A, November 24, here it came at 2A, 1A, September 25. 1A is fixed and it's not the new trend, old trend. Since ages, this is coming as 1A. Now it says, what are the system, what are the elements of system of quality? Code is heal me. So these are the 6 elements and this only will be studying now. H, human resource. E, ethical requirements. A, acceptance and continuance of client relationships and specific engagement. Very important point this is. L, leadership responsibilities for the quality within the firm. M, monitoring. E, engagement performance. Now see in the model what they have given SQC1 ka content and then separately SA220. Okay. Almost 90% the answer is same. Either you have to, I mean, you have two options. Either you follow both the standards separately and do it, or you make a one common answer because the things are common here. And just change the standard ka number and name when you're writing. If you see the question mein audit word, you will write SA220. But if you see the word review and other things, you will write about SQC1. If they are confused, you are not getting what? Give priority to SQC because SQC1 is father. The son SA220 is included in SQC1. So you always give priority to SQC1. Okay. So what are the elements of system of quality control? We talk about heal me, human resource, ethical requirements, acceptance and contents of client relationship, A, leadership responsibility, M, monitoring, E, engagement performance, heal me. Now, here, what are the factors to be considered by CFO before accepting and continuing client relationship? Now understand two words are here, accepting and continuing. Accepting means when the client is not your client. He has approached you, you please accept my work. Like for example, if from UK, my very good friend Vijay Malia calls you, okay, Haji, Deepak, Siva, Hari, Pranay, okay, Sugesh, can you do the audit of mine? So Vijay Malia is calling you. So it is accepting. You were already the auditor of Adani Group. Okay? And Adani ka some fraud came. Hindenburg has reported that. Okay, you were already the auditor. Now the question arises: should you continue or not? Should I continue? That's because continuing the client relation. Continuing the client relation. It says what are the factors to be considered by CA firm for accepting and continuing client relationship. So before accepting an engagement, the firm should consider what? ICC. ICC. Integrity of the client, promoters and KMP. E. Competence, capabilities, time and resources. Competence, capability, time and resources. And one more C. Compliance with ethical requirement. Compliance with ethical requirements. ICC. Integrity of the client, promoters, KMP. Competence, capabilities, time and resources. And compliance with ethical requirement. So this is one big answer. In that, there are two separate answers. One answer is how would you check the integrity of the client? This is one answer which has come a lot of time in the exam, and this is not yet asked, so they can test on this. When you're accepting an engagement, could be audit engagement or review engagement or other assurance engagement, how would you evaluate the competence, time, and resources? Okay, very simple, very logical answer. First, integrity. So, integrity, what should be considered? So, the nature of client cooperation, including its business practices. For example, if you are doing charas, ganja, drugs ka business, you will not accept it. The client is doing, let us assume some laptop trading company, you will accept it. Then information concerning the attitude of the client ka principal, owners, key management is Sarduji. Like when you see the word, when you hear the word uh, Reliance, Adani, so what your heart says, the chore, thief they are. I don't know. I mean, people say such. For me, they are good. But when you hear the word Tata, what an amazing, what amazing. So that's basically the attitude of the client ka principal, owners, key management. Then whether the client is aggressively concerned with the maintaining the firm ka fee as low as possible, they are reducing your fees. Hindi client, Kinty client, small client, nonsense client. It is our hard work. We are struggling to clear CA final and we will become auditor one day. You are not giving us fees. Waste client. Indications of inappropriate limitations in the scope of work. Hey, oh, CA, don't go there. Oh, don't check this. Client is bad. Indication that the client might be involved in money laundering or other criminal activities. And the reason for the proposed appointment of yours and non-reappointment of the previous firm. So this is the factors when you check integrity of client. Capabilities, competence, time and resources. What you will check? So whether the firm ka personnel have knowledge of relevant industrial subject matter. Now imagine a client was a platform who was doing Bitcoin, okay, like Coin DCX, Coin Switch. No, I do not have any idea. So whether the firm ka or what is Bitcoin, how do you trade in Bitcoin, how do you do the taxability of Bitcoin, I do not know, sir. So whether we have the knowledge of the business of the client. Number two, whether the firm ka personnel have experience with relevant regulatory reporting requirements. Like it's a listed company, we should be aware about SEBI laws. It's a bank, we should be aware of the Banking Act, and the they have the necessary skills and knowledge effectively. Whether the firm has sufficient personnel with necessary capabilities and competence. Like bank or me, you guys CISA DISA qualified. Whether you have it or not, articles are there or not. Whether experts are available. Whether individual meets the requirement, individuals meeting the criteria and eligibility requirement to perform EQC review. That's engagement quality control reviews there, where it's applicant listed company, and whether the firm would be able to complete the engagement within the reporting guidelines. So whatever the due date is, whether you'll be able to complete or not. So what factors will consider for competence capabilities, especially team, time and resources, time whether you'll be able to complete or not within the due date. Compliance with ethical requirements, no as such point they have given. Okay. So this is one full answer, factors to be considered. In that two separate answers, integrity wala and competence. Okay. Very important answer. Read from the screen. Read. Done. Procedure for withdrawal from an engagement to client relationships, okay, or client relationships. Procedure for withdrawal. So this we have studied in 705 also. So either you are withdrawing from the engagement, that engagement, or you are withdrawing from client relationship. That means you don't want that client only. either 4 mark or 5 marks. See, all the questions are either asked for 4 or 5 marks. Then what will you do? Discuss with the appropriate level of the client ka management disability regarding the appropriate action that a firm might take. Like, sir, I want to withdraw. This is my final call to you. I want to withdraw from the engagement, or maybe I want to break this relationship only. If the firm decides to withdraw from the engagement client relationship, then discuss with the client and management and the subject regarding the withdrawal and the reason for withdrawal. See, what's the first point? Discuss with the management that we want to withdraw. If the firm decides you want to withdraw, discuss again with the management what the withdrawal and the reason for withdrawal. Third, consider whether there is any parallel. Parallel means professional, regulatory, legal requirements for the firm to report the withdrawal. Like when you resign, you inform to ROC. In a government company, you inform to CAG. In a listed company, you inform to SEBI. Insurance company, may IRDA. Any responsibility is there or not? Document the issues, consultations, conclusions, and the basis for conclusion. What? Document the significant issues, consultations, conclusion, and the basis for conclusion. 4 points. Number 1, discuss with the appropriate level of management issue whether you want to withdraw or not. So if the firm decides to withdraw, discuss with the management and TCW the reasons for the withdrawal that you are withdrawing it. Then third, check whether there is any responsibility to inform to law and regulations or professional responsibility the reason for withdrawal. And document significant issues, consultations, conclusion, and the basis for conclusions. Okay? Next, what factors are to be included in the engagement quality control review for the audit of listed company? May 24 exam question. Circle the word listed entity in case if you have a hard copy of these notes. Factors to be considered in the engagement quality control review for the audit of listed entity. What will you consider? So the engagement team का evaluation of the firm का independence in relation to specific engagement. Whether the firm is independent of the listed entity or not, because listed entity means there's lot of requirements, you have to be completely independent. So you check, you evaluate whether we are independent of or not. Number 2, significant risk identified during the engagement and the responses to those risks. What risks are there? How you can mitigate the risk? Can you reduce the risk? Third, judgments regarding materiality and significant risk. Judgment regarding materiality and significant risk. Fourth, whether appropriate consultation has taken place on the matters involving difference of opinion or any other difficult or contentious matters and the conclusions arising from those consultations. Wherever you have find out difficulty, like for example, I did not know the valuation of this particular asset, so I would appoint some expert there. So whether a consultation has been taken place on any matters of difference of opinion or any difficult or contentious matters and the conclusions arising from those consultations. So what valuer has said, I will consider that. Fifth, significance and disposition of the corrected and uncorrected misstatements identified during engagement. Now, in a listed company, we have found misstatements. We told to the management correct it. They have corrected. Achha, we told them so there's a misstatement. They have not corrected. It's because uncorrected mistake. The significance and the disposition of corrected and uncorrected mistake. What is the status of this misstatement? The matters to be communicated to the management disability and where applicable any parties such as regulatory bodies. Like for example, fraud if you find out, you need to inform to CG. In listed company, you need to inform quarterly reports to BSC also, NSC also. Then, whether working papers selected for review reflect the work performed in relation to the significant judgments and supports the conclusion reached. So, your working paper should reflect the work performed, whatever your team has performed the work. Last mean the appropriateness of the report to be issued. The report should be issued properly, appropriately. 8 points are there. Important answer May 24. Question 1A was this only, or 4, I don't know. One question was there for listed entity. Okay, this is the answer. Read question 4 and 5. 4 and 5. Done. These notes are shared with the cabinet where you're taken the admission. Please tell them, they'll give you the link. Google Drive ka link. Okay. Full Google Drive ka link is there. Question number 6. It says, what shall be considered by the reviewer while reviewing the work of the engagement team members? What shall be considered by the reviewer while reviewing the work of engagement team members? Now understand this. If AB and Co was the CA firm, okay, AB was the maybe say senior partner. We say. So I'm responsible for the overall quality control of the firm. Now, from our firm, like imagine we had Sukesh as a partner, we had Hajit as a partner, and let us say we have a Pranay as a partner. Now we are sending Hajit to audit Reliance. To audit Reliance. So Hajit, I mean AB and Co and Reliance ka relationship has become. It is called as what? Engagement. What it is called as? Engagement. Now can somebody tell me what is Hajit called as? What is Hajit called as? Very good. Hajit is called as what, guys? EP. Engagement partner. Now Hajit would be taking with him, let us assume, he is taking Deepak with him, CA Deepak. Okay, he is taking, let us assume, CS Sevahari for some work. Then he is taking BCom people, then he is taking some MCom people, then article 1 and 2 he is taking. This entire family, when they are going for the audit, this entire family, Hajit and these people, they are my firm people only, right? When they go and do the audit of Reliance, these people is called as what? Engagement team. What is called as, guys? Engagement team. Correct? Now these people will do some work. Their work has to be reviewed by this CS. This CA ka work will be reviewed by Hajit. Hajit ka work will be reviewed by AB. Correct? May or may not be. Depends. But ideally, people who are in the firm or maybe the engagement team, their work has to be reviewed by somebody. What is the question now? The question is, what shall be considered by the reviewer while reviewing the work of engagement team members? So AB is a reviewer. Okay, AB is a reviewer. I am reviewing the work of the entire engagement team. What point I will consider? Whether the work has been performed as per the professional standards and law and regulation or requirement. Whether they have worked according to laws. Significant matters have been raised for further consideration. If they have doubt, if they had a doubt whether they have discussed with the team or with me, like the reviewer or maybe some expert they had appointed or not, whether appropriate consultation have taken place and the resulting conclusion have been documented and implemented. Like valuation, one example I gave, whether the engagement team had a point for evaluation, whether they discussed with the valuer, whatever he said, whether they have noted it or not, whether there's a need to revise the NT of the work performed. NT means nature, time, and extent of the work performed. Whether the work performed supports the conclusion reached and is appropriately documented. They're saying so we should give audit adverse report as an audit opinion. So whether you're when you're giving adverse opinion, whether it is matching with the work performed, whether the documents are saying that or not, then whether the evidence obtained is sufficient and appropriate to support the report, whether you have collected proper sufficient appropriate evidence, whether the objectives of the engagement procedure have been achieved, whether you have achieved the objectives or not. The firm should assemble the final engagement files within maximum 60 days after the date of audit report. You will assemble the final audit report, sorry, final working papers within how many days? 60 days after the date of audit report. Maximum 60 days after the date of audit report. Okay. So this is regarding review. So Abhishek Bansal is an senior part of the firm. He is reviewing the engagement team members' work because you have to give opinion to Reliance. Hajit is the engagement partner. Ideally, on the audit report, it will not be Hajit ka name. It will be Abhishek Bansal and company firm ka name signed by the partner CA Hajit. So Hajit ka team ka work, the reviewer has to review. So I am the reviewer. Okay? This have not been as it may come in the exam. Reviewer review, reviewer review. These are the code to identify the question. Read. Why you want to take screenshot? Open PDF is there, you can study from there. Take it from the team, they'll give you. So many screenshot will be happening there. Okay? Take the proper PDF for you, then you can remove the printer and study. Now, question number 7 says, what are the duties of EP and EQCR? EP means engagement partner. So can somebody tell me in this example, who's EP for us? In this example, who's EP for us? Ajit. Who's EQCR? I'll give the full form of EQCR, Engagement Quality Control Reviewer. Engagement Quality Control Reviewer. Who's EQCR? We have a lot of people there. AB senior partner, Sukesh is my partner, Ajit is my partner, Pranay is my partner. Ajit is engagement partner. So who's EQCR? AB. AB. So it says it is mandatory in listed company. Which company guys? Listed company. That EQCR is appointed. Basically, EQCR is somebody in a CA firm who's very senior, depending upon experience. Like a fresher chartered accountant can never be an EQCR. Person who's with much knowledgeable experience. Not necessary that uh, he should be from the firm. He could be from the outside also, but ideally it is in from the firm. Okay. What is the duties of EP? EP basically means Ajit ka duty. Determine that EQCR has been appointed. Discuss significant matters arising during the audit, including those identified during the engagement quality control with quality control review with the EQCR. Discuss significant matters with him. Third, not date the report until the completion of EQCR. Not date the report means Ajit will not sign the report till Abhishek Bansal have completed the review. Till Abhishek Bansal have completed the review. Reverse. What is my duty now? Same point. Discuss significant matters was here. Same here also. Discuss significant matters with EP. In EP ka duty, what will you say? Discuss significant matter with EQCR. EQCR ka duty, discuss significant matters with EP. Review of the FS and the proposed audit report. Review of the FS and the proposed audit report. Why I have written proposed, guys? Why there is a proposed? You are. You are means because it is not finalized. Now first, AB will review it. Once he is satisfied, then only it will be signed by Hajit. So that's why it's proposed audit report. It's a draft report because I need to do the review first. Then review of selected audit documentation relating to significant judgment the engagement team made and the conclusion reached. Achha, some documents I will review it. Then evaluation of the conclusion reached in formulating the audit report and consideration whether the proposed audit report is appropriate or not. So the team is saying, yes, sir, we should give adverse. So I am the senior partner of the firm. I'll say, Acha, whether adverse ka reason is falling or not. Okay, the reasons are correct or not, documentation is correct or not. These are my duties. So this is EP ka duty, this is AQCR ka duty. Appointing UQCR is mandatory in which company? Listed entity. Question number 7. Read. Done? Then. So question 8, 10, 11, and there's two more questions. We'll be doing it in the next class. That's on Friday. Tomorrow there's no class, guys. No class. Okay. We do question number 9. So this can also come in the exam. It says, how will you resolve the difference of opinion between EP and EQCR? Like basically, uh, team is saying that we should give adverse opinion. Okay. Engagement partner is saying that we should give adverse opinion. I'm an EQCR. I'm a senior partner. Engagement partner had 10 years experience. I have 15 years experience. I am saying qualified. He's saying adverse. I am saying qualified. What we should do. So it says if there's a difference of opinion between the engagement partner, that's Hajit, and EQCR, that's AB, the report should be issued only after resolution of such opinion. That means you have to first resolve the issue. In case the recommendations are not accepted by the engagement partner and the matter is not resolved, it shall be resolved by following what? Established procedures of the firm. The answer is only one line. What? Established procedure of the firm by consulting with another practitioner or a firm or a professional or regulatory body. So we go to another CA firm, maybe we go to ICI, some other authority. So we follow what? Established procedures. If there's a difference of opinion between in our house only, like AB is saying something else, Ajit is saying something else, so we should first resolve the dispute, then issue the report. How you will resolve the dispute? By following the established procedures by consulting with another practitioner or a firm or a professional or regulatory body. Acha, if there's a difference of opinion between EP and EQCR, the engagement team shall follow firm's relevant policy and procedure for dealing with and resolving the disclaimer of opinion. Sorry, resolving the dispute. It is resolving the dispute. Resolving the dispute. If there is a difference of opinion between EP and EQCR, the engagement team shall follow firm's relevant policy and procedure for dealing with and resolving the difference of opinion. No battery. Low battery. Okay. Understood difference of opinion? Read the answer. Done? Cool. So we are left with question number 8, 10, 11, and one or two new questions which have come that's pending. That we're gonna do it on Friday. Okay. Friday and Saturday ka time I'll confirm by tomorrow to the team. Okay. And whatever we have done till now, make sure you revise it and solve the module ka questions thoroughly. Module mein they have given a lot of questions between test yourself and test your knowledge. Okay. So keep on revising the content again and again and make sure you revise his handwritten notes so that your concepts are very much clear, okay, and solve questions, the more questions you solve, the more confidence you will. Okay guys, so we meet on Friday, Saturday, last class, 4 chapters effectively pending for us. Okay, so we meet on Friday. Tomorrow there's no class. Okay, bye. So I'll let you know the timing for Friday and Saturday. Bye. Take care. Thank you. Pranay, you take the notes from the team. Okay, bye. So hi guys, good morning. Welcome to the class, and we have completed lots. So guys, good morning. Welcome to the class, and we had completed lots and lots. So we were doing quality control. I think 4 5 questions are pending from quality control. Then we are left with audit planning 1, materiality 2, audit evidence 3, prospective 4, digital you'll watch recording, bank audit recording 4. Correct? Let's wait for 2 3 minutes, like let people come, then we will start. In the meantime, we'll be revising ethics. Okay, I hope now you have got little confidence on audit. It's all about revising the content and writing the content. The more you revise, the more you write, and the more chances of you getting clear. Okay, so let's quickly recall. There were 2 schedules. We'll wait for 5 minutes, let people join. Okay, first schedule, second schedule. First schedule was part 1 2 3 4. Part 1 2 3, practice, service no service, general, others. Correct? 1 2 3, 2 up 2 down, total 19, grand total 35, 16, 10 5 1, 10 5 1. The first one was practicing in his name. 2 was peace. 3 accepts. 4 partnership. 5th secure services through a person, services of a person. 6th solicit. 7 advertisement. 8 communicate. 9 a certain. 10 percentage of profit. 11 to business. 12 was signing. Okay. Then part 2 में pays and accepts. Part 3 में not a fellow, act as a fellow. अच्छा, can somebody tell me at what years you become a fellow? At what years you do become fellow? 5. Okay, 5 years, very good. Number 2, does not supply the information, does not comply the requirements of ABCD to IQ. Okay, 3 का double 6 and 7. Then part 4 में first was civil or criminal imprisonment less than equal to 6 months. Then 2, disrepute to the professional ensure whether or not related to his professional work. Then second schedule का first one, discloses confidential information in professional capacity except permitted by client and law. Except permitted by client and law. 2 certifies FS unless examined, certifies a report on FS unless examined by 4 people. 3 he vouches for the accuracy of forecast. 4 he expresses opinion where there is a substantial interest of himself, firm, partner, relative has a substantial interest. Correct? Then 5 FACTS fails to disclose facts. 6 miss a statement. 7 grossly negligent, did not exercise due diligence. 8 negate the expression of opinion. 9 ascertain. No, 9 is departure from gap. Peer review UDIN and membership number I think will be written here. 10 was fails to keep money in a separate bank account. Then part 2 में first one was Parag. He contravenes provisions, regulations, guidelines of the council. 2 was discloses confidential information in employee capacity except permitted by employer and law. 3 was your he includes in IFRS false information submitted to ABCD to IQ. 4th, defalcates or embezzles money received in professional capacity. And the new one, 5th, act as an alternate contravention of section 1/3 of Companies Act. Contravenes So companies X section, okay, and part 3 more than equal to more than 6 months, more than 6 months. Super. Okay, I hope you remember all this. You got that ethics ka chart? Yeah, guys. Okay, ठीक है. Chalo, let's start. So we had done till question number 7, duties of EP and EQC. We were left with question number 8. Acha, very important announcement. Tomorrow we are meeting at 10 o'clock. Tomorrow is the last lecture, 10 to 1. Okay? So please inform your friends also. Tomorrow we are meeting 10 to 1 and I'll finish off the lecture tomorrow. Okay? Whatever is pending, any other content, any other revision, any other questions, we'll do till 10 to 1 tomorrow. Tomorrow is the last class. Now it says, what are the factors to be considered for monitoring the quality control of the engagement? For monitoring. So all this question number 8, 9, 10, 11 are the content which IC have asked in the past. See what is saying monitoring. If you remember that what we did was heal me was human resource, E was ethical requirements, A was acceptance and continuance of client relationships and engagement. This was a separate question. L was leadership responsibility. What is M? Monitoring. So they are asking a question on monitoring. Okay? Monitoring. What are the factors to be considered for monitoring the quality control of the engagement? What I have written? This is my book ka page. It's 2.1.6, page number 10. But okay, module mate is also there. So module में 2.16, page number 1.13, page number module 1.13. ठीक है? What it says? Quality control of engagement has to be monitored, taking into following factors. So the question of what are the factors to be considered while monitoring the quality control? So the theories from here: decide whether QC quality control system has been appropriately designed and effectively implemented. Check whether system is appropriately designed and implemented. Number 2, examine whether new developments in professional standards, legal and regulatory requirements have been reflected in the quality control policies. Like for example, some new requirements come of any government, I mean any department, maybe GST income, like income tax, finance act will change. Okay, so whether those things have been implemented and reflected in your systems or not. Okay, now new developments in the professional standards, legal regulatory, like previously when we used to study, so our firm was auditing as per Companies Act 956. Then there was a revamp, Companies Act 2013 came, so the provisions were a little different. So whether those amendments, those provisions have been reflected in the system or not. Third, conducting the monitoring by entrusting the responsibility of monitoring process to a partner or other persons with sufficient and appropriate experience and authority in the firm. So as a system, somebody has to monitor, like in school, class teacher was a class teacher used to appoint a person, like a monitor of the class, who used to check in his absence. The person who was little very smart. Here also, the monitoring process should be handled by a person who is either a partner or other person with sufficient appropriate experience and authority in the firm. So you will delegate it, the monitoring part. Then deal with the complaints and allegation against the firm or employees of it, or non-compliance with professional regulatory requirement by a person whether within or outside the firm. So if somebody has complained, whether inside the entity or whether outside the entity, whoever has complained, whatever the complaints will made, that complaint has to be considered appropriately. Deal with the complaints and allegation against the firm or employees by a person whether within the firm or outside the firm. Take appropriate actions against the person who did not comply with the quality control policies. If somebody is not following the policies, what action you are taking it? Take actions when deficiencies in the system of firm's quality control policies or non-compliance within the fire system of quality control are identified. So here you will take action against the person, you will take action against the deficiency in the control policies. So this is called as what? Monitoring. What it is called as, guys? Monitoring. So monitoring ka answer has come in the exam. I think it was May or November. Either of it may they had asked. It's on page number 1.13 module. Then I think question number 9 we had discussed it on that day. How will you resolve the difference of opinion between the EP and EQC? Between the EP and EQC, it was like firm follow the firm's ka relevant policy and procedures. Firm's ka relevant policy and procedure. This can be asked as a separate question MCQ also. Question number 9. Now, question number 10 is what documents shall be kept by EP and EQCR? Documentation by EP and EQCR. I hope you are clear with EP and EQCR. EP is engagement partner, EQC is engagement quality control reviewer. Engagement partner, engagement quality control reviewer. What documents to be kept? ठीक है. Documentation answers on page number 1.18. Guys, 1.18. Documentation. The engagement partner should document following matters pertaining to an audit engagement. Page number is 1.18. 1.18 guys, 1.1. Okay. Now see what you will. So I expect this question should come in the exam, or they may ask you in MCQ. So 3 points will be there from here. 1 point would be very different point. The first point is engagement partner. Okay. So I think on that day I took an Hajit ka example. He was my engagement partner. So what will you document? Issues identified with regarding compliance with ethical requirements and how they were resolved. Issues identified regarding ethical requirements and how they were resolved. Like for example, if my wife buys the shares in a company up to 1 lakh rupees, so I'm allowed to do the audit as per law. But ethically I can't do it now because it is my vested interest. So law to says it is allowed, but our professional ethics says you can't do it. Correct? So how this was identified and how it was resolved, you will document that. Conclusion on compliance with the independence requirement that apply to the audit engagement or relevant discussion with the firm that supports this conclusion. Conclusion compliance with independence requirement that apply to audit engagement or and any relevant discussion with the firm that supports this conclusion. Now independent. So I have not bought the shares there. Okay, my family has not bought any shares there. So boss, so it's a fact, right? You are independent. So that thing compliance, how are you complying it? You need to document that. See, because we are using the word engagement partner. Engagement partner will be talking only about that particular engagement, you know, that audit engagement. Wherein if the question talks about the EQCR will be talking about the entire firm. There it will be entire firm. Remember this, okay? Now, conclusion regarding the acceptance and continuance of client relationship and audit engagement. That, okay, the guy is very good, okay, he's not Vijay Mallya, there is no money laundering case. So he's a very good guy, so we will accept the engagement. So how are we deciding that? What documentation will keep here? The nature, scope and conclusion resulting from consultations. So wherever you have taken the consultation, what consultation you have taken, how much consultation you have taken, so you will document that. Okay. Next, engagement quality control reviewer. Engagement quality control reviewer, that is me, AB, should document following: the procedures required by the firm ka policy on EQC are have been performed. So whether my firm is following quality control or not, how I can decide that, I mean, how, what procedure I will do. So that procedure ka documentation you will keep. Number 2, engagement quality control review has been completed on or before the date of audit report. You remember yesterday we have done, I mean in the previous class we have done that. So engagement partner will not sign until and unless AB has reviewed it. AB has completed the review. Same logic here. So the fact that engagement quality control review has been completed on or before the date of audit report, will document that. Then the reviewer is not aware of any unresolved matter. The reviewer is not aware of any unresolved matter that would have caused the reviewer to believe that significant judgments the engagement team made and conclusion reached were not appropriate. Means, sir, I am believing that whatever judgments they have taken, engagement team, it is correct. So I am not aware of any unresolved matter that would have caused me to believe that that engagement team has made some conclusions and those conclusions were not appropriate, were inappropriate. I'm not aware of anything. So you will document that. So A, B, C, who will document? Who will document? EQCR. So these are 3 points. Fourth would be something else. So odd man out. Odd man out. Okay. Please read this. I'm assuming that this question should be there. Read from the screen. Done, guys? Then, so documentation we have done. Then what matters to be considered, for leadership responsibility for quality within the firm. Leadership, what matters to be considered for leadership responsible for quality within the firm. Leadership. So he'll me say M we have done separately. Now this is L, leadership. Okay, so I'll tell you module mate is point ABC. So it's in the start only, page number 1.5, 1.5 ABC. It should be ensured that the firm assigns its management responsibility so that the commercial consideration do not override the quality of work performed. Like see, if a client is giving 5 lakh rupees or if a client is giving 50 lakh rupees, you are more interested in doing the work properly for the client who is doing 50 lakh rupees. Agreed? Commercial consideration, because it's very good. But as a engagement partner or maybe as a firm ka very good senior partner, okay, he'll be like, no sir, we need to maintain the quality. We are an auditor. Whatever work we're gonna do, the way the process for a small firm, it will be exactly the same like the client who's a very big client for us. So the firm has assigned this management responsibility to one person where the commercial concession do not take place. Okay, so he will give an approach that no, we have to be very clear with everybody. The firm policy and procedure addressing the performance evaluation, compensation, and promotion with regard to personnel are designed to demonstrate the firm ka overriding commitment to quality. Suppose you will be giving performance, you will be evaluating the, like Big Four, they have a performance evaluation, they have a very good compensation, promotion, basis on what kind of work you have done, what fraud you have detected. That basically that resembles the quality control. Third, the firm devotes sufficient resources for the development, documentation, support of its quality control policy and procedures. So they have devote sufficient resources for the development, like training are there. So big firms have a proper documentation ka system. So everything is there. So this is towards the leadership. Like one person is a leader and he will be managing ABC. So this could also be a question in the exam. Read leadership wala point. Done? Now, in the notes, there was a last answer. It says refer question 9 and 10, new model, page 1.25. So, model mein there are two questions which have come new. That's question number 9 and 10. Let's see what they was. So question 1 to 8, if you try to study, I mean solve, so it is little easy. Okay, it is little easy. You can manage it out. Okay, whatever content we have written in the notes, it's exactly same. What I found out two different questions was 9 and 10. So if you see the difference, like this is like normal letters, correct? Normal font. Question 6 to 10 is bold, bold. So 6 to 10 bold means they have added this question. Added how? Either from RTP or the actual paper. They have added. Okay. Now, question number 9 and 10. If I see TN को chartered accounts is a large audit firm, it maintains audit documentation both electronic and physical form, hard files. Okay. The physical files are neither scanned nor and incorporated into electronic files nor cross-reference to the electronic files. That means they are not scanned also, and they are not. जैसे for example, purchase bill is there. ठीक है, तो purchase bill is hard copy. But purchases में when you are making a payment, you will make via payment by the bank. तो बैंक का बैंक स्टेटमेंट इज है, तो बैंक स्टेटमेंट का टूडेज टाइम में नोबडी रिमूव द प्रिंट आउट, राइट? एवरीबडी कीप्स इज इन इलेक्ट्रॉनिक फॉर्म, पीडीएफ का कॉपी, करेक्ट? तो परचेज फाइल फिजिकल फॉर्म, बैंक स्टेटमेंट इलेक्ट्रॉनिक फॉर्म. दिस फिजिकल पेपर्स आर नीदर स्कैन्ड nor they are crossed, nothing has been done. ठीक है? Further, there were many instances when the audit working paper do not contain details as to whether information was obtained from the client or prepared by the engagement team. Now, ideally, when you prepare a documentation in CA form, okay, you must be knowing little idea that when you prepare a documentation, it is generated by our team or it is given by the client on this day, that day, this time, via this mode. When we prepare, okay, it has been prepared by the article so and so on this day, this time, reviewed by this day, this time. So we write everything. We maintain those logs basically. Who has done what? Because see, eventually we have so many clients, so many data is there, we will forget it. It's obvious. So we need to document it. Like we have to prepare the list, who got the document, who reviewed the document. Then, how do you view the above situation from the point of view of quality control? So when they use a word quality control, I think it should be SQC1. Let's check the answer. Correct, SQC1. So first you write the first full paragraph, what name as per SQC1. Full name you have to write. Quality control for the firms that perform audit and review of historical financial information and other assurance and related service engagement. The firm should establish policy and procedure designed to maintain the confidentiality, safe custody, integrity, accessibility, and retrievability of the engagement documentation. Then, this is exactly the question. Now see, when engagement discussion documentation is in paper, electronic or the media, the integrity, accessibility, retrievability may be compromised if the documentation could be altered, added or deleted without firm knowledge, or it could be permanent loss or damage. So one of the reasons for designing and implementing appropriate controls is a protection of integrity of the information at all stages of engagement. That means you have to protect it. Now, the documentation may be original paper documentation may be electronically scanned for inclusion in the engagement files. So how do you generate the scanned copies that reflect the entire content of the original paper document, including manual signature, who has signed, like full paper you have to scan. Integrate that scanned copy in the engagement files, including indexing and signing of the scanned copies as necessary, and enable the scanned copies to be retrieved and printed as necessary. Third, it has also been stated that there are many instances where audit working papers do not contain the details as to whether information was obtained from the client or prepared by the engagement team. It is important to identify source of document from where it has come as used as evidence to ensure its reliability. Then it could have a potential risk of non-compliance with SC. It's a different question. I think hardly any teacher book will cover this. Model merit is there. You do this. Read from their engagement. The first para was the name of the standard. Second was the question. Third was the answer. Read this answer again. Important answer, okay? Done? All good? Last question. So question number 10 was Pine, an associate of the Stat Auditor of BB Limited listed company, and it started operation 6 years ago. The field work of the audit of FS of the company ended 31st March 24 was completed on 1st May. The field work. The audit report was dated 15th May. Field work was on 1st May, audit report was 15th May. During the documentation review of the engagement, it was observed that the EQCR was complete. Engagement quality control review was complete on 18th May. Audit report 15th May. Engagement quality control review 18th May. The engagement partner has commenced review by 12th May. 12th May. Okay. So they've given a lot of dates. See, understand, the field work is irrelevant for us. How does it matter? The audit report was dated 15th May. Audit report ko you have signed on 15th May. Engagement quality control review has completed on 18th May. Engagement partners commenced review on 12th May. Irrelevant data. Engagement quality control का review we don't, engagement partner का भी don't check the date. Engagement quality control reviewer का date we check and audit report का date we check. You tell me, they have written, just comment. Is this correct? Tell me, is this correct, guys? No, sir. No. You see audit report date. We have studied now. Not to engagement partner, not to date the audit report until unless engagement quality control reviewer has completed his review. In this case, he has signed on 15th May. So, what should be the ideal date of signing of audit report on this question? What should be the ideal date? Tell me. 18th May or thereafter. 18th May or thereafter. No, I mean, it is first review will be completed, then you can sign the audit report. So, like this question may be there in descriptive or MCQ. So, you will write that answer duties of EP and UQCR, and towards the end you will say, however, the engagement quality control review was finalized, blah blah blah. It is not correct. It is not correct. Understood? Don't skip quality control review chapter, guys. Don't skip quality control review chapter. Reason being, this is very, very tricky, very important chapter. Question number 1A will be there. Finish? Chalo. So we have completed quality control. Now, what do we start is, first we are starting audit evidence chapter. Audit evidence. We are starting audit evidence. So audit evidence I'll be teaching you from the module only. I think we have not written the notes of this chapter. In the module they have given the content. Let's do it from the module. 500 ka series it is. Okay. Do model questions if I see the analysis. May no question, November 5. May 25 no question, September 5. Jan 26 maybe no. MCQ. MCQ mein they are asking this chapter. MCQ 6 marks. 4 to 6 marks they are asking. $500, $501, $505, $510, $530, $550, $530, $550, $520. ठीक है. 520 and 540 is covered in I think risk management वाला chapter और audit planning वाला chapter. 520 and 540. ठीक है. There are only 6 standards covered here. अच्छा, we have done 560, 570, 580. 560, 570, 580. 560, 570, 580. 560 was what? 560 was subsequent event, 570 was going concern, 580 was written representation. Remember that we have done in completion review. 560, 570, 580. Okay, that we have covered in completion review. Now we are doing 500. So everybody, if you have the model, please open the model. So what I'll do is I'll teach you the standard first, then we do the questions from the module itself. So you will understand what is the level of this chapter and how much clarity say we have to study this chapter. Okay. Now, first one is what? Audit evidence. What is audit evidence? Or any information obtained by the auditor while concluding, while giving opinion, on which opinion is based. So any information used by the auditor in arriving the conclusion on which the audit opinion is based, that is called audit evidence. Okay, audit evidence, essay 500. So ideally in the answer, there are only 3 answers to be studied. This table. So IC I have not given the entire. If you see, for every standard they have made this chart, and then after that the next standard charts. So the level of the question will come to know by reading from the behind only. Now see. So I'll give you one little idea here. When we talk about expert, there are 2 experts. One is मैनेजमेंट का एक्सपर्ट, ऑडिटर का एक्सपर्ट. Here you follow SA 500, here you follow SA 620. The answer is exactly same. So what is the name of SA 500? Audit evidence. The SA name is what? Audit evidence. Here using the work of auditors expert. What is the name here? Using the work of auditors expert. 500 audit evidence, 620 using the work of auditors expert. Now answer is exactly same. So you need to understand the question. If they are asking management expert, like for example, management has appointed a lawyer, it is management expert. Auditor has appointed a lawyer, auditor expert. Okay? The more weightage, if you see the questions, I mean the questions are exactly same, but they have given a lot of questions from SA 500 ka perspective. Management expert, like management has appointed lawyer for what? Sir, to assist in preparation of FS. Here to obtain sufficient appropriate audit evidence. Sufficient appropriate audit evidence. Now see, what is the information to be used as audit evidence? It says the auditor shall consider the relevance and reliability of the information to be used as audit evidence when information from management expert is used. The lawyer, he shall evaluate what? The competence and objectivity of that expert, the appropriateness of that expert ka work, and when information produced by the entity is used, the auditor shall evaluate the reliability, completeness and accuracy of the information. So when I'm using, management has appointed a lawyer to help them in filing them, like preparing the financial statement, like contingent liability ka amount. So first I will check whether that expert, like I am the auditor, I will check whether that expert is competent enough or not, whether it's following the objectivity principle. I mean, he should not be biased there. Acha. And appropriateness of the expert work. So we call this as, we'll check competence, objectivity and appropriateness of the expert work. COA. COA. Competence, objectivity, appropriateness. Now, management, see, I will not directly speak to the expert now because he is management expert. Now, management will give me information. I will check the reliability, completeness and accuracy of the information. Reliability, completeness and accuracy of the information. First, I will check competence, objectivity, appropriateness of the work of expert. Who's expert? Management expert. Number 2, I'll check the reliability, competence and accuracy of the information, what they have given to me. Who has prepared that information? Expert has prepared. Who's expert? Management expert. Number 2, audit procedure to obtain audit evidence. Sir, I can perform RAP. First, I always perform RAP. If I am not satisfied, then I perform FAP. FAP mein 2 things are there. Test of controls, that is basically internal control system, And substantive procedure you perform. Substantive procedure perform for accounting system. For what? Accounting system. First time when we do, it is called as RAP. Second time when we do, it's called as FAP. As a FAP, what do you do? TOC and substantive. TOC for test of controls for internal control system and substantive procedure for accounting system. Third, inconsistency. What it is? Inconsistency in the doubts over the reliability of audit evidence. The auditor shall determine what modifications or addition to the procedures are necessary to resolve the matter and consider the effect of the matter on other aspects of audit. Now, if there's an inconsistency or there's a doubt about the evidence, what will you do? You will modify the report. First, you do some procedures. If that is not possible, what do? You modify the audit report. Modify the audit report. Okay. So read this much, then we do the level of questions. Read this 3 from the screen or from the book. Read 3. Done? Now see the question. So there's a TYU1. What it says, the auditor of BBNS Limited accepted the gratuity liability of a valuation based on the certificate issued by qualified actuary. The auditor of the company accepted the liability valuation of the gratuity on the certificate issued by a qualified actuary. He accepted the amount. Okay? The auditor noticed that the age was 65, age adopted 65, as in the existing age of 60 years. The company's proposal to increase the retirement age to 65 years. Comment. So this is a story. When you read the answer, it has nothing to do with the story. Okay. Now the hint for the expert is actuary. Now reading this much, can you write in the chat and tell me they're talking about whose expert? Management ka expert or auditor ka expert? Management expert, because the line says he accepted the amount based on the certificate issued by a qualified actuary. So it's basically management expert. The question says what you have appointed the expert, then it is basically essay 620 using the work of auditors expert. Okay. Now see the answer for this. So let me first read for you, then you will read the answer again. Okay. As per SA 500 audit evidence, correct, management expert. When information is to be used as the evidence has been prepared by using the work of management expert, the auditor shall consider the following. QUA, competence, capability, objectivity. U, understanding the work of that expert. A, appropriateness of that expert work. So CUA, QUA. We call this as CUA. Now, one by one. First, we talk about competence. How you will evaluate the competence. How you will evaluate the competence. The auditor may obtain the information regarding competence, capability, objectivity, like from a variety of sources, such as what personal experience with the previous work of that expert, discussion with him, and discussion with others who are familiar with his work, and knowledge of that expert. So you are evaluating competence. How would you understand the work of that expert? How would you understand the work of expert? So the aspects of management expert field relevant to the understanding maybe include what assumptions and methods are used by that expert, and whether they are generally accepted within the expert field. So you are understanding why this para. A, what it is, appropriateness of the expert work. How do I check appropriateness of the expert work? The auditor may consider the following while evaluating the appropriateness of the expert work. How would I check that? You will say relevance and reasonableness, relevance and reasonableness, relevance, completeness and accuracy. Relevance and reasonableness, relevance and reasonableness, relevance, completeness and accuracy. Of what? Findings or conclusions, significant assumptions and methods, and use of source data. Findings or conclusions, significant assumptions and method, and use of source data. So relevance and reasonableness of the expert finding and conclusion, they are consistent with the other audit evidence. If the auditors the expert work involves use of significant assumptions and method, the reasonableness and relevance of those assumptions and methods. If the expert works involves significant use of source data, the relevance, completeness and accuracy of that source data. So theory, then copy the question. Therefore, the assumptions and method used by the management experts are not appropriate. Hence, he may qualify the report. That is basically modify the report. The best part when we do SA 620, guys, the answer is exactly same. As an auditor, when you're appointing an expert, you will also evaluate for your expert CUA, competence, understanding, appropriateness. Then you tell competence, I will evaluate by this. Understanding, I will evaluate by this. And appropriateness by 3 points. Relevance and reasonableness, relevance and reasonableness, relevance and reasonableness. Understood? Read the answer. If it is 620, you will say as per SA 620 using the work of auditor's expert, answer is same. Read. Done, guys? So we have completed essay 500. So like this question will be there on essay 500. Now let's do 501, then we take a small break. Okay, 501. So 500 was, guys, audit evidence, and 501 is the brother of audit evidence, that is 501 specific consideration for selected items, specific consideration for selected items. So guys, there are three items basically here. You will be studying inventory, litigation and claims, segment information. Inventory, litigation and claims, and segment information. Inventory, litigation, claims, and segment information. So what do we check for inventory? For inventory, we check existence wala assertion. What do we check? Existence wala. It's written here. So existence and condition for inventory, completeness and litigation for completeness for litigation and claims, and presentation disclosure for segment information. Existence and condition for inventory, completeness for litigation, and for segment information it is basically presentation disclosure. Okay. Now when we talk about inventory, now see, the hot favorite answer of ICA is basically inventory wala part. So here you are not auditing inventory. Here you are saying that was I want to get the audit evidence for inventory. I want to get what? Audit evidence for inventory. So it says if inventory is material to obtain audit evidence for existence and condition, how would you check that? Sir, first you should go and attend the physical inventory count. Ideally, inventory ka counting would be done by management. Correct? It will be done by the management. So you also go and present there. Number two, perform the audit procedure over the entity ka final inventory records. So whatever management has done counting, you also count that. Third, then it says if the inventory counting is at a date other than the date of the FS, that is 31st March ko management is counting, we go on 4th April. Okay, because 31st March is practically not possible. Maybe some other work we have. What will you do? The auditor should perform the procedure with respect to counting between the date of management and the date of FS. Between the count date and the date of FS. When management has counted and when you are going counting, when you are going for counting, whatever the difference date is there, what will you do? You will perform procedures. Number two, if the auditor is unable to attend physical inventory counting, if the auditor is unable to attend what? Physical inventory counting, due to what? Due to unforeseen circumstances. I was going on 31st March only, but imagine flood came. So what I should do? I should count on some alternate date. What I will do? I'll do some counting on alternate date and perform procedures on intervening transaction. What will you do? And perform procedures on intervening transaction. Perform procedure on intervening transaction. Okay. Third, if attendance at physical inventory count is impracticable, for example, riots are there in that city. Okay, riots are there, or maybe the COVID is there, deadlock is there, everything is stopped. What will you do? You will try to perform alternate procedure. But if it is also not possible, what will you do? Modify the opinion. Modify the opinion. Then inventory is under the custody of third party like warehouse keeper, consignee, agent. Then you will request confirmation from third party and perform inspection, other procedures. So this B, C, D, E, these are the four different situations what they can test you. Ideally, they ask this one, impractical point. General, this is asked in the exam. This is essay 501 ka inventory part. Number two, litigation claims. So when you're reading, I'll be zooming, okay, so that you can read it slowly in case if you don't have model right now. Sir, what about litigation and claims? So which assertion I'm checking? Completeness. Now, if there's a case on the management, somebody has filed a legal case, so you will to not get in dreams now. You will not get in dreams. What you should do? You should go and ask the management. Okay, sir, what legal case have been happening on you? So for this, the auditor should perform following procedure. Number one, inquiry with the management. Review the minutes of the meeting. Sir, why we should review the minutes? Boss, is some legal cases there. So the board must have discussed something on that particular point. So you read the minutes. Third, review legal expense account. Sir, why legal expense account? If the case is there, they must have appointed a lawyer. So you will read the you will review the legal expense account. Then If the auditor assesses the risk of material misstatement is high, what he should do? He should seek direct communication with entity ka external legal counsel. Go and talk to the lawyer. What do? You go and talk directly to the lawyer. Acha, who will give the lawyer details? Sir, management. Management. Management is not allowing only to communicate. Or management give the number, but the lawyer is not replying to us. The lawyer is not replying to us. What we should do? Sir, modify the opinion. What we should do? Modify the opinion as per SS 705. Modify the opinion as per SS 705. D. Obtain written representation that all known, actual or possible litigation claims have been disclosed to the auditor and appropriately accounted as per FRF. As per FRF. What will you take? You will take W1 for what? That all claims have been disclosed to us. You give me in writing. So this is a procedure for litigation claims. You have to see two words: litigation claims and evidence. Litigation claims and evidence. Because for litigation claims, SA 250 is also there. Consideration laws and regulation, right? You have to see audit evidence for litigation claims. Third, segment information. Sir, for segment information, what do we check? Presentation disclosure. The auditor should obtain evidence regarding the presentation disclosure of segment information by using what? Sir, understanding the methods used by the management determines segment information. Number two, performing analytical procedure. Performing what? Analytical procedure. Understand the method used by the management and perform what? Analytical procedure. So segment information very rare. Litigation has a little priority. Most important priority is inventory. Inventory. They can test you in MCQ also. Okay. So you read, then we do the questions. I'll be slowly going down. Okay. Done. So we have completed 501. So 500 was audit evidence, 501 was audit evidence specific concession for selected item, the 3 items, inventory, litigation, segment. Okay. Now let's see this TYU2. So similar question will be there towards the end. Let's do this. See, Prabjot has planned to observe the physical inventory count of inventory. Now you saw count of inventory SA501 at the plant of a company located in the remote area in the state of Uttarakhand as a part of the start audit exercise. Few days, 1 second, it's unmute, yeah. A few days before the completion of financial year 2024, he already informed his intention to the management that is planning to visit the site on so and so date. He plans to inspect inventories, observe the count process and perform test counting. The management made necessary arrangement to facilitate the above exercise. However, in agitation, Himalayan Hills started on 20th March for the announcement of a strict law. So, dispute, riots. Many civil society groups are participating in the agitation. NH7 leading to the plant site is blocked by the protesters. The full situation they are saying, blah 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 has happened. Discuss above case highlighting a situation, impracticability at the attendance and inventory count. How you should proceed, what you should do. What you should do, tell me. If this such question came in the answer, the exam, what will you do? 501 mein, what will you do? 501, specific concession for selected items. You will perform alternative procedure, and if not possible, modify the OP. Correct. Very good, Deepak. Very good, Deepak. TYU2. If the auditor is unable to attend physical inventory count due to unforeseen circumstances, he should perform physical count on alternative and perform procedure. Therefore, they have written auditor should attend physical count after the blockade. Okay. And you will write that also, if it is not possible, the auditor should modify the opinion as per SS 705. As per SS 705. Okay. Let's do one more, then we'll take a small break. TYU3. On reviewing legal expense account of Z Limited, CS when the auditor of a company finds a legal fees amount in was paid to B, George or reputed lawyer during the year 23-24. On inquiry with the management regarding the purpose of expenditure, evasive reply was received from the management that a lot of work is performed by the lawyer on behalf of the company. However, no details were provided. She finds it proper to correspond directly with the lawyer. She is speaking to the lawyer. She obtains the address, email ID of the lawyer from his professional service bill. She shoots off an inquiry letter asking for the nature and status of litigation on her letterhead. Is her approach proper? Irrespective of the merits of the approach, what is she trying to achieve by corresponding with the lawyer? At the time you see the word lawyer, okay, say compliance of law 250, lawyer ka thing 501. So here what is she doing? She trying to do communication with the lawyer directly. You tell me, is this approach correct? Can you communicate directly with the auditor? With the lawyer, with the expert? Ajit Siwari? No, sir. See, you can see communicate, that's agreed, but it has to be routed via company. You can't see direct communication. The auditor shall do so through a letter of inquiry prepared by the management and sent by the auditor. Prepared by the management, sent by the auditor. Prepared by the management, sent by the auditor, requesting the entity ka legal counsel to communicate directly with the auditor. Then the lawyer will communicate directly with the auditor. But it should be prepared by the management. Okay? Then, therefore, her approach is not correct. Now, why are we doing that? Her purpose in corresponding with the law of the company is to identify litigation and claims involving the entity which may give rise to risk of material misstatement. It is due to the reason the litigation and claims involving the entity may have an effect on the financial statement and thus may be required to be disclosed or accounted. Like disclosed means basically contingent liability. Accounting basically means provision. You create provision in the FS. Understood? So 501 becomes little important because of inventory wala point. ठीक है, similar questions are there in the other part, in the test your understanding, this test yourself. On a similar lines, a question is there, 1500 and 501. So I think we'll be able to finish this chapter. 4 channels are pending. Let's take a 5 minutes small break, then we'll continue. Works with everybody? Yeah. So let's start. So we have done 500, we have done 501. 500 was audit evidence, 501 was specific audit evidence, specific consideration for selected items, 3 items inventory, litigation and segment information. Inventory, litigation and segment information. Now let's do 505 and 510. 505. Okay? So that's on model page number 5.7. It says external confirmation. So ideally, if you know, there are two forms of confirmation request. One is positive, other one is negative. So positive, what do we say? Dear third party, you will reply in all cases. Dear third party, you will reply to us in all cases, whether you are agreeing or whether you are disagreeing. That means reply has to come. It is which kind of a request? Positive kind of a request. Positive confirmation request. So negative may, dear third party, you will reply to us. Dear third party, you will reply to us only if you disagree. Only if you disagree. So positive में third party you reply to us in all cases whether agreeing or disagreeing. Negative में third party will reply to us only if you disagree. Then, अच्छा, out of positive negative guys, can you tell me which one is more reliable? Out of positive negative, which one is more reliable? Sir, positive is more reliable. Very good. Now my first question. So what are the external confirmation procedure? So what is the code? Procedure for external confirmation. The code is D2H2. Sir, I will not communicate with all third parties. I'll communicate with, like, first I will see whether I want to communicate for data or I want to communicate for creator. First I'll check that. So determine the information to be confirmed. What will you say? Determine the information to be confirmed. Then you will select the appropriate third party. What will you do? You will select the appropriate third party. Third, you will design the confirmation request. Design the confirmation request. Fourth, send the request including follow. First, determine the information to be confirmed. Number two, select the appropriate third party. Third, design the request. Fourth, send the request including follow-up. D2H2. Information to be confirmed. I am communicating with data. I will not communicate with all data. I will communicate with large balance wala data. Select the appropriate third party. Then I will design the request. And fourth, I'll send the request including follow-up. D2H2. Number two, you wanted to speak to the data, okay, but management is not allowing you. You want to speak to the data, but management is not allowing you. What will you do? It says management ka refusal to allow the auditor to send a confirmation request. Sir, first inquire with the management the reason for refusal. Sir, why are you saying me no? Inquire with the management as to the reason for refusal and seek the evidence as to their validity and reasonableness, whether it is valid reasons or invalid reason. So it says inquire with the management the reason for refusal and seek the evidence regarding their validity and the reasonableness. Number two, evaluate the implication of management ka refusal on auditor's ka assessment of wrong. So whatever management is saying, okay, check whether it is relevant for risk of material misstatement, including the nature, time and extent of other audit procedure. So whether it will allow me to do some other audit procedure or it will not allow me to do some other audit procedure. Okay, evaluate the implication of management ka refusal. Third, perform alternative audit procedure. What will you do? You will perform alternative audit procedures designed to obtain relevant and reliable audit evidence. So if one way is not going, what do? You go and do the other way. That's called alternate procedure. Now, if the management ka reason is unreasonable, the refusal is unreasonable, what will you do? You will communicate with the next level, that is TCWG, and consider the implication of the report. That's basically, you will modify the report. If they are saying, sir, don't speak to the data because we have a personal problem with him, we don't like his face, that's unreasonable. What will you do? Consider the implication audit and audit opinion. That's basically modify the report. So this is generally important answer. Management is refusing the auditor to speak to him, to speak to the third party. Then there is something called as exception. There's something called as exception. Okay. So third will be positive confirmation, negative confirmation. Fourth would be the definition of exception. Exception means whatever I have asked, whatever I have got, whatever we have asked, whatever we have got. Both का difference is called what? Exception. So it means I told them कि boss I need July, August, September का purchase sale. Oops, low battery. I was saying I asked them July, August, September ka purchase sale. They gave me purchase sale, but they gave me October, November, December ka. I asked July, August, September. They are giving October, November, December. I've got the information, but I've got different information. The difference is called as exception. That difference is called as what? Exception. Fifth answer, negative confirmation request. So you will use negative confirmation as a sole substantive procedure when assessed ROM is low and relevant controls are effective. What will you say? Assessed ROM is low and the relevant controls are effective. Like for example, if I want to check petty cash or maybe rent expenses or maybe salary, there's a fraud, rent expenses, okay. So the risk is low there and the controls are generally effective. You can use negative request. Number 2, the population comprises of large number of small homogeneous transactions like petty cash. Items are more, but it is small, similar item. Tea ka bill, newspaper ka bill, petty cash na. So large number but small value. Sir, a very low exception rate is expected like rent expenses. So I will tell them, you see, ideally in a company, if there's a properties on rent, the office on rent, what happens? Sir, in that rent may, there will be 12 transactions. If I have to speak to the landlord, so I will ask confirmation with him regarding those 12 items only, because in the entire year there will be like 12 line items. Because every year, every month ka one rent, right? So will there be any change in the rent amount? Can there be a change in the rent amount? Tell me, can there be a change in the rent amount? Huh, sir, but not every month it will be changed. Maybe the rent would have increased or rent would have decreased. You have requested him for decrement. So that is a possibility. But not every month it will be changed. Maybe quarterly, every quarter ka change would be. Half yearly may change it could be. So maximum 2 or 3 changes, not more than that, correct? So my exception rate basically the difference is low. The auditor is not aware about any circumstances that would cause the recipients of the negative request to disregard the request. I am pretty much confident that the third party will reply to me. I am not aware about any circumstance that he will not reply to me. That means he has died. We are not getting his address. I am not aware about all this thing. So I am assuming that he will reply. So boss, if he will reply 1, 2, 3, 4, all these are and condition. If all these 4 happens, then only you can give negative request. So they can test you in MCQ. I think they have tested May 25. No, I don't know. September 25 or November 24. Either of it, they was there. So assessed ROM is low, controls are effective. Number 2, population comprises of large number of small homogeneous items. Remember petty cash. Low exception rate, that means the difference would be low. 4th, I am not aware about any circumstance that they will not reply to me. They will reply to me. Then I will use negative confirmation request. Okay. Chalo, read 1, 2, 3, 4, 5. 1, 2, 3 is forms, 4th is exception, 5th is negative request. Okay, read. Done. So external confirmation is done. The 500 was audit evidence, 501 was specific consideration was selected, and 505 was external confirmation. Easy. Now we do 510. So you'll do the questions also on 505. Now 510 we are doing. Now 510 is basically very easy. It says initial audit engagement O opening balance. 510 O O O O O O O O opening balance. 510 O O O O O O O opening balance. 510 O O O O opening balance. Okay. So there are two answers. One, A, audit procedure, B, reporting. A, audit procedure, B, reporting. Now, first one, opening balances. So, first understand the background of this. This was, imagine, 24, 25. 24, sorry, 25, 26. Last year, the accounts were either unaudited or they were audited by some other auditor. Some other auditor basically means what? Predecessor. Audited by whom? Predecessor. So whatever was the closing balance, ideally it should become what? This year ka opening balance. Ideally, whatever is the closing balance, it should become the opening balance here. Correct? Whatever it is. This essay is used when you were not auditor of the previous year. Basically, either it is unaudited or it is audited by a predecessor. So you will use this essay. So ICI can test you either on the procedures of the opening balance or conclusion and reporting of the opening balance. Ideally, when I mark this as A, 1, 2, 3, B, 1, 2, 3. 1, 2, 3 is same basically. We have to see what either they are asking you procedure or they are asking you reporting. Procedure. So procedure for opening balance, the auditor should read the most recent FS and predecessor quarters report, last year quarter report. Check whether last year closing balance has been correctly brought forward, which I just told you. Check whether the accounting policies whether the opening balances reflect appropriate accounting policies. Determine whether the opening balances reflect appropriate accounting policy. And what will you do? You will perform procedures on opening balance. Perform procedures on opening balance. If the current period FS are misstated because of opening balances, what will you do? You will communicate with the management or TCWG. Hot favorite answer, procedure for opening balances. 5 points, that's it. Number 2. Sir, consistency of accounting policy. Ideally, accounting policy should be consistently applied. Achha, if you are not following consistently, if there is a change, what you have to do? You have to do APD. What you have to do? You have to do APD. What is APD, sir? Accounted, presented, disclosed. Accounted, presented, disclosed. So the auditor should obtain audit evidence as to whether the accounting policies are consistently applied. In case of any changes, whether those are APD, accounted, presented, disclosed. Third, relevant information in the predecessor auditor's report. Last year report was modified. If the modification was there in the predecessor report, check the effect of the matter giving rise to the modification in the current FS. Like for example, last year the auditor has said qualify because of inventory. Now that inventory ka effect is coming on this year or not, you need to understand that. So if there was a modification in the predecessor quarter's report, evaluate the effect of the matter giving rise to modification with respect to current period FS. With respect to what? Current period FS. With respect to current period FS. Then audit conclusion and reporting. Opening balance. So for opening balance, how would you report? See, if you remember SS 705, when we had done modification, we said that if the financial statements are misstated, okay, if there's a misstatement, you give qualify adverse. If you are unable to obtain SI, you give qualify or disclaimer, correct? Same line. If you conclude that opening balance contain misstatement, what will you give? Qualify adverse. If you conclude that you are unable to obtain SI, what will you give? Qualify disclaimer. Same line, 705 ka. Accounting policy. So what did you say accounting policy? Sir, accounting policy should be consistently applied. If they are not consistently applied, you should do APD, accounted, presented, disclosed. Okay? So just do the reverse. If the accounting policy, if the auditor concludes that the accounting policy are not consistently applied or The changes are not properly accounted for. Not accounted for. What we should do? Qualified or adverse. What we should do? Qualify or adverse. Third, modification. If the modification is relevant and material to the current paid ka FS, like last year ka report was modified and that modification is important today also, what you should do? You should modify the current year ka report accordingly. Modify current year ka report accordingly. Understood? So this is very interesting, very simple answer. Audit of engagements for opening balance. Initial audit engagements, opening balances. Okay? Read. First read the procedure, then I'll zoom on reporting. Read. Done? Sure. So guys, we have completed 510. 510. Initial audit engagements, opening balances. Now what we are left with? We are left with just 530. 530 में पूरी थोड़ा सा content they have given, and then we are left with 550. This we're gonna do tomorrow. So tomorrow what is the pending? Pendants I'll say 530, 550 is pending. Okay, that we're gonna do. Plus then I'll start with prospective because that's important. Prospective. Okay, prospective will take approximately an hour. Then after prospective, we do materiality, internal control. Material. So tentatively it will be over tomorrow only. If time persists, I'll teach you planning wala part. Okay. Bank audit, digital audit, this two you'll have to do from the recording part or either on your own. Is it fine? So tomorrow 10 o'clock we are meeting. To 10 to 1 we'll be having a session. 99.9% it's there the same time, 10 to 1. If there is a change, I will update you. 99% 10 to 1 only. Okay. So we stop here. We are doing 530, 550 tomorrow. Then we do prospective. Then next, then we do materiality wala chapter. And last में towards the end, there's a time I'll teach you planning. में there are 2-3 questions that I'll teach you. Okay. Bank and digital, do it from the recorded part because same only, no change in that. Or you do it on your own from the notes. Digital audit notes I have shared. Bank audit we have not made any notes. No notes. Okay. Works with everybody. So tomorrow 10 o'clock. Okay. Please study. It's a request. Do it from the handwritten notes. Do the questions. Whatever channels we have done 4 channels today. 500, 501, 505, 510. Do the questions. Be at par with me. Complete quality control. It's important chapter. Complete that. Okay. If there's any doubt, you can ask me. Tomorrow, last lecture. Bye guys. Take care and join. Aim for a rank or 70 plus, which is earlier. We meet tomorrow. Bye. Hi guys, good morning. Welcome to the class. This is the last class. I hope I am audible, visible to everybody. Hi Shivari, hi Ajit. Okay, take care. So let's start. Let's resume. We were doing audit evidence chapter. We had done 4. We were left with 2 essays. Let's quickly recall. So we started with essay 500. 500 was audit evidence. Audit evidence meant there was an answer for management expert. That was very important. Where you check the competence, you check the understanding, you check the agreement. Okay, CUA. Appropriateness of the expert work. Sorry, A was appropriateness of the expert work. Then we did essay 501. 501 was audit evidence again. Specific consideration for selected item. Therein we had 3 items. That's basically inventory, litigation, and segment reporting. Inventory wala point is very important. It may come in the exam again. 505 was external confirmation. 505 we spoke about positive, negative confirmation. Because positive may third party will reply to us in all the cases whether you are agreeing or disagreeing. Negative may you will reply only if you disagree. Out of positive, negative, positive is more persuasive, more convincing as compared to negative. More reliable is positive. Then refusal will answer in that when the third party ko management is denying that you can't communicate. Okay. That is important. Then we did towards the end 510. O was opening balance, initial audit engagement opening balance. It was A1 and A123, B123. Procedure for opening balance, procedure for consistency of accounting policy, procedure for modification the predecessor's audit report. Reporting में same point it was. Okay? And then we stopped. So now we are left with 530 and 550. So I am in the module right now. So 530, just do the questions towards the end. I am written do questions from my question bank. In case if you do not have a question bank towards the end, whatever the questions are, just do that much only. 530 audit sampling. Audit sampling may we check less than 100% data. What do we check? We check less than 100% data. Okay, it is called audit sampling. So as such, if you see, they have not given any content of 530. They have just given the definition. The application of audit procedure to less than 100%. To less than, what will you say? To less than 100% of the population. 1 second. Huh? The application of audit procedure to less than 100% of the items within a population of audit relevance such that all sampling units, what will you say? All sampling units have a chance, okay, have a chance of selection in order to provide the auditor with a reasonable basis on which he will draw conclusion about the entire population. So as a auditor, what will you do? you will apply the procedure to less than 100% of items, okay, in the entire population. On the basis of that sample, you will judge the conclusion over the entire population. So whatever the sample says, the sample is good, the company is good, then the company is good. So sample is bad, the company is bad. So on the basis of sample, whatever is your conclusion, you will draw that conclusion on the entire population. On the entire population, it is called as what? Audit sampling. Okay. So 5:30 ka just do questions. Just do question, because they have not given the content as such here. Nothing they have given. I mean the module I see here. Let's do essay 550. 550 is related party. So there are two answers which are generally very repetitive in essay 550. Related party. The first answer which generally come is this one. The fourth box. It says identification of previously unidentified or undisclosed RPT. Unidentified or undisclosed RP. Now my company has related party, guys. My company has related party, or we are doing into transaction with related party. You tell me, is it a crime to enter into transaction with related party? Is it a crime to enter into transaction with related party? Is it a crime? No. The only thing is we need to disclose. Management, you need to disclose how many related party the company has, what transaction they have entered into. Who will tell us? Sir, management will tell us, right? So after telling all the related party, like this A, B, C, D, E, F, the 6 people are my related party, we found out G. So if you find out any undisclosed related party, so what you should do? So sir, the auditor should determine whether the underlying circumstances confirm the existence of such transaction. What will you say? The auditor shall determine whether the underlying circumstances confirm the existence of such transactions. Number 2, check the transaction basically. Number 2, communicate within the team. So in your engagement team, you will say, "Ki boss, acha, company mein they have hidden one fact. They have not disclosed this related party. So it's a very big problem. So please check the data thoroughly." You will request the management to identify all the transactions with newly identified related party. Sir, I have got a transaction with G. So you tell me, is there any other transaction? Identify all the transactions. One to we have got. You tell us all the transactions. So request the management to identify all the transactions with the newly identified RPs. Fourth, perform more substantive procedure. What will you say? Perform more substantive procedure. See, ideally you check test of controls or test of details. Test of controls is internal control system. Your internal control system did not detected the RPT, right? So you will not rely on that system. So I will check accounting system. That is basically test of details. So I'll perform more substantive procedure. Then reconsider the risk with respect to other related parties. One may have got mistake. I mean, I have got unidentified RP. So I would assume that acha, other may also there would be problem. So reconsider the risk with other related parties. Now, if the disclosure by the management appears to be intentional, what will you do? Evaluate the implication for audit. Ideally, you modify. What do? You modify the report. Identified significant related party transaction outside the normal course of business. So like for example, we are in education sector. So if I am buying laptops from my father ka company, so my father is a related party, I am buying laptops, it is related business, right? I just have to disclose that acha, we have got into the transaction related party and this is the value of the transaction and this on that day we have done this transaction. So you give the disclosure. Now imagine I am buying cement. I am buying cement. So from whom? I am buying cement from related party only. Imagine my wife ka company. So you are in education sector, sir, buying cement, one of a kind of a transaction is okay, but you are buying at a huge quantity and every month you are buying, and that too with the related party you are buying. So your suspicions, I mean your nature would be like very much suspicious. Oh, there is some fraud. So it says identify significant related party transaction outside the normal course of business. What will you do? Inspect the contracts, inspect the underlying contracts and evaluate A, the business rationale of the transaction, like why are you doing this, what's the logic for it? Rationale, the logic, the reasons. Whether the terms of transactions are consistent with the management ka explanation. Acha, management is saying, acha sir, we have just bought it for our some work. So whether the management explanation is matching or not. whether the transaction have been properly accounted for. Whether transaction have been properly accounted for. So first come, there are three subpoints A, B, C. 2. Obtain audit evidence that the transaction have been properly authorized and approved. Please obtain evidence that the transaction have been authorized and approved. So these are the 2 points. So these 2 boxes have been repetitive. Let's read the other part. The auditor shall obtain WR for what? Sir, all related parties. Who are your related parties? All related party transaction, what transaction you have entered into, and whether all such transactions have been accounted and disclosed. So RP, RPT, and whether they have been disclosed or not. Communicate with TCWG. The auditor shall communicate with TCWG significant matters arising during the audit in relation with related parties, and he should document what all? The name of the RP, the nature of the RP transaction, the name of the RP and the nature of the transactions. Understood? So these are the 3 boxes. The 4th box and the 5th box is a little important. Just read this. First one is unidentified RP. Second one is underline. Outside the normal course of business. The hint is outside the normal course of business. Read. Done, guys? So SA 550 is done. So this chapter ICAF said I will not be asking descriptive, I will be asking MCQs. So you study this with regards to the MCQ का and content. ठीक है? Now, first I am teaching you perspective. Let's do prospective financial information, then we do materiality वाला chapter. ठीक है? I think SE का notes will not be there. I don't know. Can somebody confirm whether it contains SE का notes? Is the this PDF there or similar to this PDF? No? Okay. I am asking the team to share with you. Okay, I have asked the team to share with you guys. Guys, can you give me like 5-10 minutes? I have somebody to meet me. Okay, I'll just meet him like quickly and come back. Okay, 5-10 minutes. Okay, I apologize. Just give me 5-10 minutes. I'll be quickly coming. Okay, just give me 5 minutes. Sorry guys. Chalo, let's start. So we are doing the most important chapter, SAE. Now if I show you the trend of SAE, May 24 no question, November 24 5 mark ka question, May 25 5 mark ka question, that was in 1C. 1C that basically compulsion, and September 25 no question. So I assume to be there in your attempt. Okay. So prospective financial information and other assurance engagement, that's basically SAE. So there are three standards here, SAE 3400, SAE 3402, SAE 3420. 3402 and 3420. It looks like similar, but there's a difference. Okay, let's understand one by one. First one is what? Examination of prospective financial information. Examination of prospective financial information. What it is? Examination of prospective financial information. Now the question arises, sir, what is prospective financial information? Okay, SAE 3400. Can somebody tell me, inform me whether they have got the notes or not? Not yet. Okay. I've just messaged in the group. They will send you. In the meantime, you see on the screen. Okay. Now, SAE 3400. It says what is PFI. So the name of the standard is what? Examination of PFI. We say PFI means prospective financial information. Now the word prospective is basically futuristic. Okay. Now imagine if a company wants to need a take a loan, so they will give their projection, like 4 year, 5 year wala. That is called as PFI, prospective financial information. So somebody who prepares the PFI, sir, management. So whether the PFI is prepared properly or not, we go and check it. We don't prepare PFI. We assist the management in preparing PFI. See, always remember, all the Kuppai, I hope you understand Kuppai, all the Kassa, all the Kuppai work should be done by whom? The management. We are the chartered accountants. We go and check it whether it is proper or not. Okay. The scope may differ. Maybe it could be as per FRF, it could be as per criteria, it could be as per assumptions. The scope may differ from where we have to check. But don't people think when they study this essay about this is prepared by the auditor. No. Auditor checks it. The name is examination of PFI, not preparation of PFI. Okay. Now what is PFI? So it's a financial information based on the assumptions about the events that may occur in the future and possible actions by the entity, whatever actions they're going to take. It is highly subjective in nature and requires exercise of considerable professional judgment. So it's very subjective because you will say, I mean, one client would say we'll have like 300% growth. Somebody would say we'll have just 20% growth. Now it can be in the form of both forecast, projections, or both. Forecast, projection, or both. Now what is forecast? What is projection? Sir, what is forecast? Sir, forecast means the PFI prepared on the basis of assumption as to the future event which the management expects to take place and the actions the management expects to take on the date of information is prepared. Of the date the information is prepared. Assumptions as to future event which the management expects to take place and the actions management expects to take as of the date the information is prepared. So what does this line mean? So this line basically means forecast is prepared on the basis of assumption. Like for example, today let us assume the client ka sales is like 1 crore rupees. Sir, what is your next year ka expectation? I would say, sir, 20% growth. So why 20% growth? Sir, because we have just got a contract and this year we assume that the contract would be renewed and we'll have a 20% growth next year. So I will have 20% growth. No, it's not I will have. It's a future thing. It's an assumption. But that assumption ka some basis is there. So what basis is there? So we have got a contract. So it is basically based on what? Best estimate assumption. What? Best estimate assumption means an assumption that reflects the anticipated experience with no provision for the risk of adverse deviation. See, ideally, yeah, there would be, it's not exact 20% you'll have, maybe 18%, maybe 15, maybe 25 you'll have. But based on the past, like every year, so we have grown on like 10%. So there's a basis for that, right? Like if I say I am in CA final. Acha. But see, every time, sir, I have cleared in first attempt. So I think I assume that CA final would be my first attempt. I will clear in first attempt. What it is base estimate, right? Basis your past experience. It is called as forecast. Projection. Arey sir, I will get rank. I am telling I will get rank. Management is saying that we will have 200% exponential growth. Sir, it is not best estimate. It is called as hypothetical assumption. What it is, guys? Hypothetical assumption. A PFI prepared based on the hypothetical assumption about the future event and management actions which are not necessarily expected to take place. It may or may not happen. It could be a mixture of both best estimate and hypothetical. It's imagined or suggested. So you will always say forecast is best estimate. Projection is hypothetical. Forecast, best estimate. There's some reasonable logic for that. See, obviously it may or may not happen. That's a different story. But yeah, some logic is there for your best estimates. Okay, projection mein sir, full hypothetical assumptions. Now, the term auditor is used throughout this SAE, which means that if it is not necessary that a member performing such services be the start auditor of the entity ka financial statement. That means any CA plus COP can do this engagement. Just remember, very important line that only 810 and 2410. I repeat, 810 and 2410. 2410 was review of interim financial information and 810 was summary financial statements. Only these two standards may mandatorily the start auditor should do it. Rest everybody can rest. All the engagements can be done by any CA plus COP. Okay. Then next, important, an opinion as to whether the result shown in PFI will be achieved. It will happen. Cannot be expressed as it is a future oriented and speculative in nature. This line is used in some of the other answer. Okay. Who is responsible for preparation and presentation of a PFI? Sir, management. Management is responsible for preparation and presentation of including the identification disclosure of PFI, explaining the basis for the forecast and underlying assumption. Identifying and disclosure of the PFI, explaining the basis for the forecast, underlying assumption. Who is responsible, sir? Management is responsible. Then, sir, can a professional accountant be associated with PFI? The answer is yes. If you remember ethics wala answer, ethics में schedule 2 में part 1 में clause number 3 के बाद forecast 4. Can a practitioner in CA do the forecast? The answer is yes. Can he vouch for the accuracy of forecast? The answer is no. So traditionally the audit function was performed by CA in practice, which relates to historical financial information. Nowadays, investor intends to place greater reliance on the projected cash flows and the profitability statements examined and signed by CA. So the reference of same thing. So clause 3 of part 1 of second schedule of Chartered Accountants Act 949 states that a CA in practice shall be deemed to be guilty of professional misconduct if he permits his name or his firm name to be associated in connection with an estimate of earnings which is contingent upon future transaction in a manner which may lead to believe that he vouches for the accuracy of forecast. He vouches for the accuracy of forecast. So you can do forecast, but you can't do vouching of the forecast. Okay. A CA can participate in the preparation of PFI provided he indicates three things: IFA, information, forecast, assumptions. Source of the information, basis of forecast, and major assumptions. You have to indicate what source of the information, the basis of the forecast, and the major assumption made in arriving at forecast, so long he does not vouch for the accuracy of forecast. So long he does not vouch for the accuracy of forecast. Acha. Same also applies to best estimate and same also applies to hypothetical assumptions. Same also applies to the projection made on the basis of hypothetical assumptions. So this is question number 5. Question number 6. Sir, what are the duties of members who is examining the PFI? Basically, practicing CA, auditor. So the auditor should obtain sufficient appropriate evidence as to whether management का best estimates on which PFI is based are reasonable. So best estimate has to be reasonable. The best estimate, management का best estimate should be what? Should be reasonable. Sir, management का best estimate should be what? Reasonable. And in case of hypothetical assumptions, such assumptions are consistent with the purpose of the information. Best estimates reasonable, hypothetical consistent. Best estimate reasonable, hypothetical should be consistent with the purpose of information. Number 2. The PFI is prepared on the basis of the assumptions. The PFI is properly presented and all material assumptions are properly disclosed. It is based on the assumption. Those assumptions are properly disclosed. Acha. The PFI is prepared on consistent basis with the historical financial statement using appropriate accounting principles. and he should comply with the essay wherever practicable. This line means what? The PFI is prepared on consistent basis. See, historical is prepared. Next year, obviously, you'll have a sales. So, you'll put sales under sales only, na? Correct? See, agreed, you're talking about the futuristic thing. You're talking about future, agreed on that part. But the basis of accounting will be same. Like if you pass an entry purchases to creditors, so ideally the entry will be always purchases to creditor. You can't change in the PFIs. Entry will always be the same, right? Okay. So this could be an exam question, question number 6. This 7 and I think 8, both are exam. 7, 8, 9, 7, 8, 9, all are exam questions. 7th. So what precautions to be taken by the auditor before accepting the engagement? Before. So 3 answers were there: before, during, after. This is before. I Pune. Sir, whether information will be general or limited distribution. Whether information will be general or limited distribution. IP. The period covered by the information. How many years you are taking. U. Intended use of the information. M. The nature of the assumption, whether they are best estimates or hypothetical. E. Elements to be included in the information. I Pune. Information will be general or limited, period covered by the information, intended use of the information, nature of the assumption, whether best estimate, hypothetical, and E elements to be used in the information. Sir, if the assumptions are unrealistic or the auditor believes that the PFI will be inappropriate, what he should do? He should not accept the engagement. Or if he has accepted it, he should withdraw from the engagement. Ideally, he should not accept it. Once if you have accepted, you should withdraw from the engagement. Understood? I Pune. Question number 8. What procedure will you perform for engagement of size 3400? Me kills. That's basically during while answer. So I have to consider. See, they have used the word auditor. That does not mean the word that he is a star auditor. It could be any guy guys, okay? Anybody. So management ka competence regarding the preparation of PFI. Management ka competence regarding the preparation of PFI. Whether they are competent or not. E. The extent to which the PFI is affected by the management ka judgment. K. The knowledge obtained during the previous engagement. E. Engagement team experience with the business and the industry, whether they have worked or not. L. What are the likelihood of material misstatement? Okay, stability of the entity ka business. And source of the information considered by the management for the purpose and adequacy, reliability of the underlying data. So what do we say? Me kills. Management ka competence, extent to which the PFI is affected, knowledge obtained during the previous engagement, engagement team ka experience with the business and the industry. L. Likelihood of the material misstatement, stability of the entity ka business, and source of the information considered by the management for the purpose, adequacy, reliability of the underlying data. Me kills. Me kills, okay? Important. This was May 25 ka question. May 24. This came in May 24. What matters to be considered for presentation and disclosure of PFI. Presentation, disclosure of PFI. So the presentation of PFI is informative and not misleading. Okay, see, PFI is prepared on the basis of historical only. I mean, your assumptions are there, but the format and everything is of historical only. Accounting policies are clearly disclosed in the notes to PFI. Then the assumptions are clearly disclosed. Accounting policies disclosed, assumption disclosed. The date on the which PFI is prepared, it is disclosed. Accounting policies disclosed, assumptions disclosed, the date is disclosed. The basis of establishing points in a range is clearly indicated, and the range is not selected in a biased or misleading manner. Like 10-20% have a growth, 15% expense may there would be an increment. So the range is correct and it is not selected in a biased or a misleading manner. If there is a change in the accounting policy, from that disclosed in the most recent historical information, whether the reason and the effect of such change have been disclosed. See, ideally when you follow accounts, okay, what do we say? We have to follow accounting policy on consistent basis. If there's a change, you have to disclose that change, the reason, the effect and the financial effect. I mean the deviation, the reason, the financial effect. Same thing. If historical may you are following something else and prospective may you are following something else. So there's a change. If there's a change, the deviation, the reason, the financial effect should be disclosed. So there could be a small MCQ, small question, point number 6 also. Like, can the accounting policy in prospective be changed? The answer is yes. What happens if it is changed? The auditor should disclose the reason, the effect in the PFI has been disclosed or not. Then, contents and reports are common answer. We have studied TADAPs, title, address, date, place, sign, FR and UDIN, common answer. Then management ka responsibility, auditor ka responsibility, management ka responsibility is to prepare the PFI on the basis of best estimates and hypothetical assumptions. Auditor ka responsibility is to give to examine the PFI as per, examine the PFI, okay, and you should check the best forecast is prepared as per best estimates, and for projection they have used hypothetical assumptions. A statement that the engagement is performed as per site 3400. Over. 10 questions. Okay. Psi 3400, very simple and examination of PFI. Writing the right name and the number will give you 1 mark extra. Okay? So I'll be scrolling from the screen. In case if you're not got the notes, read from here. I'll scroll slowly. Okay? I'm here only. Read everybody. Done? I think now you have got the notes in the group, right? Somebody messaged me. Oh, great, superb. Okay. So we have completed side 3-4 that's basically examination of PFI. There we talk about forecast, we talk about projections. Your forecast is basically base estimate, that's like just the next year. Projection is like on the hypothetical assumption like 4-5 years. Okay. Now we do side 3400. Side 3400. 3400. It says assurance reports on controls at service organization. What it says? Assurance reports on controls at service organization. Assurance reports on controls at service organization. Now listen. So this we have studied similar to where did we studied? 402. 402, right? AB Limited, CA Ram, the user auditor. TCS is a service entity, they are giving service, correct? Now they are giving services. Now, if the question comes from the perspective of CA Ram, okay guys, if the question comes from the perspective of CA Ram, you will write SA 402. You will write what? SA 402. But if the question is coming from the perspective of CA Sham, the service auditor. So Ram went to AB Limited, I want to check your stock, or maybe I want to check your payroll. AB Limited says, boss, we have given payroll, we have outsourced it to TCS. He went to TCS. TCS is not helping it out. They are not allowing him. So what he will do? He will contact Sham, right? But Sham has been told by the entity. Which entity? TCS. TCS. That you prepare a report. You prepare a report on what? You are not the stat auditor. TCS ka stat auditor is EY. So TCS is telling to CA Sham. Oops. Sorry. The TCS is telling to CA Sham. Sham, do one thing. You prepare a report on the controls. You prepare a report on the controls. You prepare a report on the controls at service entity at TCS. So the question says from the perspective of Ram, the auditor, the statutory auditor, you will write 402. But the question says that service entities want a report on the controls at service entity, then you will be talking about CA Sham. Okay? So this SAE we are studying from the perspective of TCS and CA Sham. I hope the basics are clear. Now, sir, please explain service entity, user auditor, service auditor. Service entity, in my example was TCS. Service entity refers to a third party organization or a segment of a third party organization that provides services to a user entity that are likely to be relevant to user entity's internal control as it relates to financial reporting. User entity, AB Limited, reports an entity that uses a service entity. User auditor, CRM, refers to the auditor who audits and reports on the FS of the user entity. Service auditor refers to a professional accountant in public practice who at the request of service entity provides an assurance report on the controls at service entity. Then this is the first point. So this is the definition. Now this answer they have used in model questions. So this becomes a little important. Why controls of service entity are important to a user entity's internal control relating to financial reporting. So we are talking about only those internal control which relates to financial reporting. Like for example, if you have an internal control system for cleaning the floor or maybe for employing somebody. So there's a process, okay, interview and all those. So as an auditor, like say Ram, it is waste, right? But if you have company, AB Limited, if you have outsourced TCS co payroll, so payroll is a financial item. I want the controls for that. So you say why controls of TCS are important to AB Limited internal control relating to what? Only financial. I am least bothered about cleaning the floor. There would be a control for maybe like canteen facility. Okay, or like 50 rupees ka every day they will get some food. So there's a control for that. I am least bothered about that. There would be a control for pest control. I am least bothered about that. I am interested only in what? Financial reporting. Okay. Now, controls related to service entities operations and compliance objective may be relevant to a user entity ka internal control as it relates to financial reporting. Such control may be regarding what? Presentation disclosures about the transactions, account balances disclosure. Transaction basically means P&L. Account balances basically means balance sheet. Disclosure is basically your notes. Then controls at service entity includes what all? Sir, aspects of user entity ka information system maintained by whom? Service entity like payroll, and may also include one or more aspects of the components of internal control at service entity. The determination whether controls at service entity is relevant or not, it is a matter of professional judgment. Who will decide that? Ram will decide. Whether the controls are relevant or not, I would have to decide that. Now, explain type 1 report and type 2 report. So, we need to understand this. Explain type 1 report and type 2 report. So, type 1 basically talks about that controls are there. Type 2 talks about that controls are there and it is effective. Controls are there and it is effective. Sir, it comprises of. So, in the exam, so you can't write in simple words. You have to write this technical language. It comprises of service entity ka description of its system. Same point. It comprises of service entity ka description of its system. Number 2. A written assertion by service entity which describes fairly the system as designed and implemented on a specified date. The system is designed. So, first you will describe the system. Number 2, a management will say that the system is properly designed and implemented on a specified date. Number 2, controls related to control objective are suitably designed on a specified date. So, what we will say? Sir, the system ka description. First point. Second point. System is designed and implemented on a specified date. Number 2, controls. Imagine the 3 buttons. Controls in the system is designed and on a specified date. Design and implement on a specified date. Third, the controls related to control object in the system are operating effectively throughout the period. Here what we say? Controls are operating effectively throughout the period. So, first you say system is proper, system में control is proper, and here it is operating effectively throughout the period. Then, point number 2 was from the management ka perspective. Point number 3, service order ka assurance, that is basically Sham ka example. Sham's assurance report that conveys assurance about the matters referred here and here. Here, service order ka assurance report that conveys matters referred in 1, 2, 3 and includes a description of test of controls and the results thereof. Because he was checking the effectiveness, obviously you must have applied some controls. So, test of controls and the results thereof includes a description of test of controls and the results thereof. So, this is type 1 and type 2 report. Okay. Question number 4. There's a procedure for Sci 3402, that service organization. You can read from the module. Okay, it will be 3.4 only. In my book, the page number was 331. You can just read that. Okay. Not so important. Any 6-7 points. Question number 5. Sir, what will be the matters of WR to be asked by the service auditor? Now, Shyam is going to TCS. So, sir, you have asked me to give a report on what? Controls. So, I need WR with regard to what? AD-DINA. What will you say? AD-DINA. AD. Reaffirm the assertion regarding the description of the system. Management, you describe the system, right? You gave us a system ka description on point number 2, right? Give me in writing. Reaffirm the assertion regarding the description of the system. Number 2. It has provided the service order with all the information and access as agreed. All the information and access as agreed. D. It has disclosed to the auditor any of the following which he was aware. Disclose to the auditor. What do you have disclosed? So, design deficiencies in the control if there were some deficiencies. I. Instances when the controls were not operated. N. Non-compliance of laws, regulation, fraud, uncorrected deviations attributable to entity. A. Any subsequent event to the period covered by management ka description of system and the service order ka report. Like subsequent event basically. So, you say AD-DINA, assertion regarding the system, then all information and access as agreed, then disclose to the auditor following. Number 1, design deficiencies in the controls, instances where the controls have not been operated as disclosed, non-compliance of laws and regulation, uncorrected deviations attributed to the service entity, any subsequent events covered by the service entity ka report and the service entity ka description of the system. Okay? AD-DINA. So, this can be a 4 mark ka separate question. Sir, what are the contents of report? So, here the answer is almost same that Tadap's wala answer. Title, addressee, Date, place, sign, FRN unit, that is the same. Then a statement that the engagement was prepared as per Sci 3402, that is also same. Then service order responsible, statement that service order ka responsible is to express opinion on what? On the service entity ka description of the system, design of the control, designs like the buttons, right? I explained, three things are there. System is there, buttons means controls, and the operating effectiveness of those controls, correct? Management, and this was auditor ka responsibility, no management ka responsibility. A statement that the management is responsible for what? Preparing the description of the system, providing the services covered by the service entity, then stating the internal control objectives and designing and implementing the controls to achieve the control objectives. So who is responsible? Management is responsible. Answer is common. Management responsibility, service order responsibility, statement that the engagement was performed as per Sci 3402. Plus 2 extra points I have written. Identification of the criteria and the party specifying the control objectives. Identification of service entity, description of the system, those part of the system which are not covered by service order coverage. If you want to write point number 4, you can write, or else you can skip. This is contents of report. Contents of report. Question number 7. What additional matters are required in type 2 report? This is a question in the module also. What additional matters are required in type 2 report? See, let's be very clear. Type 1 report was controls are there. Type 2 report mein controls are there, it is effective. Plus what you have to write? It shall also include in a separate section after the opinion that describe the test of controls were performed and the results of those tests. Sir, we check the effectiveness of the control by performing this test and the results of those tests. Number 2. It shall disclose that the controls were tested on all items or selection of items in the population and indicate the nature of test. It shall disclose that the controls were tested on all items or selection of items in the population and indicate the nature of test. Third, if deviations have been identified, the reason, the number and the nature of deviations identified. If the deviation have been identified, the reason, the number of deviation and the nature of deviations. Fourth, on the basis of test performed, the service order will state that control objective was achieved or not achieved. Control objective was achieved or not achieved. The system ka controls was there for some reason, whether as per that reason, whether it is achieved or not achieved. Okay. So question number 8, little logical. Question number 9, when will service order modify the opinion? See, modify ka, you know the 2 reasons only. Unable to obtain Psi and FS are misstated, but here we are not talking about FS. Here we are talking about a system, right? We are not talking about anything in finance, correct? So how would you modify the opinion? So the answer is exactly same, but the wordings will become little different. That we do it from the module. Hold on. First we do question number 10. What documentation the service order should do? Sir, what procedures he have performed? The results of the procedure and the evidence obtained. Significant matter arising during the engagement, the conclusion reached, significant professional judgment reaching in those conclusions. NT of the procedure performed, the results of the procedure performed, significant matters arising during the engagement, the conclusion reached, and whatever judgment he has taken in reaching those conclusions. Okay? Now, module में now this is the situation. When do you modify the report? It's on page number, guys, 11.21. 11.21. So the service order concludes that, just do the opposite. Service entity ka description does not fairly represents in all material respect as designed and implemented. Number 2, the controls related to control objectives stated in description were not suitably designed in all material respect. Okay, the positive we have done in the notes, I'll tell you where it is. Third, in case of type 2 report, the service descriptions of the system were achieved, did not operate effectively. This is not operating effective. This was also we have done. So 1, 2, 3 was there in the notes only. D. This is logical from modification wala point. the service order is unable to obtain psi. The service order opinion shall be modified and the service order assurance report should clearly contain the description of all the reasons for the modification. The service order is unable to obtain psi. The service order opinion shall be modified. The service order assurance report shall state the reasons for the modification. So where it is written? I'll tell you where it is written. Do you remember this answer we did? Type 1 type 2 report. Service order, I mean in type 1 what do we say? A written description that service entity systems is designed and implement specified, you do the opposite. If the service entity system is not designed and implemented on a specified date, or the controls related to control objective in the system are not suitably designed on a specified date. Third, in case of type 2 report, the controls related to control objective in the systems are not operating effectively throughout the period. So that's the reason I have not written, because this is exactly same. You just have to do the no, not part, negative part. And if fourth reason, if the service order is unable to obtain sufficient appropriate evidence for service entity description of the system, the service order will modify the report. Over. So I'm not teaching you anything new. Whatever we have studied, we have to use that only. Okay? So anything can come from 3402. So what is the name of 3402? The name is Assurance Reports on Controls at Service Entity. Assurance Reports on Controls at Service Entity. Read. Done, guys? Done, everybody? Now the last essay, let's finish this, then we'll take a break for 5 minutes, then we do the materiality on the chapter. Okay. For materiality, get the module. I'll be giving markings on the module for materiality and audit planning wala chapter. Okay. Arrange the module in the break. Let's finish off this. So part C. What does part C says, guys? Part C says SAE 3420 assurance engagements to report. Assurance engagement to report on the compilation of PFFI included in the prospectus. On the compilation of PFFI included in the prospectus. Compilation of PFFI. That was PFI. This is PFFI. Pro forma financial information. Pro forma. So here basically we take an assumptions when we do this engagement that the event has occurred, giving the effect of that occurrence of the event. Like for example, A and B limited was getting amalgamated, but A will prepare the accounts as if it is amalgamated. And imagine Sukesh, you are the auditor of that engagement. You have to audit. So we are not saying an event has occurred. We assume that the event has occurred and then you prepare the accounts. So management will prepare the accounts, management will compile the accounts, auditor, you will do the engagement. So it says assurance engagement to report on the compilation of PFFI included in the prospectus. Now sir, what is PFFI? Sir, PFFI refers to the financial information shown together with the adjustment of illustrate the impact of an event or transaction on UFI, unadjusted financial information, as if the event has occurred or the transaction had taken place at an earlier date selected for the purpose of illustration. To illustrate the impact of an event as if the event has occurred, or transaction on UFI as if the transaction had taken place at an earlier date selected for the purpose of illustration. So that is a definition of PFFI. PFFI refers to the financial information. So I would say there's a dartboard. This is, we say it as financial information. The dart is the impact of an event as if the event has occurred, or the transaction on unadjusted financial information as if the transaction had undertaken at an earlier date selected for the purpose of illustration. Now PFFI may be in the form of P&L, balance sheet, notes. It is included in the prospectus. Like for example, if I'm coming up with an IP, I will say, okay, for the next 2 years, this is my profit. I'm assuming that I've got the fund. Then it is achieved by applying what? Pro forma adjustments to the UFI. So the dartboard is called as UFI, and the adjustment we throw, it is called as PFA, pro forma adjustments. PFFI does not represent the entity actual financial positions or the financial performance or the cash flow. It is not a P&L, not a balance sheet or cash flow, actual. We are assuming that event has occurred. Okay. So just remember the dartboard. It is called UFI. Whatever you throw, it is called what? Pro forma adjustment, pro forma adjustments. This was asked in the exam. What does pro forma adjustment include? So now we are talking about the dart basically. So it includes adjustments to the unadjusted financial information that illustrate the impact of an event as if the event has occurred. Refer question 1.1. Or adjustment to the unadjusted financial information that are necessary for the purpose of PFFI to be compiled on the basis of applicable financial reporting framework. Question number 2, important definition. Then, sir, what are the steps to be involved in process of compilation of PFFI? What will you do, sir? See, compilation is done by whom? Management. What do we do? What are the steps to be involved in the process of compilation? Identify the source of unadjusted financial information to be used in compiling the PFFI and extract the unadjusted financial information from that source. First, identify the source where it is. Identify the source of UFI to be used in compiling the PFFI and extract the UFI from that source. Number 2, make the pro forma adjustment to the UFI for the purpose for which UFI has been presented, for which the pro forma information is presented. Make the pro forma adjustment to the UFI and then present the PFFI with the accompanying disclosure. First, identify the source where you will get UFI, unadjusted financial information. Then throw, make pro forma adjustment to the UFI. Throw. So make PFI, make pro forma adjustment to this UFI for the purpose for which pro forma financial information presented. Third, present the resulting PFFI with accompanying disclosure. Present the resulting PFFI with accompanying disclosure presented. Okay. Now, the compilation of PFFI is the responsibility of the management. This though everybody knows. So, what points to be considered by the practitioner? They have used the word practitioner as basically any C plus COP can do before accepting the engagement of Site 3420. Determine that the practitioner has a competence and capabilities to perform the engagement. Determine that the practitioner has the competence and capability to perform the engagement. Competence. Determine that the criteria suitable and the PFFI is not misleading. Determine the criteria suitable and the PFFI is not misleading. Third, determine that the practitioner will likely to be able to express the opinion as per the format given and perform the procedure as per Site 3420. Fifth, where the sources from which the UFI and acquire or divesti financial services have been extracted. So, source of the UFI. Then, if the entity historical financials has never been audited or reviewed, whether the practitioner can obtain understanding of the entity, the accounting and financial reporting practices to perform the engagement. Third, obtain the agreement of the responsible party that it acknowledges and understands the responsibility for providing the practitioner with. This is management ka responsibility. This can also come as a separate question. They will give access to all information, additional information, access to those within the entity and outside the entity, and when needed for the purpose of the engagement, access to the appropriate individuals within the acquiry in a business combination. So this is basically management ka specific responsibility. This is what points to be considered. Then during ka answer, what procedure you will do for Site 3420? What procedures? The code is CA summer. C. The practitioner shall assess whether the criteria is suitable as per the framework for the assurance engagement. The criteria is suitable. Number 2. The practitioner shall determine whether the responsible party has appropriately extracted the UFI. Criteria suitable, whether you have extracted this UFI. From where you are extracting? The source. Check. The practitioner shall obtain evidence about the appropriateness of the source from which UFI has been extracted. Okay. Then, the practitioner shall obtain evidence about the appropriateness of the pro forma adjustment. The practitioner shall obtain evidence about the appropriateness of the pro forma adjustment. Then, the practitioner shall consider materiality with regards to evaluation of the PFFI has been compiled. Then last, R. An understanding of how responsible party has compiled the PFFI. The code is CA summer. First, criteria. Then source. Then whether it has been extracted. From where? Source. Check the source. Then pro forma adjustment. Check the appropriateness of the pro forma adjustment. Then materiality and whether they have compiled it correctly or not. So criteria. Number 2, what you talk about? Appropriately extracted. From where? The source. Appropriateness of the pro forma adjustment. Materiality and the responsible party. Then 6th. So what are the contents of WR in case of Site 3420 engagement? What are the contents of WR, sir? The practitioner shall request WR from the responsible party that in compiling the PFFI, the responsible party, that's the management, has identified all pro forma adjustment, same line, to illustrate the impact of an event or a transaction, the date or for the period of illustration. Number 2, the PFFI has been compiled on the basis of applicable criteria. Basically, management responsible, they will give in writing. Last, how would you express the opinion? So if everything is good, you give clean. If there's a problem, you give modify. So if the PFI has been compiled as per the criteria, you give unmodified opinion. If it has not been compiled as per the criteria, you will modify or request for change. If the responsible party refuses What do? You withdraw or seek legal advices. Last, contents of report. Third up, title, literacy, date, place, sign, management responsibility, we have studied, practitioner responsibility, and the statement that the engagement is conducted as per Sci 3420. Over. PFI, that was PFI, pro forma financial information. Cool. Read. If there's any doubt, shoot in the chat. Along with the name also, name and number also. Read. Done. So guys, we have comfortably completed 3400, 3402 and 3420. I hope now things are clear. Either for MCQ or for descriptive, you should do this chapter. Don't skip this chapter. It has come. It may come again. Okay. So we have completed this. So now let's take a 5-10 minutes break. Then we'll be continuing with the chapter called as materiality. And for risk assessment material, please download the notes. Download the module in case if you don't have it, either the module hard copy or the PDF. I'll be doing marking in materiality chapter and audit planning chapter. What to study, what not to study. Those are technical chapter. If you see the weightage, now there's two chapters, see 3 and 4. May 24, no question, no question, no question, no question, 5 mark, no question, 5 mark, no question. Okay. So materiality has never been asked till now. It may come. It has been asked 5 and that's also standard they have asked. Not the content of the chapter. They have asked the standard. So we do marking from the model what to study, what not to study. Okay. So I think more 35, 40, 40, 45 minutes will be having a class. Whatever has to be taught, I'll teach you. Then we'll be doing the marking. So remove module. Okay, for chapter 3 and 4. Okay. We meet in 10 minutes. Let's take a small break. We meet in 10 minutes. Okay. Bye guys. Be there. I'm coming back. The link is on. Hey guys, welcome back. Chalo, let's resume. I hope this session was helpful for you guys. I've shared my best notes with you. We have whatever green color ka marking we have done it completely. Okay, I'll try for digital audit and bank audit to be uploaded on the YouTube. Okay, these two you have to do. And what we are left with is chapter number 3 and 4. I showed you they have not asked in the exam, but still will be doing it. Rest everything I have taught you in the class in terms of revision. So it was not a regular batch. It was not in depth class. It was just a revision session to brush up your concept. Just do the notes very thoroughly. I have showed you the question papers also, how to write the answers, how to present the answers. I have given my best in this like 22 hours. Okay, but eventually paper is yours, writing is yours, remembrance is your part. You have to work more harder. Competition is very tough. Towards the end, I'll give you the timetable also, what chapter, when to study, how many days you should finish the syllabus. Okay, first let's do the marking of materiality and planning. So let's open materiality wala chapter first. This is okay. So take a pen or pencil with you. Come to page number 4.5. So I'll number that this many answer you have to study. Inherent risk. So in inherent risk, bracket to bracket, that's it. Okay. So whatever we have to study, we are marking it. Inherent risk is basically that risk where there is no internal controls, where there is no internal control. Like a small shopkeeper, there is no controls. Obviously, there would be risk every time arising. That's called as inherent risk. Number 2, control risk. Control risk basically means there is a system, there's a control system, but still it is unable to detect. It is still unable to detect. That's called control risk. Third, detection risk. So bracket to bracket. Even if the auditor applies all the audit procedures, still, even if the auditor applies audit procedures, all audit procedures, still is unable to detect. It's called detection risk. And always remember, there's an inverse relationship between the ROM and detection risk. So right there, ROM is inversely variable to detection risk. ROM is basically inherent plus control risk is inversely variable to detection risk. Works? Okay. This is cancelled. Put this in a bracket. This is a definition. Okay. Make this as number 4. This is the fourth point what you have to study. Then fifth. Can you see as per as 315? The name is identifying and assessing the risk of material misstatement through understanding the entity and its environment. Then fifth ka A. Assertions about transactions. Beside transaction, write there P&L. B. Balances. Write there balance sheet. C. Presentation disclosure. Write there notes. Cancel this. Sixth, what are the steps for risk identification? Sixth answer, what are the steps for risk identification? Write there NA67. Then write there number 7, risk based approach. Mark from year to year. Risk based approach. Then from year to year. Then general steps in risk based approach from year till year. You must have done that costing में, what do we call that costing? I forgot the name, shit. We do ABC analysis, right? ABC. A, high value items, but low number of items. C में, low value of items, but high number of items. Whatever is left is B. That is called risk based approach. So you give weights according to the risk. Okay. Mark the first alphabet of this answer. A, D, I, Adi. A, D, I. Then mark this risk assessment phase. So same is all risk का answer, risk based approach का. Risk assessment. Put a tick mark and then bracket to bracket. Done. You have to study all this. TYU 2 you have to do. Okay, TYUs you have to do. Skip this, skip this. So 8th answer, mark this as 8th. Objectives of internal control relating to accounting system. Objectives of internal control relating to accounting system. That's basically tally. So what you have to see, the transactions are properly recorded, real, valued, timely, posted, classified, disclosed and properly summarized. This is the answer. So put this in a bracket. 8th answer. 9th. What are the limitations of internal control? So, sir, even if you have a system of internal control, still there can be a fraud. Sir, why? Because of the management's consideration that the cost does not exceed the benefits. Sir, human error, then collusion among the employees, then management overriding controls, and manipulation by the management. So, these are the reason for inherent limitations of internal control. Question number 9. All this you can skip. Question number 10. Components of internal control. Right, this is important. Sir, what are the components of internal control? Sir, components of internal controls are curriculum. Sir, I will say this is my classroom. It's called as control environment. Then there's a theft happening there. That's called as risk assessment. Then somebody has stolen the water bottle. I said it's control activities. Then she will speak to me. That's called information and communication. M is monitoring. Control environment, risk assessment, control activities, information system and monitoring. Curriculum. Okay. So you have to read this. You don't have to mug it up all those. So just read one liners of it. In that, this one. Mark control environment as separately. Control environment and risk assessment. So this ka heading is important. Headings. And risk assessment ka this answer. Risk can change. Mark this also as important. Risk can arise or change because of what? In that just mark new. What new? Sir, because of new personnel. Sir, because of new information system. Because of new technology there can be a risk. Sir, because of new business model there can be a risk. On the 2 changes. New accounting pronouncement. So new 5 points. Such changes in operating environment, changes in expanded foreign operations. Okay. So why risk can increase in an entity? Because of some new personnel, new system, new technology, new business model, new accounting pronouncement. Okay. Change in the operating environment. Cool. Answer number 10. Then page 4.31. Answer number 11. What are the conditions pertaining to internal check system? So they can make you ask this question also. It is given in module also, in my question bank also. Here you have to design an internal check system for whom? It could be for a departmental store, for a theater, for an amusement park, for a restaurant, for a hotel. It could be anything. Answer is same. Like for example, this is your inter-level answer. No single person should be having control over the transactions. Staff duty should be rotated. There should be proper rotation. You can write in your own words. Every member should be encouraged to go and leave at least once a year. Person having custody of the assets and the books should be different. Then there should exist an account control in respect of each class of assets. Then mechanical devices should be used wherever practical. Budgetary control should be followed. Inventory taking should be done by the different staff. Any 6-7 points of your choice, they can ask you for anything. Okay. This is answer number 11. Okay. Then techniques of internal control, page number 4.37. This is read only for the purpose of MCQ. Like for example, questionnaire. Question is asked by the team to the management, right? That is questionnaire. The next one is flowchart. Flowchart is a diagrammatic presentation of the system. Correct? Then questionnaire, then flowchart. Then the next one is checklist, and one is narrative records. One second, where is narrative record? Oh my god, so much content they have given. And why they have not given? So this was your inter-level ka thing. So questionnaire, you have to read only for the purpose of MCQ. We'll be doing one MCQ here. Okay, questionnaire, then checklist, then flowchart. Now if you see the distinguish between ICQ and checklist, ICQ incorporates a large number of detailed questions, but the checklist generally contains question related to main control objective. ICQ is more detailed. ICQ is more detailed. ICQ is more detailed, but checklist is not. It relates to specific control. Your ICQ questions are usually answered by company executive, basically management. So our engagement team asks to the management. In a checklist, it is asked by the answer by order. Like I'm a boss, you are my article. This is my checklist answer. So boss is asking the question to the staff, checklist. The engagement team is asking question to the company, questionnaire. Then the significance of no in a ICQ indicates a weakness, but the significance of the weakness is not revealed. Either you say yes, no, or not applicable, but how important is that it is not answered there. However, in a checklist, a specific statement is required when the apparent weakness may occur. So you need to give the explanation. You need to give the explanation there. That is in the checklist. Okay. Let's do a question on that. This flowchart, don't study all this nonsense. It is drawing a flowchart. Waste, kassa, kuppai, waste. Mad people this are full waste. Okay. This was answer number 12, 13th. Waste. Done. And do this 15 questions of the module. 15 questions of the module plus what will you do? You will do TYUs. How many TYUs are there? 5 TYUs. Guys, 5 TYUs and 15 questions. Okay. Now one second. Hmm. 5 TYUs and 15 questions, 20 questions. Now the question which came in this exam, well, I'll just show you. I think it came in intro then. It's not there here. Inter में they ask. Inter में they ask. Not here. Sorry, my mistake. Okay. So that's done. 15 questions. Now please remove audit planning. Oh, I need to download from ISECA website. Now, come to audit planning strategy. Waste. Okay. This you just read once. I'm just marking it. Number one, benefits of planning, extent of planning. Planning is a continuous process. So I'm writing three words for your clarification. SPP. This is strategy. This is planning, and this is program. Okay, audit program. So audit strategy, audit planning, audit program. So now you tell me, out of these three, which comes first? Which comes first? Audit strategy, then planning, then program. Perfect. You say SPP, strategy, planning, program. Change in strategy will result in change in planning. Change in strategy will result in change in planning. So you tell me, audit planning is a one-time process, a continuous process? It's a continuous. This you must have studied at intermediate level. It's the same thing only. Okay. So planning is a continuous process. 1, 2, 3. Number 4, contents of audit plan. So contents of audit plan, what you are writing, sir? NTE of RAP, NTE of FAP, and OAP. Other audit procedure. RAP, FAP, OAP, RAP, FAP, OAP, RAP, FAP, OAP. ठीक है. Fourth. Fifth. That's on page number 3.8. Factors for establishing overall audit strategy. Fifth. Sixth, benefits of overall audit strategy. This was all there in intermediate. Then can you see relationship between strategy and plan? Make this a 7. See, audit strategy is prepared before the plan. The plan is more detailed than the strategy. Audit strategy and plan are integrated because change in one would result in change in another. Okay. 7. This is all intermediate ka thing. You can skip this. Okay. 8th answer is SS 600. So mark 8th as SS 600. The entire answer is SS 608. Then 9th answer is internal auditor. This we have done it with internal audit chapter using the work of internal auditor. Okay. This we have already done, Gardo, Jod, direct assistance or answer. Same thing are here, same thing. Then 10th, using the work of auditor's expert. I have given a brief idea about management expert and auditor expert. Management expert is SA 500, auditor expert is SA 620. In that you will see that answer. So this is full important. Then 11th is your SA 540. 11th is your SA 540. 540 I have uploaded on the YouTube. On my channel it is there 540. You can do that because it was added in the last attempt. It was not in the syllabus previously. Along with the questions. Then 520 is analytical procedure. That's answer number 12, page number 3.53. Thirteenth is 450 evaluation of misstatements identified during audit. Yeah. So total 13 answers. 600, 610, 620, 540, 520, 540. 520, 540, 450. Okay. So this was there. This is the content. This you have to read. And there are questions, 9 questions here and 5 TYUs, 14 questions. 14 questions are there. That's it. 450 I have uploaded on the drive. So do these questions, okay, towards the end. First you finish off the syllabus because you saw the weightage. Towards the end, I mean, I show you the weightage also. Very rare they have been asking. Yeah, there could be one question, we can't risk that. Okay, there could be one question, but yeah. So do it towards the end. First get confidence on all the other 17, 16 chapters. Then do these chapters separately. Okay. Guys, how were the sessions? Did you enjoy it? Was it beneficial? I've given you my actual notes of the class for you guys to revise it. Start revising from there. I'm available on Telegram. I'm available on Instagram. Okay. I'll just share the QR for Telegram. So whenever you have a doubt, you can just drop in a message to me, maybe in the group or in personal on Telegram. So I'm active in Telegram and all. One second, I'll just share the Telegram. This is the QR for the Telegram. You can join this. You can message me your doubts. I will be there to make you clear. Okay. Provided you need to trust. See, the problem in CA final is only one. Too many cooks spoil the soup. Now what happens, because there's a panic attack with almost everybody in syllabus called as audit, subject called as audit. You will not be getting confidence. That's pretty much sure. Correct? That's a ground reality. So what as a student you do? You go to YouTube, best CA final audit, strategy, all those. So people who pay money to Google or to YouTube, their videos will be on the top. But the content, garbage. Irrelevant things they talk. They don't talk about the content, what will come in the exam. They'll talk about these, that. Now as a CA final student, you wasted your half an hour. Now what to do? Exam is near. See, ideally what will come? Things will come from the book only. No? Question will come. If you see the pattern, there are 6 questions. Every question has 3 sub questions. So out of 6th, may say you have to attempt 5 questions. Ideally you have to write 15 questions. So 15 questions will come from all the chapters. There could be variety. Question could be twisted, tilted. Some question could be same also. Like we solved September paper also. Like for 4 or 5 chapters I showed the September paper. And wherein you were able to solve it. So my, as a teacher, confidence got rose. Oh wow, whatever I'm teaching, my students are understanding, and these people, if just I give them a proper direction, they will clear. The benefit in South students and North students, if I compare, okay, is like we teach in English, you understand in English, you mug up in English, you write in English. So the deviation from the content coming from the teacher till the writing the paper is very less. As compared to Hindi students, we teach in Hindi there, they understand in Hindi, they mug it up with some Hindi words, then they have to write in English. So the deviations are more. If anybody have done inter audit through me, you know that we have just written those 200 pages notes and you have cleared inter audit with me. You trusted at that time. Now also there has to be a trust. I teach very differently, very different way, because I want results of a student. See, if you pass, then only you will praise me, then you will be giving mouth publicity for me, right? Then only you will be doing all those. But what if you fail? You will say, okay, Abhishek Bansal is bad. It's not I am bad. It's about the approach was bad there. Because I will not be there with you till 45. Like after the class gets over, now for 1.5 months, you have to study on your own. I will not be there. So what happens? So whenever you are panicking, okay, whenever you get an attack, so you'll do YouTube, you will join some Telegram. If somebody messages a doubt, oh shit, I do not know. Or what is the answer? So you start panicking. Don't. You have seen the analysis, I've shared the analysis, I've shared the timetable also with you. Boss, 17 chapters, do 16 chapters very thoroughly, I'm telling you. Thoroughly 16 chapters, 19 may say. You are CA final audit clear. That's my guarantee. Okay? Always calm down, breathe, go relax, then write the paper. Now when you get the paper, very important advice, don't do MCQs at the start. See, you never know the level of MCQ. It could be tough. Definitely it is tough only coming, right? Start at 2 o'clock with your descriptive. 2 to 4 just write descriptive, okay? Till 4:15 you should finish your descriptive. After 4:15, 45 minutes may MCQ. MCQ may happen in 15 minutes also. It can happen in 45 minutes also. See, the starting of 45 minutes if you use for MCQ, like there will be a lot of people, even after me telling all this, there are a lot of people who attend MCQ first. Sir, what will happen? Imagine for those 15 MCQs, 30 marks, you have used your brain at the start, on the optimum capacity. Total you have used. How many marks? Max 30. When we do vice versa. See, because the pattern is, if they have asked in MCQ, they will not be testing in descriptive. I am telling follow vice versa. Use your brain capacity, because see, till 1:45 you were studying, like after AFM, the full day, the next day, the morning of the audit paper, till 1:45 you were doing audit. So 2 p.m. when you write, you are fresh with audit ka content. You start writing. In the meantime, your chapter gets opened in the mind. Okay, acha, this was there, this was here, it was here. Your mind is totally up. MCQ, you don't have to mug it up and write. No? It's analytical. You have to analyze. When your brain is opened up, when your intellectual power is opened up, so 45 minutes, the MCQ becomes very easy. I am giving max time. You may finish in like 20 minutes also. Depends upon your power, your grasping power, how well you have understood the concept, how well you have remembered on the exam day. So it's a humble request with my folded hands. It's been 15 years for me to be teaching CA final. Guys, 30 attempts I have seen. Okay, 30 attempts. You can realize the level of experience. Okay, MCQs have to be done at 4:15, not prior. Okay, see, paper may, it could be easy, you can do it in 15 minutes. What if it is tough? Your 1 hour would be wasted at 2 o'clock then. If you do MCQs first, and then you will start panicking, you will not write in the exam. So my humble request, write descriptive first. Okay. Now, this is the timetable. You can take a screenshot later on. So when you start, okay, you start studying with day 1, you do reporting chapter, Caro, 143 duties. Like basically easy 700 ka series, very light, because it is there for 13 marks, 12 marks. Caro will come for 5 marks. Then you do group audits and SRS. Both are easy chapters. Both are little connected to each other. Easy chapters. So 2 days I have completed 3 chapters. Then I do digital audit. Oops, sorry. 1 second. Then I do digital audit chapter and quality control. So quality control is easy. Digital audit technical chapter. Then you do NBFC easy. You do PSU easy along with prospective, what we did today. Okay, day 5 internal audit plus specialized areas. 800 series easy, internal audit little technical. The direct assessment answers. You do investigation easy, ESG easy, SRE little technical, review wala standard, technical it is. You do forensics easy, general auditing with lot of standards are there, so I made it here. You do completion review easy and planning ka whatever marking we have done. You do risk assessment material chapter, then audit evidence chapter half, like 500 में से 4 standards like 500, 501, 505, 6 were there na, 10, 20, 30 and 50. So 3 you do here, 3 you do the next day. First schedule do here, second schedule you do the next day. And last में you do the bank audit ka chapter. So ideally you will be able to finish the syllabus in like 10 days. So this is so my budgeted. But what do I aim? So 10 days I have to finish. So when you aim for 10 days, you may finish in 12 days. 2 days extra. Okay. Now this is 10 days ka timetable. Now if you are revising for the second time, do this in like 5 days, because eventually the fight is of 1.5 na. Eventually the fight is for 1.5. Then after appearing for AFM, guys, what do? You first finish reporting and digital audit. Say reporting comes for 13-12 marks and digital audit comes for like 5 marks. For sure it is there. It's a technical chapter. You finish that. Then you do CFS, NBFC, PSU, bank. All these are easy chapter on the next day till 1 p.m. Okay. Then you do SRE, SAE, QC, SRS. These are the new chapters. After the lunch, you finish all the new chapters. These new chapters will constitute around 25 marks of your syllabus. Then you do forensics, general audit, investigation till 8 p.m. After having dinner, do ethics. Sir, why ethics towards the end? See, ethics is easy. It's logical. You know ethics. Rather than wasting the time at that time when the time is very crucial. Like, because see, if you do just ethics, oh sir, I have just finished 1 chapter. Your panic attack that starts there. So I would advise you, do first technical things so that mentally you are very sound and strong. I have done like 50% syllabus, okay, 60% syllabus, 70% syllabus. Ethics, I know it will come for 60 months. I can do it at night also, no? Then on the battle day when there's an audit paper, till 10 a.m. what do? You do leftovers, you do RTP, mock 1 and mock 2. Amendments I have uploaded in English on my channel, on Abhishek Bansal channel, you can see I have uploaded in English. So you can dig down amendments. There are only 5 amendments, 3 in NBFC, 2 in ethics. Done. If you follow this, trust me, you will be a chartered accountant. So in case if you are appearing for both the groups, I wish you all the very best for both the groups. In case you are appearing for only for group 1, I wish you all the best for group 1. If you are appearing only for audit paper, I wish you all the very best for audit paper. Guys, follow the strategy. Trust me, it's result oriented. You will clear. But I would request just one thing, because what I've seen is like 3 chapter from A teacher, 5 chapter from B teacher, ethics from Abhishek Bansal, this from Abhishek Bansal. Don't do that, please. You will fail. It's a harsh reality. Trust yourself, trust the teacher, trust the notes, trust the ICI, trust God. You will clear. Always in Hindi we say, if you understand little Hindi, we say Guru is only one. Guru is only one. Rest are the disciples, we say, like the followers. So whoever you are following, follow him blindly, one teacher. I'm not saying follow me, follow one teacher, one subject, that's it. You take 3, 4 from here, 3, 4 from here, you will fail eventually. Understood? So from tomorrow, no Zoom sessions, guys. Keep smiling, work hardest, competition very tough. At any point of time, if you're getting any doubt, any anxiety, or any confusion, any doubt, just drop in a message to me on Instagram or Telegram. I'll be there to help you out. Okay? Whatever I could revise with you guys, I have done it my best. I hope the sessions were beneficial. Thanks to the academy who has arranged this for you guys. And thanks for being there with me when the times were getting changed. Thank you for so much adjustment. Okay, I wish you all the very best. And I hope you message me on whenever you are appearing, okay, on the result day. Sir, I am CA so and so. I was there on the Zoom session revision when you took English class. Okay. All the very best. God bless you. Take care. Whatever you need, I'm there for you guys. Bye. Do recommend to your friends also, because the classes are getting sold at the academy, the regular batches, plus SPM set, A set, C set, D also. I take A law, C I'm doing forensic because I'm a forensic accountant, which I told you. Set D entrepreneurship. Entrepreneurship, I think 3, 4 chapters are pending. I'll be doing it in this coming week only. Okay, so ACDR in 100% English, final audit 100% English. It is already listed on the academy website. So do recommend to your friends. Okay, bye guys, take care. Thank you.